The White House says China will effectively suspend implementation of additional export controls on rare earth metals and terminate investigations targeting U.S. companies in the semiconductor supply chain. But Treasury Secretary Scott Bessent cautions that allies still need to be wary.
The Chinese have cornered the market, and unfortunately, at times, they prove to be unreliable partners. I think, and I hope, after the agreement and the goodwill between President Xi and President Trump in Korea, that we can depend on them to be more reliable partners, and the rest of the world can depend on them. But we can't take that chance. We don't want to decouple with China, but we're going to have to de-risk.
Let's bring in our China correspondent, Mimi Lo in Hong Kong. And of course, Mimi, we saw the positive sentiment after the Trump-Xi meeting on the sidelines of APEC. But at the same time, we have seen this play out, right, where there's optimism and then no follow through. So could we expect some more details to come through?
Yes, we are getting some details from the U.S. side. The White House had released a fact sheet on exactly what was agreed upon. Bear in mind, the Chinese side has not really elaborated on this. So this is all according to the White House. China has agreed to suspend export controls, undoing the measures that were imposed not just in October this year, but also in April this year and in October 2022. This means that general licenses would be issued for rare earths, for antimony, for graphite, for the likes of gallium and germanium as well. And this is obviously a very big win for the United States. The White House saying that this is a massive victory for U.S. national security. And you can see on the screen as well that the Chinese actions also include actions to stem the flow of fentanyl, to buy a certain amount of soybeans, 12 million metric tons to be exact this year, and 25 million metric tons for the next 3 years. China also agreed to suspend the countermeasures, including tariffs and non-tariff measures since March 4.
What's driving the markets this week? What's on investors' minds as they look ahead? Find out in 10 minutes or less on the Markets Podcast from Goldman Sachs. Listen now.
News when you want it with Bloomberg News Now. I'm Doug Krisner. The U.S. government shutdown has reached day 33. It's just a few days shy of being the longest shutdown in U.S. history. Over the weekend, food aid through SNAP benefits expired, affecting over 40 million Americans. On Friday, 2 federal judges ruled the Trump administration must use emergency funds to pay for SNAP benefits. Today, Treasury Secretary Scott Bessent said the administration could find the funds to cover food benefits. Here's Bessent speaking to CNN's State of the Union.
There's a process that has to be followed, so we got to figure out what the process is. President Trump wants to make sure that people get their food benefits.
So it could be done by Wednesday?
Could be.
Okay.
Could be. And 5 Democratic senators could cross the aisle and open the government by Wednesday.
That is U.S. Treasury Secretary Scott Bessent speaking earlier with CNN's Jake Tapper on the State of the Union program. As the U.S. shutdown continues, the busiest airports in the U.S. are experiencing major delays. Here is Bloomberg's Monica Ricks.
The Federal Aviation Administration issued a temporary ground stop for some flights to Newark Liberty International Airport Sunday due to staffing issues. But it's not just New Jersey. Thousands of flights were delayed over the weekend over shortages nationwide. And U.S. Transportation Secretary Sean Duffy warns it's only going to get worse the longer the government shutdown continues.
There is a level of risk that gets injected into the system when we have a controller that's doing 2 jobs instead of 1.
More air traffic controllers and TSA agents have been calling out sick rather than working without pay. Monica Ricks, Bloomberg Radio.
President Trump said Chinese President Xi Jinping has given assurances that Beijing would take no action toward its goal of unifying Taiwan with mainland China. Here is Trump speaking to CBS's Norah O'Donnell on 60 Minutes.
And he understands the answer to that.
Why not say
this
it?
never even came up yesterday as a subject. He never brought it up. People were a little surprised at that. He never brought it up because he understands it, and he understands it very well.
Do you mind if I ask, when you say he understands, why not communicate that publicly to the rest of us? What does he understand?
I don't want to give away. I can't give away my secrets. I don't want to be one of these guys that tells you exactly what's going to happen if something happens. The other side knows, but I'm not somebody that tells you everything because you're asking me a question. But they understand what's going to happen.
That was President Trump speaking to CBS's Norah O'Donnell on 60 Minutes. By the way, this was Trump's first interview with 60 Minutes in 5 years, and his first interview with CBS since he sued Paramount over the program's 2024 interview with Kamala Harris. We go to the Mideast next, where Israel announced the remains of 3 hostages held in Gaza have been handed over. Israel's military said the bodies would be examined by forensic experts, and they add official identification of these remains would be provided to the families first. And Israel has in turn been releasing the remains of 15 Palestinians in exchange for the remains of an Israeli hostage. Back in the States, we're getting some clarity on President Trump's remarks from last week, instructing the Pentagon to begin testing U.S. nuclear weapons on an equal basis. He said this is in response to other countries' testing programs. Today, Energy Secretary Chris Wright said the weapons testing ordered will not involve nuclear explosions at this time.
I think the tests we're talking about right now are system tests. These are not nuclear explosions. These are what we call non-critical explosions. So you're testing all the other parts of a nuclear weapon to make sure they deliver the appropriate geometry and they set up the nuclear explosion. U.S.
Energy Secretary Chris Wright speaking on Fox News The Sunday Briefing. Some nonprofit groups in the U.S. could be ejected from a popular student loan forgiveness plan. That's if the Trump administration determines their work has an illegal purpose. More from Bloomberg's Amy Morris in Washington.
These new rules give the Education Department expanded power to ban organizations from the Public Service Loan Forgiveness Program. The move could cut off teachers, doctors, and other public workers from federal loan cancellation. The policy is aimed primarily at organizations that work with immigrants and transgender youth. The Trump administration has not identified specific groups it intends to target. Critics say it turns the program into a tool of political retribution for the White House. It's set to take effect in July. In Washington, Amy Morris, Bloomberg Radio.
The flow of quarterly earnings continues in the week ahead, with consumer companies coming into focus. We have more from Bloomberg's Charlie Pellet.
More than half of S&P 500 companies have reported quarterly results, and Uber and McDonald's earnings will likely underscore deteriorating consumer sentiment in the U.S. Emily Rowland is co-chief investment strategist at Manulife Investment Management.
Certainly earnings have been a huge positive. This earnings season's been spectacular, 10.5% earnings growth. 82% beat rate.
Also reporting this week, tech names Palantir, Qualcomm, and DoorDash, along with Warner Brothers Discovery, Pfizer, and Yum Brands. In New York, Charlie Pellet, Bloomberg Radio.
And that is News When You Want It. With Bloomberg News Now, I'm Doug Krisner, and this is Bloomberg.
Exchanges. The Goldman Sachs podcast featuring exchanges on navigating macro uncertainty, exchanges on the forces shaping global markets. For the sharpest analysis on finance, business, and the economy, count on exchanges between leading minds at Goldman Sachs. New episodes every week. Listen now.
Join Bloomberg in New York or via livestream on November 13th for Building a Future-Ready Business. This event will examine how companies are integrating technology, trust, and transformation into their operating models to create competitive advantages. By joining us, you'll hear from successful executives who are at the forefront of building a future-ready enterprise in the age of AI. This event is proudly sponsored by Kyndryl. Register at bloomberglive.com/future-ready.
clarity so we can get out of the fog and maybe we can act more quickly. Otherwise, we're slowing down.
Absolutely. But to his credit, how can he say we are in a position to cut interest rates in December when they might still be in a data desert and he is dealing with diverging views on his own Federal Reserve? I love what Zero Hedge tweeted yesterday. Wait, did market expect Powell to say we'll definitely cut in December? Because that's what it felt like going into this meeting. 90% chance the market had for a December rate cut. They got a little bit of dose of reality yesterday.
Yeah, the answer to that is yes. That's what they were expecting and that's what they're hoping for. And there's a real question of what the benchmark is right now for the Fed. Is it the labor market or is it inflation? Right now in markets, you're seeing a pause, a stability in bond markets and stock markets, a bit of softness pretty much across the board, but just a bit, down 0.2% on the S&P. You are seeing a little bit of a dollar weakness after yesterday's strength. The euro 116.19. 10-year yields having a little bit of a break after rising by 10 basis points yesterday in the wake of that Fed meeting. 4.06%. Coming up this hour, Chris Varone of Strategas with stocks holding steady at record highs. Leland Miller of China Beige Book as the U.S. and China reach a deal, and Krishna Guha of Evercore with a December rate cut in question. We begin this hour with stocks just dipping just a slight bit despite the U.S. trade deal with China, a rate cut, and a trio of big tech earnings that really are not bad despite what you might be seeing in some of the shares. Chris Varone of Strategas, a Baird company, writing this: the market seems more tolerant of rate cuts here. So long as 10-year yields are below, say, 420 or so, the path of least resistance remains lower for rates. Chris joins us now. Chris, thank you so much for being here.
Thank you.
What did we learn yesterday?
Listen, I think what was the language? Far from it was the language that Powell used. It reminded me a little bit of 2018, nowhere near neutral. He has a reputation of being late. I think the bond market knows that. We've seen that with the 2-year yield over the last 5, 6, 7 months. The fact that the market rate still trades, even after yesterday's bounce, call it 75 bips below where the policy rate is, I think is a suggestion that the market wants more. And I think the market wants to be placated here in the December meeting and beyond.
The market always wants to be placated. I think that is an evergreen statement. There is a real question of which market. There are many different markets. The momentum market was the one that really took it on the chin yesterday in response to the disappointment about not getting certainty about a December meeting. Do you think that that has longer legs than just the momentum trade?
Well, I would say first, I would say the most important market here is probably the bond market. And when you think about what the reaction was yesterday of bidding up short end rates higher, I think that was a bit of a mistake. If we get to a point where they don't go in December, I actually think rates fall, right? If this is an economy that's cooling, that's weakening, and they don't cut into that, I think the risk is actually yields fall from here and fall more meaningfully than people expect, and not for the right reason. When you look at the curve's quietly been flattening for the better part of the last 2 months. I don't think the banks have loved that. You've seen that with the regional banks. So certainly there's some hints of weakness there. When you look at the broader momentum trade, I thought last week's hit to gold was particularly relevant in that regard. I think the question out there is, does that begin to bleed into what has really been the main show, the momentum in Mag 7, in tech? I think it's early to make that conclusion.
Especially because earnings came in pretty well, right? I mean, if you think about it, when you start talking about $77 billion of revenue for the likes of Meta, and then you start talking about Crimea River, take out your violin and say, well, you're spending more than you're bringing in terms of the expansion. How much are you seeing that skepticism that gives you a sense that this can keep going for longer than many people think?
Listen, I think when enthusiasm is heightened, when there's animal spirits out there, as a market observer, you have to be particularly on top of the levels. And basically go through Mag 7 through Mag 7 stock. All of them are above the level that I would need to stay constructive on all of them. We'll see where Meta opens this morning. Is probably the one of the 7 in a bit more of a tenuous spot. It actually did correct pretty sharply over the course of the summer. But when you look across the board, I mean, NVIDIA new high, Broadcom new high, Google new high, Apple first 52-week high in 18 months. So the balance of them, I still think, are in pretty good shape here. What happened to gold, I think, was idiosyncratic. All the bells and whistles of a blow-off were playing out in the gold market over the last several weeks. I don't think we've seen that same type of euphoria in equities yet.
When it comes to the Fed, though, isn't Powell correct when he says, how am I supposed to guide and how are we supposed to say there's a December cut when we have a government shutdown? And at the moment, no side is blinking. I mean, we could be December without zero data.
I think there is such a lack of a healthy respect for what the message of the market is coming from the Fed. I would say, underweight the data, overweight what we're seeing both from the bond market and from leadership. The fact that discretionary remains pretty tepid here, the fact that banks have started to weaken here some, I think is the market saying you better go data or no data.
You think the market will push him in December?
I think if we get to the point, so we're at Fed Fund futures right now, about a 60% chance that they go. I think if we start to get to a point through Fed speak over the next couple of weeks where it looks like they don't, the market will push them.
Right now, we're looking also at a bunch of certainty as well. I mean, look, we're going to get into the weakness in just a second, and I do want to get to that because the Chipotles of the world really are raising some red flags about the other consumer out there. I am curious about your take, though, on the China-U.S. deal that was announced. Granted, very few details that actually can be solidified in any kind of inked deal. Nonetheless, providing some kind of framework, bringing down the temperature, talking about the potential that we're not going to get some of the levies on trade, on shipping, et cetera. Does that give you more confidence, or is that just lip service at this point?
Yeah, it does. And I mean, when you think about, I don't think neither Xi nor Trump were really in a position to escalate from here. You know, go back, what was it, 2 weeks ago now, when Trump set the tweet that set markets down 2.5%, 3%, maybe a little trial balloon there of what a bad deal might look like. But I thought what was interesting that day and beyond, what didn't move that day when stocks were down? CNH was remarkably calm. That's been our barometer into China risk. Dollar CNH has stayed stable the entire time. That's our look at macro risk. When I look at domestic risk, high yield CDX is still really calm here. I think as long as spreads are below, say, 350, the concerns about some developing credit problem here, or through the lens of CNH, some macro problem, are probably overblown.
So I'm trying to gauge whether you're bullish or bearish right now, and it sounds like you're not exactly screamingly bullish on pretty much anything just because of valuations, but you're not yet ready to be full-on bearish. Is that an accurate characterization?
I'm a trend follower, so the trend is up. We've been bullish, we stay bullish, but I just want to be a little bit mindful here. We're in a bit of a window where it seems like the bond market wants something, and I think when you look at what's been a little underwhelming performance from both the banks and discretionary over the last 4, 5, 6 weeks, you do begin to wonder if some of the ground underneath us is starting to shift ahead of 26. I think it's early to abandon any bullish call. The two things I would watch, again, if there's macro risk, it will be expressed through CNH weaker. That has not happened yet. And I think if there's domestic credit risk, it will be expressed through high yield CDX wider. That has not happened yet either.
We look at the bond market and concern for the deficit. There's a chance Supreme Court is going to strike down IEPA. $90 billion worth minimum is going to have to be refunded to companies. How does the market react to that?
I still would be surprised, not necessarily with the strike down, but with the refund call. I think at the margin, one of the reasons that the U.S. bond market has frankly been the envy of the world this year, when you look at what U.S. rates have done relative to Germany or to France, is because of the tariffs.
That's what I'm asking. What if you can't enact the tariffs?
Like, at the end of the day, everywhere across the curve is in a downtrend, whether it's 2s, 10s, or 30s. I think, as we wrote this week, as long as you're keeping U.S. 10s below 420, 425, as long as you're keeping U.S. 30s below, call it 480, 490, the trend is lower.
Chris Verone, always wonderful to have you. Thank you so much for being here. Chris Verone of Strategas here in studio. If you do want an anecdote, and there are plenty of them, Chipotle is the one that comes to mind. Yes, it is Meta. Yes, we're talking about getting Amazon and Apple after the bell. But Chipotle coming out and saying earlier this year, as consumer sentiment declined sharply, we saw a broad-based pullback in frequency across all income cohorts, then talked about the ongoing stress in income levels below $100,000. There is a question here about whether this is an idiosyncrasy or whether this really is a trend that's going to deepen into 2026.
They're seeing a consumer slowdown, which is affecting them, but they're also talking about they're seeing higher beef prices, which the president has been tweeting about. We have seen massive uptick in beef prices. It's been a huge issue for consumers. And then at the same time, Chipotle is talking about the impact of new tariffs that are hitting their bottom line. So they are in a very difficult spot right now as compared to other individuals on the high-end consumer level.
Yeah, and the profit margins have been shrinking. The shares responding in response. Right now, let's get you an update on stories elsewhere this morning. Here is your Bloomberg Brief with Vonnie Quinn. Vonnie.
Good morning, Lisa. Well, just to flesh out what you've all been talking about, President Donald Trump saying he had a, quote, amazing meeting with Chinese President Xi Jinping that resulted in a trade deal to halve fentanyl-related tariffs on Chinese goods, effective immediately. Trump also said China had agreed to buy U.S. soybeans again. On a scale of 1 to 10, the president said he'd rate the meeting a 12. One issue that didn't come up in President Trump's meeting with Xi Jinping was NVIDIA's Blackwell chip. The president had indicated he might discuss giving China access to the chip giant's most advanced semiconductor. Trump said it's up to Beijing to continue talking to NVIDIA about access to that chip. Shares of Alphabet rallying in the pre-market. The company reported third-quarter sales that topped Wall Street estimates, fueled by a surge in demand for its cloud and AI services. Alphabet said it's investing record amounts to try to push progress in AI. And that is your Bloomberg Brief. Lisa.
Thank you so much, Vonnie. Up next, U.S. and China strike a trade deal.
I thought it was an amazing meeting. He's a great leader of a very powerful, very strong country, China. We've come to conclusion on many very important points.
China Beige Book CEO Leland Miller joining us next. This is Bloomberg Surveillance. Good morning.
As a CMO managing AI transformation, the number one thing is how we help our teams. What we are witnessing right now is massive and cannot be understated. Unless we have the proper change management within our organizations, none of it matters. You have to help people understand where are we going, what are we trying to accomplish, and give them the skills that are necessary and help them see what the vision is and their roles in that transformation. There is a level of emotion that comes into it, and to understand where others are coming from so that we can solve problems better together. I think it's a real combination of vision setting, driving the agenda in terms of execution, but then making sure that you're being the leader that people need.
Bang up earnings from a number of the tech companies were not enough. Right now we're seeing futures just slightly softer ahead of the open, although clawing back from some of the earlier lows, down at just about less than 0.2% on the S&P. I'm watching the 10-year yield after that 10 basis point surge yesterday on the heels of the Fed meeting. You are seeing a bit of a reprieve, just dipping a slight bit, finding stability here in and around 4.07%. Meanwhile, a big question about Apple and Amazon after the bell, as well as what we're going to see from ongoing bond market stimulus. A question, though, about trade. Under surveillance this morning, U.S. and China strike a trade deal.
I thought it was an amazing meeting. He's a great leader of a very powerful, very strong country, China. And what can I say? We have, it was an outstanding group of decisions, I think, that was made, and we've come to conclusion on many very important points.
Here's the latest. The world's two largest economies reaching a trade deal. The U.S. trimming fentanyl-related tariffs and China pausing rare earth export curbs for about a year. Bloomberg's Tyler Kendall joins us now in Korea, where she has not been sleeping and doing a tour of Asia. Tyler, what stands out from you from this particular meeting?
Yeah, hey, Lisa, good morning. Well, it really does feel like that reduction in tariffs for China is the most immediate and tangible impact. President Trump saying that he will cut that 20% tariff linked to fentanyl in half over China's pledges to curb the so-called precursor chemicals used to make the drug. Just for context here, Chinese exports to the U.S. last month averaged about $1 billion a day, and analysts say that number is now expected to go up significantly amid this reduction in tariffs, and also that the holiday season is upon us in the next couple of months, because really at this point the other deliverables that we saw were widely expected or telegraphed beforehand. We got that confirmation that China is going to delay at least a year those newly unveiled export curbs related to critical and rare earth minerals, and also resume the purchases of U.S. agricultural products, including soybeans, though at this point it's unclear how quickly American farmers will see that relief. Also importantly, the U.S. side does confirm it's no longer going to impose fees on Chinese ships that are docked on American ports. That, of course, was a key concession that Beijing wanted to see. Now, two other things that we were closely tracking that I'll touch on quickly. You mentioned this at the top of the program. President Trump saying that he did not discuss China's NVIDIA's Blackwell chips with the Chinese president, though they did discuss other NVIDIA products. That's something we're going to have to track in the months ahead. And then second, the two leaders did discuss ending the war in Ukraine, though at this point, it does not seem like China is any closer to curbing its imports of Russian energy supplies. Lisa, we did get a readout from China's side. It was sparse on details, but did strike this positive tone, saying that there needs to be this cooperation going forward. As for now, these tensions are eased, and both sides seem to be trying to inch closer to signing some sort of broader trade deal down the line.
Tyler Kendall, Bloomberg's Tyler Kendall, thank you so much for all of your work and for that report right now. Leland Miller of China Beige Book writing this. The U.S. has, in fact, offered deeper concessions to secure this truce. Once those details emerge, this deal will look far more one-sided in China's favor and perhaps also less likely to hold. Leland joins us now. Leland, why do you say that? What concessions do you see the U.S. offering China to secure this deal that seem lopsided?
I think this is the beginning of the deal, not the end of the deal. So I think what we saw in the last 12 hours was a successful start. The president agreed to pull back tariffs in return for the Chinese agreeing to pull back rare earth, their new rare earth export control regime. People may not be happy with a lot of people may not be happy with the shipping fees being postponed, but in general, the low-hanging fruit was addressed. What you didn't see was something that I think a lot of China hawks were scared that they would wake up to, which is a whole bunch of export controls pulled back in some sort of quid pro quo. But again, President Trump announced that he is heading to China early next year, and there will be more concessions, and there will be more back and forth, and there will be a broader deal that they're working on right now. So we're working on the margins of the deal, and as we get closer to the core, I think that's when things are going to get a bit more controversial.
Leland, what about AI chips? Because the president had said that they would discuss Blackwell. Then he said they didn't discuss Blackwell, but they discussed other chips, and it's now for China to talk about that with NVIDIA. Where does this stand?
I think what the president came to understand over the last 24 hours or so is that this is by far the most controversial aspect of any trade deal. When you start incorporating export control rollbacks, which are done for national security purposes, as part of a trade deal where you're just trying to get China to buy more commodities, this becomes very, very problematic. And so I think what the president realized is that his team needed to do a little bit more research on what made sense here. Obviously, that there's this is a very big issue. But if the president is trying to build up a broader deal, these were the low-hanging branches. And then I think as they work towards the technology side, that's when things are going to get more controversial.
What about TikTok as well? We heard there was going to be some sort of deal regarding TikTok, and all that we heard from the Chinese Commerce Ministry is that they will keep talking.
Yeah, I think there's a general sense that the Chinese side is not completely against any TikTok deal, but I think that they're holding their cards as close to the chest for as long as possible. And so, they can get the maximum concessions possible. Keep in mind, if we would have just announced every concession right now and then President Trump announced a trip to China in April, there'd be this whole scramble to try to understand what that's for. So I think some of the things that people were talking about being released right now are actually being pushed back a number of months. And I think both sides are trying to see what the other side's willing to give before they have a final framework.
So it's a détente for about a year, but that doesn't mean this relationship cannot escalate with any sort of truth that comes out of the White House. What would your message be to investors that think potentially they could ignore this relationship for the next 12 months?
Well, I think, look, an agreement to not do something for a year only holds as long as the Chinese decide they're not going to do something. They don't feel like they've been provoked or something else. So there's an issue that a one year truce doesn't mean a 1 year truce. It means a truce until one of the sides decides that truce doesn't work anymore. But the larger point is, I think, on tariffs. The president's moved back tariffs by 10%. So you have a headline rate of 57%. That sounds going down to 47 or so. That sounds high. You've got an effective rate of around 30%. So I think the larger picture here is they have gone down enough that they're getting very close to what competitor producers are actually being charged in the 20s. Vietnam and the Mexicos and other Southeast Asian countries. If they get too close, all the de-risking work that the president has done will start going the other direction. There will not be an incentive to move your supply chains out of China. So they're going to have to look at that very closely. They're about at the end of what they could do in terms of tariff reductions on China without reversing the president's tariff regime that he fought very hard to put in place.
Leland, the optics of this trip have been pretty powerful. The idea of a Southeast Asia tour in Malaysia and inking some of the deals and the niceties between the likes of the Thai and the Vietnamese and the other leaders in the region, Japan as well. What do you make of that? Do you think that that does give the U.S. closer allies in Southeast Asia that gave it more clout, more ammunition heading into these meetings with China?
Certainly, the more the United States interacts with its allies and partners in Asia, the more leverage it'll have with China, and the smarter policy will be, because you'll be able to de-risk your supply chains outside of things that give China leverage points on your economy. So it's good politics, it's good economics. I think it's very helpful. You look at what happened with the critical minerals. The Chinese released a very powerful export control regime that exerted dominance over the supply chains of the world in terms of rare earths and critical minerals. The U.S. has immediately responded and tried to go out and have partnerships with Australia, with Southeast Asian countries. So I think that what China did was quite momentous, but at the same time, it has lit a fire under the United States to try to do something to fix the problem.
Leland, one thing that China Beige Book does so well is you track real-time economic activity going on in China. There's been a stagnation that we've talked about, unemployment rate for youth very high, and a real question about how much the economic backdrop is going to push Xi Jinping to the table to try to make sure that the relationship with the United States and frankly the rest of the world isn't severed. How well are they doing at rebalancing their economy into more of a consumption, less of just simply an output-based economic model?
The contours of your question are really important, because if you were asking how their economic performance is doing, I would say it's doing well enough for Xi, it's doing well enough. And so I don't think that they feel any pressure to come to the table with the United States. But if your question is, have they been, creating this wave of, this shift from investment to consumption, which they've been promising the last 10 years, no, there's absolutely no sign of that whatsoever. I don't think you will see that. What you've seen out of the Chinese government is sort of resistance to this. It's been, we got to produce more, we have to export more, we have to continue to use manufacturing and industry as our growth driver. That is running into a buzzsaw, which is global trade friction. So, the Chinese have talked a lot about consumption. They've done very little on consumption. So I think that's something to watch in the future. But, rather than listen to what they say, I would urge everyone to watch what they do. And I think that's going to be very important, because if they do not create the mechanisms to spur up more domestic demand in China, then these trade frictions will never go away. It's not a Trump thing. It's a China thing.
Leland Miller of China Beige Book with some real speak this morning. Really appreciate your time, Leland. Always learn from your insights. And this really does speak to what we're seeing in places like Germany, where economic activity stagnated. And this question of just how many people will coalesce behind this push to get China to shift its model a little bit, to not rely so much on exports.
Well, Europe's waking up to this, because it's not just the exports, it's the investment of the likes of BYD coming in with factories and hollowing out their own industrial base. But it is pretty incredible. And this is the issue the Trump administration has. China's exports have held up even in the face of high U.S. tariffs, because they're just dumping on other markets.
Yeah, meanwhile, we're going to shift to the tech sphere, which is also really key to China. Coming up, Stefan Slowinski of BNP Paribas Exane. As big tech's big spending on AI tests investor patience, plus you hire on it with your morning movers, Chipotle plunging on another sales forecast cut. This is Bloomberg.
Vodafone Business's mobile private network is helping protect critical infrastructure.
It's essential to have a secure network which is separated from outside communication. Using 5G makes the working environment safe and enhance the operational effectivity.
Connecting the dot between what's at stake and what is possible.
trying to digest a fire hose of news over the past 12 hours, let alone 24 hours. Right now, futures taking it all in stride, as they tend to do, just down a touch after getting tech earnings, after a disappointment, evidently, from a Fed that is unwilling to commit to a December rate cut at this point, and after what we are hearing with respect to a China-U.S. deal, the contours of which remain a little bit fuzzy in terms of what has to be inked. Right now, you're seeing futures down about 0.2% for the S&P, less than the NASDAQ 100, down just about 0.1%, and the Russell getting a bit of a pop after yesterday, really digesting some of what we heard out of the Fed. Meanwhile, in the bond space, a little bit of quiet after a pretty roaring response to yesterday's Fed meeting and the press conference, where it did seem like this Fed really wanted to push away from the idea of a December rate cut. You are seeing 10-year yields quiet now at 4.067% after yesterday surging by 10 basis points across the board. Even 2-year yields now 3.59%. And gold, let's take a look at gold, because since October 20th, you have seen a 10% plunge in the precious metal. A lot of questions about whether this is actually a tell on some type of geopolitical calm or some kind of trade. But nonetheless, you are seeing stability there too, up about 1.5% this morning. 3 hours away from the cash open. Here are your morning movers with Yahaira Anand. Yahaira.
Hi, Lisa. It was a blowout quarter for Alphabet. Shares are up 7.7%. The Google parent posted beats across the board, with revenue topping $100 billion for the first time and net income up 33% from the same time a year earlier. All this thanks to surging demand for its cloud and AI services, giving investors confidence that the massive spending it's doing on AI is paying off. But that same confidence did not extend to the likes of Meta and Microsoft. That's why those shares are lower. Microsoft saying that cloud growth is still bumping up against capacity limits, while its beats failed to live up to investors' expectations amid its high valuation. As for Meta, CEO Mark Zuckerberg came on super strong about ramping up AI spending, and that was enough to spook investors after it delivered just an in-line revenue guidance for the current quarter. And we end on Chipotle. Those shares are plunging nearly 20% now in the pre-market after it cut its outlook for the third time this year. They say that diners are pulling back, especially those with lower incomes. So they're going to take a very cautious approach when it comes to any price hikes. It's the latest sign of consumer strain, with the Kraft Heinz CEO saying yesterday that this is the worst consumer sentiment they've seen in decades. Lisa?
Thank you so much, Yahaira. You know, the Chipotle, the Kraft Heinz, to me, that is a story that you have to dig your teeth into and understand. Is this a Chipotle problem, or is this a broader consumer market problem? And ultimately, that's what the Fed's parsing through, and that's what a lot of investors are too.
It feels like when it comes to these restaurants, though, they're willing to accept the higher input costs. Neil Dutter wrote in, he goes, Amory, they're eating the beef prices you just pointed out, which is true. Cheesecake Factory, Chipotle, Starbucks, every single one of them at some point of these earnings is talking about the fact that they are not pushing on price because they do not want to sacrifice what's going on with the consumer.
Happy punny morning, Neil. Thank you so much for that. On our radar this morning, U.S. President Donald Trump and Chinese President Xi Jinping finalizing a truce expected to include tariff relief on Chinese goods for 1 year and a reduction in U.S. duties linked to fentanyl. Elsewhere, Fed Chair Jay Powell warning a December rate cut is far from a foregone conclusion. For the first time in 6 years, the FOMC faced dissent in both directions as differing outlooks on inflation and jobs fuel a tug of war among policymakers. And OpenAI reportedly preparing for an initial public offering as soon as next year. According to the Reuters, the company could target a market capitalization of $1 trillion. Well, this would be one of the largest ever IPOs. An OpenAI spokesperson stated that it's currently not our focus. And Amory, it just highlights how big this company has gotten as a private company and how levered the entire tech space is in some ways to the OpenAI story.
On the low end, they're talking about maybe, according to this Reuters report, $60 billion to raise. That in itself would be tremendous, but potentially this could be worth $1 trillion. Interesting, the Reuters report talks about the fact that they want to tap the IPO because it would open the door to more efficient capital raising, enable larger acquisitions using public stock, helping to finance Altman's plans to pour trillions of dollars into AI infrastructure. So guess what? More money going into AI. Very much so. If you're one of those individuals talking about the fact that maybe it's starting to feel like a bubble, maybe it's just not yet. Maybe this will be the top.
Well, the question here is, first of all, OpenAI is worth $500 billion, according to the last private market estimate.
Remember when they were
Yes, startup. I remember that. So then there's this question of, okay, can they reach $1 trillion? Then there's a question of what the appetite is for investors who are getting really tired of some sort of investment plan without a commensurate expansion in profits. And that's what we saw yesterday with Meta. That's what we saw on the margins, a little bit with Microsoft, but that was really just a very high bar. But it seems like people are looking for bubbles, which means that maybe they're getting a little more cautious.
This stat stood out for me. Meta, along with the fellow Mag 7 peers, Google and Microsoft, racked up $78 billion in capital expenditures last quarter. That is basically a 90% increase from a year earlier. That is a crazy amount of CapEx that you advanced just 1 year alone.
So let's build on that $78 billion in combined spending from Meta, Alphabet, and Microsoft. That is just in the third quarter, and the tech giants putting most of the cash toward data centers and chips. Stefan Slowinski covers those names for BNP Paribas Exane and joins us now. Stefan, what did you learn, not necessarily from the earnings yesterday, but from the reaction in markets?
Yeah, good morning, Lisa, and thanks for having me on. So the markets seem to not be able to make up their minds one quarter to the next. Last quarter, we had very strong top-line numbers from Meta and Microsoft, and the stocks were both up very strongly, despite signaling increasing spend. This quarter, we again had very strong top-line results from both of those companies, and obviously those stocks trading down today. So the market's getting a little bit more spooked on some of the spending intentions, especially for Meta. I think the big difference here is with Meta, you have margins, operating margins down around 300 basis points year over year. For Microsoft and for Google, margins are up 200 basis points. So those two companies are being much more disciplined around spending. Arguably, they're much more advanced in their AI partnerships and strategies. And people are starting to get a bit more nervous on Meta with some of the spending that they're seeing.
Stefan, Gene Munster of Deepwater Asset Management wrote this in response to Meta's earnings. Expenses are growing faster than revenue driven by third-party cloud. The last 2 years, it's been the flip story, and this is what he thinks is spooking the market. I'm just wondering, Stefan, what Meta's investing in and whether it could be worthy, similar to what we have seen in previous years from the giant that has changed its name, invested in all sorts of new ideas that haven't come to fruition but still have pulled out pretty impressive numbers and returns.
Yeah, I think when you look at Meta and you look at the track record, certainly what Mr. Zuckerberg is arguing is trust us. You know, we've delivered in the past. Maybe we've been late to some technologies like core AI and now Gen AI, but in the end, we get there. And so stick with us. But the stock's up 680% from the 2020 lows. So investors have done quite well. Like I said, on the spending and discipline investment side, Amazon, Microsoft, and Google are giving you margin expansion and very healthy earnings growth going forward, whereas with Meta, that's likely to slow significantly. And I guess finally on AI, we've seen with Meta this new superintelligence lab that has been sort of cobbled together over the last couple of months. And so there is execution risk there. It's not like what we're seeing at OpenAI. It's not like what we're seeing at Google, where you have a long-established team that's been delivering models and delivering products and launches consistently. With Meta, it is a bit of a rebuild, and so there is execution risk on that Gen AI front.
I was struck by the employee compensation costs. It's now the second largest contributor to the increase in costs that Meta has for next year. Do you think they're going to start to put pause on these million-dollar contracts they're going out to with AI data scientists?
Well, we're definitely seeing those quite expensive hires, but as Meta likes to say, it's a very dense talent pool. So it's not the sort of tens of thousands of hires that we saw from Meta and from big tech back in 2021 post the COVID boom. I think as well, what we're also starting to see is that CapEx hitting the income statement through depreciation. So at BNP Paribas, we've written a lot about this over the last few months, which is that ramping CapEx finally coming through and hitting margins. And so we're seeing that coming through and hitting operating margins. Google talked about a 41% increase in depreciation in the quarter and how that's going to accelerate. But again, you're seeing Google, Microsoft, and Amazon be much more aggressive about managing that, finding savings elsewhere in order to preserve margins or even lift margins and give investors that earnings growth that they want as they wait for that AI revenue to come through.
Does this feel like the third quarter of 2022 where you saw a huge drop in net income and costs rising for Meta, but then the stock ended up going on a tear following that quarter?
I think today you're starting to get a bit of a hint of a worry of going back to the early days of the metaverse, where it feels like Meta is continuing today to invest in the metaverse, where they still very much believe in the opportunity, and they're seeing ramping adoption of goggles and glasses, and they continue to invest there. We see them continuing to invest in core AI, where they're seeing today improvements in their impressions and pricing and user growth because of core AI investments that are working, and now ramping investments in Gen AI, which they see as potentially driving future growth. So I think the market's starting to get a little bit worried, as it did back in 2021, 2022, that the spending is, I wouldn't say out of control, but certainly prioritized spending over margin and earnings after a very good period of growth and margin expansion. We're set to maybe enter a period where margins come down and earnings growth slows down into the single digits.
Stefan, I'm just looking and thinking probably Google CEO and Microsoft CEO and CFO and the whole C-suite is saying, really, Meta's going to take the oxygen out of the air, which we just delivered this incredible quarter, and people are talking extensively about how much Meta is spending. When you take a look at the bottom line of these huge cloud providers, haven't we learned that there still is demand far outpacing supply, and that there still is plenty of money willing to be plunged into the AI hopes and dreams that so many companies still believe in?
Yeah, absolutely. I think there's two things to highlight. One is the core businesses for all these companies continue to perform extremely well. Meta, 24% growth on a $200 billion revenue base. Microsoft is growing 17% on a $300 billion base. And Google just hit a $400 billion base, growing at 15%. And the metrics across the businesses are quite strong. So the core businesses, before we even get into a lot of the AI drivers, are performing very well. And secondly, to your point, on the enterprise cloud computing side, we are seeing Microsoft and Google sold out, not having enough capacity to meet demand. That's where it's a little bit different for Meta, who doesn't have that enterprise cloud computing business. So all of their spend, all of their investment, all of their CapEx needs to drive a return through advertising. Again, they're doing so with core AI, and that's working well. They now need to prove that they can do that with Gen AI. And importantly, they need to prove that they can deliver a leading frontier model that they can plug into Meta AI and some of their other AI services. If not, they're going to end up being reliant on Google or OpenAI or some other partner who is in the lead on the foundational model front.
Stefan Slowinski of BNP Paribas Exane, thank you so much for being with us. Right now, let's get you an update on stories elsewhere this morning. Here is your Bloomberg Brief with Vonnie Quinn. Vonnie.
Lisa, thank you. The Bank of Japan left its benchmark interest rate unchanged at 0.5%. 2 board members dissented against the decision. The yen weakened after the decision, even after Governor Ueda gave settled clues that a hike could be coming later this year. Shell posted third-quarter profit that beat analyst estimates. The oil giant's performance was led by a rebound in its oil and gas trading unit, even as weaker energy prices weighed on earnings. The company maintained its quarterly share buybacks, marking the 16th consecutive quarter of at least $3 billion in buybacks. JP Morgan has been joined by about 20 lenders, including Bank of America, Citigroup, and Morgan Stanley, in a $20 billion debt financing backing the buyout of video game maker Electronic Arts. Each bank was allocated between 1% and 5% of the financing and will share roughly $500 million in fees tied to the deal. And that is your Bloomberg Brief. Lisa.
Thank you so much, Vonnie. Putting the leverage back in LBO. Up next, Powell's grip on the Fed.
Schmidt, where was he last meeting? Now you've had more evidence that the labor market is feeling a bit spongier and inflation's not as much of a threat as we thought back in September, and suddenly he reemerges. To me, it tells me that Powell is losing his grip on the Fed.
Krishna Guha of Evercore joining us next. This is Bloomberg Surveillance.
As I reach a milestone in my life, I'm humbled by my good fortune, yet well aware that I still have much to learn. And if I stay true to myself and follow my instincts, my legacy will be looked on kindly by my friends, my family, and hopefully generations to come.
It's been a huge couple of hours, 12 hours indeed, when we're looking at not only a Fed rate decision that really did leave the market disappointed, but also big earnings from big tech, as well as a deal with Xi Jinping and President Donald Trump. What you're seeing in markets is stability, because why not? S&P futures almost flat at this point after being down as much as 0.2% earlier. You're seeing a little bit of dollar weakness versus the euro, and 10-year yields again finding stability, but just 4.07% after rising by 10 basis points yesterday in just one day. Under surveillance this morning, Powell's grip on the Fed.
I think Myron could have gone for 75 basis points. After all, he wanted 50 last time. Sure. And Schmidt, where was he last meeting? Where was he last meeting? Now you've had more evidence that the labor market is feeling a bit spongier and inflation's not as much of a threat as we thought back in September. And suddenly he reemerges. To me, it tells me that Powell is losing his grip on the Fed.
Here's the latest. Fed Chair Powell saying investors need to lower expectations for a December interest rate cut, underscoring hardening divisions among policymakers. Krishna Guha of Evercore ISI joins us now. Krishna, wonderful to have you on the show. Thank you so much for being here. Let's just start with what Bob Michael was talking about. Do you think that this is evidence that Fed Chair Jay Powell has lost his grip over the Fed and that any message is incoherent, incohesive, and not reliable heading into the end of the year?
So I think lost control, lost grip is probably overstating it a bit. But for sure, there are strong signs here that Powell is struggling to manage the committee and finding a strong pushback from a large and vocal hawkish bloc within the committee that really pushed him into signaling that December, to use his phrase, is far from a foregone conclusion. This is now down to committee management. There is no sign to me at all that Powell's own position has changed on labor, on inflation, on policy restraint, on policy strategy. But there is stronger pushback within the committee than we thought. And so this is all about now how he manages this going forward into December.
Krishna, it seems like it's no longer a data-dependent Fed because they have no data. And that seems like what Fed Chair Jay Powell is saying. If you're not going to give us official data, we're going to slow down. We're going to take a pause because guess what? It is foggy out there and risks are on both sides. Is this essentially saying to the government, until you reopen and give us some data, we're not going to do anything?
So I don't really think it's a message to the government. Powell doesn't play games like that. And in any case, the Fed saying, please end the shutdown is not likely to be one of the main drivers of how the shutdown dynamics play out. But you're absolutely right. To zero in on this very striking and in my mind quite curious idea that if we don't get a lot of new information because of the shutdown, then we should go slow. I think that's analytically completely wrong. I think if you have a baseline view as to how the economy and policy is likely to evolve, aka the September SEP, then if you don't get new information, you should continue along the path that you previously assessed. That's the right way to make policy. I find Powell's idea a little curious, and it seems to me another sign of him straining somewhat awkwardly to accommodate this large hawkish bloc within the committee that was clearly flexing its muscles this week.
From your perspective, Krishna, what should be the more important side of the mandate right now, the employment side or the inflation side? Is it the Chipotle side of the world where we're seeing real pushback from consumers, or is it the Google side of the world where people can't seem to spend enough money?
Well, there's two very interesting but distinct points there. One is speaking to this K-shaped economy that we've talked a lot about, double K-shaped inactivity between the secular AI themes and the others. K-shaped in the consumer between the high-end consumer with the net worth gains and the low-end consumer with slowing labor real income growth. As Powell said in the press conference yesterday, the AI piece doesn't seem particularly interest rate sensitive. That's a secular story, whether you think it's overdone or underdone. So I don't think that he can really try to sort of manage the different parts of the economy. When it comes to balancing the mandate, employment and inflation, I think the reality is that the inflation information, including the September CPI, has been coming in a bit less bad than anticipated. A little reassuring. I'm not saying mission accomplished at all, but a bit on the reassuring side, which logically gives you some more space to lean against the potential for more serious labor weakness to emerge, I think, with another cut in December, which is still my base case, and not by 55-45, more like 2/3, 1/3 coming out of that meeting. But very clearly, that's less of a lock than we thought going in.
Krishna, if they can't guide to December and they say it's a far from a foregone conclusion, then why did they bother cutting now?
Well, I think first of all, the market was discounting a cut today, this week, with essential certainty, and it would have been very disruptive not to deliver it. But the logic of continuing to step back towards a more neutral rate setting is as solid in October as it was in September. In fact, it's probably a bit more solid in October because we've had the benefit of that somewhat reassuring September CPI release, while the available data on the labor side has broadly suggested ongoing softness, albeit without any near-term, more serious weakening of the labor market. So whatever the logic for cutting was in September, which is risks coming into better balance, therefore start moving rates back towards a more neutral setting, that applied in October. Logically, if we don't get new information, it will still apply in December. The question is, can Powell drag his colleagues over the line?
Well, Bob Michael, as Lisa stated in earlier on, is saying that he's losing his grip. The Wall Street Journal editorial board calls it Fed confusion, and they think because of this that the president should announce who is going to be his successor sooner. Do you think we could see that the administration speed up this announcement because of the meeting that took place yesterday?
I mean, it's possible that could be an influence at the margin. Certainly, the timeline we've been told to expect is that Bessent will give a shortlist to the president by Thanksgiving, and then the president, may act on that, make his selection, after Thanksgiving. So that would certainly line up going into December. If they think the Fed's going wobbly on cuts, it might well encourage them to step that up. But I will say that when you look at the impact of bringing Myril onto the committee, you've actually seen that, if anything, the pressures have gone the other way, right? Having somebody who is stridently more dovish than the rest of the committee and whose motivations, failure or otherwise, are suspected by his colleagues of being somewhat political rather than purely economic in nature. If anything, it's just making the rest of them more hawkish, certainly making them more inclined to stand on their independence. And that's not helping Powell actually deliver the cuts. So I'm not sure at all that ramping up political pressure is the way to get the Fed to cut in December, though I do still think that when all is said and done, the logical compromise is what the logical compromise always was, which was absent new information that clearly changes the story and challenges this idea that risks to labor and inflation are coming into better balance. You cut December, and then you take a timeout to assess in early 2026. That was my base case before. It's my base case now, albeit with somewhat less confidence than it was 24 hours ago.
Krishna Guha of Evercore ISI, thank you so much. Always thoughtful, really interesting. And frankly, on the Stephen Myron point, it was really interesting. And this was something that a number of analysts pointed out, that he did dissent with a 50, not a 75, not a 100. I mean, and it sounds outrageous, but if he was dissenting with a 50 last meeting, why didn't he dissent and catch up this time with a 75?
Hopefully we could speak to him and ask him what his thought process was about his changing of numbers. But it is true that Powell is dealing with a diverging Fed. And reporters asked him about this, and he said, no, it's a deliberative body. It's nice to have different voices. But you have to imagine it's hard to deliver that press conference when you have competing factions on your committee.
Yeah, coming up next to break it all down, Stuart Kaiser of Citigroup, U.S. Energy Secretary Chris Wright on the agreement potentially between the U.S. and China, Edward Fishman of Columbia University, and Sonal Desai of Franklin Templeton Fixed Income. This is Bloomberg Surveillance.
As I reach a milestone in my life, I'm humbled by my good fortune, yet well aware that I still have much to learn. And if I stay true to myself and follow my instincts, my legacy will be looked on kindly by my friends, my family, and hopefully generations to come.
The market continues to underestimate how big AI can be.
The areas that we are more bullish are really around AI.
Earnings are coming in better.
The positivity is going to continue.
I think what happens is over the next year or so, gravity just reasserts itself.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Good morning. Welcome back to Bloomberg Surveillance with stocks processing a fire hose of news over the past 24 hours. President Trump calling his meeting with Xi Jinping amazing. Investors digging into the details. Big tech earnings underway with Amazon and Apple reporting after the bell, and a Federal Reserve unwilling to commit to a December rate cut in the fog of uncertainty that is no data and no agreed upon trend. Is this the Chipotle economy or is this the Google economy?
That's a great question. I think it depends what kind of consumer you are. Chipotle is saying that they are literally going to eat the beef. Higher tariffs on beef, higher costs on beef has been a problem for the administration, higher consumer costs. But it hasn't been a problem for the Magnificent Seven, which continuously spend when it comes to AI. This stat is amazing. Meta, Google, Microsoft. $78 billion in capital expenditures last quarter, 90% increase from where we were last year, which is why everyone is saying, is there some sort of bubble? Because this is a lot very quick.
What was interesting to me is when you take a look at the Fed meeting, it actually was really interesting. It was expected to be pretty much status quo, and yet the idea of pushing back against December rate cut clearly was market moving. I'm surprised the market isn't moving more on the heels of this announcement between Xi Jinping and Donald Trump. The idea that there is some sort of peace between the world's two biggest economies.
I think part of it is the market went into both the events having the base case scenario. We got the base case scenario out of Xi Jinping and Donald Trump when it comes to soybeans, rare earths, and the tariff level. Pretty much we have a détente for a year's time. With the Fed, Jay Powell and the Fed sprinkled some juice on the market and then quickly took it away with that we are far from December being a foregone conclusion when financial markets going into this meeting had a 90% chance that December was on the table. But I don't understand how they're cutting now if they're not going to cut in December, since we might be in the same place when it comes to fog. 30 days today marks the shutdown.
Yeah, and it seems like maybe talks have some life down in D.C., but we'll find out. I am curious. We are going to be speaking with the Energy Secretary coming up in about 15 minutes. The component here of China buying energy resources from the United States out of Alaska, do we have any sense of what's behind this, how concrete this is, whether this could potentially replace any kind of purchases from Russia?
This is what the president had to say in his Truth Social. China agreed that they will begin the process of purchasing American energy. In fact, a very large-scale transaction may take place concerning oil and gas from Alaska. Chris Wright, Doug Burgum will get on this. So potentially there are some Alaska energy entities or gas, oil that maybe China will be purchasing. This was something new that we didn't know going into the meeting.
And we'll hash that out in just a little bit. Right now in markets, you're seeing just calm pretty much across the board. A lot of news, just all things going on all cylinders, and stability near record highs. S&P futures 69.20 up, down just about, less, really not down, basically flat. We're looking at a dollar marginally weaker, again, basically flat versus the euro. 10-year yields flat after rising yesterday by 10 basis points. Not a lot of action here, even with that news fire hose. Coming up this hour, Stuart Kaiser of Citigroup with big tech earnings pushing equities or trying to push them higher on the margins in certain spaces. Energy Secretary Chris Wright, as we were talking about, with President Trump announcing an energy deal with China. We'll get details there. And Sonal Desai at Franklin Templeton with the Fed chair putting a December rate cut in doubt. We begin this hour, stocks hovering near record highs as investors await more Magnificent Seven earnings. Stuart Kaiser of Citigroup writing this: the early reactions to earnings have been mixed. We remain positive positive U.S. equity beta with a quality tilt and preference for AI power generation. Stuart joins us now. Stuart, great to see you.
Good morning.
Thank you for being here. I'm glad the polar bears didn't eat you. I'm just curious, going forward, what your takeaway is. Are you still all in on power generation, despite the fact that investors seem a little bit cautious about spending more than revenues are growing?
Yeah, we're still very positive on that story, and I think you're going to get a lot of political headlines next week with Election Day coming up that puts even more focus on utility prices, to be completely honest with you. All the CapEx numbers that Emery mentioned, a lot of that is going straight into data center build-out. I mean, one of the Meta data centers in Louisiana cost $27 billion, which for New Yorkers, that's 3 tunnels under the Hudson River. It's an astounding amount of money. So, yeah, we're still there. Look, there are obviously risks to that. Just one headline that these chips need, less power than we thought would be very destructive for that trade, like we saw with DeepSeek back in January. But for now, we do think it's the best Sharpe ratio way to kind of have that AI trade on.
And frankly, the best example of this is Caterpillar, the fact that those shares popped the most since 2009 on energy, not necessarily bulldozers. I'm just curious what you're expecting to learn from Amazon and Apple and whether that could feed into the story or whether these earnings are irrelevant to you based on the CapEx spend that we've already heard from the likes of Microsoft and Alphabet and Meta.
I mean, definitely not irrelevant. I think Amazon in particular, because you're going to get, a little bit of a sight into AWS, but also consumer spending. So I think Amazon will be quite interesting. I think Apple surprised people a little bit, just given the uptake on the iPhone, but definitely important. Last night was a little more important, and that's how it was priced. But, when Amazon earnings, I think after the bell will be very important again.
Do you think the bar is just too high, considering what we saw from Meta?
Yeah, Meta's interesting. I think there's some view that their operating cash flows are starting to converge with their CapEx spend, and the question is how are they going to finance that? And the discussion of how do you finance all this build out is a very big one. I think Oracle was issuing about $40 billion in debt this week. So yeah, it's there is a question here, I think, about how this is going to be financed, medium to long term, and certainly the Meta stuff. It looks like they're all in, and as they should be. I think you both have mentioned the amount of spending. I think it's because these companies view this as existential. And they feel like they have to win the AI trade.
You mentioned energy, though. Could the energy story keep up with the spend, or will there be a pause just because we don't have the resources to power this?
That's a good question. I mean, instead of Caterpillar bulldozers, maybe you give your kids Caterpillar turbines. I don't know. But yes, there's an issue with that. I think look, when Oracle reported, a month and a half ago or so, that was the big commentary, was an amazing revenue forecast. They might not have the chips or the electricity to actually get there. So, our folks on the AI side think you may have to start almost like carving out hyperscalers and have them paying a premium for power, because it does seem like your ability to compete and also your ability to get access to the chips is linked to your, proof of concept on the energy side of it. So, yeah, it could be that we're earlier innings, to your point, because of bottlenecks as opposed to anything else.
How reliant is the energy trade, is the AI trade, on the idea of rates going lower? How much was yesterday's shock that maybe this wasn't an all-in Fed with respect to a December rate cut potentially the first sign of a real problem for this trade?
It hasn't been up until now because these companies have amazing balance sheets and are, generating so much cash. I think the fact that, Oracle is issuing a lot of debt and these numbers are becoming so big, it could be a little bit more of an issue going forward. But the fact is, these are some of the strongest balance sheets on the planet from a lot of these large cap tech. So I don't think rates is going to impact them too much because, frankly, they're willing to self-finance this stuff at levels that a lot of people wouldn't finance them at, because they view that spend as so important, right?
So then why is it important at all whether the Fed cuts in December or not? Because you're talking about how it doesn't affect the biggest trade out there, which has been fueling GDP, has been fueling economic growth. It doesn't necessarily affect the fact that we see credit conditions that a lot of people, for all intents and purposes, have been calling extraordinarily loose. And you've already seen the momentum trade, yes, have hiccups, but do really well. So does it really matter if the Fed cuts in December?
That's a very bullish way to look at markets, I would say, if Fed cuts don't matter for equities. Look, I think it would matter more if we had more data, in the sense that if you could confirm that the labor market was continuing to slow down and they actually wanted to get back to neutral, in that case, it would matter more. We're in a bit of a data vacuum. I think the issue the market's going to have a little bit with the FOMC yesterday is really trying to understand the reaction function here for them in December, because Krishna earlier mentioned this. They had a base case. If you look at the data that's come in since that base case, the inflation data was fairly friendly. They themselves have stated downside risk to the labor market from the shutdown. That combination of data wouldn't suggest that you don't cut in December. So I think the question here is what is your reaction function? What are you going to be looking at? And how are you weighing the dual mandate risk at this point?
So does the market now start to care about the shutdown because it may impact whether or not the Fed can move?
Potentially. The market seems very uninterested in shutdown politics at this point. Look, I think coming into this meeting, you were saying, if we go into the Fed blind, there could be some risk there. The market kind of priced that out. The issue with the next one is they update the SEP, which is another level of detail they're going to have to provide. And frankly, your data at that point could be 2 or 3 months old, depending, because it's going to, if they reopen, you can get 2-month-old labor data out pretty quick. They haven't collected anything on either inflation or labor market data now for 2 months. So it's not like they can just, push a button and get the inflation print. They could go into that December meeting with a lot less information, than we hoped. But yeah, it doesn't. I think you're going to need to see more paychecks miss for the market to really care, to be honest with you.
At this point, though, people are trying to look at what they do have, which is corporate earnings. Mm-hmm. And we've seen pretty varied earnings, right? There's the Chipotle story. I keep coming back to it. I sound like a broken record. No, I'm not obsessed with Chipotle, but there is this feeling they are eating the margins. Insert your pun here, because they cannot pass along any price increases that are commensurate with the costs that are increasing on their end. And they're talking about real weakness, particularly in lower income consumers, at the same time that you're seeing higher end products, in particular first class airline tickets, for example, do really well. So yes, it's the K-shaped economy. At what point is that weakness going to start bleeding into the credit cracks, the cockroaches, whatever you want to call it, that some people have been trying to suss out?
Yeah, it's a great question. I would say first-class plane tickets, you must be doing very well, Lisa.
I'm not talking about myself, but carry on.
It can be an issue, but look, this has been almost like a slow motion, car crash on the labor side, right? I feel we've been talking about weakness in the labor market for 18 or 24 months. And yeah, there are pockets of risk. Even, Walmart's last earnings, they discussed that, tariffs are going to be an issue in coming quarters. So yeah, there is a build into this, and what we might see is the impact from tariffs, but it's very slow and kind of methodical how it bleeds in. I do think retailer earnings later in the quarter are going to be very important because the front half of earnings have been biased towards larger cap stocks with a lot of exposure to capital markets and a lot of exposure to the AI theme, and those have generally come in well. But look, the market seems pretty happy to whistle by that cemetery, as they say, and until then, markets are going to rally, I think.
Yeah, at that point, it'll just remain anecdotes rather than a theme. At some point, it may tip. Stuart Kaiser of Citigroup, always wonderful to have you. Thank you so much for being here with us this morning. Right now, let's get you an update on stories elsewhere. Here is your Bloomberg Brief with Vonnie Quinn. Vonnie.
Lisa, thank you. The U.S. is resuming nuclear testing for the first time in more than 30 years. In a post on Truth Social, President Trump said, "Because of other countries' testing programs, I have instructed the Department of War to start testing our nuclear weapons on an equal basis. That process will begin immediately." Shares of Chipotle are plunging in the pre-market. The fast casual restaurant chain cut its full-year outlook for the third time this year on weak traffic. The company is also dealing with the rising costs associated with beef prices and the impact of new tariffs. The investigation into the Louvre jewellery heist continues. 5 more suspects have been arrested. According to the prosecutor's office, the 2 men who were arrested last week may have been charged with theft by an organised gang and remain in jail. The stolen necklaces, tiaras and earrings have not been found. That is your Bloomberg Brief. Lisa.
Vonnie, I cannot wait till they make the movie, and I want to see if these are real amateurs. I mean, dropping a crown, I still can't get over that.
It's insane. It's insane. I want to know if they're intact or they've already been sent to diamond cutters and already tiny versions are just spread across the world, and then you're never going to be able to track them down.
That's the worst case scenario that some people are worried about. Up next, not that, striking a deal.
I thought it was an amazing meeting. He's a great leader of a very powerful, very strong country, China. We've come to conclusion on many very important points.
U.S. Energy Secretary Chris Wright joining us next. This is Bloomberg Surveillance.
Markets like certainty, people like certainty, but we're living in an uncertain world. Marketing is so tied to how fast the world is moving, and the division between what used to be communications and marketing and PR and advertising, it's all blurring. So what does that mean? We're all acting more like a newsroom. What matters in the world matters in marketing. What's happening every morning when you wake up is going to impact your marketing campaigns, or more importantly, your messaging. So we're always just trying to evolve the message in almost real time to, meet the moment and meet our audience where they are. This environment, it's pushing us to think differently and act differently. There's a lot of moments coming at you all the time, but you need to pick your moments and make your mark.
A bit of calm after a whole host of drama right now in markets. Not seeing much action, pretty much flat across the board for the S&P. Futures near those record highs. In the bond space, that earlier gain you're seeing reverse with yields again marginally higher, building on the losses after yesterday's 10 basis point rise in crude. Down about 0.8%, a real détente between the U.S. and China coming to an amazing end, in the president's words, as we did get some sort of deal. Under surveillance this morning, striking a deal.
I thought it was an amazing meeting. He's a great leader of a very powerful, very strong country, China. And what can I say? We have, it was an outstanding group of decisions, I think, that was made, and we've come to conclusion on many very important points.
Here's the latest. President Trump teasing an energy deal with China after both countries reach a tariff and rare earth agreement. Joining us now, I am so pleased to say, is U.S. Energy Secretary Chris Wright from Toronto, where he is in the G7 meetings with other world leaders, talking about energy and what can be done to build out. U.S. Energy Secretary, thank you so much for being with us. I want to start with this deal that President Trump was hinting at with China, talking about Alaska oil. What details can you provide us with? What contours of this transaction do you expect to come to light?
Look, that China is by far the world's largest importer of oil and importer of natural gas. The U.S. is by far the world's largest exporter of natural gas and by far the world's largest producer of oil. So there's so much space for mutually beneficial deals between the U.S. and China. Alaska was mentioned in that deal dialogues, enormous reserves on the Alaskan slope. They've been strangled by the Biden administration, and Alaskan production's been in decline, but lots of room for that production to grow, lots of room to bring natural gas from the North Slope of Alaska and bring that to all of our allies along the East Asian Rim, or frankly, anywhere in the world. But President Trump is just a master negotiator. He finds out what is it that's critical to the Chinese, what is it that's critical to the United States, and finds that sweet spot of a deal that works for both countries.
Could potentially the United States fill a gap if China decides to buy less energy from Russia, especially since the U.S. government sanctioned Rosneft and Lukoil?
Absolutely. Absolutely. Today, the U.S. produces 50% more oil than Russia or Saudi Arabia. And it just puts not just the United States, but the world in a better position. Can we squish out half of Russian oil exports and still have a roughly balanced oil market? Absolutely, we can.
Have you been in touch as well with your counterparts in South Korea? The president, coming back on this trip, talked about the tariff rate in South Korea and the plan for them to buy oil and gas in vast quantities, part of that trade deal.
Yes. I've been in dialogues with the Korean staff since I arrived in the office. Korea is a great industrial nation, also short on energy resources, but long on other assets. So, lots of room for the United States to grow our role in supplying natural gas, oil, and frankly, nuclear technology to South Korea.
I bring this up because it sounds like, are you preparing some sort of trip to the Asia Pacific if you have to meet with your Chinese counterparts and your South Korean counterparts for the United States to send more energy to that part of the world?
Oh, I go wherever the president tells me. But yes, I would be going to Asia in a few weeks, and heck, I may be going sooner than that. I'll get debriefed from all the dialogues and all what must be done promptly in the follow-up. Could be heading there very shortly. But I don't know about that right now. But of course, Asia is the center of the world economy after the United States. So that's a critical alliances, critical partnerships, and critical oil demand sources.
Mr. Secretary, I feel like we should have a map here of all the places where you've got trips planned, because I suspect that you're going to be heading to Greece soon, too. And the whole idea of how much the U.S. is exporting in terms of energy to the European region, especially as they reduce reliance on Russia. Can you tell us anything about how that relationship is developing?
Actually, it's been great dialogues. I think the European nations, the war in Ukraine really crystallized, yes, it wasn't a good idea to have all of our key energy supply coming from Russia. Largest supplier of oil to them, largest supplier of natural gas to them, largest supplier of coal to Europe. And the United States has slid in to displace Russia as the largest supplier of natural gas to Europe. We can do the same thing with oil. And I think we're today the second largest supplier of coal to Europe. So I think there's mutual agreement on both sides there. Certainly there's some regulations in Europe, CSDDD, which is just a way overreach in the regulatory regime that's going to make it sticky to ramp up energy movement as fast as we'd like. But we're in constant dialogue to fix those problems. I'm excited about the future relationship between the European nations and the United States. It's always been good, but I think it's going to grow a lot.
Mr. Secretary, a lot of people who come on this show talk about their concerns about higher energy prices in the United States. They talk about artificial intelligence, the power demands, the inability to really provide the energy that would be required to expand at the pace that a lot of AI giants are talking about. How do you plan to mitigate that? Is there a level at which power prices get so expensive that the United States will reduce some of the exports to the rest of the world?
Well, there are actually different factors that control them. Like our large exports of natural gas today are actually still relatively modest compared to the amount of gas we produce, and we can easily produce vastly more natural gas today. So power prices, the problem isn't the price of natural gas. The problem is the infrastructure, generation facilities, transmission lines. The Biden administration for 4 years forced the closure of a lot of coal plants, a few gas plants, prevented the building of new coal and natural gas power plants. They built a lot of unreliable intermittent electricity that's spread all over the country that takes more transmission assets. All of that goes into the rate base and has pushed up prices. Frankly, it's part of the reason why President Trump got elected. So we're having to reverse all those things. Stop the closure of coal plants. Make it easier to build new natural gas plants. Make new sources that want to come on be successful commercially, not dependent upon subsidies, and not require massive new transmission investments that all just go on to the ratepayers. So we're doing a lot of things at FERC. We had a big announcement last Thursday I probably can't go into here, but specifically aimed at artificial intelligence, how we can speed new firm generation without driving up the price of electricity. I share the American consumers' worries about the recent rises in price of electricity over the last 4 years, and I'm working 7 days a week to stop those price rises and enable the United States to lead in artificial intelligence.
We've seen one of the most significant announcements from this administration when it comes to nuclear. The government is planning this partnership, $80 billion for nuclear reactors, with a Canadian company, Westinghouse. Who will develop them and where? Can you give us more details about this?
I would call Westinghouse an American company. It's a legacy American company, and it's majority owned by the Americans. It has a Canadian partner in Cameco, but it's an American company. This is a plan to partner across the country at a few different locations to build, as you saw in the announcement, they gave dollar amounts, but a large amount of power. Think of order 10 gigawatts of new electric generating production capacity, and to do it in a way that's efficient. So instead of one here and one starting a few years later, we want to stage in the construction of these plants to most efficiently use construction workers, assemblers, fabrication, so that we lower the cost of nuclear generation, re-stand up the supply chain in the United States. This is quite an exciting project, and more details will come out as we fill in those dots. But President Trump promised to relaunch nuclear energy, unleash a nuclear renaissance in the United States. This is a big part of that effort.
And just, I wanted to get your take on a reversal we've seen from Bill Gates, someone who's long talked about climate change. He's sort of pivoting his stance. And according to his staff, you recently met with him. Did you have a hand in how now he's talking about energy?
I've had multiple great dialogues with Bill Gates over the last year, at multiple times and at some length. Of course, he's a very thoughtful, successful entrepreneur, and climate change is a real thing. It's a real challenge. It's just not remotely close to the world's top challenge. And the problem is, by putting it the top challenge, the ineffective things governments have done have raised the price of energy, lowered the reliability of the energy system, and they've stood in the way of efforts to combat hunger, food insecurity, energy security, education, and all the other global challenges. So yeah, look, Bill and I have had great dialogues. He's done fabulous stuff in public health around the world, and I'm thrilled to see him talk in a more candid way about this issue.
U.S. Energy Secretary Chris Wright, thank you so much for your time. Have fun up there in Toronto. Coming up, Edward Fishman of Columbia University as U.S.-China trade tensions ease for now. Plus, Yahira Anand with your morning movers. Eli Lilly shares higher after raising its full-year revenue outlook. You're watching Bloomberg Surveillance.
In this day and age, because we've got a media saturation and overload, I think we struggle so much right now to cut through and find that meaning and significance. Almost every day now at conferences and with other CMOs, I'm hearing storytelling. Sure, you can tell a great story, but what really needs to sit at the heart of the story is that authenticity. I love a little bit of a return to longer form content. That's very rich, it's very meaningful. Creating these opportunities for people to discover a little bit more and allow people to come in and explore. When people realize that there's substance, they're just so much more willing to digest what you give them. If it's real, if there's an irrefutable truth in the story, then it feels universal. It feels right.
Seeing a bit of stability this morning after a ton of news with tech earnings still on deck. Amazon and Apple after the bell. We did get Alphabet, we did get Microsoft, we did get Meta, and the results were very much mixed. Still, you are seeing gains across the board after reversing some of the earlier losses. Futures up almost 0.1% on the S&P. On the Russell 2000, up almost 0.25%, despite the fact that you really are seeing some concern about the Fed not cutting in December. If you take a look at the bond space, it's not necessarily cohering with the strength that we're seeing in the Russell 2000. Yields higher, not lower, building on the losses that we saw from yesterday. 10-year yields up 10 basis points yesterday, and now you're seeing it up almost a basis point again. 2-year yields up just marginally 3.6%, really raising a question about what the Fed's reaction function is. The dollar had been stronger yesterday on the back of that disappointment about a December rate cut. Now it's a slightly weaker, although basically flat, versus the euro. 2 hours away from the cash open, here are your morning movers with Yahira Anand. Yahira.
Hi, Lisa. It was a beat and a raise for Eli Lilly, so shares are up 4.7% in the pre-market. The company raised its full-year guidance as demand bounced back for its blockbuster weight loss and diabetes drugs. This is Lilly's second upgrade in just a few months, cementing its place as the leader in the weight loss market. And moving on to its competitor, Novo Nordisk, it is upping the ante in the obesity drug race, offering $6.5 billion to buy Metsera and outbid Pfizer. That is why you're seeing shares of Metsera rise nearly 20%. Plus, if certain targets are met, they'd up the offer, topping Pfizer's by more than 10%. It's an aggressive move by Novo Nordisk, taking aim at rivals as it fights to regain the lead. But as we saw with Eli Lilly, it is a tall order for Novo. And we end on eBay. Those shares are down 8.6% after the company gave a profit outlook that missed expectations for the all-important holiday period. The other issue is that shares had run up 60% this year, so investors had high hopes. Lisa?
Thank you so much, Yahaira. That seems to be the story pretty much across the board. Yeah, is it bad or just not absolutely stellar and better than good? On our radar this morning, despite speculation, President Trump clarifying he did not discuss allowing China access to NVIDIA's Blackwell chips during his meeting with leader Xi Jinping. The two did talk about some of the chip makers' other products, but not the highest tech one that has caused the most concern. Meta and Microsoft, meanwhile, as well as Alphabet, announcing plans to increase CapEx on AI over the next year at a tremendous pace, testing the patience of many investors. The three companies spending a combined $78 billion on the AI build-out in the latest quarter. We've got more Mag 7 earnings continuing today. Apple set to report revenue after the close as the company briefly topped $4 trillion in market value Wednesday. Amazon also reporting after the bell, hoping to show investors that its AI investments are paying off. So which is it, the Apple upgrade cycle or this question of the cloud competition and who's winning?
I don't know. I think it's going to be interesting. For Apple, I think it's all priced in because all the channel checks are showing that individuals are going out and buying this new phone. I don't know if it's because Apple's offering something brand new or just people have been waiting so long to upgrade their phone that they're finally like, okay, we'll go out and buy the 17. I think Amazon is going to be more interesting, especially given what's going on with the other cloud computing rivals and an update with them, what's going on with Anthropic. That's really going to be the one to watch. And they recently laid off individuals. So what is the commentary going to be around that?
I'm so glad you mentioned that. Very curious about Amazon coming out yesterday. We reporting, or 2 days ago rather, reporting that they were cutting off thousands of employees, talking about how in the future artificial intelligence would allow them to do that to an even greater degree. How much skepticism do you think there is based on how quickly they have doubled and tripled their staff in response to a tremendous expansion? So this could just be sort of trimming around the edges.
That's what they're saying officially, but you do have to wonder, are they finding ways, thinking about ways? And the CEO talked to us over the summer, how they're going to find ways to trim margins, be more efficient with artificial intelligence. It's not just about productivity. Can you actually use AI to fill a job?
Meanwhile, all I can think about with the Apple upgrade cycle is that when you hear a phone drop, you know the sound of an Apple iPhone dropping, and everyone just wonders, oof, is that going to be the one? I'm telling you, that's like a classic feeling. Maybe it's just me and my kids. Turning to trade now. The U.S. and China reaching a trade deal. President Trump and Xi Jinping agreeing to extend a tariff truce and roll back export controls. Edward Fishman of Columbia University and author of Choke Points joins us now. Eddie, great to see you. Thank you so much for being here.
Great to see you too.
So what was your initial take on this deal or this agreement or this discussion between Xi Jinping and Donald Trump?
Sure. So look, in a sense, we're sort of back to where we started. Trump came out right after he was inaugurated in January with these massive tariffs on China. First the fentanyl tariffs, then eventually the reciprocal tariffs. And basically ever since then, it's just been an effort by the Trump administration to walk those back without appearing to lose to Xi Jinping. To me, the big sort of strategic impact right now is that China has shown the world that its control over rare earth minerals has the United States over a barrel. And what that means is it just dramatically decreases the U.S. influence over China, whether that's on artificial intelligence or even on Russia, where, is Trump actually going to pressure Xi Jinping over Russia? I'm skeptical.
Well, but do you think that this actually pushes the United States to have closer ties with other countries that are dealing with the same issue? It wasn't just the United States. It was also Europe that really was alarmed by these rare earth exports because they were hit just as much as the United States. How much does this sort of expedite this push for the rest of the world to create some barrier between themselves and their reliance on Chinese products?
So that is actually how, if Trump is going to turn this into a win, it's going to be building what some people have called allied scale, coming together with the Europeans, with allies in the Asia Pacific to actually build alternatives to Chinese supply chains. Rare earths obviously would be a great place to start. What I'd say is if you look at Trump's first term, probably the biggest success of his first term was Operation Warp Speed, where rapidly they developed these vaccines that really helped us get out of the COVID pandemic. We need something like that today with rare earths. The thing is, though, we're never going to be able to do that totally domestically, just at home. We're going to need to work with allies for us to fix this problem in any reasonable amount of time.
But is there any appetite for Europe to do that, especially given the fact that they have a ton of climate initiatives, and this is a very dirty industry?
Yeah, look, I agree with you. At the same time, I think that despite those concerns with climate, and I was just in Europe a couple weeks ago, there's a significant concern right now that China basically, again, has veto power over any policy we want, right? Even Taiwan, right? Thank God that didn't come up, apparently, in the conversation yesterday. But there's real fear that American deterrence vis-a-vis China over Taiwan has dramatically decreased because China has shown that it can shut down Ford factories in a matter of weeks if it cuts off our access to rare earths. The thing I'd say, by the way, The U.S. has similar power over the dollar. We just haven't been using that against China. We've been using tariffs, which are a significantly weaker weapon.
Well, what would your suggestion be to the administration to use the dollar?
Financial sanctions, right? So
secondary sanctions on banks if they buy Russian oil, things like that?
Sure. So certainly when it comes to Russia, the key is applying pressure to China, India, et cetera, to tell them that if they keep buying oil from Russia, their banks, their refineries are going to be cut off from the dollar. But even vis-a-vis China, I think Trump's biggest mistake was coming in and assuming that because the U.S. runs a trade deficit with China, the fact that we import more from China than China imports from us, that we would always win a trade war because we could always impose more tariffs on China than they can impose on us. What he didn't anticipate was asymmetric retaliation, that China wouldn't necessarily retaliate just with its own tariffs, but it would do export controls and rare earths. Well, you know what? The biggest choke point in the global economy isn't rare earths. It's the dollar, which is still used in 90% of foreign exchange transactions. And even for China, 70% of its own trade is settled in dollars.
But, Ed, that would be the nuclear step, because that can also have mass implications on the United States and our stock market.
Look, I'm not saying that you would cut off every single Chinese bank from the dollar, but I think if the goal is to establish some level of deterrence with China, to show that we can escalate as well, the area to go is financial sanctions. I mean, if you look at big Chinese companies like Huawei, it's actually remarkable that they aren't under sanctions, right? I mean, we've done a lot to try to cripple Huawei's access to a lot of things, but we haven't put them under sanctions.
But, Eddie, we have seen sanctions placed recently on Lufthansa and Rosneft going in Russia and going directly after some of the biggest oil giants in the region. Do you expect that to be successful? Is that sort of a template of what could be used to come?
Yeah, this is something that I hope, because if you look at Trump's strategy even on India, right, if you go back to August, he wanted India to cut its purchases of Russian oil. So he came out with these massive 50% tariffs on India in August and said, please cut your purchases of Russian oil. Well, the data speaks for itself. In September and October, India increased its purchases of Russian oil. And it's because, again, tariffs are not a significant geoeconomic weapon. India's exports to the U.S. fell in those 2 months, but its overall exports actually rose because it can just sell stuff to other countries, right? But what's happened in the wake of the sanctions last week is we've already seen refineries like Reliance in India and big Chinese oil companies recalibrate their purchases of Russian oil. So I do think you'll see some dip in Russian oil sales in the coming months. Whether it's a durable effect, though, is going to depend on Trump actually pressuring Xi Jinping and Modi and telling them that, look, if you keep doing this, there actually will be consequences for your companies.
You know, it's really interesting to think about it through your lens, through the choke points. We saw the choke point that's rare earth minerals. We've seen the choke point that is energy, especially now with the AI build out, and the choke point that is the dollar. And I want to stay on the dollar, this question of how much what happened in 2022 with some of the sanctions on Russia and this question of seizing assets that were dollar denominated caused a flight from the dollar to eliminate that choke point for other countries. How realistic do you see that flight away from the dollar? Because everyone wants to get away from these choke points and get a little bit more leverage in a world that seems to be controlled increasingly by the people who control these choke points.
I think that's really well said. Basically, if I'm trying to, on a macro level, what's happening in the global economy today, economic warfare is everywhere. When the U.S. weaponizes the dollar, it makes other countries feel vulnerable. They try to insulate themselves. When China weaponizes rare earths, it makes us feel vulnerable. We invest in MP materials and buy, 15% equity in them. So, yes, there has been efforts by China and Russia, et cetera, to diversify away from the dollar. So far, the data doesn't really show that those are succeeding particularly well. To me, the biggest risk isn't so much China and Russia. They're always going to be nervous about the dollar. Is Europe concerned about the dollar? Is Japan concerned about the dollar? I think earlier this year, when Trump started imposing economic warfare not just on China and Russia, but against Europe, against Japan, you did start seeing even our friends start saying, wait, we need to sort of diversify. If that is a threat that is ongoing, if our allies in Europe are just as worried about U.S. sanctions as they are about Chinese export controls, then yes, there will be a flight away from the dollar.
Well, you just were in Europe. Whose side are they on?
The Europeans are clearly on America's side. I mean, the Europeans want the United States to be there for them, their ally vis-a-vis Ukraine, and they want there to be the U.S. to be their ally vis-a-vis China. The Europeans are terrified of Chinese overcapacity, too. Look at the European auto industry.
They're not doing anything about it.
On China or Russia? Which one?
On China.
Look, I would agree with you that they haven't.
On Russia.
Yeah, well, Russia. So Russia, because this, I'm glad you brought this up, because on Russia, there's been this narrative from the Trump administration that the Europeans haven't been doing anything on Russia sanctions. Come on. They imposed secondary sanctions on Indian refineries and Chinese banks in July and again last week. So the stuff that in the U.S. we're saying, wait, what, is Trump going to sanction China or India? Europe is doing that. I mean, and actually, they have now drawn China's ire because they've been sanctioning Chinese banks.
Eddie Fishman of Columbia University, thank you so much for being with us today. Really appreciate your thoughts. Always deeply thoughtful. Right now, let's get you an update on stories elsewhere this morning. Here is your Bloomberg Brief with Yahaira Anand. Yahaira.
Hi, Lisa. OpenAI is reportedly aiming to go public by 2027 with an IPO filing planned by the second half of next year. Reuters reporting the offer could raise at least $60 billion and value the company at up to $1 trillion. OpenAI has just completed a restructuring into a for-profit business, signing a new pact with Microsoft and making concessions to regulators. Meanwhile, dozens have died across Cuba, Haiti, and Jamaica after Hurricane Melissa left widespread destruction across the Caribbean. The storm is on track to reach Bermuda this morning as a Category 2 or Category 1 hurricane. Hundreds of thousands remain in shelters and without power, and the U.S. will deploy disaster response teams to the hardest hit areas. And the Toronto Blue Jays are one win away from their first World Series title in 32 years after beating the LA Dodgers in Game 5. Blue Jays starter Trey Savage gave up just 3 hits and 1 run over 7 innings as Vladimir Guerrero hit his 8th home run of the postseason in the 6-1 victory. Toronto will look to clinch the title at home on Friday night. That's your Bloomberg Brief. Lisa.
Thank you so much, Yahaira. Up next, casting doubt on a December rate cut.
At this meeting, there were strongly differing views about how to proceed in December. A further reduction in the policy rate at the December meeting is not a foregone conclusion.
Sunil Desai of Franklin Templeton joining us next as we figure out exactly how secure that December rate cut could be. No answers, but some speculation. This is Bloomberg Surveillance.
Financial services has had a tendency to love the 50-plus page white paper that has evolved into a 50-plus page PDF. That's not how we consume content anymore. We don't have the attention span. What's great about the world we live in now, you can produce some great content and get it in front of people in really easily consumable formats. But if you don't distribute it in the right way, it'll be invisible. I think that's where AI is actually proving to already be incredibly powerful. The quantity of data that we are able to analyze is going to require us to think very differently about how we go to market, but I think that's exciting. As a leader, my big call to my team is just start to become familiar with the technology and what the technology can do, and don't be afraid of it. Embrace it. It's going to be amazing.
You can't keep a record market down. Right now, you're seeing gains on futures ahead of the open, building on already record highs, despite some of the concern on underlying stocks, including Meta, following some of their spending plans that were revealed last night. You're seeing S&P futures marginally up near those record highs, 69.25 across the board. The Russell 2000 doing better, up about 0.25%, which is a mystery when you take a look at the bond space. The bond space continuing to see weakness after yesterday's Fed chair, Jay Powell, came out and said that he is going to drive more slowly in the fog of no government data. Under surveillance this morning, casting doubt on a December rate cut.
My colleagues and I remain squarely focused on achieving our dual mandate goals. Conditions in the labor market appear to be gradually cooling, and inflation remains somewhat elevated. In the near term, risks to inflation are tilted to the upside and risks to employment to the downside. A challenging situation. There is no risk-free path for policy as we navigate this tension between our employment and inflation goals. In the committee's discussions at this meeting, there were strongly differing views about how to proceed in December. A further reduction in the policy rate at the December meeting is not a foregone conclusion. Far from it. Policy is not on a preset course.
Here's the latest. Fed Chair Jay Powell giving no guarantees that the central bank will deliver a third consecutive rate cut in December. Sonal Desai of Franklin Templeton writing this. It's telling that Powell quickly shifted the emphasis to December. It was a clever move to distract from the fact that the economic outlook did not really justify yesterday's cut. Sonal joins us now. Sonal, I always love hearing your takes as they are different from what everyone else is talking about. Why do you think it is interesting that they did cut rates this meeting when it was completely expected and baked in to market expectations, given the fact that his rhetoric was a bit hawkish and casting doubt on December?
So thanks, Lisa. It's always fun being here. But here's the thing. What I'm saying here is certainly the market expected it, and the Fed guided us towards rate cuts. So of course they were going to cut. But that's a heck of a response if you're asked, why did you cut? Well, because you expected us to cut. That's really not very convincing. What I was talking about really is that the underlying data, much the way that Powell is telegraphing that December is not a done deal. Quite frankly, yesterday's cut should not have been a done deal either. And what I mean by this is that several people have pointed to benign inflation. I would actually beg to differ. Since the middle of 2023 now, inflation hasn't really come down very much. We've been at about 3%. And it's been over 2 years now that inflation has been stuck at around 3%. Yes, we're down by 0.3% since then. So inflation isn't actually actively coming down. And if it's coming down, the speed at which inflation is coming down is glacial. In terms of the labor market, there aren't very good signs which indicate that the labor market is doing poorly. Powell indicated, he talked a lot about the supply issues. That's absolutely correct. I fully concur with this. There was a Dallas Fed paper which talked about 30K as being the new break even. Based on current ADP rolling 4-week numbers, we're looking at 55K for this last month. So if anything, the labor market's doing rather well.
So at this point, you think that it might have been a mistake for them to cut rates by 25 basis points. Where do you see it showing up going forward? Right now, markets are not expressing concern. If anything, they're responding more to the lack of a December rate cut. And you're not seeing the move that we saw last year when they cut rates and you saw long end yields rise in response.
So I wouldn't go as far as, this is within what I would consider the margin of error. If they took it to 3%, I think it would be a mistake, given the current state of the economy. I think 3.75, I think it should be 4. They've cut to 3.75. It's not catastrophic. In terms of why the market has not responded in the same way, I think with complete You can make the argument, very strong argument, that whatever else you think about last year's rate cuts, those 4 rate cuts came against the backdrop of meaningfully higher inflation and lower unemployment and somewhat stronger growth. So it was a particularly odd time to deliver the size and number of rate cuts they did. Nonetheless, if we look at where we are today, the Fed is standing on the cusp of a first quarter, which potentially is going to see tailwinds for both GDP and for inflation. Small tailwinds coming from, say, tariffs on the inflation front. And from the GDP front, we finally start seeing the impact of the big, beautiful bill on taxes. And I think that that's something which the Fed must take into account as we look forward. So I don't think that the December rate cut is a foregone conclusion. And I think potentially if they cut in December, it's a pretty risky thing to do in front of what we know is going to happen in Q1.
What do you need to see between now and December to then in your mind think, okay, they should be and will be cutting?
I think it would basically be that weakness in the labor market, so we should, and really, yes, it does depend on getting some data. And I know we've got problems getting the data given that the government is still shut down. But there are other higher frequency indicators we can look at. We also have earnings reports which continue to come down. If the mass of those earnings reports starts moving in the direction of pointing to a significantly weaker consumer, and here I would be looking in particular in areas such as airlines, the consumer dependent pieces of the economy, which actually continue to show strength. And so if we started seeing a massive data moving in that direction, sure. I also actually do understand why, if they don't have more meaningful data showing significant weakness, they would err on the side of not cutting rather than cutting, because we do know that those SALT tax deductions are going to go up in the beginning of next year. Child tax credits are going to go up. A lot of the pieces of the big beautiful bill, which are not being discussed today, actually go into play as we start off in the next year. So I'm not sure where the gloom about the economy comes from, because we get fiscal tailwinds pretty early in 2026.
So now, just quickly here, we've got about a minute. Meta just put out this announcement that they're announcing a $6 dollar bond sale following their earnings report yesterday. It follows what we saw from Oracle last week. There's almost $40 billion of debt being sold. I'm just wondering if that makes you concerned about the investment grade space, given the glut of AI-related supply coming to the fore.
I don't think I'd go as far as saying we are concerned. The fact is the market is currently absorbing it. Spreads are very tight. It probably makes sense for these companies to issue. But I would say that overall, we're starting from a position where credit is priced pretty close to perfection. Not much scope for error.
All right, Sunil Desai of Franklin Templeton, thank you so much for your time. We always love your insights at a time when people are trying to parse out what exactly the Fed is going to do and this glut of issuance that just keeps coming to the fore. Anne-Marie, this idea that Meta is going to have a 6-part bond sale. We still don't have a total dollar amount, but this follows what we saw from Oracle, and increasingly leverage just slowly percolating in, albeit at the investment grade side, but really creating a lot of supply.
Yeah, zero hedge. Someone has to pay for the CapEx. That's what's going on right now. And you're going to see potentially more of these companies that are spending so much on AI have to hit the debt market to finance a lot of this.
Yeah, and what you're seeing right now is a bit of concern, especially for the likes of Meta, that their spending increase is rising faster than the increase of their revenues and their profitability. And that's leading people to think, okay, leverage has to be built in more. The model for some of these companies has gone from asset light to not so much. And that is what I think a lot of people are looking at. Coming up next hour, Tom Kennedy of JP Morgan Asset Management on that Fed decision and beyond. Walter Piecyk of Lightshed Partners with Amazon and Apple reporting earnings after the bell. Neil Richardson of ADP and Kelly Kowalski of Mass Mutual from New York. This is Bloomberg Surveillance.
People feel deeply destabilized by inflation, by misinformation, by the potential for job loss. We have to be in service of the individual. Purpose, I think, for the last 15 years has been about we. It's been about societal progress. We actually have an Edelman Trust Barometer special report on the shift from we to me. It's moved from societal to personal. This is profound for brands. You can't buy people's loyalty anymore. We have to be about the individual benefit, giving them optimism. Brands need to live in culture. They have to earn their way forward by doing something. Trust is to do the right thing. That's the essential difference between success and failure.
The Federal Open Market Committee decided to lower our policy interest rate by a 1/4 percentage point. A further reduction in the policy rate at the December meeting is not a foregone conclusion.
Which, of course, makes it very difficult for them to begin cutting again in December.
What you see here is a repricing of market pricing to December.
You have a pretty divided committee in terms of the case for preemptive cuts.
Instead of a dual mandate, we have a dueling mandate.
This is Bloomberg Surveillance with Jonathan Ferro, Lisa Abramowitz, and Anne-Marie Hordern.
Good morning. Welcome back to Bloomberg Surveillance, with futures trying to eke out small gains, really fluctuating between gains and losses on the heels of a fire hose of news. Bonds falling yet again after yesterday's Fed rate decision. And Apple and Amazon on deck reporting after the bell, after investors showed increasing concern about the scope of AI spending. But to me, this really is the key question. Can this pillar of the market keep generating the optimism that we're not seeing in some other pockets of the economy?
And Meta this morning saying they're going to tap the debt market because of it. I'm still struck by this quote, the $78 billion in capital expenditures from some of these companies, and 90% basically increase from where they were last year. And that is why everyone is concerned. Meta specifically, though, there is some concern that the bar was just too high. Everyone is very exuberant going into these earnings. So potentially, can they, this afternoon, everyone get a little bit disappointed because they're just too excited and the bar's just set too high?
Yeah, and with Apple, for example, those shares up some 30% since August because there is this upgrade cycle that people are talking about. And honestly, it is true. We all drop our phones, they break, and we try to put it off for as long as possible because we don't want to spend $1,000. But increasingly, it does seem like the evidence is pointing to an outperform there. I'm just wondering, looking at that bond sale coming from Meta, it does not seem like this credit market is closed, is completely compressed, is feeling the strains of a Fed that's not going to cut rates in December, is it?
No, I know that what Jay Powell said was it's far from a foregone conclusion, and he is dealing with these double dissenters on either side at the Fed. But most people you talk to are saying that even if we don't have a government data, because we're 30 days into shutdown, no one's blinking, the private sector data is going to basically line up in order for them to cut interest rates. So I think the market had a quick reversal because they weren't expecting Jay Powell to go as far as to say that. But at the same time, they're looking at it and saying our likelihood, if we had to take a bet, is that he's going to cut interest rates.
Yeah, people are concerned that maybe we won't get the rate cuts that we're expecting. This is not a market that really is feeling the strain based on the M&A activity as well as the bond issuance. Right now in markets, you can see equity futures just trying to eke out gains, but fluctuating here near a record highs, 69.20, down just a touch. You are seeing, again, that 10-year yield. I keep focusing on that because it was lower earlier today, given the fact that we saw a 10 basis point rise yesterday in the wake of that Fed Chair Jay Powell press conference. And today, you're seeing those losses build, now rising about 2 basis points, and crude lower just marginally. Watch this space, especially as China and the U.S. come potentially to some sort of agreement. Coming up this hour, Tom Kennedy of JP Morgan Asset Management, as markets digest a hawkish Fed rate cut. Walter Piecyk of Lightshed Partners as we look ahead to Apple's earnings after the closing bell. And Kelly Kowalski of Mass Mutual as Fed Chair Powell puts a December cut in doubt. We begin this hour with bond markets trying to find stability and losing its footing following the Federal Reserve's decision to cut interest rates for the second meeting in a row. Fed Chair Jay Powell warning another cut this year is not guaranteed. Tom Kennedy of JP Morgan Asset Management writing the following. I think conventional wisdom is that the government shutdown is a reason to cut in December, but Powell seemed to suggest it was a reason not to cut. Tom joins us now. Tom, I'm so glad you put this out there and it's great to see you.
Good to see you.
I'm looking at this and I'm thinking, is this Jay Powell coming out and saying, all right, government, get off your butts, do something, give us some data, and we can do something with it. Otherwise, we're driving in a fog. We need to slow down.
Yeah, I don't know. Good morning. I don't know if he was actually trying to make a political statement with that or more about we don't know what the data is going to do. We don't know what will happen. We haven't seen data really for 6 weeks at this point, if you think back into September. And I think what he's trying to say is if we don't know anything, we have to just be a little bit more cautious. Now, I'm sure the team at the Fed has spent a lot of time with JP Morgan, but we should spend even more time because we always have a pulse on the economy, given that at least one product isn't over 50% of households. So we get a great pulse on what's happening.
So we get to spend some time with JP Morgan. So why don't you tell us what you're seeing? I mean, we've been talking all morning about Chipotle. We've been talking about this sort of divergence that we're seeing between Chipotle and Delta. You know, which is it? What are you seeing in the broad scheme of things?
Excellent. I mean, the data is what's going to decide what happens here. I think it's mostly about the labor market. Again, we get great intel on the consumer. When you look at spending over the last 30 days, spending has undoubtedly cooled. We're running on a year-over-year basis about 3%. But under the hood, what's really interesting is that necessity-based spend is what's driving the slowdown. That might feel odd, but it's part of this K-shaped economy that we're living in. Spending growth for high-income Americans is growing, and yet where it's slowing is in lower quartile income Americans. So I think that's going to be a big challenge for the Fed. Where do they come out on that K-shaped economy? What's the most critical, which I think is not being talked about enough, is in our data, we don't see unemployment insurance claim payments going up just yet. So it is this low hiring, low firing economy. And I think that's part of what Powell's worried about. Like if the labor market slows down too much, we will see some of these layoffs, but we don't see it yet in our data. So that's, I think, the data set we're at, whereas the world is slowing down, but hardly an emergency.
When you talk about the consumer spending slowing down, especially in these necessities, would an interest rate cut actually help that?
Yeah, lower interest rates should help in aggregate. And what is it going to help do is stimulate financial activity and also just make day-to-day payments, maybe on credit card payments, a little bit lower, less expensive. So it will on the margin. Amory, I think you're getting at a point. This 25 basis points here, they're really too much? I don't think so, but it's the signal about what will happen. On your program, you guys have been talking a lot about how rate coming down is helpful, but also interest rate volatility has come down so much. And that's something that should stimulate financial markets in addition to rate cuts. So coming back to the 10-year Treasury rates moving up so much is kind of interesting. Yeah, we're calling into question December, but it also put a little bit of volatility back into the market. The MOVE index, as your best proxy for interest rate volatility, is below the level it was when the Fed started hiking rates in 2022. So we've come a really long way. It's been a long time, though.
You're saying that basically this government shutdown is giving them an excuse to potentially hit pause in December. Even if we reopen tomorrow, what kind of data clarity do you think we'll even get from the government? Like, how messy do you think it'll be?
No, I don't think it should be messy. And it's really just being delayed because of folks not working. There's an operation behind there where the data can come through pretty quickly.
But they're not collecting it right now.
Well, we're going to be able to collect that data relatively quickly. And yes, the weeks, to your point, the weeks of figuring out where the labor market was will move and shift, but the process is there and can be engineered quickly. Relying on these other data sources is what's going to matter. To the point, though, everything to me is about the labor market. I don't think the inflationary environment, and Powell did this a few times yesterday, the service-based inflation, which is tied to the labor market, is cooling and is consistent with 2%. And if he really believes that tariff-based inflation is somewhat transitory or a one-time shock, which I think Wall Street does too, that's the thing he should focus on, the labor market.
At this point, you said that a rate cut would ease financial conditions. Do they need easing?
Yeah, I think they do.
How do you explain that, given the fact that we're seeing issuance surge, that you're seeing froth in certain pockets, that you're seeing concerns about cockroaches, companies that are getting money that maybe don't deserve it or can't repay it?
Yeah.
How do you square that circle?
I think the real estate market is the easiest way to make this analogy. For the last 3 years, what you've had is debt yields higher than equity yields. It's an upside-down, inverted capital structure. How can I get a better return with less risk than the equity market in the same capital structure? It can't last forever. You're just pulling up all of that investment out of the equity market into the debt market. This can only coexist where what happens in this world, transaction volumes just fall off a cliff. Private equity is going through the same exact thing. To get the economy moving again, you actually need to higher returns in riskier assets. You're right. There are certain pockets of the market where financial markets are completely open. These are the best businesses in America. But most of America is not the best business. And getting access to the market, they actually need financing and equity returns.
I understand the point about housing in particular, where it's moved sideways and you've actually seen losses in a number of places. Affordability is incredibly low. But what we saw yesterday was curious from the Fed. Because, yes, I understand about the rate cut, but quantitative tightening was going to end, but they were going to allow mortgage securities to roll off and replace them with T-bills, which on the margins should push up borrowing costs for mortgages. Doesn't this go counter to the whole plan of trying to help ameliorate the areas that have felt the most pressure from the current rate regime?
Yeah, yes. In theory, I think it is. But I think the bigger issue is that just rates are higher. The other part about moving from MBS into Treasuries has been a part of the plan for years. I don't think yesterday there were a bunch of surprises. I don't think suggesting the reinvestment risk will go from MBS to Treasuries was really a surprise. If you believe some efficient markets, then it should have been already priced in. When you look at mortgage spreads are tight. I mean, there are financing activity on our platform where these are great commercial real estate properties, and they're being financed at a spread under 100 basis points. If you have a great asset, you can access the financial markets. Haves, this K-shaped economy, is just yet another piece of evidence that shows you there's haves and have-nots.
So I want to finish up with this idea that the Fed did disappoint the markets with December, but you are seeing 10-year yields sell off. Mm-hmm. That doesn't really speak to this belief in markets that we really are facing off real economic weakness. Yeah. It just makes people feel like the Fed's not going to play their game in the same kind of way. How do you square that? What's the message right now from long-end treasuries?
I think the message from the long end is that there's so much uncertainty what's happening here. We had gotten so confident that the Fed was going to be on this risk management process, which historically is small cuts, 3 meetings in a row. Like, when he uses those words, that's what I hear. 25 basis point cuts, 3 meetings in a row. And he just put some volatility into that. And the long end, I think, is telling you there's more uncertainty than when you thought yesterday. But the bigger one is what you're saying. I'm not really worried about the economy. If things get worse, the Fed will respond and cut aggressively. And I think that really helps support why credit spreads are so low, why equity markets are near all-time highs.
Tom Kennedy, thank you so much for taking the time. Have fun with Halloween with your little unicorn, who's adorable. Tom Kennedy of JP Morgan Asset Management here in the studio. Right now, let's get you an update on stories elsewhere this morning. Here is your Bloomberg Brief with Vonnie Quinn. Vonnie.
Lisa, thank you. The U.S. is resuming nuclear testing for the first time in more than 30 years. In a post on Truth Social, Trump said, because of other countries' testing programs, I have instructed the Department of War to start testing our nuclear weapons on an equal basis. That process will begin immediately. Shares of Eli Lilly rising after the company reported third quarter earnings that beat Wall Street estimates. Total revenue grew 54% year over year, driven by volume growth from weight loss drugs Mounjaro and Zepbound. Lilly also boosted its full year guidance. Some sweet and sour news from candy maker Hershey. The company raised its full-year outlook as higher prices bolstered the candy maker's performance, a sign that Hershey is benefiting from the decision to raise prices by double digits back in July. But the company warning that early U.S. Halloween sales disappointed. And that is your Bloomberg Brief. Lisa.
Thank you so much, Vonnie. So it sounds like people are going to pay up for their candy, but that's maybe the reason why we're not buying as much Halloween candy. Just suggesting.
I'm giving out goldfish.
You're that person?
No, because they glow in the dark.
Oh, come on.
They glow in the
You're
dark.
You're going to give out apples. You're going to give out quarters. You're going to be the quarter lady.
No. Goldfish. With this economy, quarters not going to do it. Goldfish. They glow in the dark. It's very cool.
Up next, the morning calls, plus Walter Piecyk of Lightshed Partners as we look ahead to Apple's earnings after the closing bell. That's next. What is your favorite Halloween item to hand out? This is Bloomberg Surveillance.
The markets seem to not be able to make up their minds one quarter to the next. The market's getting a little bit more spooked on some of the spending intentions. The spending is, I wouldn't say out of control, but certainly prioritized the spending over margin and earnings after a very good period of growth and margin expansion. We're set to maybe enter a period where margins come down and earnings growth slows down into the single digits.
That was Stefan Slowinski of BNP Paribas Exane. Right now, you're seeing markets digest everything in stride, essentially flat on the day, although actually falling quite considerably since earlier, fluctuating around. It's been down to 0.2% decline. It's been up 0.1%. There's a real question here, the push-pull of no Fed rate cuts, a question around whether the bar is just incredibly high for some of these big tech players. You are seeing 10-year yields continuing to climb, though. Watch this space after yesterday's 10 basis point increase. You are seeing an additional 2 basis point rise this morning. Time now for the morning calls. First up, Oppenheimer downgrading Meta to market perform, questioning the company's significant AI investments despite lacking a clear revenue opportunity. Those shares down 9.5% this morning in early trading. Next up, Wolfe Research raising its price target in Alphabet to $350, saying its AI bull thesis is resonating. Those shares up 8.3%. And finally, Wells Fargo raising its target on Microsoft to $700 from the current $529, citing favorable long-term tailwinds. Those shares lower by 2.3% this morning. Sticking with tech, Meta issuing a new debt in a 6-part bond sale. The announcement coming just after CEO Mark Zuckerberg told investors Meta will have to spend even more on AI. Joining us now is Bloomberg's one and only Ed Ludlow. Ed, thank you so much for getting up early for us. I just want to start there. What's your sense of how much more some of these tech giants are going to have to tap the debt markets to fuel some of their AI spend?
Yeah, it's data that I've been tracking really closely. Meta's 6-part is really interesting. The duration ranges 5 years to 40 years, which like at one time, and Lisa, you know this better than me, we'd be like 40 years. What? That's insane. But it's not unprecedented, even in this portion of the year. If you remember, Oracle did a 40-year note that was 1.37% over treasuries. This Meta one, according to a Bloomberg source, is 1.4%. But it speaks to the imminent capital need and the longer term capital need that Meta has. And, you know, the story from overnight is that capital expenditures in the next fiscal year, 2026, will be notably larger than they are this year at a top of 72 billion. That's the stakes we're talking about.
Ed, do you have a sense of what Meta is spending on, given the fact that they don't have the cloud that, say, the Microsofts or the Alphabets have?
Yeah, this is what spooked the market, right? Meta is not a hyperscaler. And the way to look at it is that its aggressive investments in capacity are in part to meet internal demand, which is also a part of the evidence that the CFO, Susan Lee, is trying to put forward that they're seeing returns straight away. When you bring a new data center online or new capacity online, Meta often has to look within its own teams and say, what's the biggest priority here? That is difficult for analysts to model how it immediately translates to top-line growth, right? And so that's the brinkmanship going on here. Meta's sort of willingness to front-load investment is how Zuckerberg put it, and the visibility of the market to see revenue growth that would justify it, near-term or longer-term.
Bloomberg's Ed Ludlow, thank you so much for taking the time. Look forward to your work later this morning. Sticking with tech, Apple reporting earnings after the closing bell today. Walter Piecyk of Lightshed Partners remains neutral on the iPhone maker, writing this: Apple remains behind peers in visible AI progress, yet it hasn't lost users or ecosystem strength. Investors view this as a long game, not an immediate risk. Walt joins us now. Walt, so great to see you. I keep thinking about what you said about the changeover in leadership a while back. What do you expect today, given how high expectations are for the Apple iPhone 17 upgrade cycle that we're getting some positive news on?
I mean, at first I want to pick up on what Ed just said. When you want to compare the $70 billion in CapEx that Meta is investing in, I think that's going like 120 next year. Google, I think, is a $90 billion CapEx number. And Apple's investing like 10. And if we look for innovation at the company, we have to look in the R&D space, which is an expense, right? 35 billion. So much lower in terms of the investment in the AI. Now, as it relates to the upgrade cycle, what we've already seen without these new phones, without the AI, is, you've seen the bottom in the replacement cycle. I mean, if you look at the operators, customers have very old phones that they're now upgrading. And in addition to that, the market's gotten more competitive. You brought up on your Bloomberg, AT&T, Verizon, T-Mobile, these stocks have been getting crushed recently because of the concern of new competition. More competition is good for Apple because you're going to see, as a consumer, more promotions, perhaps lower prices, and this is going to help things. So really in this September quarter, there's probably an opportunity for upside in iPhones, not because of AI, not because of innovation. It's just because everyone's phone is so old. Now, how much that translates to guidance for next quarter, I think, again, if you're looking like over 50 billion in iPhone revenue this quarter, going to 75 billion, maybe you see a guide even higher than that, just given the fact that people are just starting to finally upgrade their phones.
Walter, who's doing it right? I mean, is it Samsung? Is it Google and some of their Pixel products? I mean, who's actually implementing AI in a comprehensive way in a smartphone that you see as a formidable risk to the Apple universe?
I mean, Android, I think, is doing a good job right now. It's just not moving share, right? It's just not relevant enough. Maybe when we move to a more agentic world, when your phone is doing more tasks for you, that gives the Apple user a reason to shift. But it's really the unknowns, right? There's been press, I think, in the past week or so about, maybe the stuff that Johnny says is going to be, Johnny Ives, I'm talking about in terms of his collaboration with OpenAI, in terms of making new products, that maybe it won't be only complementary and there will be a broader suite of products that come out of OpenAI. So it's that risk of new applications, on new devices with this new era of companies that, we've seen, I think in the press recently, OpenAI talking about a $1 trillion IPO. Like, this is a new era. And these are companies that want to diversify themselves across many different, not only services, but actually hardware as well. And that could really be the bigger risk for them versus Samsung just implementing Android's AI a little bit better.
And then in a market like China, they're dealing with China really putting the thumb on the scale with national champions. What's your read out of what's going on with Apple specifically when it comes to Beijing?
I mean, I think at the start of the year, obviously, everyone was concerned with the tariffs in terms of how that would impact the relationship with China. And we've seen, up to $1 billion of impact from tariffs on Apple's bottom line. But, it sounds like, that relationship is improving from some of the early press from the president's meeting last night. That can only be positive for Apple. That always hangs over as a risk. There's a lot of these large risks that hang over Apple, but a lot of them seem to fade away, and the stock has been reflecting that with the PE rising from 25 to 33. Another one is regulatory, right? You know, you have these judges that talk very tough about cracking down on these large companies and these large monopolies, and yet take the Google case, and when you move to remedies, the remedies were very soft. So I think that bodes well for some of whether it's that or Trump improving things with China. That bodes well in terms of the risk that hangs over Apple in the near term.
What about Cook himself improving things with Trump? He was with the president this week. It seems that he flew to Japan just to be a part of that business leaders dinner that the president hosted in Tokyo.
I mean, I think Tim Cook has had a longstanding positive relationship with the president. They got a huge ability to repatriate a bunch of cash that was in Ireland at a lower tax rate earlier. Obviously, he's been close with the president. And I think that, again, even if things intensify with China, the ability to have carve-outs for Apple, I think, present certainly an opportunity. And Apple itself has a good relationship with China and the amount of manufacturing that they've enabled in that country. So, as things, improve in terms of our outlook, with China as a country, that can only help Apple and reduce the risk that, as you mentioned, that China puts its thumb on the scale.
Just 30 seconds left. I know you've got a tech crystal ball. We'd love to use it. If you can look into the crystal ball and foresee who the winner of this earnings season is going to be of the tech giants, who do you think it's going to be?
That's a great question. I mean, Google. I mean, if you look at the AI, right? Apple, is the one that's not really delivering AI, right, and hasn't really impacted their business. Same thing with Google, right? I mean, I personally use ChatGPT for all my search, but look at those search numbers that they reported last night, and the outlook that they have for cloud, and now Waymo, which continues to gather momentum. So, I think the story this quarter is not going to define the winners and losers in terms of AI, meaning that search is still at risk for Google. Yeah. iPhones are still at risk with Apple. We can't just say just because one quarter of these companies outperform that means that they're the definitive winners, but maybe in this quarter they will be.
Walter Piecyk of Lightshed Partners. The crystal ball is cloudy, but it is getting maybe some clarity, maybe more so after the bell. Walter Piecyk there joining us. Coming up next, Neil Richardson of ADP as markets digest a hawkish Fed rate cut. Plus, Yahaira Anand with your morning movers. Chipotle taking a lot of oxygen out of the morning, down about 18% as consumers pull back. Is it a Chipotle economy or is it a Delta one? What a load of news, and everyone's just trying to figure out how to get to Halloween. Right now, you are seeing futures lower after earlier being up. Just real fluctuations here as people try to understand whether it is the Fed's non-rate cut in December potentially that should drive things, whether it's big tech earnings that are really good, but really facing off with a high bar. 0.3% decline now on the S&P. You are seeing yields creeping higher. Now we are at a clean 4.10 on the 10-year Treasury yield after yesterday's 10 basis point rise. Really interesting to watch. Meanwhile, watch this. Meta shares markedly lower after their earnings. People concerned about their spending plans, down 9.3%. Talking of spending, they are in the market currently with a $25 billion bond sale at least as they try to capitalize on a wide open debt market for tech debt at a time when they are spending really rapidly. More on that later. 1 hour away from the cash open, here are your morning movers with Yahaira Anand. Yahaira.
Hi, Lisa. It was an outstanding quarter for Alphabet, sending shares up 8% now in the pre-market. The Google parent beat across the board, with revenue topping $100 billion for the first time, while net income up 33% from a year earlier. All this thanks to growing demand for its cloud and AI services, giving investors confidence that its massive spending on AI is paying off. And we move on to Chipotle. Those shares are falling now 18% in the pre-market after the burrito chain cut its outlook for the third time this year. The company says diners are pulling back, especially those with lower income. So Chipotle says it's going to take a very cautious approach when it comes to any price hikes. And we end on Crocs. Those shares are up 6.8%, though they have been down this year 23% through yesterday's close. But they handily beat on revenue and adjusted EPS. The strong results were fueled by growth beyond its famous clogs and reduced discounts, plus growth in international markets were able to offset a slowdown here in North America. Lisa.
Thank you so much, Yahaira. I know you've got strong feelings, AMH. Come out with them. Let's go.
I just don't understand. That's it.
Okay, that's all you're going to do? I think it's great. Good job. Go Crocs. Turning now to the Fed. Following the decision to lower interest rates for the second straight meeting, Fed Chair Powell casting some doubt over a potential cut in December. Bloomberg's Michael McKee was in the room. Mike, what everyone keeps taking away is that they are absolutely not a done deal. It's not a done deal when it comes to a December rate cut and the fog getting thicker. What's your takeaway? Do you think that there's some nuance here?
Yeah, pick your own kind of metaphor for where the Fed is and where everybody else is on the economy right now, which meant that some of what Jay Powell had to say didn't really hang together. But the point was, the Fed doesn't know enough about what's going to happen to the economy to say for certain that it wants to cut rates again in December. And obviously, they're pretty divided over this. Now, you look at what Powell had to say about the economy and also from the statement. He says 4.3% is a low unemployment rate, and yet the labor market is what they're worried about. Inflation has moved up. Annual PCE, he said, extrapolating from the CPI numbers, is 2.8%. That's an increase. And growth is somewhat firmer trajectory than expected. So the Fed doesn't necessarily have a case for cutting, a strong case for cutting at this point. And the key quote that I took away from this came late in the news conference, one of his last answers, when he sort of stumbled over this answer. If we do wind up resuming rate cuts at some point, we will, but at some point, that if they're doing an awful lot of work, I think that you could pretty much assume that at this point, there's at least a half of the voters who would say, let's not go forward with this. So what do we have coming up? December 10th is the next Fed meeting. What kind of data will we have before then? That's going to be very important. In December, Trump says he's going to nominate a new chair. Then we've got a couple of Fed meetings before the end of Jay Powell's term in May. So Powell's going to get 4 more meetings to guide us. Stephen Myron's term ends January 31st. We're assuming whoever the chair designate will be is going to be nominated and probably confirmed by them. So we'll have a little bit of change in the makeup of the Fed. And we'll also see whether the data suggests that additional cuts are necessary. We know that the president's going to say that, but is the data going to tell them to do the same thing?
Mike, great to hear from you. Great work yesterday. Thank you so much. Bloomberg's Michael McKee coming to us following that press conference yesterday. Let's stick with the economy and the Fed. Neela Richardson of ADP joins us now. Neela, wonderful to speak with you. ADP very much in a new and prominent spotlight, and we'll get into that in just a second. What do you think the Fed's reaction function is heading into the December meeting? What could actually tip the scales about whether they cut that 25 basis point or not?
You know, they're threading a very fine needle between their two mandates, and it really will be a pulse check. And I think a lot of anecdotal evidence from the different Fed banks on what's going on in the economy. They are going to have a listening device to Main Street to really hear what's going on at the street level. They're not going to be able to see this aggregated picture in a regular indicator. They're going to have to go to Main Street and really find out what small businesses, what workers, what consumers are doing on the ground level to make this decision. And that might be new to put such a priority on the anecdotal evidence.
Is there a cohesive story coming from Main Street? Right now, if you take a look at earnings, you're seeing some layoff announcements that are pretty considerable. Mm-hmm. You're seeing a real fear about not being able to get a new job. You're seeing this with the quits rate. Are you seeing something that really is flashing a big red signal that should prompt the Fed to cut rates further?
No. You know, big companies, they drive the headlines, but small companies drive hiring. And if you look at the statistics, you'll see that about 3 in 4 Americans work in a company that has less than 250 employees that are not making the headlines in terms of their hiring decisions. And that's why we thought it was really important at ADP Research to give you some real-time information. We, as you know, released this NER Pulse, National Employment Report Pulse, on Tuesday to show you in real time as payroll gets, what's going on at the street level, at the Main Street level. So you can look at the aggregation of small firms, medium-sized firms, and large firms, and how it's hitting in the economy right now. Because all of this information, whether it's coming from anecdotal evidence, official statistics, or private sector data, has to be part of that portfolio in a complex economy like the one we're in right now.
So it sounds like you're still seeing stasis of low hiring, low firing.
That's certainly true. But that stasis, you know, Anne-Marie, what's interesting about this moment for me is that usually when you see a slowdown in hiring momentum, the why isn't important. You just see it slowing, and the Fed acts to make sure it's stable or maximal given economic conditions. Now the why matters so much because we're seeing a multi-layered impact on the labor market. We're seeing AI transformation being announced in these large layoff announcements. We're seeing demographic changes in this aging U.S. economy. We're seeing the fluctuations of short-term business cycle dynamics. Which one of those is causing a slowdown in hiring momentum from earlier this year? It is unclear. All we can do is understand that it's happening and at the pace and momentum it's happening. And that's where ADP stepped in and to provide this weekly pulse of labor market employment.
Where do you think it is really coming from? Because how does the Fed address AI-induced labor market weakness?
This is the hard part. Some of these changes that we're seeing in the labor market are structural. They are long-term and enduring. Other changes are short-term, short-lived, and we saw that. Last month, September, ADP reported a 32,000 decline in jobs. You can see in this new NER Pulse an upward momentum that looked to be a short-term trough, and now things are building back to maybe something more palatable, but definitely.
न्यूज आई है बिल्कुल देयर इज अ न्यूज इन नेचुरल गैस सडन बर्स्ट हुआ है। यहाँ पर देखोगे परसों वाला जो फ्राइडे के दिन रेजिस्टेंस बनाया था उसी रेजिस्टेंस एरिया पे तक गया वापस। ये कैंडल बनी ओपन इक्वल टू लो, उसके बाद से कंटिन्यूअसली वैसे तो बननी यहीं से स्टार्ट हो गई थी ओपन इक्वल टू लो, ये नेक्स्ट रेजिस्टेंस तक पहुंच गया। देखते हैं यहाँ पर रुकता नहीं रुकता। ठीक है, इट हिट द रेजिस्टेंस लेवल ऑलरेडी। क्रूड ऑयल अभी भी साइडवेज ही है। बाकी बैंक निफ्टी को देखोगे, निफ्टी भी थोड़ा सा रेंज के अंदर ही चल रहा है, बहुत ज़्यादा कुछ मोमेंटम किया नहीं फ्यूचर में। 15 में टाइम फ्रेम पे निफ्टी 50 की बात करें स्पेसिफिकली, देखते हैं नेचुरल गैस में ये दूसरा रेजिस्टेंस पहुंच गया है। यहाँ से एक अगर सेलिंग का प्लान कर सकते हैं तो, बिकॉज ये है तो बुलिश ही, थोड़ा नीचे आता तो बाइंग करते, वो भी नहीं आया, डायरेक्टली ब्रेकआउट ही हो गया रेजिस्टेंस का। तो हाँ ठीक है, कोई ना कोई न्यूज़ जरूर आई होगी। एक तो ये ऐसा हो रहा है गैप अप, पुल बैक जा ही नहीं रहा है बिल्कुल भी ना, थोड़ा बहुत पुल बैक आए बाइंग करें वापस। किस लेवल पे 15 मिनट में कुछ है नहीं रेजिस्टेंस, मैंने परसों ही बता दिया था आपको, तो 30 मिनट का ही लेवल यूज करेंगे, बिकॉज देयर इज नो सच रेजिस्टेंस ऑन 15 मिनट टाइम फ्रेम इन नेचुरल गैस। ठीक है, ये रेजिस्टेंस पर ही है जो उस दिन परसों वाला दूसरा रेजिस्टेंस बनाया था। ऑलरेडी हिट दैट रेजिस्टेंस। वहां पर भी देखोगे कैंडल एक्चुअली ओपन इक्वल टू लो बनी से मैंने लगाया नहीं यहाँ पर ये, क्योंकि ये भी ओपन इक्वल टू लो थी, इसने डायरेक्टली रेजिस्टेंस को हिट किया, उसके बाद एग्जैक्टली ओपन इक्वल टू लो ही बन रहा है। तो दैट इज ओनली रेजिस्टेंस नाउ इन 30 मिनट टाइम फ्रेम। बट याद रखना थोड़ा सा न्यूज़ की वजह से बुलिश ही बना हुआ है, तो थोड़ा सा ये है तो बुलिश ही। बाकी नीचे वाला एक बार देख लेते हैं, अगर ब्रेकआउट उसका हुआ है तो रीटेस्ट करने जरूर आएगा। एक बार नीचे वाले रेजिस्टेंस को भी चेक कर लेते हैं, बिकॉज उसका ब्रेकआउट कैसे हुआ है, दैट इज़ वेरी इंपॉर्टेंट। नहीं हुआ ब्रेकआउट प्रॉपर। कितने पॉइंट जा सकता है ऊपर मैक्स टू मैक्स? 5 पॉइंट। ठीक है, यही रेजिस्टेंस है अभी के लिए इन नेचुरल गैस। ये मैक्स टू मैक्स 2.7। ठीक है, यहीं से एक सेलिंग का प्लान रख सकते हो। बाकी थोड़ा ध्यान रखना, ओवरऑल तो बुलिश ही है प्राइस। कैंडल भी ओपन इक्वल टू लो बनी थी लास्ट वाली, जहाँ पर जिसने पहली बार रेजिस्टेंस को हिट किया था। थोड़ा क्वांटिटी का ध्यान रखना, अननेसेसरी बड़ा रिस्क मत लेना, क्योंकि प्राइस अब अगर इस लेवल के ऊपर सस्टेन किया, मैंने कल हायर टाइम फ्रेम पे बताया था, अगर गैप अप होता या फिर अपसाइड जाएगा तो एक सेलिंग का प्लान करेंगे। ऑलमोस्ट लास्ट रेजिस्टेंस जोन ही है। थोड़ा सा क्वांटिटी कम ही रखियो, है रेजिस्टेंस पर ही। एक बार टेस्ट हुआ है, दूसरी बार आया है। कैंडल एक्चुअली रेजिस्टेंस वाली ओपन इक्वल टू लो थी जो पहली बार आई थी, और ये भी ओपन इक्वल टू लो है। तो कहीं ना कहीं प्रेशर बाइंग का ही है अभी भी, ओवरऑल देखा जाए तो। आगे नीचे बहुत सारे रेजिस्टेंस के ब्रेकआउट करते करते जा रहा है, पुल बैक आ नहीं रहा है, तो लेट्स होप उन लेवल पे आए अगर बाइंग करनी है, एक्चुअल बाइंग है, और रीटेस्ट करें। ऐसा ना हो कि बस जिस तरह से जितनी स्पीड से ऊपर जा रहा है उसी स्पीड से वापस नीचे आ जाए। और फिर वही 30 मिनट में ही है लेवल, वही चेक करना। नेचुरल गैस में ध्यान रखना, इसके ऊपर भी एक और रेजिस्टेंस है, वो भी लगा देता हूँ मैं, दो दो रेजिस्टेंस साथ साथ ही बने हुए हैं। इसके ऊपर एक नेक्स्ट रेजिस्टेंस इस पर्टिकुलर जोन पर है, इसका भी ध्यान रखना, बिकॉज जिस हिसाब से जा रहा है प्राइस जा रहा है कंटिन्यूसली, मोमेंटम ही ना करता रहे बस अपसाइड की ओर। बाकी क्रूड ऑयल को भी देखोगे तो क्रूड ऑयल में याद होगा परसों उस दिन एक बाइंग का ट्रेड बनाया था यहाँ पर, दो बार बाइंग आई थी मार्केट में, पहली बार दूसरी बार वहीं पर क्लोज हुआ था, हल्का सा गैप अप हुआ तो उसी को कंटिन्यू कर रहा है, तो ये तो ठीक ठाक चल गया उस दिन का। देखते हैं यहाँ पर अब इसमें कोई रेजिस्टेंस बना है तो इसमें भी सेलिंग का प्लान करेंगे, अगर नहीं बना है तो फिर ये भी हो सकता है थोड़ा टाइम पास करे इस पर्टिकुलर जोन पे। नहीं है इसमें। नेचुरल गैस इज सुपर बुलिश। भी करते रहो गाइस, कोई क्वेश्चन कमेंट बॉक्स में पूछ सकते हैं। करते रहो गाइस, कम ऑन। निफ्टी भी साइडवेज ही चल रहा है, मोमेंटम ही नहीं आ रहा है रेंज के अंदर फ्यूचर में 15 मिनट एटलीस्ट। कैंडल का ध्यान रखना, ओपन इक्वल टू लो बनी है नेचुरल गैस की कैंडल 15 मिनट। ठीक है, एग्जैक्टली ओपन इक्वल टू लो है, डायरेक्ट एंट्री मत करना ओपन इक्वल टू लो में। ठीक है, रेजिस्टेंस को हिट कर चुकी है वैसे कैंडल, बट डोंट एंटर डायरेक्टली। ओपन इक्वल टू लो है, या तो खुद अपना लो ब्रेक करने नीचे आ जाए, नहीं तो ऊपर जा रहा है तो जाने देना। वैसे बोले से अननेसेसरी रिस्क नहीं उठाएंगे। ऊपर क्लोज हो गई तो फिर तो एंट्री नहीं बनेगी, एंट्री बनना है तो नॉर्मल कैंडल होनी चाहिए, या फिर अपना लो ब्रेक कर दे कैंडल खुद, तब भी एंट्री मानी जाएगी। अभी रहने दो, करने वाला है उसको। वेट करेंगे उसमें तो, ठीक है। ठीक है, नेचुरल गैस में थोड़ा सा वेट करना, अभी एंट्री नहीं हुई है डायरेक्टली उसमें। ऊपर इक्वल टू लो पे डायरेक्टली एंट्री मत करना। हाँ मैं देख लूँगा। ऐसा ना हो पहले एसएल उड़ाया और फिर नीचे आया, तो उससे बेटर है कि थोड़ा और ऊपर ही एंट्री करेंगे फिर, अगर ये एसएल को शिफ्ट कर रहा है ऊपर की ओर। ठीक है, अगर ये कैंडल वापस अपना ओपन इक्वल टू लो नहीं ब्रेक करती और बाय एनी चांस 378.2 के ऊपर रेजिस्टेंस के ऊपर क्लोजिंग दे देती है, तो फिर थोड़ा सा एसएल शिफ्ट कर देंगे हम भी, एंट्री पॉइंट भी शिफ्ट कर देंगे। है रेजिस्टेंस जोन पर ही, बट शिफ्ट करना पड़ेगा, फिर और कोई ऑप्शन नहीं है। चेंज कर देंगे, कोई नहीं है, ये नहीं है। साइन यहाँ पर, ये देखो। कि अगर ये शिफ्ट करता है ऊपर की ओर रेजिस्टेंस, तो मान के चलो 387.5 तक शिफ्ट हो जाएगा ऑटोमेटिकली लास्ट रेजिस्टेंस जोन। फिर उस केस में एंट्री पॉइंट वही 382 से 385 के बीच में रहेगा। एंट्री करने से पहले अभी वेट करना, नेचुरल गैस में ओपन इक्वल टू लो कैंडल पे एंट्री मत करो। ठीक है, इसकी क्लोजिंग नहीं आनी चाहिए, बस क्लोजिंग 378.3 के ऊपर आ गई तो हमें भी लेवल चेंज करना पड़ेगा, अननेसेसरी। तो सीधा 400 वाला ही आ जाएगा ना। Right. एंड क्लोजिंग का वेट करेंगे, नेचुरल गैस 5 मिनट है, नहीं आई क्लोजिंग तो फिर चेंज कर देंगे लेवल। क्रूड ऑयल भी रेजिस्टेंस जोन पर ही है, इसमें भी थोड़ा सा वेट। वो लेवल ही काफी दूर का है ना, इसलिए। ठीक है, क्रूड ऑयल में भी रेजिस्टेंस है ऊपर, थोड़ा सा ऊपर है बट यहाँ पर नहीं है, रुक क्यों रहा है पता नहीं। सपोर्ट भी तो नहीं आएगा। भाई 12:30 हो गया है, लंदन सेशन ऑलरेडी ओपन है, एक्सपेक्ट है वॉल्यूम। और नीचे आ जा भाई, क्लोजिंग ऊपर नहीं आनी चाहिए, फंस जाएंगे नहीं तो। क्या क्लोजिंग देखोगे नेचुरल गैस की एग्जैक्टली रेजिस्टेंस पर ही आई है, ना ऊपर आई है ना नीचे आई है। चेंज कर देते हैं, कोई नहीं, ठीक है। देखो रिस्क नहीं लेते हैं, है रेजिस्टेंस पर ही है नेचुरल गैस, बट जिस हिसाब से जा रहा है ना, थोड़ा सा कोशिश कर सकता है अननेसेसरी पहले एसएल हिट करे और फिर नीचे आए। लेवल के ऊपर क्लोजिंग करी है तो हम थोड़ा सा एसएल शिफ्ट कर देंगे। है सेलिंग ही वहाँ पर, बट क्योंकि इसने क्लोजिंग दी है लेवल पर एग्जैक्टली, तो वी हैव टू शिफ्ट द रेजिस्टेंस इन 30 मिनट टाइम फ्रेम। ठीक है, करना पड़ेगा, और कोई ऑप्शन नहीं है। उसी को रखेंगे तो पहले वो हिट करेगा और पहले हमारा एसएल और फिर आएगा नीचे को। ठीक है, सेल करके रखे रहो, थोड़ा सा एसएल बढ़ा सकते हो, या फिर अगर चाहो तो थोड़ा सा अपर लेवल से सेल कर देना, बट है रेजिस्टेंस पे तो हो सकता है खाली टच करके चला जाए नीचे। ये रेजिस्टेंस जोन है आपका, दिस होल एरिया इज अ रेजिस्टेंस एरिया। बाकी वो नीचे वाला भी रेजिस्टेंस जोन ही है, हमने बस एसएल शिफ्ट किया है और कुछ नहीं, ठीक है। वो भी एसएल मैंने शिफ्ट इसलिए किया क्योंकि वो अननेसेसरी, नहीं तो हमारा पहले एसएल उड़ाएगा फिर जाएगा। है रेजिस्टेंस पर ही प्राइस। सपोर्ट तो मुझे दिख नहीं रहा इसमें अभी अब करंटली। वही है, कल का लो। ये है, उसके अलावा है नहीं सपोर्ट उसमें। नीचे कोई और सपोर्ट मुझे नज़र नहीं आ रहा है अब एग्जैक्टली कल का परसों मतलब फ्राइडे का लो ही दिख रहा है सपोर्ट। टू पार्ट्स में डिवाइड कर लेते हैं फिर इसको, और इसमें कुछ कर नहीं सकते अब। 25 26 तो मतलब पहला समथिंग अराउंड यहाँ बन जाएगा। ये पहला टारगेट रहेगा, इसके नीचे सस्टेन करेगा तो फिर इस सेकंड। आगे मैंने कल भी आपको बताया था, जो मैंने वीकली एनालिसिस बताया था उसमें नेचुरल गैस, या तो ये नेचुरल गैस हल्का सा गैप अप करे या फिर फ्लैट ओपनिंग होने के बाद अगर अपसाइड जाता है 4 आवर टाइम फ्रेम के अकॉर्डिंग, एटलीस्ट वीकली टाइम फ्रेम पे वहाँ पर रेजिस्टेंस है तो एक सेलिंग ही प्लान करेंगे। तो फ्लैट ही ओपन हुआ, उसके बाद सडन मोमेंटम आया और रेजिस्टेंस पर ही है, एक्सपेक्ट है सेल ऑफ। रिपोर्ट के अकॉर्डिंग तो सही है। क्रूड ऑयल को भी देखोगे तो क्रूड ऑयल को एटलीस्ट थोड़ा सा ऊपर और जाना चाहिए, स्टक हो गया ये भी। इसमें भी रेजिस्टेंस है अपर लेवल पे एक 5530 से 40 के अराउंड, 30 से 50 के अराउंड। निफ्टी तो बिल्कुल साइडवेज हो गया 15 मिनट फ्यूचर में। हो गया ना, इसलिए नहीं लगा रहा है उसको। आई थिंक अभी भी होल्ड है उसका। ये ऑलरेडी यहाँ पर टेस्ट हो गया है। ठीक है, बाकी वैसे यहाँ पर भी है क्रूड ऑयल में रेजिस्टेंस, बट वो टेस्ट हो चुका है मल्टीपल टाइम। अभी भी होल्ड करके बैठा पड़ा एक छोटा सा पॉइंट ऑफ इंटरेस्ट।
The White House says China will effectively suspend the implementation of additional export controls on rare earth metals and terminate investigations targeting U.S. companies in the semiconductor supply chain. But Treasury Secretary Scott Bessent cautions that allies still need to be wary.
The Chinese have cornered the market, and unfortunately, at times, they prove to be unreliable partners. I think, and I hope, after the agreement and the goodwill between President Xi and President Trump in Korea, that we can depend on them to be more reliable partners, and the rest of the world can depend on them. But we can't take that chance. We don't want to decouple with China, but we're going to have to de-risk.
Let's bring in our China correspondent, Mimi Lo in Hong Kong. And of course, Mimi, we saw the positive sentiment after the Trump-Xi meeting on the sidelines of APEC. But at the same time, we have seen this play out, right, where there's optimism and then no follow through. So could we expect some more details to come through?
Yes, we are getting some details from the U.S. side. The White House had released a fact sheet on exactly what was agreed upon. Bear in mind, the Chinese side has not really elaborated on this. So this is all according to the White House. China has agreed to suspend export controls, undoing the measures that were imposed not just in October this year, but also in April this year and in October 2022. This means that general licenses would be issued for rare earths, for antimony, for graphite, for the likes of gallium and germanium as well. And this is obviously a very big win for the United States. The White House saying that this is a massive victory for U.S. national security. And you can see on the screen as well that the Chinese actions also include actions to stem the flow of fentanyl, to buy a certain amount of soybeans, 12 million metric tons to be exact this year, and 25 million metric tons for the next 3 years. China also agreed to suspend the countermeasures, including tariffs and non-tariff measures since March 4, and that includes all those agricultural tariffs on U.S. goods, and also suspending investigations, antitrust, anti-dumping investigations into U.S. chips companies, the likes of NVIDIA, Qualcomm, and also facilitating the resumption of shipments from the Chinese unit of Nexperia. That's the Dutch chip firm that was seized by the Dutch government. But here is where we're seeing a little bit of divergence. The Chinese Commerce Ministry releasing a statement saying that it was the Dutch government's inappropriate intervention in that company that caused the chaos in the supply chain, and that China will assess the situation and pause those export controls accordingly.
So OPEC Plus meeting, they brought back this 137,000 barrels a day to the market as expected, but perhaps the hawkish surprise is the fact that they decided to hold off in the first 3 months of next year. What is the rationale for that decision? What did they provide as rationale?
Well, I mean, I think, you look at what can be provided as rationale, but you also look at the context that it's all given in. And, OPEC Plus is always saying that they're looking at the market and they're trying to digest the demand of their customers. But I think if you take a step back from that, you can sort of read the tea leaves that this is also partly to do maybe with Russia. Russia was sanctioned, two of Russia's largest oil producers were sanctioned, Rosneft and Lukoil, by the Trump administration. And that is raising a lot of doubts about what Russia is able to produce, what they can bring to the market. And if they're unable to increase output, they have previously pushed for smaller or no hikes at all. So likely, again, at this meeting, Russia's voice was to some degree likely heard. So that's the Russia argument, right? Because they can't drastically increase, and they're a big part of the OPEC Plus alliance. The other aspect as well is we are getting into an oversupplied market. Now, OPEC Plus has been famously increasing output since earlier this year, month after month. And that's actually been absorbed by the market relatively well. Yes, Brent is at $65, but we haven't seen a collapse into $50 or $40 range and having it sustained at that level. Part of that is due to Chinese buying. They were buying quite a bit to refill their inventories. Now, those purchases might start to slow as the year goes on and as we go into 2026. So that demand isn't really there anymore. So you could see this tapering as, hey, they're going to see how the market digests this last bit that they're adding through December, and then after that, see where the market stands, because there is a view widely that there is an oversupply coming. At the same time, you also have U.S. output, which has been quite strong. U.S. production has remained near record levels despite Brent, or rather WTI, being at the low $60 range.
Yeah. And it's interesting, last week, the Aramco CEO, Amin Nasser, was speaking at FII, and he said that he's still seeing strong signals come through from Asia. You referenced the fact that China had been building their strategic stockpiles. What are you watching out for in the coming months, Stephen, to determine whether that demand has started to falter?
Yeah, I mean, clearly you have to look at the run rates at refineries, what the teapots are purchasing and what their quotas are. You also have to look at industrial output from China to see how the Chinese economy as a whole is kind of going. Because when you look at the strong Chinese demand, yes, they were filling their strategic reserves, but that isn't because of the enormous demand coming from China's sector. It's not because there's a huge amount of gasoline being guzzled or diesel being produced for trucking. The EV sales in China have been very strong. And so on a long-term basis, Chinese demand for gasoline products will not continue to grow as it has in the past. Likewise, for heavy trucks, they've been shifting to some degree to LNG, liquefied natural gas, as well as electrification in that sector as well. So I think you need to watch just the downstream demand from China. You need to look at industrial demand overall. But that growth hasn't been where traders were expecting maybe a year or two ago when China was coming back from the post-COVID era. Continuously, China's industrial growth and economic growth has sort of was not living up to the hype that a lot of the traders had been expecting, and it hasn't really pushed up oil demand significantly. Now, that can change, but when you're looking at the market, it's not so much a demand situation, it's also the supply. And as I signaled, the U.S. supply has remained strong. OPEC Plus continues adding barrels to the market, and there are others as well that are adding.
At JustWorks, we know these aren't just your employees, they're your people. Like Danielle, who took your social following to 100K and is already investing in her 401K.
I've got big retirement plans. Huge.
We do your human resources right, so you can do right by your people. JustWorks, for your people.
Have a couple conversations with the CEO coming up.
Well, Jemana's about to have one.
Yeah.
9:15 UK time. She's going to be on a panel with the CEO, and then interviews tomorrow.
Yeah, their earnings coming out 7 a.m. right here on the opening trade.
Look forward to that conversation. What else are we going to be factoring in this Monday morning? So it starts quiet this week in terms of the earnings. We've had Ryanair. I slightly feel as if Michael O'Leary's being a little cautious, maybe a little circumspect in terms of his outlook. Europe is very capacity constrained over the next few years. So how much are we going to be seeing in terms of decent numbers coming from Ryanair in that kind of a market? Particularly now it can bring extra capacity in. But we really start to get into the earnings later on this week. There's a few big pharma names going to be reporting. So we've got AstraZeneca this week. We've got Novo Nordisk this week. I'm going to be in Copenhagen Tuesday, Wednesday to talk to the CEO. That's going to be a fascinating conversation with a big piece of M&A happening there. But it's a big week for European earnings. Kind of how much volatility are we going to see in single stocks this week? Feels like it's going to be reasonably quiet this morning, but throughout the rest of the week, it could be an interesting ride on the single stock story. Anyway, that's the futures picture right now. US futures are a little positive as well. The opening trade is up next.
LGT's investment solutions allow you to look to the future with confidence. Over its 100-year history, LGT has repeatedly demonstrated its resilience, proving to be a stronghold of stability in a world of change.
Connecting the dot between what's at stake and what is possible.
With 5 of the world's fastest growing economies, Africa is the next frontier for trade, investment,
and innovation.
Foreign investment has grown tenfold since 2000, and by 2050, GDP could hit $29 trillion. Powered by the tech and data that bring global markets into focus, Bloomberg is putting Africa's story on the world stage.
The future is being shaped in Johannesburg at the Bloomberg Africa Business Summit.
Is first to break the numbers.
From Snowflake, from Pure Storage, from Urban Outfitters, and from NVIDIA.
Coming up, we'll talk about some of the other earnings that are coming out.
With the smartest insights.
Third quarter numbers are going to be really important. The commentary is going to be important. It's all going to be about margins because margins lead to earnings. And if earnings come down, we have a problem.
You have to come back again soon. This is really excellent.
Continuing coverage on Bloomberg.
Bringing you up-to-the-minute economic news whenever and wherever it happens. I'm Francine Lacqua in Sintra, Portugal, and this is Bloomberg.
Bringing you up-to-the-minute news.
Technology news.
Geopolitical news.
Economic news.
Financial news.
Bringing you the latest news in private markets.
Whenever, and wherever.
Wherever it happens.
In Washington,
Beijing, Cape Town, South Africa,
Las Vegas,
Davos, Switzerland,
Rio de Janeiro, Brazil,
the south of France, and this is Bloomberg.
Monday morning, 3rd of November. November's upon us. Let's talk about Thanksgiving. Not Thanksgiving. Thanksgiving's coming. Let's talk about Halloween and kind of how Halloween went. This was the market over in the United States on Friday. As you can see, this is where Europe went out. We bottomed out a little bit after that, and then we rallied. To be honest, Europe went out here. And this is kind of where we finished. So I'm not actually that sure there's much of a read across in terms of where we left the US markets to where we find ourselves this Monday morning. And Crudy, I think that probably is reflected in European futures.
Halloween, Thanksgiving, I'll add Christmas in there because we have red and green on the screen, but not by that much, which to your point, I think is significant. Your Stoxx 50 futures virtually unchanged. Your outperformer this morning is the FTSE 100, but again, only higher by 0.2%. I wonder how much of that is an oil story that we're going to keep an eye on. Of course, the DAX also higher by 0.1%. But Lizzie, rescue me here. Give me some action.
Well, we're going to keep an eye, Critty, on Ryanair. They've said that they expect to exceed their passenger growth target for the full year. They've got aircraft early from Boeing, demand for travel staying strong. So a strong outlook there from Ryanair. But as Guy says, O'Leary staying cautious. So let's see how that opens. We've also had the breaking news out of BP this morning that it's going to sell its stakes in its US shale assets for $1.5 billion. And reminding Nestle as well, because Berenberg's upgraded them to buy from hold. So just some of the stocks to watch at the open, Guy.
OK, but it's a new month, and that means a new P&L and a new way of thinking, or maybe the old way of thinking just carries on. That certainly seems to be the narrative. It does still feel like a front foot market. I agree, this morning futures don't put us kind of sharply ahead, but we had a decent week last week. You've got to think about that. That's the context. Kind of carry it on into this Monday session. So here we go. Let's show you some numbers, give you an idea. As we expected, the FTSE 100 maybe a little bit more positive than other markets around Europe. Be interesting to see how BP opens this morning. The IBEX is absolutely flat. This feels like it's going to be a very unexciting open. We kind of big it up. It's going to be an exciting open. BP, I'm told, is up quite nicely, which is maybe giving the London market a little bit of a lift. We've still got AstraZeneca to come this week, a whole raft of earnings coming through this week. So the Stoxx 600 is flat. The FTSE 100 is a little bit positive. The CAC is absolutely flat. A lot of politics still to factor into our thinking when it comes to the French story this week. But we will wait for the DAX and we will wait for the SMI. We'll see what we get through on the Nestle front. OK, Lizzie, what do you got? Sectors, single stocks? What's moving?
So the best performing sector this morning, Guy, is energy, up more than 1%. As you say, BP shares outperforming off the back of that news that they're selling their stakes in the US shale assets. So the individual shares up 1.9% at the open. Then behind energy, we have autos, telecoms. About, well, just under half of sectors are in positive territory this morning. It's basic resources at the bottom of the basket, down 0.7%. Travel and leisure not far behind, down 0.4%. We're still waiting for Ryanair, though. Nestle shares up 0.3%. Not a huge gain, Critty, after that upgrade from Berenberg. And we're... those are just some of the stocks to watch at the moment, but not a huge amount of movement for a risk on Monday.
Not a huge amount of movement. I will say, I think I was expecting maybe something a little bit different. You're right, oil is definitely the leader across the board, but take a look at some of the downside movers, at least when it comes to index contribution. I'm seeing a little bit of healthcare. I'm seeing a little bit of some of the private equity names like EQT, for example. I'm also seeing some of the tech names take a step back. ASML, Schneider Electric. This just feels like a little bit of a hodgepodge kind of day, Guy.
Doesn't feel like BP... Feels like BP's moving with the crowd, though. Doesn't feel like it's moved. Doesn't feel like it's moving with maybe the news when it comes to the Permian. Shell is the biggest points gainer this morning. BP's just behind it, but they're both up kind of 1.5%, 2%. So we're seeing some movements there. Ryanair, I just think I saw a trade on Ryanair. I think it was soft, actually, down on the back of its numbers this morning. Maybe O'Leary's been too cautious. He's in a market...
Out of character.
But I think he's trying to, in some ways... He doesn't want the market racing ahead. He's in quite a good operating environment at the moment, and I do wonder whether or not they've kind of pulled the enthusiasm in a little bit too hard. Elsewhere, Novo's up, but remember, Novo got battered at the back end of last week. It's basically in an M&A fight now with Pfizer, so it's going to be interesting to see how that one works out. So its stock got hit hard. I wonder whether you buy it at the beginning of this week as we approach maybe the earnings numbers that come out later on this week. And defence names look like they're on the front foot a little bit as well. You've got some big defence names reporting numbers this week. I think Rheinmetall's out later on this week as well.
But broadly, the stock 600 pretty much flat as a pancake this morning. Let's get some analysis from Beata Manthi, European equity strategy head over at Citi. And we've talked about Halloween, we've talked about Thanksgiving. Are we going to have a Santa rally, Beata, on the European stocks?
Let's see about that. We have quite a few pieces of data to determine, coming out to determine whether we are going to have it or not. But in general, the future doesn't look bad for equity markets, right? So we have the world from an economic perspective where China or Europe are relatively resilient, picking up from low levels. Then, yes, you have the US economy slowing down. Our view is it's just a slowdown. It's going to be soft or no landing. And all of that backdrop underpinned by the Fed cuts. In this type of environment, all the major indices go up together, right? And they especially go up when the Fed underpins the markets in the environment when a recession is avoided. So our view is don't think that much about the regions, but it's more about the sectors and themes. This is where the overall alpha is going to be.
Well, let's talk about the sector and the theme that is AI. I'll leave the bubble talk to your US-focused colleagues, but in Europe, how do you play it? Are you looking for other infrastructure names? There was a load of hype about Nokia, and then, of course, NVIDIA puts its investment in. Who would be the next Nokia that's going to get a massive gain that NVIDIA might have their eye on?
So, of course, AI continues to be a very powerful theme, but it isn't the only theme. It is picking up on steam with the current reporting season, definitely. But there are other themes going on in Europe. Right, so we have the fiscal, we have that continues to deliver. It's just going to be gradually delivering, underpinning growth and EPS in Europe. That's helpful. This is why we like banks. This is one of our main overweights. In terms of tech and AI, of course, Europe has a very difficult job because from the market cap perspective composition, it's less than 10% of the market cap, right? So you can play it. So for us, the infrastructure plays in to do with tech, with the build out of data centers. That's something to look out. But of course, it's a much smaller scale. That it's not going to be the main driver of equity returns in Europe as it is in the US. You need these other things and cyclicality to work for Europe to do well.
Well, you mentioned the fiscal. You say you like the banks. Are you not worried about what the French lawmakers might do, what the UK lawmakers might do when it comes to the banks?
Look, my positivity is through lots of worries. There are always worries, right? Now, more important is what is going to happen to growth and credit creation into the next year. Of course, worries from the UK, worries from France, but broader banking sector could continue to do well into the next year for very different reasons that it has been doing this year. And when I look at what the analysts are doing with their earnings forecast, this is one sector that consistently has been and continues to be upgraded week after week. The earnings justify expectations and continue to move higher.
So you're positive, you feel kind of risk on, except you're risk on the defensive sectors. You're risk on tech, on tech, banks, which largely driven by buybacks. Is healthcare a part of that basket for you?
Healthcare, well, it depends what you define defensive or cyclicals, right? This year has been a very mixed bag, and certain sectors that have been one or the other have behaved differently. Yes, so in the domestics, we like banks, we like real estate. In the consumer sector, at the beginning of September, we've upgraded retailing. We do like travel and leisure. And then in the internationally exposed sectors that have been the most beaten up through the strengths of euro and tariff risks is tech and healthcare.
And are you worried there about margin compression? Are you still worried about tariff risk at all, or is that something that's fully priced in?
We think it's going to continue to play out in the economy. We haven't seen the full extent of it, of course, but they are much better understood. And the most important for us is we now know who is paying the tariffs. And when I look at the U.S. import prices, it is pretty obvious that it is the U.S. side, the importer side, that is paying the most of it, right? And we think that's going to continue to be this way. Perhaps the balance changes a bit, but the majority is going to be paid by the US side. The biggest question is what happens to the euro. So the tariffs at the end of the day haven't been as big of an impact, negative impact in Europe as we feared, but of course the euro strength has been.
Is that going to go away soon?
We think we are at a point of leveling out of euro-dollar and actually euro weakening into the next year.
Am I going to do better in my portfolio in November if I invest money outside of the United States or inside the United States?
We are arguing that you need to hedge your bets. So we are still in AI, in tech in the US.
Yep.
But because of the valuation constraints, we argue you should, first of all, broaden AI into other markets. So for us, China, Korea, within the emerging markets are the top pick.
Yep.
And then just go into more cyclical markets like continental Europe for this diversification bit. If actually the world is not a worse place than it's been this year, the situation improves.
In terms of how you would segment that, do I just buy Europe broadly? Can I buy Europe broadly? Do I avoid France, buy Germany? Do I buy the UK because of the resource trade? Nuance that for me.
It is quite nuanced, yes. So you still, over the longer term, you continue to buy what has been working in Europe, i.e. the stimulus
momentum
plays.
trade is still on in Europe.
Yes, over the longer term. Over the short term, we've been arguing for a month and a half that the internationally exposed stocks that have been beaten up and where the EPS has gone down the most, they are at a point of inflection. We are already seeing it in the UK market. In Europe, we are seeing stabilization, no pickup yet. But when this happens, this is you buy the laggards there. So short term, they will do better. But if you have the view of the next 12 months, I would do a bit of internationally exposed stocks and a bit of the winners from the domestic story.
But you're underweight the UK, right?
Recently downgraded, yes. So the UK is a very nuanced story, right? So in our global allocation, we look at FTSE 100. MSCI UK, and we've been overweight until very recently. Now, because we have this more cyclical, pro-cyclical view into the next year, the UK market, FTSE 100, is very domestic. So when the market wants cyclicality, it might not do as well. But as I said at the beginning, all the indices will do quite well. In the UK, what we like is the domestic stocks, so FTSE 250, where we see inflection in the EPS. There are some of them already, so derated stuff that is improving and that has rate sensitivity, because now we have more evidence that actually Bank of England will be able to cut as inflation is coming into control, and also you see signs that the budget is going to have some fiscal constraints.
Well, I was
right?
going to ask you that. You like domestic stocks even though maybe it's consumers who will get hit?
Only those where we already see evidence that the downgrades are abating and the upgrades are starting on the EPS. Only those. Not so. The UK is particularly nuanced.
Excellent. Really nuanced this morning. Beata, nice to see you. Thank you very much indeed. Beata Menthi, European Equity Strategy Head, joining us over from Citi. Let's talk a little bit about what we are seeing in the Core 6 this morning to give you a broad picture. Tech looks like it's bid. Nestle's up around 0.7%, so that upgrade seems to have gained a little bit of traction. Novo battered at the back end of last week, getting a little bit of traction as well. Defence names, Rheinmetall's going to report numbers later on this week. What else are we watching this morning? It's been a long weekend. It seems a little early for a drink, but that's where Chloe Melly's taking us this morning.
Good morning, guys. Yeah, the maker of Aperol Campari is down this morning after Italian prosecutors ordered the seizure of 1.3 billion euros in shares from the holding company that controls Campari as part of a probe into tax fraud allegations. So that is really driving down the shares this morning, and as we await more detail on that probe, we will probably see a little bit of weakness in that stock. Moving on to BP, which is doing quite well this morning. The oil major is up after divesting stakes in U.S. shale assets for 1.5 billion euros, $1.5 billion. So it is up 1.79 this morning. It is going to be reporting also tomorrow, so we'll get more detail on that strategy to try and shore up this balance sheet.
Yep,
Okay.
we'll look forward to that. We're going to hear part of the conversation from BP a little bit later on. Chloe, thank you very much indeed. We're going to see the CEO on our air very shortly, 9:15, in conversation with Jabana Basecci, and we have BP earnings tomorrow to factor into our thinking as well.
Yeah, this is one of those stocks where the debt story and the physical asset story and the stock story all come together, and a little bit of geopolitical risk there to sprinkle in.
Do you start to think, though, of these companies as also part of the AI trade? Are they part of the energy solution? Is that how we should maybe start to think about them? Some of the US names are starting to come under that umbrella broadly. The shortage is in energy. The shortage is in energy molecules. Do we need more gas? How do you make that trade work? And can you include some of the energy companies within it?
Well, this is what I was expecting Beata to say when I asked her, how do you play AI in Europe? When you look at clean energy stocks, that's what a lot of analysts in her position are saying, that you should be looking at. Utilities is the way to trade it in Europe.
Well, the natural gas story over in the States is the key one there. There's a company called EQT, which here is a private equity company, but there's an EQT US, which is basically a pipeline company that has been getting a ton of kind of infrastructure spending as well. They're starting to see an AI premium get built into their stock, which is something you don't see very often.
No, but here in Europe, I was reading an article the other day talking about Prysmian. It's a cable company. It makes cables.
Yeah.
There is a shortage of cables at the moment to connect everything together. You need these kinds of cables, and there are very few specialists in the world that deliver upon them. So you're starting to see this breadth coming in. Now, some of that's already been spotted. Some of those are already stocks that have done very well off the back of it. But kind of as the universe of AI stocks gets bigger and bigger, kind of what gets included, and do European energy names start to get pulled into that umbrella, under that umbrella as well?
What's the plumbing and electricians company that I need to invest in that's specialising in servicing data centres, I wonder? But that's who NVIDIA's boss, Jensen Huang, says is going to be the millionaires of the future. Anyway, coming up on the programme, we're going to check back in on Ryanair after that budget airline posted a beat on second quarter profits and said it expects to exceed its passenger growth target for the year. So that conversation next. This is Bloomberg.
LGT's investment solutions allow you to look to the future with confidence. Over its 100-year history, LGT has repeatedly demonstrated its resilience, proving to be a stronghold of stability in a world of change.
Connecting the dot between what's at stake and what is possible.
Financial services has had a tendency to love the 50-plus page white paper that has evolved into a 50-plus page PDF. That's not how we consume content anymore. We don't have the attention span. What's great about the world we live in now, you can produce some great content and get it in front of people in really easily consumable formats. But if you don't distribute it in the right way, it'll be invisible. I think that's where AI is actually proving to already be incredibly powerful. The quantity of data that we are able to analyze is going to require us to think very differently about how we go to market, but I think that's exciting. As a leader, my big call to my team is just start to become familiar with the technology and what the technology can do, and don't be afraid of it. Embrace it. It's going to be amazing.
Future. From finance to defense, AI to entertainment,
and from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
and the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Lizzie Burden outside Windsor Castle, England, and this is Bloomberg.
$8.18, welcome back. European equities on the front foot this morning. The FTSE 100 maybe having a slightly better time of things. We're seeing some of the oil names, energy names doing fairly well. But we kind of kick things off this week, and it's a busy week in terms of earnings with Ryanair. So let's talk about what's happening with what Michael O'Leary has said this morning. The company's saying that it expects to exceed passenger growth, the target it set itself for the full year. Travel demand remains apparently quite strong.
There's a reasonable prospect now we're going to be growth 3, maybe we might get to 4%. It's from 200 to 207 million now, so we've got 3.5% growth for the full year.
MOL, Michael O'Leary talking to Tom McKenzie just a few minutes ago after the earnings were released. It's a decent set of numbers. So the stock has rolled over a little bit this morning. We've gapped down on the back of what the company has said. But the last couple of days have seen the stock running up. We're basically kind of where we are, almost exactly in terms of the average over the last 10 days in terms of the stock. So when you look at that, just bear that in mind in terms of what you're seeing on the screen in front of you, down by 2.36%. Kate Duffy, as ever, covers this stock for us here at Bloomberg. So what's the takeaway? Michael is basically looking at a fairly good operating environment. He's capacity constrained here in Europe. He's getting more jets now that Boeing's getting its act together. It's a fairly positive picture.
It absolutely is. And so they had a solid set of numbers this morning. Obviously, profit after tax was up on the previous year. They also announced an interim dividend, which is always a good sign. Yep. And they've lifted their passenger traffic forecast, which is the main thing that we're looking at, to be honest. They previously expected 206 million this year. Now they're looking at 207. So it's inching up, and that's really important because they previously cut this because of the late Boeing deliveries that they were seeing. So this is an improvement. It's a sign of progress with Boeing, and obviously that trickling through to customers.
He also wasn't shy in his commentary on Rachel Reeves, the UK Chancellor. What did you make of it?
Yeah, I mean, he definitely expressed his frustration, let's say, towards the Labour government, and, you know, just in case they do decide to raise taxes, specifically aviation taxes. And his his answer to that was, actually, I'd remove 10% of capacity from the UK. So we'll see what happens in the budget. It's a lot of speculation at the moment, but that would be his response. So.
And what about the supply chain concerns I feel like are maybe looming over every airline carrier? What does he have to say on that?
Yeah, I mean, obviously Ryanair has been bogged down by a lot of Boeing delivery delays over the past year. They've been one of Boeing's most vocal critics, very outspoken about their frustration towards the delays. But now we're seeing a lot of progression. We're seeing improvement in those. And he has said, you know, that they're coming early, they're going to get aircraft in time for next year. And that means that they can up their passenger forecast goal, which is what we saw this morning. There is still a lot of capacity constraints in the industry, not only aircraft, but also engines as well. So this is not just Ryanair's problem. This is across the industry. A lot of airlines are seeing this. But for Ryanair, it's a good sign. And they're visiting Boeing. They're seeing improvements, and they're pretty happy with what they're seeing.
All right. Kate Duffy, our airline reporter, correspondent, kind of knows everything about the sector. We thank you so much for walking us through those Ryanair numbers earlier today. Let's stick with the transportation space if we can. Chinese EV maker Series has raised $1.8 billion after pricing its Hong Kong listing at the upper limit. Now, the deal is Hong Kong's 8th listing this year that raised over $1 billion. I want to go to this and other top stories in the auto space. Craig Trudell, our global autos editor, is all over it. Craig, let's start with the Chinese EV space and then we'll broaden it out. Just walk us through why we care.
Yeah, I mean, with Series, the Huawei relationship is a really big one, and it's been hugely productive for them. I do think it's going to be interesting as Huawei has, you know, ambitions to sort of build more of an ecosystem, to become more of a player in the space more broadly. That for me is the question about Series is you know, you've kind of got quite a bit of eggs in this one basket, and that basket, you know, wants other, I don't know, I guess to continue the metaphor, other companies to put theirs in as well. And, you know, that being said, it absolutely has been the case that as we've seen China's EV market go from already very competitive to all the more competitive, this has been one of the players that has really, you know, squeezed some of the leaders, BYD being chief among them.
Yeah, the stock is down. BYD is getting hammered at the moment. Just walk us through the kind of backstory on that.
Yeah, I mean, we've had now 2 straight quarters of profit decline for BYD, 2 straight months also of sales decline. And this was a company that we just got used to you know, growing and growing, you know, month after month, quarter after quarter. I do think that there's been real concern within the Chinese government about the extent to which there's you know, just really sort of cutthroat competition, and to the extent that you have some of the biggest players kind of weaponizing their size, and perhaps we're seeing you know, some real crackdown in that.
Does that mean we're going to see more BYDs here? Is that kind of how this is going to work? They're also going to try and manufacture here as well.
They absolutely. I think you have to acknowledge you know, the momentum that they've shown in Europe, and particularly here in the UK, where you don't have the higher tariffs that you've had with the EU. You've seen, for all the challenges that BYD is having in its own market, I mean, last month, in the month of September, BYD was absolutely selling like gangbusters in the UK and across Europe.
And 2 things. Is bad news for BYD good news necessarily for Tesla? And where are we up to with the door handle investigation for Tesla?
Yeah, I think with Tesla, of course, they're protected in the U.S. market with the Chinese players not even really being able to contend there. Of course, you have your own sort of set of issues with the tax incentives falling by the wayside. Last night, we reported on sort of a next wrinkle in that doors investigation that Bloomberg has been all over. The National Highway Traffic Safety Administration sort of taking an initial step in a defect investigation affecting the Model Y doors. And what was most interesting to me in this letter that I would encourage people to go read is that it's not just the case that the agency is asking about just the 2019 Model Y, which is the subject of this investigation. They're asking about data for other model year Model Ys and also Model 3. So that, to me, at least, is some indication that there could be potential for NHTSA to say, hey, hang on a second here. You not only have complaints for this model that we're investigating, you have an awful lot of complaints for these other models, and it suggests some potential for that investigation to broaden somewhat, and substantially so.
Given that, how exciting is the AGM going to be this week? Presumably this is going to be a subject of conversation, but also very, very substantial pay packets for Elon Musk.
I mean, I think back to last year's AGM, and it really was almost uncomfortable, just the intensity of the fanhood. I'm not making any judgments here, but there was someone who literally said he was shaking in Elon Musk's presence, so that'll give you a sense of how I expect things to go this year.
All right, Bloomberg's Craig Trudell, we thank you. I'm sure you won't be shaking as you're covering that AGM, but we look forward to it regardless. Coming up on the programme after this weekend's OPEC Plus meeting, we're keeping an eye on oil. Brent currently trading, let me find it, it's currently up 0.3% at $64 a barrel, just shy of $65 a barrel. And we're going to be talking to Michael Haig, head of FIC and Commodities Research over at SGCIB. That conversation coming up, and indeed it's been energy that's at the top of the stock basket here in Europe. It's still up 1.3%, driving the gains, especially when it comes to London. The stock 600 more broadly up 0.25%. So that conversation coming up next with Michael Haig. Stay with us, this is Bloomberg.
LGT's investment solutions allow you to look to the future with confidence. Over its 100-year history, LGT has repeatedly demonstrated its resilience, proving to be a stronghold of stability in a world of change.
Connecting the dot between what's at stake and what is possible.
With 5 of the world's fastest growing economies, Africa is the next frontier for trade, investment, and innovation.
Foreign investment has grown tenfold since 2000, and by 2050, GDP could hit $29 trillion. Powered by the tech and data that bring global markets into focus, Bloomberg is putting Africa's story on the world stage.
The future is being shaped in Johannesburg at the Bloomberg Africa Business Summit.
Oil and gas is still important.
They said every citizen should be investing in the market.
Accelerate progress in all fields of science.
Watch Wall Street Week right here on Bloomberg.
More than what you need to know, it's what you need to think about.
Earnings season is here.
Earnings season begins once again.
So much going on.
Bloomberg is first to break the numbers.
From Snowflake, from Pure Storage, from Urban Outfitters, and from NVIDIA.
Coming up, we'll talk about some of the other earnings that are coming out.
With the smartest insights.
Third quarter numbers are going to be really important. The commentary is going to be important. It's all going to be about margins because margins lead to earnings. And if earnings come down, we have a problem.
You have to come back again soon. This is really excellent.
Continuing coverage on Bloomberg. The The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Welcome back to the opening trade, about 30 minutes into today's session, and we are rallying quite a bit. Look at the outperformance here. The DAX higher by 0.6%. Even if you round up, it's almost 0.7%. The rest of the continent not really following suit, but still green on the screen, a real turnaround.
Having been on the inside as a former global head of trust and safety at a large social media platform, do I think the main social media platforms today, with the current level of protections, are safe for children? No. There's more than enough evidence to show otherwise. Are the tech platforms that I've worked for aware of the examples of underage users who've been very negatively and often tragically impacted by the use of the platforms? Yes, of course they are. But they're petrified of being held responsible for the deaths of minors. It's a perfect storm of corporate greed for maximum profitability.
We're outside the Senate Judiciary hearing right now, and we're really expecting kind of a bit of a confrontational hearing here.
This is such a relevant issue right now. Every parent knows when their kids go online, they worry about their safety.
First, I'd like to start by thanking all the families that are here today, all the parents who are here because of a child they have lost.
The families of Sammy Chapman from Los Angeles and Daniel Puerta from Santa Clarita.
Parents like Bridget Noring from Hastings, Minnesota, lost her teenage son. Amy Neville is also here. Her son, Alexander, was only 14 when he died.
Does the name Mason Edens ring a bell?
He was a 16-year-old Arkansan. After a breakup in 2022, he searched for things like inspirational quotes and positive affirmations. Instead, he was served up numerous videos glamorizing suicide until he killed himself.
Mr. Zuckerberg, you and the companies before us have blood on your hands. You have a product. You have a product that's killing people. There's not one law on the book that's meaningful protecting the American consumer. Nothing will change until the courtroom door is open to victims of social media.
Families that have lost more than any of us can imagine should have the opportunity to come to a court of law to find out what these companies know about the material that their algorithms spit out to predict young, impressionable adolescents. Social media is here to stay. Good or bad or indifferent, it's not going to go away. The goal is to try to hold social media companies responsible legally, but it's a long road ahead, and they've got all the money in the world to fight us. So this is going to be a David and Goliath thing, but I'm up for the fight.
Mr. Bergman, have people successfully gone after the social media platforms?
No, this is the first case that's ever been tried in this way. I have tremendous respect and reverence for the judicial system and that legacy of standing up and arguing for the legal rights of people who have been harmed. I believe that plaintiffs should have the opportunity to ask questions under oath. I believe judges listen, and I believe that ultimately we will move forward in holding these companies accountable. Good morning, all. Good morning.
Welcome, everyone, to our May in-person meeting. I want to introduce the newest member of our team. He's going to be our summer intern.
Welcome, Patrick. Laura Marquez-Garrett. I've been here since February of 2022. I do, I guess, a little bit of everything.
I'm Glenn Draper. I'm one of the attorneys. Matt and I have worked together for years. I came on out of retirement to SMVLC last June.
I'm Matt. Set this firm up because I think that unless the civil justice system gets involved and holds these companies accountable, we're going to have several lost generations of kids. The social media companies know what their products are doing to young people. They know the levels of addiction. They know the levels of suicide, but they have no legal brakes on their behavior. These are not easy cases, but we have clients whose stories are resonant, whose harms cannot be swept under the rug. Hey man, just want to let you know I'm thinking of you. In the next month or so, we're really going to get the sense of whether we get to go forward on these cases or not. You know, the defendants have done well in the past getting out of this, but they put most of their eggs on the Section 230 basket, and if that basket's not available for them, they're going to have a hard time explaining why your daughter needed to receive those videos. Okay, hang in there, man, and give my love to Brandy. That was Tony Roberts, whose daughter, England, died 3 years ago today, hanged herself after being encouraged to do so online. So it's very real and very hard to think about somebody losing their child 3 years ago. I can't imagine.
Today just feels very special that everybody showed up It's hard at the same time because we know we're missing someone. And that's why we question what happened.
I am so glad that we had 14 years that God gave her to us. I am a firm believer that we'll be together again one day, and until then, I think He has given us a mission in us to continue to fight. We had no idea what the social media platforms were doing to her. She never shared with us. She never told us that she felt bad. We found out these things afterwards. This was on her phone. Behind the social media life, nobody knows the real me, and how much I struggle to make sure everyone's good, even though I'm not. And when things are going wrong for me, I just become so suicidal. I looked through her phone about a month after she passed, and I found a video on her phone of a lady on Instagram modeling self-strangulation. And exactly what that lady did on that video is what our child did.
The social media companies know that our children are so vulnerable. To me, I feel that the only way that they're going to be forced to change is through a lawsuit. So that's why we're joining this fight.
We have clients who are so righteous in their claims, who are so pure in their desire to make a difference. Our strength is the voice of the children coming back from the grave, holding these companies accountable. And those children's voices cannot be quelled.
Are you holding it?
I'm okay. What about you?
Tough. Very tough.
Randy Roberts from Louisiana.
Thank you for being here.
Thank you.
It really means a lot.
Tony Roberts, Louisiana.
Yeah.
Thanks for having us.
It's very meaningful that you're here, and I thank you. So let me turn it over to you.
Riley died by suicide on March 30th, 2021, after he was targeted through Facebook Messenger by a sextortionist who got him to send compromising images and then blackmailed him.
This is my son, Mason. He will have been gone for a year and about 2 weeks. On November the 14th is 1 year. I can't bring my son back, but I sure can do whatever I can to make sure that no other mother has to go through it. We have gone through it.
I'm Brandy Roberts. This is my husband, Tony Roberts.
Hi, and thank you all for having us.
We lost our daughter, England, in September of 2020.
This is a video of a lady with an extension cord around her neck tied to the top hinge of the door frame, and that's how we found our daughter. It's on Instagram right now. This is our daughter in the hospital. I want the world to know you do not want this pain. Nobody, no child should have to go through what our children went through. Give it to me, I'll take it all day. But when you're a parent and you look forward to dying every day so you can hold to God's promise that we'll be together one day again, I'll accept that fate too. Thank y'all.
I'm Glenn Draper from the Social Media Victims Law Center. There are thousands of kids across the country who have been harmed just like this across every income level, across every educational level, in every state in the country. There are tens of millions of American kids who are spending hours every day addicted to social media, and the social media companies are targeting them to keep them online so they can show them another ad, so they can make another penny. And it's wrong that we continue to let this happen. So this has to be a top priority. Thanks.
Thank you for your persistence and for continuing to share your stories. I think it means more than you will ever know.
You know, these are all beautiful children. When the product design kills people, and they know it kills people, they ought to be held accountable.
Social media platforms have developed and created and programmed a very different type of algorithm that is not operated based on user choice. They are choosing what our children see. And they are choosing what will engage them at any cost, which it just so happens is extreme. These are children that have been addicted by these apps, and once addicted, they are being force-fed harmful, violent, terrible stuff to keep them hooked. I cannot tell you the number of young children under the age of 16 I've spoken to who will tell me they have been shown live suicides and murders on Instagram, Facebook, and TikTok.
Hi, Jenny. Yeah, good to see you. Yeah.
All right, so go upstairs and I'll show you his room. We gotta go this way.
Oh.
This is Mason's room. Pretty much the way he left it. The only thing that's different is the carpet and then the board that I've made. Those balloons are still left over from a celebration of life, but the kids don't want to get rid of them, so I don't blame them. Mason was a happy, silly kid. He played football, he was on track, always just smile on his face and goofy and funny and just a kind, genuine person. This picture was taken on October 14th. He was gone a month later. This was taken the night before he took his life.
Can you maybe go back the last 2 weeks or so and then work up to...
Yeah. So Mason had some anxiety. He was going through a breakup, but we just thought it was normal teenage stuff.
Tell me about Mason's social media use.
4 months after Mason passed, I was poring over his phone, looking for answers. I started going through the TikToks the last 2 weeks of his life. And one after another, after another, after another were videos glorifying, promoting, normalizing suicide.
And you had no idea that he was seeing...
I had no idea.
Suicidal content?
Nothing. Mason never searched suicide. Never. He was searching for, my girlfriend broke up with me. I have a broken heart. He even searched for positive affirmations. Imagine feeling rejected, feeling that sadness, feeling like what you need to turn to is social media, TikTok, and you're searching for help, and what you're getting is suicide content. This one, it's very disturbing.
Today, we're going to be exploring the top 10 reasons why I want to...
My hand, my head. Are you okay? No. That's one of the bad ones, but it's not even the worst of them.
When did the dark stuff start?
November the 1st. And then he was gone by November the 14th. It was that quick. I remember every single second that night.
Tell me exactly what happened.
I'm trying to give him CPR. I need to give him CPR.
Okay, but that's
I'm trying to give him CPR.
Ma'am, I need you to take a breath. I need you to
He
be happy.
blew his head off.
Okay, all
He
right.
blew his head off.
Just how old is he?
Listen, he's 16.
I'm going to count with you.
Please.
Okay, start counting loud now. 1, 2, 3, 4.
1, 2, 3, 4. 1, 2, 3. I think he's dead. I think he's dead.
I feel like TikTok just put the gun in his hand and told him, pull the trigger. I mean, that's all the videos were telling him to blow his head off. And then that's what he did. That's what TikTok did.
The committee will come to order. Our witness today is Mr. Shou Chu, Chief Executive Officer of TikTok. You're recognized for 5 minutes.
Chair Rogers, members of the committee, thank you for your time. There are more than 150 million Americans who love our platform, and we know we have a responsibility to protect them.
Mr. Chu, despite whatever action you take to protect teens, your algorithm continues to promote harmful content. Wouldn't you agree that indicates there is something inherently wrong with the algorithm your platform employs?
I do respectfully disagree with that. The algorithm drives a great user experience for many, many users.
2/3 of all the youth in our country are on your app. And you know, research has shown that TikTok is the most addictive platform out there.
It's not a fair fight, is it? I mean, the algorithms are on one side of the screen. The human brain is on the other side of the screen, drowning, in many instances at an age where the brain's not even fully developed yet.
We do want to be leading in terms of safety of our users, particularly for teenagers.
Okay, the rest, I'm sorry. At the age of 18, I landed my first full-time job at TikTok. When I joined, there was a total hype around TikTok. I was actually quite proud to work at the company because I was part of this big mission. Then in the summer of 2021, I saw a Wall Street Journal article testing how TikTok is creating echo chambers, especially for young people that really have a significant negative impact. So I started my personal experiment, screen recording the new account to see how much time it takes for me to then be personally affected by these videos.
In Germany, we don't say.
TikTok is designed for you to spend more and more time on the app. And with every minute that you're on, there are 3 to 4 advertisement slots in your feed. So TikTok earns money with you spending more time on the platform. The algorithm identifies how much time you spend on a single video. You could have searched for inspirational quotes, but in the end, your feed is not reflecting what you searched for, it's what you spend time on. So I could see 6 videos that I just swiped through, and the 7th one has a really sad message, and I spent time on it. It took me 15 minutes with just a few triggers of likes and comments under different postings to make sure that my feed was just dark quotes, breakup content, and even people motivating others to support self-harm or eat disorders. When I saw these videos over and over in my For You feed, they had an impact on me. And I still remember a few days where I was just sitting right before midnight in front of my feed crying. I tried contacting a guy in London that was high in the hierarchy of the company, sending him my example of the screen recording and saying, hey, can you have a look into this? But he didn't even give me a single answer while I was at the company. I think TikTok as an app has a positive side when it comes down to impacting culture. But what I see is that the platform is really not a safe environment for anybody within the young audience.
When it comes down to choosing between the safety of the kids and the amount of advertising revenue that they can get, time and time and time again, the companies choose profits over safety. And do they know that kids are going to be hurt? Their own documents say, yes, they know. And brave whistleblowers have come forward and specifically put the documents in the hands of the executives.
We are gathered today to hear testimony from a whistleblower. He resoundingly raised an alarm.
In 2019, I decided to go back to work for Instagram. I kept thinking, well, surely the executive team doesn't know the extent to which teens were experiencing harm on the platform. And so I kind of made it my job to make sure that they were aware. So we did a study done by their own world-class research team that couldn't be disavowed. We asked hundreds of thousands of teenagers, have you ever received unwanted sexual advances on Instagram? 1 in 8, 13 to 15-year-olds. Yes, in the last 7 days. Have you ever felt worse about yourself because of other people's posts on Instagram? 1 in 5 kids said yes in the last 7 days. And once we had all of the data, I wrote that email, which is the one where you tell the executives that there's a critical gap in their understanding and measurement and approach to the harm that people are experiencing, in particular teenagers. And I sent that to Mark Zuckerberg, Sheryl Sandberg, Chris Cox, the head of product, Adam Mosseri, the head of Instagram.
In that memo, you disclosed to them that according to your own research, 1 in 8 children now, had experienced unwanted sexual advances within the last 7 days. Is that correct?
That's correct.
Those numbers are astounding. I just want to let that sink in. 1 in 8 within 7 days, a third of children outside of that window. Mark Zuckerberg, did he reply to you?
He did not reply.
Did he meet with you?
He did not meet with me. In my 30 years in the industry, if I sent an email like this, the next day I would have a meeting with the executive team. Every time. This was the first time I sent an email like this that I didn't hear back.
They sloughed it off. Money was more important than protecting children.
I think you should ask them that question. These companies will only work on the things that they're incentivized to do. Today, they're incentivized to maximize the amount of time people spend on a product. They're incentivized to maximize the revenue that they make from that. And we, as a society, have to pay the price.
The meeting is adjourned.
These companies have more money than small countries. Every case, every issue, they are going to throw everything they have at it to distract, to delay, to continue business as usual. But you have public interest organizations and nonprofits and scientists and researchers and parents coming together trying to make change. This is something that has to get done.
You know, if you think about what addiction does to a 30-year-old adult, right? Now put that on a 10-year-old or a 12-year-old. As a society, we are still just scratching the surface of what these companies have done to our children.
So in other words, if it is addictive, is there actual withdrawal?
Yeah, there have been a number of scientific studies now for addiction. Remarkable number of kids, over 50%, are reporting at least one clinical symptom of withdrawal, tolerance symptoms, or dependence.
It's important to remember that kids can try as hard as they can to stop using social media, but they're up against brilliant people who have invested billions of dollars to keep kids engaged for as long as they can. AI is pushing content that they know will be provocative, something fearful or anger-inducing, because we know that the more kids are steered towards this emotional content, the longer they'll stay online.
Yesterday, we got 8 new cases overnight. So we have 1865 open cases as of last night. By harm, the biggest change is the wrongful deaths. It went from 70% to 10%, a huge, huge jump.
Okay.
Matt, we got 2 fentanyl poisoning cases in just this morning. 1 died 3 weeks ago.
2 today?
2 just this morning already, in the last hour. 19-year-old and an 18-year-old who died 3 weeks ago.
An important theme for the fentanyl cases is that this is a Snapchat-specific issue.
And we have to be very clear and very careful in our wording, right? But we're not saying people don't sell drugs on other platforms. But when you're talking kids and you're talking counterfeit pills, the most dangerous, that's when they go to Snapchat.
You know, this is going to be probably the most important brief we file.
I just saw a case come in 4 minutes ago where he bought drugs off of Snapchat and he survived.
Oh, thank God.
So I just...
Let's try to set up that call quickly, ma'am. Sorry, by the way, that's 3 fentanyl poisonings in one morning. It's not even 11 o'clock.
It's just, I can't believe
it's insane.
One thing that's different about the way Social Media Victims Law Center approaches these cases is that we try to really dig into data that's stored on a child's device. And an integral team member on that for us has been Jason Tanner, our forensic data manager.
I've worked in crime labs. I managed the forensics lab at Oracle. So got a wealth of experience there, and that's why they brought me on. And I was absolutely intrigued as a parent. I mean, I was getting choked up about it, just talking about it, just because in my life, like 12 years in the Marines, 4 years in the Secret Service, 15 years in e-discovery, this is the most important thing I've ever done. Hands down. Hands down. For example, this phone right here, this is from a 16-year-old kid who OD'd on fentanyl and nearly died. The goal is to be able to capture whatever evidence I thought was compelling, present it to the attorneys, and help give them the ammunition they need to do their job. Here's Snapchat, and this is the list of chats. Snap is useful when you don't want people to see what you're doing. So you see here, chats delete immediately, or I can change that to 24 hours from now, delete all that conversation, right? This is what Snap Map looks like. But you can see, I'm like, let's say I'm a dealer. I can easily locate you and, hey, I'm gonna be at the park around the corner. You can come meet me here. God, it's like the platform was built for that. So let's try to log in the web version of Snapchat. Working in Snapchat always makes me nervous. Just me interacting with it could potentially make things just disappear, whether I wanted to or not. I'm going to take a screen recording of this. I mean, this seems a little bit suspect to me. Yeah, cannabinoids, CBD, THC. You're seeing a lot of drug-related content. This is this guy, Cart Plug. Plug means dealer. And this is all weed. How many edibles in a pack? Yeah, you got weed. How much is it? Is it like this? Is it like that? Here's another one. Can you pick up tabs 6 for $85? I mean, this is just making arrangements to purchase drugs. And you're seeing that over and over. Various different chats. This is a drug menu posted by a dealer on Snapchat. If you were to ask me, out of the hundreds of cases that I look at and I review evidence, if it has anything to do with drugs, it's going to be on Snapchat. This is where it is 90% of the time.
We have a number of lawsuits pending here in the Los Angeles County Superior Court against Snapchat, and we should know a lot more about whether the courts are going to allow us to go forward by the end of the summer. We're hoping that by requiring Snapchat to face up and take responsibility for the people that it's injured, that they'll change their behavior, and that's what this is all about.
We're doing this for all the other kids out there that are going to fall harm to the same thing today, tomorrow, the day after that.
Amy Neville is the lead plaintiff in the Neville v. Snap case. She is one of the group of parents who tried to work with Snap. They tried to make change from the inside. They had ideas of how they could fix the product. They were told they couldn't sue, which for a long time they believed. until they realize that's crazy. There has got to be a way for us to force these companies to change those products.
I'm sure
Yes, sir, can.
11.
Hi, Laura. Nice to meet you.
So many stories on this. And
Yeah.
You guys are getting so many cases.
Sometimes 3 or 4 a day we get.
There was a time period we were getting on average 1 a day consistently for weeks.
And when you say those numbers, are those people who've been harmed? Or
People whose children are dead because of drugs.
Families who've lost their kids.
From drugs being distributed, primarily through Snapchat. I think out of 104 cases, there's only we're up to 104. There's only 3 that did not involve Snapchat. If I'm a dealer and I want to sell something that I know is dangerous and I want to find a kid, I'm going to Snapchat. You just find one high school kid in your area, you add them, and then you add all their friends, and then you add their friends.
Because the app suggests them to you, right? And since all of your messages disappear in 24 hours, it's very low risk. Snap could change so that they keep this data on their servers without changing the user experience at all. All be invisible to the users, so it works exactly the same way for the users. But if there's a problem, police could come and get it later. If Snap did that, 90% of this drug dealing on Snap would disappear overnight.
I have spoken with over 100 families of every socioeconomic status, every race, religion, 2 parents, 1 parent, and the only thing all these families have in common is that their children died of fentanyl poisoning thinking they'd purchased a Percocet or an Oxy that they get on Snapchat. You know, we don't condone drug distribution of any sort or purchasing. These were children who made mistakes and didn't deserve to die for it.
From the beginning, we asked to see what has Snapchat done to mitigate and eliminate predators from its platform. Today, we are begging Snapchat to fix their product. We want proof that it's been done. We want the death to stop.
This lawsuit is going to change the way Snapchat and other social media take advantage of our kids. And that is the best thing that we can get out of this.
You know, they selectively quote one section from Section 230, but Section 230 says it is a policy of the United States to encourage the development of technologies which maximize user control over what information is received by individuals, families, and schools.
That's just it, you know, and all of Snapchat is designed to take
thwart
that control away.
To thwart that.
Yep. 230 talks about user control. This case, we are alleging the opposite of user control. We are alleging that Snap created a dangerous situation and then manipulated these kids. This is the opposite of user control.
It's hard to think of any example of American jurisprudence where a statute has been interpreted so differently than either its plain language or legislative intent. But that's where we are. It's just a travesty. Because this is not what Congress intended in the Communication Decency Act in 1996.
We live in a highly technological society where access to information is critical.
We're here to have the law catch up with the technology.
Section 230 of the Communications Decency Act was enacted in response to the internet being born when social media platforms did not exist. Back in 1996, you had a system where you'd get online, you'd look for what you wanted. You had online bulletin boards, right? They're chat rooms. They're places where you, the user, have control. The goal of Section 230 was to incentivize platforms to take down harmful content without the risk of liability if they didn't. The provision stated that no internet service provider could be held legally liable for what users say or do on their platforms. Much later, young folks out in Silicon Valley developed new technologies, but they were technologies we didn't understand.
When we first launched, we were hoping for, maybe 400, 500 people. And now we're at 100,000 people, so who knows where we're going next. We've gone from having around 150,000 people in the fall to right around 3 million now.
Are you on Facebook yet? The site is up to 60 million users so far, with a projection of 200 million by the end of the year.
When social media came out, remember, we all thought this was going to be a new beginning. You know, isn't it great we can go on Facebook and find our high school girlfriend, or isn't it great we can connect with people around the world? And it was only when these products developed into algorithmically driven addictive mechanisms that the harms really became manifest.
Stark warning from one of the founders of Facebook. The site's first president, Sean Parker, is now admitting that Facebook was designed to be addictive.
The 38-year-old mogul admits he, along with other pioneers of social media, knew what they were doing.
It's me, it's Mark, it's the, Kevin Systrom at Instagram, it's all of these people. Understood this consciously, and we did it anyway.
Because of Section 230, because of these companies not being truthful, not being transparent, nobody knew what they were doing behind closed doors.
Over 3.5 billion snaps are created every single day. It becomes such an important part of your life. It's hard to imagine, communicating another way.
We are locked into these things, and kids are using them for 8+ hours a day. Children are waking up in the middle of the night and going to get their cell phone when their parents are sleeping so they can be on them because they cannot turn them off. For over a decade now, these companies have profited by taking what we create and post on their platforms, then feeding it back to us in endless streams of content that they know we can't look away from.
Facebook is under fire tonight following testimony by a former employee.
Almost no one outside of Facebook knows what happens inside of Facebook. The company intentionally hides vital information from the public, from the U.S. government, and from governments around the world.
Frances Haugen testified before Congress, and I realized this is very analogous to the tobacco industry. If you look at cigarette company internal documents from the 70s and 80s, they said things like, the base of our business is the high school student, and today's teenager is tomorrow's potential regular customer. And they knew that smokers start in their teens, and they actively marketed their addictive products toward minors through things like Joe Camel, knowing that those were going to be their lifetime customers. In the case of social media, you have internal Facebook documents released by Frances Haugen saying tweens are herd animals. Kids have an addict's narrative. Our products make girls feel worse about themselves. You have the same kind of corporate misconduct, knowing disregard of the life and safety of others, and a intentional decision to put profits over people. And so, for the first time, I thought that the way to attack these social media companies is as product manufacturers, to try to adapt product liability theory to social media, and on that basis provide for the first time a legal handle from which injured people can hold them accountable and hopefully incentivize them to design and produce safer products. We're just opening our actual office. We're going to have our monthly meeting. There are 4 major hearings between now and November, so the next 2 months is going to determine whether or not these cases can go forward. Up until now, social media companies have been very successful in getting cases dismissed at the pleading stage, before there's been any discovery, before plaintiffs have had any attempt to gather evidence. If we can get discovery, you could uncover unethical or illegal activities. It would deter these companies from engaging in wrongful conduct going forward because they would know that their internal decisions could be scrutinized. Oh, look at us all. Oh my God. We're a real law firm. Can you believe this? Hey, how you doing? All right. What court deadlines do we have this week and the next week?
We do have a deadline. It's 10 days before the hearing in SNAP, and it includes a discussion of discovery.
And then in the Buffalo case, our response is due the 14th of October. The Social Media Victims Law Center does not have a lot of power. We don't have huge law firms behind us. We don't have a lot of money. But we have brilliant staff that have decided to devote themselves to making a difference.
These efforts to hold social media companies accountable, it's all consuming, not just because so much needs to be done, but because, and I know I speak for the whole team here, our whole team, because there's nothing else we would rather be doing. Before I started doing this work, I was an equity partner at one of Seattle's finest, most reputable firms. I had the corner office. I loved my colleagues. I love my job. I met Matt in January 2022, and by February of 2022, I was at the Social Media Victims Law Center. I have asked myself before, am I risking my children's college funds? Am I risking, economic stability? Am I going to make it more difficult on my wife? But the way I look at it is all the money in the world. If my children are in harm's way, if my children are harmed, if I can't protect them, it doesn't matter. Historically, if your child was sleeping soundly in their bed, you knew your child was safe. These companies have upped the stakes. They're now in your children's bedroom, right? It's invasion of your home. These kids have no safe place.
Last year, I was probably on the road 38 weeks out of the year, going into middle schools, going into high schools, talking about the dangers of fentanyl and also social media harms. I think we're probably okay to get started, yeah? Okay. We are going to be talking about the fentanyl crisis. It is the #1 killer in Orange County of 17 and under. It's 3 years in a row now. We had to learn this the hard way after we lost our 14-year-old son, Alexander. This would have been his high school. He would have been 18 this May. Alexander, by all accounts, was a pretty adventuresome kiddo who loved to learn about things. He was obsessed with the Civil War at one point in his life, and we would go to Civil War reenactments. That was his idea of a good time.
You're not gonna look, Alex?
I don't really care. I know what happened.
As he got older, I wasn't all that concerned about Alexander's use of social media because I wasn't losing him to it for hours at a time. He ate meals with us. We'd watch TV together. He was out skateboarding every afternoon, and we would spot check his phone maybe every week or so. But we were looking for sexual predators and bullies because that's what the social media companies told us to look for. I don't keep it a secret that this kiddo wanted to experiment. That was the space that he was in. But we thought we were prepared for that, and we talked about drugs with Alex. We had all these safeguards in place, and yet we still ended up here. Some things I want to point out, there's this, we think kids are partying and taking drugs, and that's where these things are happening. But Alex died right down the hallway from me. It was supposed to be that, you say goodnight and you think your kids are safe, and it's just not the times that we're living in anymore. We give our kids these smartphones, we let them have these apps, and that is the equivalent of dropping them off in the worst neighborhood in our area and saying, good luck tonight, I'll see you later.
Your kid, when they're on a social media platform, is exposed to more predators than you ever knew existed. We have Instagram cases where children have been blackmailed by criminal gangs, and they've caused several suicides. In an effort to extort $50 from your kid, they're going to scare your kids so badly that they kill themselves. In the case of 17-year-old Jordan DeMay, one night in March of 2023, he was contacted by extortionists posing as a teenage girl. They messaged him on Instagram using the hacked account of Danny Roberts.
Generally, when we respond to suicides, within the first couple hours, usually we can figure out the reason why it occurred. But in this particular case, the obvious answers were not present. You've got someone like Jordan DeMay, the former prom king, the football star, the basketball star, and you wonder, how can this happen to someone? When you start reading these transcripts and looking at the interaction between the suspect and Jordan from Instagram, I mean, I guess you can see why.
Jordan thought he was talking to a girl by the name of Danny Roberts, and it wasn't until the extortion started that he then realized that who he thought he was talking to was not reality.
It's just kind of like a banter back and forth. And then eventually they disclose that they want to trade some pictures. So at the point that Jordan had sent some naked images of himself, the suspect account came back with this statement. I have screenshotted all your followers and tags and can send this nudes to everyone and also send your nudes to your family and friends until it goes viral, ... All you have to do is to cooperate with me and I won't expose you. Are you going to cooperate with me? Just pay me right now. They don't want to give that victim time to think. They're going to put that pressure on until they comply. Jordan responded with, I'm killing myself right now because of you. The perpetrator says, good, do that fast, or I'll make you do it. I swear to God. I mean, once this starts, it just doesn't slow down. That's the scary part of this whole thing. It was roughly 6 hours from the time of initial contact to the point where Jordan had killed himself.
His bed is how he left it the last day he was here. It still smells like him in here. A mix of like teenage boy sweat and cologne and whatever. The way that his age group of kids interact was through social media. I remember he came to me and said, I can't talk to any of my friends because we don't text. We don't have each other's phone numbers.
Jordan spent most of his time on Instagram and Snapchat. They're communicating on those platforms all the time throughout the day.
Social media provided a place for these people using this hacked account to contact Jordan and basically gave them a safe space to commit a crime.
There's a lot of things that went wrong that night, but ultimately Instagram is the reason it happened. Social media is the reason it happened.
Social media is hyper competitive amongst the different social media platforms. What they're selling is your kid's attention, and every minute that your kid is on TikTok is a minute that they're not on Instagram or on Snapchat. They have the most sophisticated minds on earth working on this to help them design these features. And this is true about all of the platforms, but it's particularly true about Snapchat. Snapchat has features that can incentivize your kid to be on more. One of them is the Snap score. The more people you communicate with, the higher your score gets. Kids like to compare their Snap scores. If you got a higher Snap score, that means you've got more friends on Snapchat. Well, how do you get more friends on Snapchat? One way is you accept the quick ad recommendations that Snapchat sends you. They have incentivized kids to accept these friend requests, and the friend requests include all manner of people that you don't want your kids talking to. So we are on our way to go see Michael Brewer. Michael was 13 years old when he took a fentanyl-laced fake Percocet pill that he purchased from a Snapchat dealer. And he was literally dead and was revived and suffered some pretty egregious injuries. This testimony is going to show the judge that Snapchat's full of it when they say that we don't know how it works. We know how it works. I bet this is them right there, actually. Hi, Michael. I'm Glenn Draper. Very nice to meet you. Yeah, thank you for doing this. I really appreciate it. We're going to make a difference. Come on in. Michael is pretty unique in our Snapchat fentanyl cases because he's still alive. He is somebody that could tell us this is how it really happened. Let me just tell you how it'll work tomorrow during a deposition. You'll be under oath, which means you'll be sworn to tell the truth. That's really the most important thing, that you tell the truth. Okay? Yeah. What did you like to do before you were injured?
I liked playing football.
Uh-huh.
I liked playing video games. I liked beating up my brother.
You were 13 years old. So you're at the head of the table here.
Stand by.
If you could raise your right hand. Do you solemnly swear that the testimony about to give in this matter shall be the truth, the whole truth, and nothing but the truth, so help you God?
Yes.
Thank you. And down.
Michael, when did you first open a Snapchat account?
Around 10 or 11.
How long after you started on Snapchat did you start to receive this drug-related content?
When I was like 12 and a half. I got this guy who on my quick ad, his name was like Mary Jane and the tree emoji. When I quick added him, he originally like responded 2 days later saying, what you want? And then I was like, what? What do you mean? And then he sent me a photo of his drug menu. After that, quick ad, 5 or 6 out of 10 were dealers.
How often were you receiving drug menus in your stories feeds on Snapchat?
Every hour there were new drug menus.
What happened leading up to Christmas Day of 2020?
I was looking for Adderall, and then I asked this one guy, and he said, no, that I have Percocet.
Did he bring the drugs to you?
Yeah.
When did you take one of the supposed Percocet pills?
Pretty late on Christmas Eve, like 10, 11 p.m. I kinda blacked out after 30 minutes. My mom woke up in the middle of the night, and I was foaming at the mouth. I was cold to the touch.
Michael, thank you for talking with me this afternoon.
Thank you.
I want to thank our attorneys for having the vision right away for this case and believing in us. and what we had to say after the many times we've been told you can't sue Snapchat. But look, here we are. We're right here in front of the courthouse steps, moments away from going in.
Snapchat's product is broken. It's defective. They've known for a long time. They won't fix it.
Because of Section 230, the doors to this courthouse were closed to them. The entire American legal system was closed to them for years. And these parents kept fighting. If nothing else, today, they have already proven Snapchat wrong.
It's just a few of us up against the most powerful, richest companies in the world, but we're just asking the judge to allow us to go forward with the case. It's simply whether we have the opportunity to even try. Representing people like these parents is very motivating and gives us purpose for doing it. I think this is a fight I've been training for 30 years, so hopefully I'm up for it, because I don't have another 30 years to train. All right, let's go to war.
Good morning, all. Good morning. These cases ask some very profound questions concerning the 2023 world of interconnectedness. Big picture abstractions aside, these cases involve, for some dozens of families, a terrible loss. All right, defense. Are you prepared to proceed?
Thank you, Your Honor. And Jessica Grant on behalf of Snap, Inc. I think Section 230 immunizes internet service providers like Snap from any claim, whether it's strict products liability, whether it's negligence, any public nuisance, et cetera. And you started your comments, and I want to echo them, Your Honor, by something that I think needs to be acknowledged in this courtroom, which is that we all feel empathy for the plaintiffs and their losses. This case is no doubt tragic. Although we all feel empathy for the losses that plaintiffs have suffered, the legal theory, or the theories that are being put before you have been tried many times before. All of these cases, the content here was created by the drug dealers. Snap, its only role was an intermediary for the exchange of those two messages. So quite frankly, if those same communications had happened via text, via email, on the phone, would AT&T be liable for that drug deal? No, of course not.
Can I
Yes.
interrupt you, please? I hear you. I understand your argument, but I'm thinking to myself, maybe the better way for some or all of these issues to be decided is on an actual factual record where the court receives evidence from witnesses and documents, and the court gets an inkling of what's true and not true.
You don't need any discovery or any evidence. These are pure legal questions. Nothing will change the fact that the harm here is 100% dependent on the content.
Okay. Plaintiff side.
Your Honor, we are in the midst of a fentanyl crisis. This is the largest killer of young people, according to the CDC. Snapchat is involved in more of these cases than all other products combined. The design of the Snapchat product, which is separate and distinct from virtually every other social media platform, facilitates drug dealers to evade legal responsibility and evade and hide the evidence of their crime. For that reason, Your Honor, we believe that Section 230 does not immunize Snap, and at the very least, we ought to be able to conduct discovery to learn more about the nature of these products, the nature of how they interact with each other, and what Snap knew and when it knew it.
Let's take a break, okay?
That would be fine, thanks.
See you soon.
And I cannot believe that she would say that Section 230 immunizes them from any liability. Any liability. We know that's not true.
Yeah.
We've alleged that Snapchat is involved in more of these deaths than every other social media platform put together.
Yeah.
He gets that. So his point is, do we need discovery now on that issue?
She gave me a real gift with the telephone. But if the telephone company says, hey, here's a drug dealer, here are you, hey, call you up, there's a drug dealer. I mean, this is not a passive intermediary.
I think we just keep pushing him where he's already headed.
Okay, we are back on the record. What would you say to Ms. Grant's point that one could say the same thing about Verizon or AT&T? Because the same communications between drug dealers and minors could occur on a cell phone.
I don't believe it to be analogous, Your Honor, unless Verizon and AT&T give drug dealers the phone numbers of vulnerable kids who might be potential customers.
If, hypothetically, I get past the 230 argument, and now we are in the world of, quote, products liability, is there binding California authority that says, Judge Riff, you've taken an oath to follow the law, this is the law, follow it?
I think there's a well-trodden path for you to follow in terms of if you're following the law and the great weight of authority. No one has held that these apps are products. They've held that they are intangible services. But maybe you could share with me, what exactly are you suggesting that Snap would be liable for?
I'm not suggesting anything. Plaintiffs are suggesting a pretty detailed collection of legal theories.
Right.
You know, negligent failure to warn, strict liability failure to warn, that the risk of harm outweighs the benefit of the design, et cetera, et cetera. And I mean, that's their theory.
Well, that's their theory, but of course we have to look at the actual facts. I mean, you can have a products liability theory. What is causing the harm?
I know, and again, that's why I asked the question, and I'm struggling.
Judge, Snapchat could leave every bit of content regarding drugs on its platform and not be subject to liability, because that's not what we're talking about here. We're talking about the manner in which it is designed. What we have here is essentially a virtual equivalent of a video arcade with a room in the back where kids go to buy and sell drugs, and Snapchat is aware of that and profits from kids going to the video arcade. Well, for that reason, Your Honor, we believe that these cases should be permitted to go forward and explored through discovery.
I need to think a lot more and decide what I'm going to do. I just don't know what I'm going to do yet. Thank you very much. You're free to go.
This judge is very smart. He gets the gravity of what's at issue. I would say I'm cautiously optimistic, but you know, I think you know, I don't think we're out of the woods either.
I just want to say I think it's fantastic that all of us could be here together because I think there's power in numbers.
Yeah.
And I do feel like, you know, for the judge just to take a look at all of us and know that, you know, the pain that we're all enduring. And thank you. Thank you.
In that courtroom, we had a fair judge that was listening to both sides. And that's a beautiful thing about our system of justice, that at that moment, those families were equal to the billionaire companies that they were arguing against. And I got to be their voice. And that's something I'm going to be very grateful for, no matter what the outcome. We're here to bear witness to the captains of industry sitting in front of Congress. The last time something like this happened was 1994, when the executives of the tobacco companies were called before Congress and were asked under oath whether nicotine is addictive.
Gavel, guys. Everyone back. Gavel.
Social media is a very powerful tool, but we're here because every parent I know, and I think every parent in America, is terrified about the garbage that is directed at our kids. And each of your companies could do a lot more to prevent it.
We approve the content that is recommended on our service using a combination of automated processes and human review.
We made these choices after consulting with doctors and safety experts who understand the unique stages of teenage development.
The existing body of scientific work has not shown a causal link between using social media and young people having worse mental health outcomes.
Mr. Zuckerberg, did I hear you say in your opening statement that there's no link between mental health and social media use?
Senator, what I said is I think it's important to look at the science.
Really? Let me just remind you of some of the science from your own company. Here's some information from a whistleblower who came before the Senate, testified under oath in public. He worked for you. I know you're familiar with these stats because he sent you an email where he lined it all out. I mean, we've got a copy of it right here.
It's been years since I sent that email, years since I've had that conversation, and things have not changed because Mark feels that the company is doing enough.
Mr. Zuckerberg, why should your company not be sued for this?
Senator, I view my job and the job of our company as building the best tools that we can to keep our community safe.
Well, you're failing at that.
Well, Senator, we're doing an industry-leading effort. We build AI tools
nonsense. Your job is to be responsible for what your company has done. You've made billions of dollars on the people sitting behind you here. You've done nothing to help them.
Until they get compelled, it's not going to change because of the hubris of the people who run these companies, who really feel that they're doing a good enough job, or there's all of these kids that are proof that they're not.
Mr. Spiegel, there are a number of parents whose children have been able to access illegal drugs on your platform. What do you say to those parents?
I'm so sorry that we have not been able to prevent these tragedies. We proactively look for and detect drug-related content. We remove it from our platform, preserve it as evidence, and then we refer it to law enforcement for action.
None of those efforts are keeping our kids from getting access to those drugs on your platform.
This is about making sure this doesn't happen to other children. I know because I've talked to these parents.
We need to stop buying the BS that these social media companies are telling us and take back the power from them.
You made a conscious decision that growing this business, expanding your revenue, that was the priority. The children were not.
Their own policy states that they don't allow self-harm. They don't allow child trafficking, drug sales, and things like that on their platforms. And every one of them lie.
To all the victims who came and showed us photos of your loved ones, don't quit. The damage to your family's been done. Hopefully we can take your pain and turn it into something positive so nobody else has to hold up a sign.
And so here we are today, with all of the respect in the world for every parent that has lost a child, for all the respect in the world for every youth that is speaking up about these things. These companies need to listen. This is what the work is about.
So, hold on. It looks like the whole team's gonna log on. Matt, I haven't read the whole thing yet, but so far so good.
I haven't read any of it because we win or lose.
I think we won, man.
Is that a slam dunk or what?
It's a slam dunk.
The statute and regulations at issue may be ascertained through the discovery process.
We just made history. We just made history.
In our system of justice, we have and want to have a wide open door to the courthouse so that people who claim to have suffered a legal harm have a place to go to seek a remedy.
This is really happening. We're really moving into discovery. This lawsuit is moving forward. This is another small step in moving the mountain to changing these things.
Exchanges on navigating macro uncertainty. Exchanges on the forces shaping global markets. For the sharpest analysis on finance, business, and the economy, count on Exchanges, the Goldman Sachs podcast. Listen now.
News when you want it with Bloomberg News Now. I'm Tom Mackenzie.
And I'm Caroline Hepker.
The price of oil has risen for a fourth day after OPEC Plus announced plans to pause output increases at the start of next year. The group and its allies say they'll raise production by about 137,000 barrels a day in December before taking a break from January to March. The move comes as the market contends with growing concerns about oversupply that have driven the price of Brent down by around 10% over the past 3 months. Here's the view of Vanda Harry of Vanda Insights.
We are probably in an oversupply situation, but how much oversupply? I think the jury is still out on that. And on the flip side, you have supply risk premium, which has come back in a major way into the market after the US and EU sanctions on Russia a couple of weeks ago.
Vandana Hari referring there to sanctions on Russian oil exporters. As traders tell Bloomberg, the restrictions are now prompting Chinese refiners to avoid shipments from the country.
Now, here in the UK, a 32-year-old man is being held on suspicion of attempted murder after a mass stabbing attack on a train over the weekend. The attack happened on a high-speed service from Doncaster to London on Saturday, leaving 11 people in hospital and some with life-threatening injuries. The train was stopped at Huntingdon in Cambridgeshire. Audrey McAdam is the town's mayor.
This is just out of my mind. I'm totally out of it at the moment. I'm sorry to say. I cannot think straight at the moment. It's a horror film, complete horror.
Audrey McAdam speaking there as police say the motive for the attack remains unclear. Authorities say there is nothing to suggest it was terrorism related.
UK Chancellor Rachel Reeves could target the country's wealthiest with exit and mansion taxes in her upcoming budget. The measures are on a long list of possible options being considered by the Treasury to fill the fiscal hole. Our chief UK economist Dan Hansen says the Chancellor faces a challenging outlook.
I think Rachel Reeves, listening to her rhetoric around this budget, she's very conscious of the inflation story now, and I think probably in hindsight wouldn't have gone through with some of the policies she went through in October last year in the budget last year, because there has been an inflationary impact.
Chief UK economist Dan Hansen speaking there. Bloomberg understands the Chancellor will only decide which tax rises to implement once she receives the final fiscal forecast from the independent budget watchdog. The Bank of England is expected to hold interest rates at 4% on Thursday, slowing the pace of policy easing that it began last August.
US President Donald Trump has threatened military action against Islamist extremists in Nigeria. In a post to his Truth Social platform on Saturday, Trump also threatened an immediate cut-off in aid to Africa's most populous nation. The move comes after the US president said that he was designating Nigeria a country of particular concern because of worries about the safety of Christians. He said this last week. Nigerian President Bola Ahmed Tinubu rejected President Trump's criticism, saying on social media the country is a democracy governed by constitutional guarantees of religious liberty. Tinubu has been under pressure this year from a rising Islamist insurgency in the northeast of the country.
China will effectively suspend the implementation of new export controls on rare earth metals and end investigations into American companies in the semiconductor supply chain. The White House issued a fact sheet over the weekend with some details of the trade pact agreed last week by Presidents Donald Trump and Xi Jinping. But Treasury Secretary Scott Bessent has warned the US must still be cautious.
I think and I hope after the agreement and the goodwill between President Xi and President Trump in Korea that we can depend on them to be more reliable partners and the rest of the world can depend on them. But we can't take that chance. We don't want to decouple with China, but we're going to have to de-risk.
Treasury Secretary Scott Bessent speaking there. Meanwhile, China's manufacturing activity expanded less than forecast in October, according to a private survey, adding to concerns about the economy's slowing momentum.
And European companies are proving surprisingly resilient, with their results showing that they are navigating US tariffs a lot better than anticipated. Bloomberg's Mihal Kubala has more now.
It turns out tariffs aren't biting European exporters as hard as many feared. A Goldman Sachs basket of stocks most exposed to the American levies, names like BMW or Adidas, jumped 6% in October, double that of the broader Stoxx 600. Some firms, including Hermes and Unilever, even credited sales growth in the United States for their ability to beat estimates. The optimism is showing up in forecasts. Bloomberg intelligence data shows earnings on Europe's key benchmark could grow by double digits next year. In Brussels, Michal Kubala, Bloomberg Radio.
Those are your top stories on the markets. The Stoxx 600 is up just 0.1%. Here in the UK, the FTSE 100 is showing a slightly stronger picture, up 15 points, up close to 0.2% at 9,733. And on Wall Street, S&P E-mini futures pointing to gains of 0.1%.
That's news when you want it. With Bloomberg News Now, I'm Caroline Hepker.
And I'm Tom Mackenzie. And this is Bloomberg.
What's driving the markets this week? What's on investors' minds as they look ahead? Find out on the Markets Podcast from Goldman Sachs. A breakdown of market moves and macro signals in 10 minutes or less. The Markets Podcast from Goldman Sachs. Listen now.
This is Scarlett Fu.
And I'm Paul Sweeney, inviting you to join us for the Bloomberg Intelligence Podcast.
Every day, we harness the power of Bloomberg Intelligence to bring you deep dives into the companies that are moving markets, from publicly traded companies like Apple to those that are privately owned but known by everyone on Earth, like OpenAI.
Now, I helped to build Bloomberg Intelligence to what it is today, Scarlett, and now our analysts are the best in the world, covering more than 2,000 global companies.
That is your legacy, Paul, and we speak to those in-house experts every day. They are Bloomberg's go-to authorities on sectors, companies, and legal processes.
And we do it all live each weekday, then bring you the best conversations in our daily podcast.
So be sure to search for Bloomberg Intelligence on YouTube, Apple, Spotify, or anywhere else you listen.
Listen in the afternoons on your way home from work to catch up on the market news you missed during the business day.
That is the Bloomberg Intelligence Podcast. I'm Scarlett Fu.
And I'm Paul Sweeney. Subscribe today wherever you get your podcasts.
connecting the dot between what's at stake and what is possible.
Earnings growth is driving S&P performance, and you want to be where the earnings growth is.
It's hard for us to kind of see a downside catalyst.
The downside risks here is AI is, I maintain it's a bubble.
The market's starting to get a little bit worried.
The market seems pretty happy to whistle by that cemetery, as they say, and until then, markets are going to rally.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Good morning. Welcome to Bloomberg Surveillance. Happy Friday. Happy Halloween. Big tech is beating away the bubble fears, at least for now, with Amazon shares surging as its cloud revenues grow at the fastest rate since 2022. Corporate results mostly hurtling past a high bar and setting stocks to new record highs. Yet concern is rising over a government shutdown that keeps dragging on, threatening to become the longest in history and keeping us in the dark about any kind of real-time economic data.
For now, that concern, though, is just playing out on can you get home for the weekend if you're a senator, representative. For the markets, it's so much event risk that we've digested. But here we are on track for a third consecutive week of gains. It is the tech story that is winning out. As Nomura put it, maybe we're getting away from a macro-driven market, and instead it's a melt-up and joy. The AI bubble is not here, at least not yet.
Well, yeah, the AI bubble, if it is here, is still inflating, and everybody can welcome it and pile in afterwards. Part of the reason why is because people were worried about spending plans. And what you see is CapEx coming in above expectations, the expectation for next year even further above. But for the most part, with the exception of Meta, the revenues are growing at a similar pace. So this seems to edify the idea that demand is still outstripping supply, giving backing to some of these companies to continue with their spending
And that's
plans.
exactly what Microsoft said, right? That still there is an imbalance between the two. The Meta example, though, is so interesting because the market isn't saying you can spend money at any cost. They are saying it needs to be backed up with revenue. But the nuance in there, the bond market was okay with it. It completely took on the new supply coming from Meta. It was the stock market that wasn't okay with it.
Yeah, yesterday we did see that $30 billion bond sale coming out from Meta, and we did see the bond market respond with spreads widening 2 basis points in the investment grade market. I am curious, though, how different it would be if we were getting some of the real-time indicators. Today we should be getting personal income, personal spending, and core PCE, a key metric that the Fed should be looking at to understand whether or not it should cut rates again, which, of course, we don't really understand the reaction function because it's not clear there is one right now. But I am curious how much a lot of the tech spending is filling a vacuum that otherwise could be offset by some of this other data that would be coming out of Washington.
So much has been made that the tech spending is contributing to economic growth, but maybe people are looking to Chair Powell, who in his press conference seemed confident that even if they don't have data coming before December, that they can use alternative data and the beige book. To him, that was enough to prove or disprove that they need to cut or not cut.
He seemed like the father in a car, in a fog, on the street, and the kid in the backseat saying, could you just press the gas a little bit because you know where you're going? And he's like, no, it's foggy. Cut it out. Right now, we're looking at markets that seem to be really building on gains. As Danny said, a third weekly gain that we're poised to see, led by the tech sector. S&P futures up 0.6%. You are seeing just a little bit more dollar weakness. And that 10-year yield, really watch this space, especially after Fed Chair Jay Powell pushed off the potential for a guaranteed December rate cut at that 4.10 level. Coming up this hour, Peter Scheer of Academy Securities as the equity rally looks to get back on track. Dan Ives of Wedbush Securities on the big week for big tech, and Dan Stuyven of Goldman Sachs breaking down earnings from the oil giants. We get Chevron and Exxon later this hour. We begin this hour with stocks rising after a slate of upbeat earnings from big tech. Peter Scheer of Academy Securities writing this: the lack of breadth has been a concern again recently, but big tech has provided earnings that warranted that. Peter joins us now. And Peter, are you going to provide us with one of these puns? Bad breath, et cetera? I mean, how many of those do we have every day?
No, I'm sticking to one major theme, which is production for security, or PROSEC. And that's kind of our main investment philosophy right now, is look for things that the government's going to get involved with and really rethinking this kind of production for security. I think it's the new ESG. This is going to be a multi-year trend where countries, corporations, governments, asset managers all think about what we need to be truly sustainable.
So this is the reason why, and some investors have welcomed a lot of the capex spend that we've seen from the big tech players, from some of the other energy intensive industrial companies. At what point is there enough money already sloshing around the system to finance this without being diverted away from other efforts?
Right now I think there's a ton of money. I think you've got private credit looking to put money into this. Banks are all very flush. The banks are doing very well, so I think the banks are looking to lend to this. And I really think the growth story is going to be how do we keep our energy production or electron production or electricity production, however you want to phrase it, to keep up with this demand. So I think there's just going to be an immense amount of growth as we look at rare earths and critical minerals, not just the rare earths and critical minerals, but the process and refine. These are going to be important parts of it. Then I think it's ultimately, can we build enough electricity production to keep up with what we're going to do? And that's going to be the growth story. It's going to be a big commodity push, right? We're going to have to build all these things out in conjunction if we want to win the AI race.
But when you have both a huge amount of capital supply and demand for that capital, typically that's kind of the environment where things get papered over because there's so much money being put to work and the need for it. Are you concerned that there are places in the margin where we go too far?
I think it's at the margin, though, right now, right? There's probably going to be, I think, I would be cautious if I'm investing in someone who doesn't get good deal flow. I think the people who have good deal flow have plenty of opportunities. I think, you're just seeing this investment. It's real. But again, that's why I'm kind of really much more focused on, okay, what are going to be the underlying building blocks of this? There I have less concerns about whether there's a bubble or not in valuations, right? That Dan Ives can speak to later. I think he's still probably fairly bullish. You can understand why. But for me, I'm looking, okay, what is the core that we need to really make this, to really compete? We're way behind China in terms of electricity production. Clearly, the rare earths and critical minerals, the refined versions of those, was a huge sticking point during all these trade negotiations. I think we're just going to explode on that front, and that's where my efforts are. You look at the things we're doing in nuclear. I think nuclear is going to be a big part of this, and I do think eventually the president's going to give up on solar, and you're going to see solar become part of the equation and really get growth there. And everything we're doing, I think the rest of the world should be copying.
Can we catch up? I mean, it's an immense push and a lot of money being put behind it. But we're starting, to your point, from such a place of being behind.
I don't know whether we can catch up. I know if we don't start or do anything about it, we won't catch up. So at least now you're seeing the building blocks put in place. The Department of Energy has 70 nuclear projects listed. Only one supposedly has all the regulatory approval. You did see the U.S. government take steps to allow small nuclear reactors on military bases, right? The government has a lot more control over federal land. So I think we're just starting to see this whole process. And when I think about kind of this replacement of ESG and this production for security, I'm thinking everyone's going back and saying, if I want to be truly sustainable, what do I need to make myself? I need to make some things myself to be truly sustainable. Then I can work with my close allies and neighbors and friends to get some other it. And then, sure, I can buy some percentage of that on the open market from whoever. But I think we're looking at it this way. I think the government's looking at it this way. I think corporations are going to look at their supply chain. So I think we kind of got away from what it is to be truly sustainable. To be sustainable, you actually have to be in control of certain things. And I think that's also going to apply. We're looking much more at South America, the opportunities there. So I think the Monroe Doctrine, always been talked about, not much has been done. I think we're seeing that. So that's where I'm kind of looking at the investment landscape away from the AI, the data centers. Who's going to benefit? It's going to be South America, and it's going to be this production for security.
So I just want to point out that ProSec is something that you've trademarked, and you hope that we all use at some point in terms of
you got to try something,
a trading theme, and that is a longer-term theme that you have been talking about before all the rest of us were. So kudos to you. If you just take a look at this week, and this really goes to what spending is the right kind of spending that should be rewarded, and what is the spending that shouldn't. This week we saw massive capex from the likes of Microsoft and Amazon and Meta and Google, and there's this question about whether this is sustainable and whether it is going to the right types of areas that either go with your ProSec theme or that just in general go with the AI and exactly what form it will manifest in. From your perspective, is this the right kind of spending?
Again, it's very hard, right? One company yesterday, Meta, clearly went down 10% on the stock on spending, and today now you have Amazon going up 10%. So clearly everyone's trying to figure out where we are in that cycle. And that, to me, is where it gets a little bit dangerous, right? Maybe we go up another 30, 40% from here. Maybe we drop 10, 20%, just as people try and figure that out. That's why I'm kind of trying to deviate away from that and away from the big high flyers, away from the momentum, into these other areas where there's less pressure. Again, look at energy. I think energy is going to be a huge part of this. Most hedge funds, my understanding is, are underweight energy. You don't see a lot of bullishness there. That, to me, is like, okay, I would rather be there. Maybe I don't have the same upside as some of the big AI providers. On the other hand, I don't think I have the downside, and I think we benefit from whichever one of those scenarios wins. we benefit if we're in that space.
It also has the benefit of removing from the backdrop of the murky mess that is the U.S. economy, of trying to understand the K-shape and exactly what's happening with some of this investment and what it means or what it doesn't mean for employment. So I just wonder from your perspective what you expect in terms of how much your call is dependent on an economy that does keep chugging along, on a Fed that does keep cutting rates, on a backdrop that is as benign as so many people seem to think it is.
So, we've been talking a little bit about the little I-shaped economy where there's a little dot that's doing phenomenal well. The stick, I don't know how bad it's doing. I know there's a lot of talk about the K-shaped economy. I do think there's some weakness. I'm not comfortable with the job situation. I think the job market's still been overstated. Having said that, I really do like this push towards this production domestically, working with some of our allies. We're starting to take tariffs off of things like avocados, bananas, things that we just don't have here anyway. So I think you're seeing some rationality flow into all of this that lets us grow. And I think the one thing that's underestimated in the big, beautiful bill is the accelerated depreciation, right? If you get lower rates and you start seeing this move, and again, I think the best thing about capitalism is money flows to where there's opportunity. And I think some of the things I've been describing, whether it's in the chip sector, whether it's the data center AI sector, whether it's space, money is going to start going there. You're seeing things rewarded. Like miners have been left in the dust or the dirt for ages. All of a sudden, they're becoming exciting. Yeah, sorry about the pun, but it's. But I do think that's where capital is going, and you're going to see ETFs built on this sort of concept. Money will flow there, and that will allow the growth to occur, and that's where you're going to see the real development.
The growth, though, again, is occurring in such a specific place that you're talking about. This gets back to Lisa's original question. Are we witnessing something that looks incredibly regressive?
No, I'm going to push back a little bit on that. I think the growth is occurring on things where we realize we ceded these things to China, who is not our friend, not our ally, is a long way away from us. And we have to go back. What do we need to make either domestically or nearshored to make sure that we're safe, that we can sustain ourselves for periods of times if we have a friction with China?
Peter, does that help the I part of the stick part of the I?
I think it does. I think it does really help the stick part, because then we're going to be building these things out. And let's say a nuclear plant, right? Okay, it's going to take 7 to 10 years probably to be online for a big one. Maybe a small one can get on in 5 years. There is going to be a ton of construction around that, right? So the amount of construction jobs, right? And if we're going to do this construction, we're going to need steel, we're going to need aluminum, we're going to need concrete. So I think the job creation in and around that build out is the part. So it's going to be years before we have a full electricity grid that we need, but just trying to get there. And again, don't forget, the U.S. government already took a stake. I don't know exactly what it looks like in U.S. Steel. The government is going to be involved in kind of what we're looking at as kind of national champions. I think they're figuring out who they can work with to progress this. You're seeing the regulatory environment change. So that's where the jobs, that's where I think the stick does better. And so I think the stick has kind of been left behind. Maybe we're still going to be left behind the data center. But if that stick can...
The dot.
The dot is doing phenomenal.
Okay.
But I think the stick is moving in the right direction.
Peter Scheer of Academy Securities, who trademarked Prosec. Thank you. Always wonderful to start the day with you. Right now, let's get you an update on stories elsewhere this morning. Here's your Bloomberg Brief with Yahaira Anand. Yahaira.
Hi, Lisa. Amazon shares are rising nearly 13% in the pre-market after earnings. The tech giant reported $33 billion in revenue from its AWS unit, a 20% jump from the year prior and its biggest year-over-year increase since 2022. CEO Andy Jassy praising the impact AI's had on Amazon's business, saying, "We have momentum." Meanwhile, Apple shares also getting a lift, up 1.8% in the pre-market. The company shared it anticipates a blockbuster holiday season led by demand for its newest iPhones. Apple also reported a surprise decline in China sales due to supply constraints, but says it expects to return to growth in the market. CEO Tim Cook saying store traffic is up significantly in China. And Vice President J.D. Vance is warning a prolonged U.S. government shutdown will impact travel during the holiday season, telling reporters it could be a disaster if the shutdown extends into the Thanksgiving travel season. The comments come after Vance held a roundtable with the CEOs of United and American Airlines. That's your Bloomberg Brief. Lisa.
Thank you so much, Yahaira. Up next, de-risking from China.
We do not want to decouple from China. We need to de-risk. My guess is a year from now, we'll be back at the table and we'll get another delay, another roll.
So what is decoupling and what is de-risking? Ed Mills of Raymond James will explain all. This is Bloomberg Surveillance.
As I reach a milestone in my life, I'm humbled by my good fortune, yet well aware that I still have much to learn. And if I stay true to myself and follow my instincts, my legacy will be looked on kindly by my friends, my family, and hopefully generations to come.
LGT's investment solutions allow you to look to the future with confidence. Over its 100-year history, LGT has repeatedly demonstrated its resilience, proving to be a stronghold of stability in a world of change.
Setting up for a third straight week of gains as you do see some sort of legitimacy put into some of the concerns about the AI bubble. When you take a look at why, you can see what kind of CapEx plans these companies have. We didn't put Apple in here because they don't have the same type of AI-related CapEx. But Danny, when you take a look at the numbers on the screen, when you take a look at a 75% increase year over year in Q3 CapEx from Microsoft at $35 billion, $34 billion for Amazon, $19.4 billion for Meta, and $24 billion for Google. Just the scope of money going into this is absolutely shocking.
They've basically doubled CapEx in 1.5 years, and it underscores just how much these tech giants have changed. This was a sector that was usually loved for its free cash flow and limited exposure to things that depreciate. That's completely been flipped on its head, and they're tapping the debt markets too. So they're becoming increasingly indebted. It's a completely different model for evaluating these companies.
Particularly for Meta, and when you take a look at the expense plans for next year, it continues to increase at a similar pace. Meanwhile, ongoing spending is expected more broadly as the United States tries to move away from its dependency on China, on the rest of the world for some critical minerals. Under surveillance this morning, de-risking from China.
We do not want to decouple from China. We need to de-risk. My guess is a year from now we'll be back at the table, and we'll get another delay, another roll, because what everyone misses is the Chinese have rare earths, but we have President Trump's threat on tariffs. He gave the team maximum negotiating leverage.
Here's the latest. U.S. and China tensions are de-escalating after striking a year-long truce on tariffs and rare earth export curbs. The two countries continuing a push to reduce dependence on each other. Bloomberg's Tyler Kendall joins us now from Seoul. Tyler, a really tricky dance here. Yes, a sort of a truce of some sort in the near term, but really accelerating the push on the back end for each country to move away from one another.
Yeah, hey, Lisa, good morning. You're exactly right. While the trade truce is intact for now, it really doesn't address those more fundamental issues that contributed to the standoff between the U.S. and China in the first place, including national security, the persistent trade imbalances, but of course also what you're alluding to here, which is this jockeying for dominance when it comes to the tech sector. Now, we did hear from Chinese President Xi Jinping today for the first time since his meeting with President Trump, and he struck this positive tone when he addressed the APEC Leader Summit here in South Korea. He called on countries not to threaten global supply chains, saying that instead they should be working together. But of course, it is worth noting that China's now delayed export curbs on critical and rare earth minerals had the potential to disrupt supply chains, not just in the U.S., but globally as well. Plus, these curbs, Lisa, are technically still in place. They are still rather in the pipeline. They still could be coming down the road a year later. Plus, there are old curbs that are still in place, have been at this point for years, and many businesses note that the Chinese export licensing system is really opaque. So that's led our analysts at Bloomberg Economics to say that even after these talks, China really does maintain its grip on the global critical minerals supply chain. But of course, that led the White House during this trip to try to strike those cooperation pacts with countries like Japan, like South Korea, in these essential sectors like rare earths and like shipbuilding. But Lisa, I did want to point out that while President Trump is in Washington, here in South Korea today, the Chinese leader did hold some pretty high-profile meetings, including with Japan's prime minister, but also with the Canadian Prime Minister Mark Carney, too, saying that they're going to start re-talking about trade, all in a bid as both countries try to bolster their leverage, even as we have just gotten this most recent trade truce.
Bloomberg's Tyler Kendall, great work. Thank you so much. Also some discussion with respect to NVIDIA speaking in South Korea about potentially restarting Blackwell sales into China. At least that is Jensen Huang's goal going forward. Joining us now is Ed Mills of Raymond James. Ed, I just wonder your takeaway about how the geopolitical chips are falling after this Xi Jinping-Donald Trump meeting.
I think they're basically where we would expect them to be, which is getting a de-escalation, getting delay. But the real question now is kind of how long does this last? And I don't think there's anyone who thinks that we're going to go through the next year or through the term of President Trump without kind of some more hiccups. This is a roller coaster ride. I am sure there's going to be more export controls that are going to be kind of suggested by either side. But really, the big question that we've been getting here at Raymond James is how much semiconductors can go into China, how much relaxation of some of those tech controls. We've talked about that de-risking. In the last 8 years, that's been about blocking what China can buy. De-risking now in DC is making sure that China gets hooked on our AI technology so that we don't have the risk that China develops something else and is a competitor globally. That's a fundamental change that is going to potentially drive a lot of this AI trade even a bit higher as we get those kind of de-risking sales into China that were not expected.
To Lisa's point, Ed, the president had said that Blackwell would be discussed. Jensen Huang said he hoped he'd be able to sell Blackwell back into China, but it appears that wasn't on the table during these negotiations. What do you make of the fact that that specifically was left out?
So, Danny, the president said that NVIDIA and China are going to have conversations and that he was going to let NVIDIA be the referee. He did say that Blackwell, in NVIDIA's latest chip, the Rubin, is probably off the table. And I think that's appropriate. What we do know is that the Trump administration had previously banned the H20. They banned one of the AMD chips. They've reversed those bans. China hasn't purchased that because they want to see what else they can get. I do think that there is a version of Blackwell that probably can be sold into China. I do think that that is going to be part of future negotiations. So on a scale of 1 to 10, if I had been hoping for a 10, what came out of this is probably a 6 or a 7. And if we can get those negotiations ongoing, it can go up from here. But the opportunity to possibly relax tech standards versus where we've been is a fundamental shift in and of itself, which gives optimism for a lot of investors that I talk to.
So notably, not a 12, as the president said that the outcome of the meeting was, Ed. What else wasn't discussed? Also, TikTok, Taiwan, transshipments. What do you make of just what was left out of the discussions?
You know, it is a 2-hour meeting, but that's not very long when you kind of have all these different negotiations. I think as it relates to TikTok, that has been moving along. That has had a lot of other negotiations. One thing that I've always heard about President Xi is that he likes to go into these meetings with things 98, 99% settled. So I think what was discussed in the meeting was what Besson and his counterpart were able to do the week before. There is a desire to have another meeting first half of next year where Trump goes to China. Maybe Xi comes to the United States at an appropriate time. So there is opportunities to follow up from this. On rare earth, yes, they are going to have this pause. But because there's licensing, there's plenty of opportunities for China to tighten in certain ways that will get U.S. response. So the fact that we have more to discuss at later dates and other dates already set to kind of have the leaders come together seems fairly appropriate at this point.
Ed, just really quickly here, do you think that we're going to get a completion to this government shutdown by Thanksgiving so we cannot worry about flight delays?
I think Thanksgiving, yes, but I think that's where I kind of have been putting the over-under. Once we get to November 21st, which is the date of the CR that passed the House, the conversation changes because it's not that the Senate could just vote to turn it on because there's nothing to vote on. I do think that there's going to be a conversation today and over the next week about nuking the filibuster. That's what President Trump has put on Truth Social. I don't think the Senate goes in that direction. I think that's about Trump trying to regain negotiating leverage. But because of those social media posts, this does go on at least another week. As the pressure builds, President Trump is probably going to have to be the off-ramp. But as we get closer to kind of November kind of 21st, and as we get closer to Thanksgiving, that's really, I think, where this finally comes to a head. I think we're at the beginning of the end, but unfortunately, we're still at the beginning, not the end.
Not the end of the end. Ed Mills of Raymond James, thank you so much for being with us, and have a wonderful weekend and a wonderful Halloween. Right now, we are getting data from some of the biggest companies, the big oil companies, Chevron Corporation, reporting earnings, beating earnings estimates. As profits from the Hess Corporation acquisition seem to pay off. You are seeing the adjusted third quarter earnings of $185 a share, exceeding the 166 average. They also are talking about share buybacks, and it really flies in the face of oil prices, Danny, which have gone down. You are still seeing profits coming out of some of the oil majors.
Yeah, Brent crude on pace for its worst year since 2020, since COVID really depressed demand for oil. It's notable, to your point, that the Hess acquisition is what got them through, speaks to the consolidation that's happening in this industry and why it's happening.
And why we expect more to come, especially with the deregulatory push that can allow more big oil tie-ups. Coming up, we're going to be talking about big tech with Dan Ives of Wedbush, who probably will be bullish, as Pete Shear noted, on big tech after the earnings we got this week. Plus, Yahaira Anand with your morning movers, Reddit soaring on strong advertising projections. This is Bloomberg.
LGT's investment solutions allow you to look to the future with confidence. Over its 100-year history, LGT has repeatedly demonstrated its resilience, proving to be a stronghold of stability in a world of change.
Connecting the dot between what's at stake and what is possible.
Good morning. Welcome back. 3 hours until the opening bell. What we can see right now is a market that wants to grind higher toward new record highs, building on a third weekly gain. And you could see that really being driven by the tech space after the earnings of the likes of Amazon and Apple yesterday. Tech up, NASDAQ up 1.1%, S&P futures up 0.6%. The Russell taking it a little bit, but yesterday was an outperformer. What you are seeing is that Amazon absolutely crushing it in pre-market trading, up almost 13% after their beat, showing that cloud revenue came in at the strongest going back to 2022. Apple shares getting a boost because people are upgrading their phones finally to the iPhone 17, and it really does have to come down to the hardware. And this has been bolstering sentiment. Just a reminder, though, Amazon shares are only up 1.6% before this move. So definitely the underperformer of the year so far from the big tech space. Meanwhile, in the bond space, a real question about what a Fed that isn't going to cut rates in December means for credit markets, for fixed income markets more broadly. 10-year yields are the ones that I'm watching at that 410 mark after selling off, seeing a 10 basis point rise on Wednesday following the press conference. 2-year yields getting a bid, 3.6%. 3 hours away from the cash open. Here are your morning movers with Yahaira Anand. Yahaira.
Hi, Lisa. We start with Amazon. As you said, the stock is soaring nearly 13% after a strong performance. It's a big win for a stock that's lagged its tech peers this year. The company's profit engine, AWS, saw revenue jump 20% year over year. As you said, its strongest growth since 2022 and well ahead of forecasts. I will also note Amazon said that CapEx last quarter hit a record more than $34 billion. And moving on to Apple, also another strong performance there. Shares are up 1.75% after the company predicted a strong holiday period thanks to its newest iPhones. The tech giant says revenue will jump as much as 12%, while iPhone sales will jump in the double digits. That would make it Apple's strongest iPhone quarter ever. And we end on Reddit also soaring nearly 11% now in the pre-market after posting some pretty impressive numbers in the third quarter and saying that momentum will continue into the end of the year thanks to its advertising unit. Thanks to its advertising, daily active users jumping nearly 20%, while revenue grew 70% year on year. It also gave a better outlook than analysts expected. Lisa?
Thank you so much, Yahaira. We are getting earnings ongoing this morning. We did get Chevron earlier. Now, we just got the numbers from Exxon, the reaction in shares. A little bit worse than what we saw from Chevron. Those shares down 2%, even though, Danny, they seem to beat pretty much across the board for earnings as well as for revenues coming in far above expectations.
And kind of not the same flavor as Chevron, but a similar one in terms of what is driving it. It's just new projects and what they called growth acquisitions. The cost of capital is very low for them. So at Exxon, they're betting that they can take on more debt. They're already coming from low levels, take on that debt, have new projects, and that be the thing to lift them up despite the fact crude oil prices have been tumbling all year this year.
Yeah, talking about how their cash capex is coming in slightly below the lower end of the $27 to $29 billion. Interestingly, they did talk about having some sort of $18 billion in cumulative cost savings. Whenever I see cost savings, I wonder, is this just sort of a sanitized way of saying job cuts? Is this part of the economies of scale of some of these acquisitions?
At least they didn't blame AI. At least they weren't like, oh, we're doing AI things, so we're shaving jobs.
But maybe they will be anyway, in terms of exactly what's behind it. We'll dig into that as we get more details and as the call comes through. On our radar this morning, a turnaround for tech following Thursday's losses. Amazon shares surging on its fastest cloud unit growth in nearly 3 years, while Apple gained on a revenue beat and an upbeat holiday forecast. Meanwhile, NVIDIA CEO Jensen Huang remaining hopeful about selling his company's new Blackwell AI chips in China, adding sales were not discussed during his meeting with Chinese trade officials. I love, by the way, Danny, that they talk about how he's going to be the sort of referee on these talks. It's sort of like, the fox in the hen house, no?
Right. Is that comforting or discomforting? I mean, it's a China that's explicitly said we want to use our own homegrown chips. So you're, pun intended, putting literally all the chips in Xi Jinping's basket.
All right, Punny
You're
Friday. I love it.
that.
Absolutely loving it. And there is this question about whether it's a national security thing in order to get U.S. tech into China so that there isn't this huge divergence. Meanwhile, Netflix reportedly exploring a major bid for Warner Brothers Discovery Studio and streaming businesses. This, according to Reuters, Netflix has hired advisors to evaluate any potential deal. Netflix also announcing a 10-for-1 stock split to benefit employees and, of course, to make their stocks more accessible to the individual investor. But the tie-ups right now in the media space, it seems like there is a rush to get big enough to survive whatever kinds of tech advancements there are in the years to come.
I want to know if this Netflix bid, if it's something that Warner Brothers Discovery would actually entertain too, because one, I guess it would involve splitting up the company because they just want streaming in their studios, or if this was all just a ploy to get Skydance Paramount to up their bid, which has been said many times. But maybe if Netflix offers enough, all of a sudden it becomes attractive.
Yeah, this to me is really the question. What is the price? What is the clearing level for a lot of these companies? Turning back to Apple, shares rising in the pre-market after giving a strong outlook despite reporting a surprise decline in China revenue. Dan Ives of Wedbush maintaining, guess what, an outperform rating on Apple and raising his price target to $320. Dan joins us now, his colorful self. You never sleep. Love seeing you. So what is it that was so good, given the fact that this really is a hardware story, not necessarily a technology story, which is what's going on with the rest of the tech world?
Sure. I mean, look, if you look services, that continues to be rock of Gibraltar for them, and that mid-teen growth. I think that's something from a multiple perspective that investors are really focused on. But look, the reality is we've talked about it so many times in the show over the years, like other cycles have been disappointing from iPhone. If you look 15, 16, iPhone 17, it almost looks like a surprise upgrade cycle. Especially in China. China was the headwind, now looking like a tailwind. And then also it comes back to Cook. I mean, 10% politician, 90% CEO, playing nice in the sandbox in D.C. That's going to have an impact as well. And this is all the drum roll to AI. I mean, that is what you're playing for here when when it comes to Apple over the next year.
Is it? I mean, I guess that's really the key question. Is this still the promise of AI? Or is this really a question of we all have phones that are broken and cracked and we've been waiting for a long time and we're going to now upgrade to the i17. They are capacity constrained at this point, which was the biggest hamper for them. And it's a completely different story than the AI spend that we're seeing in the other companies and a very different kind of trajectory than maybe what we're seeing in the other space.
Yeah, and that's been the frustration, right? Because, I mean, if you look at Apple, this AI party where it was 9 p.m., it's now 10:30 p.m., that party goes to 4 a.m. Apple, they've been out on the outside looking through the windows, right? So now the focus is consumer AI revolution. It's going to go through Cupertino. Now, how does that happen? Comes down to that Google DOJ win. That's huge. And now, candlelight dinner, Sundar, Cook, I believe it's a matter of time. They're going to announce a massive AI partnership on Gemini. That's what you're playing for, because you're 25% of what you're playing for is the stock's cheap relative to what I think could happen on an iPhone 17 services. But what you're really playing for here is they get to the AI party. They announce that deal over the next year. This is a $350, $400 stock as AI finally comes to Cupertino.
Doesn't that, though, completely not illegitimize, but basically challenge this idea that you have to spend in the AI race to keep ahead? If you have a company like Apple that basically figures we can partner with people, we don't need to spend, and we can still benefit, does that just show you don't need to participate in the arms race for every other company that is?
Yeah, look, I think for them, it's unique because there's 2.4 billion iOS devices, 1.5 billion iPhones. So they've built the mountain, right? The field of dreams. I mean, they've built it, they will come. So now it comes down to, like, from a consumer perspective, you have to monetize that on the consumer perspective. I think AI revolution comes through Apple on the consumer side. When you look what's happened on the enterprise, look, it's a fourth industrial revolution. The reality is that from this tech earnings, going into eating chocolate tonight and Sour Patch Kids and whatever else on Halloween, you go in as a bull more bullish relative to everything we've seen from hyperscaler, Amazon, Microsoft, even Meta stock down, but why is it down? They're spending more and more, and it speaks to our view. This is only second inning of the 9-inning game.
It really changes, though, how you analyze these tech companies. If they are taking on AI servers and other relatively short-lived assets, it means that depreciation charges start racking up. How does that change how you think about these companies and the otherwise cost discipline that they need to exercise?
Yeah, and look, I think that's the debate, right? Because if you look at these companies over a year, then you wouldn't have bought even the last few years. But the reality is it's an AI arms race. You're essentially building out the new economy on the consumer, on the enterprise front. And that's why you have to be able to look out 2-3 years to what this is going to look like. Microsoft, a good example. I mean, you essentially have almost built a Microsoft within a Microsoft. You look what's happened at Google, right? New York State cab drivers bearish on Google and Alphabet. If you look back over the last 6 months, now win DOJ, search, death greatly exaggerated. That's actually a positive relative to AI. You look at Amazon, finally Jassy saying like, hey, don't forget about us. And that was a huge pop the champagne moment for them last night.
We saw a huge bulk of the Magnificent Seven report earnings this week, and I want to just take a look and take stock of what we've learned. And our team put together a fantastic series of charts really looking at the CapEx expense and just what this is compared to revenue. What you can see is that revenues are expected to increase the likes of 5% in Amazon, expected CapEx rise 51%. Google, expected revenue rise 6%, CapEx rise 43%, a similar story for Microsoft. At what point does that become a concern? That they have to fund an increasing amount of this with debt, that it's increasingly going to depend on leverage and the benevolence of private creditors and all sorts of other investors who are going to finance this?
Yeah, and to that point, that's, I think, also outside Mag 7 in terms of companies that are basically going to have to raise debt. They're going to compete from a CapEx perspective. When it comes to big tech, I mean, $1 trillion in the balance sheet, generate $300 to $400 billion a year. So that's why the reality is they are fueling this AI revolution. But if you look at CapEx, look, a year ago, CapEx going into this year is $220, $230 billion. That was a thought. It's actually going to be $380 billion. So I think investors continue to underestimate the scale and scope, and that's the fuel in the engine. That's what's fueling all of this in terms of the CapEx cycle, and that's why in his leather jacket, the godfather of AI, Jensen, continues to be the chip that really fueling the AI revolution. But AMD, TSMC, Broadcom. It speaks to our view. I mean, I've seen it even like authentication with, what we're doing on Orb side, where you're seeing like authentication, cybersecurity, CrowdStrike, Palo Alto. This is where it's all going, second, third, fourth derivatives.
Yeah, we get Palantir on Monday, and then we get the rest, so we can see exactly how that's playing out. Just taking stock, of what we've heard. And people think of Dan Ives, they think of Tech Bull. And you've been right. You've been 100% right with a lot of this. I'm just wondering, what are you seeing that does seem excessive? That does make you think, hold on a second, there is something here that makes me just a little bit nervous that there's some good money going after bad in small pockets that are getting a little bit bigger.
Well, to that point, I mean, I just got back from basically being gone a month around the world trying to understand, especially in Asia, what demand and supply looks like. So for the real ones, demand and supply is 10 to 1, okay? But just because you say AI 30 times in a conference call doesn't make you an AI play. So when you say what worries me, but Lisa, that's I focus on we have our ETF, who are the winners, who are the fakes. So it just speaks to my view that when you say what worries me, it's just separating out. You need to own the winners. You can't just own an AI play because they have great PowerPoints.
Is Caterpillar an AI play?
There's a better chance of me playing in tonight's Blue Jays Dodgers game than Caterpillar be an AI play. That's my opinion, but it speaks to the view you have to be careful about who's AI, who's real, what are the derivatives. And I think as an investor, that's how you separate, look at the spending, who the winners are, second, third, fourth derivatives, obviously Messi of AI, Palantir being one of them.
Dan Ives, always wonderful to speak with you. Thank you so much. And I hope that we someday learn how to have no sleep like you do, Dan Ives of Wedbush Securities. I want to go as AI to Halloween as AI. What would that look like? I'm just trying to think about that.
So I actually had a friend pitch me this. For you and your husband, one of you dresses really artificially, and then the other person looks very intelligent. Dan seems to have an idea. How do you do it?
But I would just say, but Lisa's the one. She's the house. She's the one where you actually give out full chocolate bars.
Totally.
And the problem is, but you're just one of those. And because it's your world, we all pay rent.
Oh, yeah.
But I just want to be.
Lisa's the CapEx giant of Halloween, investing in good-sized
She's the CapEx from a chocolate perspective. And then the neighbor, you have the small chocolate, you feel bad. That's the problem.
All right, so I'm making everybody feel bad. Right now, let's move on. Let's get to an update on stories else for this morning. Here's your Bloomberg Brief with Yahira Anand. Yahira.
Hi, Lisa. U.S. oil majors Chevron and Exxon are reporting this morning. Exxon posted an earnings beat. The company is pressing ahead with a raft of expansion projects despite slumping oil prices. Meanwhile, Chevron beat earnings estimates as profits from the Hess acquisition were included in the results for the first time and provided a boost. Chevron's global production rose 21% to the equivalent of 4.1 million barrels a day. Meanwhile, American soybeans are great again. China has purchased at least 4 U.S. soybean cargoes following the summit between President Donald Trump and Chinese leader Xi Jinping. Sources telling us here at Bloomberg the cargoes are for shipments later this year and in early 2026, and the total volume is about 250,000 tons. And California Public Employees Retirement System is planning to vote against Elon Musk's $1 trillion Tesla pay package. CalPERS, which owns about 5 million Tesla shares, says the pay package is far larger than those for CEOs in comparable companies and further concentrates power in a single shareholder. The $1 trillion agreement spans 10 years and requires Musk to meet certain benchmarks. That's your Bloomberg Brief. Lisa.
Thank you so much, Yahira. Up next, Dan Stroyven of Goldman Sachs as oil giants report earnings and eyes turn to rare earth minerals. This is Bloomberg Surveillance.
LGT's investment solutions allow you to look to the future with confidence. Over its 100-year history, LGT has repeatedly demonstrated its resilience, proving to be a stronghold of stability in a world of change.
Well, the earnings have delivered, and they've delivered big time. And to the extent that this was going to be a risk week with Magnificent Seven stocks reporting, it has not been. And what you are seeing is a lift to markets. Equity futures indicated higher, led by those tech shares, up 0.6% on the S&P futures. You are seeing yields just marginally higher at that 410 level on the 10-year. Crude continuing to fall. A real question here with the oversupply. Under surveillance this morning, earnings from the oil giants crossing this hour. Exxon shares are lower with the plans for major expansion projects. Chevron rising after posting strong results. Joining us now, Goldman Sachs' head of oil research, Dan Stuyven. Dan, thank you so much for being here. What a year on all the commodity fronts. I'm just wondering with the oil giants, what this tells you about the path of production in the months and years to come.
Yeah, so I think those earnings help us to check in on the key assumption that global supply will continue to grow. We estimate that actually in the fourth quarter of this year, on a year-over-year basis, global oil production will be up 4%. That's 4 times more than in a normal year. And that, in combination with the global stocks data that are rising, supports our view that you sort of have another $10 per barrel of downside for oil prices over the next year, with Brent next year averaging $56 per barrel.
Does it look like a race to the bottom, though? You have Exxon talking about the fact that they have low levels of debt, so they can take on more debt and finance more projects. Is that what the path looks like?
So I think 25 and 26 are pretty exceptional in how much extra supply we expect to come to the markets, coming both from core OPEC producers like Saudi Arabia, the UAE, and others, and then also from production in the Americas, especially from Latin America, actually, Brazil and Guyana. If you look out further down the horizon, we see a sharp slowdown in supply growth from 27 onwards. So we really think of this as the last jump in global supply. And that's why I think prices will probably come down somewhat more next year, the last leg lower, before we likely recover, as demand probably keeps growing while supply starts to moderate.
Meanwhile, the other big production jump, at least hope of which, is in the U.S. for rare earth materials. And it's a Trump administration that, yes, may have reached a pause with China, but has been investing in the key players in the U.S. Can the U.S. decouple from China when it comes to rare earths?
So investment in the space is definitely rising at a quick pace. Western governments are investing, but we think it will take years to build up an independent supply chain. China's dominance in the rare earth supply chain is pretty incredible. China refines about 92% of rare earths in the world. China produces 98% of the magnets that are critical to make batteries, for instance, or in the defense and AI sectors. And another challenge really has to do with the fact that if you look at some of the deposits of the so-called heavy rare earths, they're incredibly concentrated in China and Myanmar. And so we think this issue is not going to go away. Of course, in the last 2 days, we saw China postponing rare earths export controls for a year, but I think this topic is here to stay with markets and investors for years to come.
So as you suss out where in the world there are these other reserves that could potentially support U.S. efforts to de-risk, not necessarily decouple, we can dive into what that exactly means. Where are you seeing rife opportunities?
Yeah, so if you for instance, look at some of the American, Australian, Canadian companies active in the rare earth supply chain, those equities have really surged year to date. They're actually down over the last 2 weeks, but year to date, you're still up sometimes, if you take an average, 200, 300%. Because we need higher prices to incentivize a big ramp up in production. And so I think the companies in these supply chains are typically in the West, either in Australia, the U.S. or Canada.
What is the biggest obstacle for the U.S. being self-sufficient in some of these areas, in the production side of things, the refining side of things? Is it the regulatory environment? Is it just how long it will take for the plants to get built? Is it just the expertise and the fact that we haven't had it since 2003, 2004? Which is it?
Yeah, I think all of these above, but if I had to give you the top two, I would put refining on number one. Refining rare earths is incredibly complex. These minerals are incredibly similar to each other from a chemical perspective. And so removing them, splitting them is incredibly hard. It requires a lot of expertise. Building a refinery typically takes 5 years. And actually, if you go back to the 70s and the 80s, Western countries like, for instance, France, were leading the refining process. But then those technologies were exported to China. And then they were improved very, very significantly over time. So I think refining is complex. It takes time. And then the second major bottleneck is just that some of these deposits, the rare earth raw minerals for the heavy rare earths, they're mostly concentrated in China and Myanmar.
All of that just underscores the immense amount of leverage that China has in discussions with the U.S. And it used that leverage on rare earth elements to bring the U.S. to the table. Does it demonstrate a playbook? Could commodity weaponization in trade talks go beyond rare earths?
So I think that commodities are clearly a key part of sort of the U.S.-China race for tech and AI dominance. I think on the China side, indeed, access to rare earths gives China a lot of leverage. If you look at the U.S. side, I think China has been very focused on allowing the U.S. to continue to export advanced chips. You both need very advanced chips, and you need rare earths in this big race for tech and AI dominance. And more broadly, we do think that in a world where countries are very focused on becoming dominant and decouple, we think the risk of commodities being used as sources of geopolitical and economic leverage will stay high, and arguably has risen over the last 10 years. We have seen export restrictions for rare earths minerals, for cobalt out of the DRC Congo. Big picture, commodity supply concentration is high, has risen further. And that's, I think, why for investors the message is diversify into commodities. It's a hedge against negative supply shocks.
Yeah, the whole idea that Eddie Fishman of Columbia talks about the choke points in the global order. Just real quick, how many calls are you getting on things like nickel that you've never gotten before? I mean, just can you give us a sense of your scope of inbound calls that you're getting?
This is a great year to push our boundaries and expand the scope of commodities we cover. We're enjoying the process, but sometimes we have to go back to our Mendeleev, chemistry tables to go back to the basics.
I was about to say we should have a chemistry. You should have a periodic table on the screen. Dan Stuyven, thank you so much for being here with us. Dan Stuyven of Goldman Sachs. And we are seeing, with respect to oil, this question of how the oil majors are trying to weather this overproduction in the near term. And it does seem like it's cutting staff, consolidating, continuing to produce and weathering the storm.
It's a vicious feedback loop because if you're continuing to produce, to Dan's point, you're contributing to that oversupply. So then do you need to produce more? Do you need to cut more staff at a time when we're seeing a lot of corporate America think about slimming down?
Yeah, and we already have seen a lot of layoff announcements at some of the big oil companies. Next week, we are going to get a number of other tech companies coming out. I'm curious what they have to say about some of the production issues with rare earth minerals. Coming up next, we'll continue the conversation with Barbara Duran of BD8 Capital Partners, former White House trade official Kate Kalukowicz, Gene Munster of Deepwater Asset Management, and Winnie Caesar of Credit Sites. This is Bloomberg Surveillance. Good morning.
LGT's investment solutions allow you to look to the future with confidence. Over its 100-year history, LGT has repeatedly demonstrated its resilience, proving to be a stronghold of stability in a world of change.
There's so much uncertainty what's happening here.
That's what's hard for the Fed. They're in the muddled middle.
We're in a bit of a data vacuum.
I don't think that the December rate cut is a foregone conclusion.
There are strong signs here that Powell is struggling to manage the committee.
This is Bloomberg Surveillance with Jonathan Ferro, Lisa Abramowitz, and Anne-Marie Hordern.
Good morning. Welcome back to Bloomberg Surveillance. We're getting data in the form of earnings. Big tech coming in strong. Take a look at Amazon pre-market shares, just absolutely soaring in pre-market trading. Now the question is the data that we're not getting, the K-shaped economy. Torsten Sklock of Apollo coming out saying K-shaped economy also for corporates, because you can see that big tech space doing absolutely phenomenally, posting incredible numbers. The rest of the world, Danny, not so much.
And the breath has been so bad in this equity market. We have had near record-breaking numbers of days when you are up in the very limited amount of stocks that are taking us there. Is it a really regressive event? Because not only is the stock market going higher, maybe it puts pressure on energy demand, so energy gets more expensive for everyday people. I will say, Peter Scheer in the last hour says not so. The construction projects are actually going to benefit the lower-income people and the creation of jobs.
Which is really a key question as we take a look at the CapEx spending from some of these companies. Let's take a look at what some of these companies have been pledging for the year to come, as well as the current year. Next year forecasts. Microsoft coming coming out saying, yes, that they plan to increase what they spent this year significantly. Amazon going from $34 billion this year to $125 billion of CapEx next year. We're talking about Meta tripling from almost $20 billion to $72 billion next year, and Google going from $24 to $93 billion. This is massive spending plans that have really been edifying a lot of the rally that we have seen.
And of course, the big tech company that's not on there is Apple. And I really do wonder if the good results from Apple stress test the idea that you have to spend, because it is Apple that has bet that it doesn't need to spend. It can benefit from everybody else. It can partner up with other people, and it doesn't need to commit hundreds of billions in CapEx. So do they prove maybe for some of these companies, I don't know, it's unnecessary?
Yeah, and you're building on what Dan said earlier today, Dan Ives, which I thought was fascinating, the idea that Apple could end up partnering with Google and Gemini using their artificial intelligence rather than investing on their own to really build this out. Is this the model if this isn't going to violate some of the antitrust agreements? That's really a key question here.
That is a huge question because Google has come up against it and lost before. But maybe in this administration, they'll find a more friendly player. Of course, those original cases were brought on by the Trump administration 1.0. But at least it seems like it's a bet Apple's willing to take.
And Google has won some of those cases. So that's also part of the issue. Right now, you're seeing in markets a win for the bulls. You are seeing a third straight weekly gain. Building on that gain this morning, S&P futures up 0.6%. You are seeing yields just marginally higher as people assess the Fed's landscape as well as just the strength in the underlying economy. What you are seeing in Amazon and Apple, real gains, as we mentioned before. Coming up this hour, Barbara Duran of BDA Capital as Wall Street delivers another big tech rally. Former White House trade official Kate Kalukowicz with President Trump's global tariffs facing a legal challenge. And Winnie Caesar of Credit Sites as the AI boom takes on more debt. We begin this hour with stocks edging higher on strong earnings from Apple and Amazon. Bloomberg's Matthew Bloxham joins us now for more. Matthew, thank you so much for being with us. I just want to get a sort of report card on what we've learned this week. Who are the winners? Who are the losers? Are there losers? Or was this just a big beat that blows back all bubble talks?
I think if you look at the top line, it was a win for all of the companies. You know, they generally beat expectations. If you look at someone like a Google or a Meta, where there's question marks about whether, you know, so-called legacy social media businesses, which generate all this kind of advertising revenue, are at immediate risk from the likes of ChatGPT. I think what we've seen is they're actually using AI to their advantage to strengthen those businesses in the near term and fend off that competition. But that clearly is a kind of midterm risk around AI browsers. Eating into that. I think that the story is more nuanced around the investment side. You know, we saw Meta severely punished earlier in the week because there isn't a particularly clear link between the huge amount of money they're spending on AI infrastructure and the revenue that's going to come in to justify that investment. And you're seeing a much stronger connection with the likes of Amazon, Microsoft, and even Google's cloud business. And I think that's because that revenue connection is into the business market. You know, we are definitely starting to see businesses move from a piloting phase into a more kind of implementation phase when it comes to AI. You know, there are much clearer use cases forming that they're investing in, and that's driving demand for additional compute and cloud capacity. And Meta doesn't really have that. And so it's a bit more aspirational in terms of where the new revenue streams are going to come from to justify the huge sums they're investing in AI capacity.
And right now they're looking to the debt markets to open up their pocketbooks to try to help fuel that. Bloomberg's Matthew Bloxham, thank you so much for being with us. Barbara Duran of BDA Capital writing, the market in the near term seems to have been fully discounting positive outcomes. The narrow advance this week also likely signaled unsustainable near-term highs. Barbara joins us now for more. Barbara, are you pushing back right now against the optimism we're seeing in markets?
In the very near term, but you're also seeing the response. That was a response. This week has been very interesting because going into the earnings for Microsoft and Meta, you had the highest expectations in terms of you had the Fed cutting. You had earnings are coming in well above, targets. And then you also had, people were thinking of the AI. We've had so much reaffirmation in the last few weeks in terms of announcements, especially from NVIDIA and partnerships and orders and that sort of thing. So understandable with a 23 times PE, we're going to have volatility. So in the near term, caution is warranted. However, you're seeing this morning what's happening, with the Amazon, good earnings there, and Apple, not to mention Coinbase. So I think just caution in general at this point, putting new money to work. However, when you get sell-offs like yesterday and you see Meta down, I think Meta is a buying opportunity in here because, again, we saw this a couple years ago. People were freaking out on one earnings because they were spending so much money. The stock got down to $100.99 briefly, and it was a great buying opportunity because it's really about the users and engagement. So on these kinds of sell-offs, that's when you can cherry pick, some of these high-flying names because you have to be long them. And if you're not, you need to get it.
So has Meta then done enough in your mind to prove that it's not just spending for the sake of spending, that it will in turn result in real revenue for them?
I think they've proven that over and over again. And certainly in the last year, they're one of the first to really show they're spending on AI, but they're also one of the first to use it effectively. You've seen that in terms of increasing their user base, their engagement, their advertising targeting is much better. They are leading the pack there. So I think they are living proof that AI can really change the productivity of your business.
I say it's remarkable how much event risk we've just lived through in the past 5 days. You laid out a bunch of them, add in tariff China trade talks to the central banks into the tech earnings. Nomura's Charlie McElliott has said the fact that we've gotten the central bank decisions out of the way and the trade deals where it's kind of like nothing to see here means that macro won't be the influence for the rest of the year, that it will be a melt up and a fear of the right tail that keeps people buying. Would you agree with that?
Yeah, I think that's accurate. I mean, we've been through so much geopolitical risk, this year in terms of the Middle East. We still have Russia to deal with, particularly this recent nuclear testing things. That seems to be ratcheting up. China, they really didn't address some of the major things in terms of, are we going to sell the Blackwell chips or are we going to do a lot more? But that seems to have calmed down. And with President Trump's commitment to go back in April, I think those geopolitical and trade tariffs, I think we're getting used to, there can be a sudden tweet, and we saw that sell-off a couple of weeks ago when he said 100% tariff on China, but then the market calmed down. So I think that a lot of those things, the macro risks are calming down. So I think it's really looking at, again, right now the market has a high valuation. However, this week also was the again about AI that is so driving it. You had talked earlier about the narrow advance, and it is indeed narrow, but that is where the action is. These are big free cash flow. And if you look ahead to next year, again, we're seeing great earnings, and the guidance is key because obviously the earnings are just what happened. But you've also got the full impact of the tax package and CapEx should start to kick in. If bank deregulation happens, that's going to actually increase capital available to loan out, helping individuals, businesses, particularly small businesses. So I think there's a lot to look forward to next year that's going to be positive.
Is stock markets gain the credit markets pain? And I ask this because this week we saw a transfer of some of the risk with some of these CapEx plans. And yes, Meta is the poster child of it, but it's not just Meta, it's also Oracle. We've seen these huge debt sales come out. How much does this start to raise your alarm bells about taking more risk in the credit sphere and maybe consolidating any kind of risk on move within the equity space?
Well, I think these are excellent questions, and it's something that you will tend to see in any sector where there's an explosion of interest. Overcapacity is very easy to happen because everybody's doing it. And where does it end up? One example has been the fiber build out, but it's very different because I think, and Jensen Huang described it, I think, yesterday about the virtuous circle. Because the more you spend, the more you up the abilities of AI, the more it gets adopted, the more affordable it gets. And a lot of these things, we're talking about the debt that's been announced, but so much is being financed by free cash flow from these companies, which generate just huge amounts. So I think we are going to see it just continue to build and build and build. And I'm not so concerned about the debt because I think they'll get the payoff on that in the not so distant future.
What you have seen from earnings has been this K-shape, and this is something that Torsten Slok of Apollo put out this morning. You have seen the winners, you have seen the Chipotles, the losers, this idea that you are going to struggle with a consumer that is weaker in certain pockets. And I just wonder whether it matters to you with the narrow breadth and the sort of AI promise in the equity market, whether it matters if the Fed cuts rates in December, or whether essentially this week we learned it doesn't really matter because ultimately it's all about big tech for the risk assets.
It does, and it doesn't matter. I mean, obviously, if they cut, It does help, the big tech guys because obviously the value of the cash flows going forward, that can be a PE expansion. It obviously matters for housing, for the lower income consumer. We're talking a lot about that. And that's where I think Chipotle is the canary in the coal mine. We've got retail reports coming up. Although it was interesting, Amazon, when they reported yesterday in e-commerce, they're not seeing any, impact from tariffs. They're not seeing prices go up. They're not seeing demand come down. But I think it's going to be very different as people start to shop, for the holiday season and what that means and how much the lower income is going to impact. So I think that if the Fed does not cut in December, I don't think it's such a big deal, but we're going to have a lot more information too, because right now from private sources and from the companies themselves that are reporting, labor seems to be sort of in a flat line, and whether that's because there's lower supply or whatever. But the one thing we are watching, we've seen these layoff announcements with Amazon, UPS, and others. Right now, still can be one-offs. We don't know if that's a trend because that's been the whole thing. There's no hiring, but there's no firing. Yeah. And so that's being watched very closely. But I think, and again, we're going to have a real lag in information going into that December meeting. Even if the government shutdown stopped tomorrow, it's going to take a while to gather because they haven't been gathering information. So that's got to happen. Yeah. So I could see the Fed not cutting in December, but depending on the information that comes in, could be January because we've been doing pretty well. Even with the Fed supposedly restrictive.
Barbara Duran, thank you so much for being here. Barbara Duran of BDA Capital joining us here. And we should be getting personal income and personal spending, Danny, as well as core PCE. And personal spending was supposed to go down to 0.4% based on economist survey by Bloomberg from 0.6%. That's the data you're going to get, estimates from economists, because we're not going to get it officially.
Yeah, you're going to get alternative data. You're going to get the beige book. And again, I go back to Chair Powell saying that's enough for us to make a decision to, I guess, not move.
Yeah, well, exactly. To be in the fog and call it the dark and say,
correct.
Come on, guys, get it together. Right now, let's get you an update on stories elsewhere this morning. Here's a Bloomberg Brief with Yahaira Anand. Yahaira.
Hi, Lisa. Pfizer has 4 business days to offer a better deal than Novo Nordisk's bid for obesity biotech Metsera or walk away from the deal. Novo Nordisk is offering at least $6.5 billion to Metsera shareholders, with the possibility of the price rising to $9 billion if certain targets are met. Metsera is working on an obesity drug that could be given as a monthly shot, while current comparable drugs are taken weekly. Meanwhile, Netflix is reportedly considering a bid for Warner Brothers Discovery studio and streaming businesses. According to Reuters, Netflix has hired advisors and accessed confidential financial data to evaluate a potential offer. Warner Brothers Discovery announced earlier this month that it was exploring strategic options, including a possible sale, after receiving interest from multiple parties. And President Trump is urging Republican senators to scrap the filibuster in order to bypass Democrats and reopen the government. The filibuster is a tactic used to delay or block votes by keeping debate running. 60 votes are required to overcome a filibuster. Republicans currently have just a 53-seat majority. It's been 30 days since the start of the government shutdown. That's your Bloomberg Brief. Lisa?
And will they get it resolved by Thanksgiving? So if you're flying anywhere, nobody can blame air traffic controllers because they have a hard enough job. Up next, the Supreme Court showdown.
I think that we have a very high level of confidence that the Supreme Court will side with us. I even spoke in the Oval with the president about it. I'd say the level of confidence is extremely high.
Former White House trade official Kate Kalukowicz joins next. This is Bloomberg Surveillance.
LGT's investment solutions allow you to look to the future with confidence. Over its 100-year history, LGT has repeatedly demonstrated its resilience, proving to be a stronghold of stability in a world of change.
Coming into a third week of gains on the S&P 500, on the NASDAQ. You are seeing those gains build this morning after tech earnings for the likes of Apple and Amazon. Yesterday up almost 0.7% now. On the S&P, yields just slightly higher, crude lower, as we do get a sense that there is going to be that ongoing oversupply from the likes of Chevron and Exxon competing for market share, not necessarily on price. Under surveillance this morning, Supreme Court showdown.
I think that we have a very high level of confidence that the Supreme Court will side with us. We think we're on very strong grounds. I've been fishing through the briefs myself just to see what the arguments are, and I think that the case is very, very strong, and we're highly confident that they'll side with us. I even spoke in the Oval with the President about it, and I'd say the level of confidence is extremely high.
Here's the latest Supreme Court arguments on the legality of President Trump's global tariffs set for next week. Bloomberg's Tyler Kendall joins us now. Tyler, it seems like a big potential risk for markets. What are you watching as those arguments come to the light?
Yeah, hey, Lisa. Well, the Supreme Court, first of all, agreed to hear this on an unusually aggressive schedule, signaling to us that they may like to resolve this quickly. Now, as you mentioned, this has to do with the legality of President Trump's tariffs invoked through IEEPA, the International Emergency Economic Powers Act, and whether or not President Trump has the legal authority to do so, because we have never seen tariffs enacted through IEEPA before. There's questions here about whether or not he bypassed Congress. But importantly, when it comes to IEEPA, President Trump needs to declare a national emergency in order to use the law. So he did that, one, when he cited fentanyl and the border to impose tariffs on Mexico, Canada, and China, and then again for the so-called reciprocal tariffs, where he cited persistent trade imbalances as amounting to a national emergency. And that is really the second big question to watch out for as this case unfolds, is whether or not those national emergencies that President Trump declared, if he does have the legal authority to use IEEPA, reach the legal standard of being an unusual and extraordinary threat. So those are some of the ways that this could actually play out when it does reach the Supreme Court. But Lisa, it's important for us to note that while IEEPA does extend to the vast majority of the tariffs imposed by the Trump administration, it's definitely not all of them. And U.S. officials have been pretty open with us that they have other tariff tools in the toolbox to use, including those Section 232 tariffs enacted over national security concerns on sector-specific industries, and then Section 301 tariffs, for example, which look into unfair trade practices.
Tyler Kendall, thank you so much. As always, right now joining us, former White House trade official Kate Kalukowicz, who wrote, "A decision would have the potential to redefine presidential authority over trade policy." Kate joins us now. And Kate, before we get into the big sweeping questions, how are you advising clients who are suggesting that maybe they should try to claw back some of the tariffs that they've already paid, should some of these tariffs be overturned, or potentially could face other tariffs that could be just as punitive, if not more so?
Well, I think as exciting as it is for companies that have been worried about these tariffs and have been arguing about the impact on their businesses, it's really best to take a calm approach to this, a wait and see approach to this, because as you just heard, the president has many other tariff authorities. And I think, frankly, if he loses his ability to use these IEEPA tariffs, he has many other authorities in his quiver to put these back in place.
Even if he has other tools, Kate, how long does it take to implement? How different does the implementation look, if not with the use of IEEPA?
Well, it's a great question because, of course, some of these other authorities require procedures to take place. We've seen in the case of these 232 tariffs that there is about a 200 to 250-day delay in between the announcement and the imposition of tariffs. Section 301 tariffs, which were just referenced about unfair trade practices, can take up to a year. So they are simply not as fast as the IEEPA tariffs, but I think it's important to remember they are more durable than the IEEPA tariffs simply because a process has established them. The one benefit of the IEEPA tariffs, if we want to call it that, is that they can be removed as quickly as they're imposed. So that provides the president and companies a bit more flexibility about the long-term nature of them.
Flexibility, can we translate that into certainty, Kate? Dependent on the Supreme Court decision, what outcome would give more or less certainty to corporate America?
Well, it depends on the type of certainty we're looking for. I mean, frankly, the certainty around tariffs, I think, in a medium-term picture, is that they're here to stay and they're going to expand much more drastically. IEEPA tariffs are quite exciting because of the Supreme Court, because of the way they've been imposed in such a broad way across the globe. The 232 tariffs, which are these national security tariffs on a wide-ranging amount of sectors in the United States, are probably going to be here to stay. And these are very high tariffs. They're 25%, 50% on things like steel and aluminum and cars. And I think, frankly, we need to be prepared for some long-term imposition of these sorts of tariffs.
Kate, how does it change negotiations with China? This week, we saw a standstill or back to normal and waiting another year to renegotiate things. How do changes in the legality impact those conversations?
Well, I'm of the view that they don't change them at all. If you remember, the tariff burden on China largely at this point relates to Section 301, the authority we talked about that allows the administration to go after unfair trade practices. Importantly, before President Trump went to Asia, USTR, U.S. Trade Representative, announced that they would be launching another 301 investigation into China's compliance with the commitments it made to President Trump. So USTR is already gearing up for another round of potential tariffs under a very steady authority. The IEEPA tariffs, or so-called fentanyl tariffs, as you saw, were reduced by half. So that remains 10% on fentanyl and 10% reciprocal, which are under the IEEPA authority. The other 25% are under 301 and can be expanded with fair ease.
Right now, we're just trying to assess what actually got done in Asia, what the landscape looks like. What are you telling clients about how much they can rely on the sort of new effective rates of about 30% for China, 20% for Southeast Asian countries that are big trade partners with the United States?
From a U.S. perspective and from a client perspective, I can say these are fairly stable. The president, of course, has not indicated his interest in raising tariffs on China. I think this is a result and an outcome that he had hoped for. He's going to be very focused, as we saw in the days leading up to the summit with President Xi, a focus on negotiating trade agreements with other economies in the region. He is attempting at the moment, I believe, to isolate China to provide a stronger amount of leverage going into his next meeting with Xi. So whether or not that takes place in the spring or in a year from now, I think we will be moving toward stronger leverage on the United States side. But that will be done to exact wins from the Chinese side rather than impose significantly higher tariffs. Now, of course, we can't predict what the Chinese may do, and our president always likes to go back to tariffs. So I think if President Xi and the Chinese make some big moves, we could see ourselves back in a higher tariff scenario. But as for now, I don't think that's what President Trump wants.
Kate, why is Canada so bad?
Canada is challenging, but I mean, it's not a question of being bad or good. I think there is just some ill personal will that dates back, frankly, for President Trump and former Prime Minister Trudeau. But also, when I speak to former colleagues at the U.S. Trade Representative, negotiators continue to say, we loved negotiating with Canada, but they were tough. They echo a little bit what President Trump says. The barriers that remain between the United States and frankly, its most important trading partner are long-held, very difficult barriers. You hear them on dairy and lumber. These sort of sit below the surface and I think create these unpleasant tensions. I am hopeful that Canada, I think, will realize that the United States economy, the United States consumer pool are in its best interest, and I'm hoping some cooler heads can prevail here.
Former White House trade official Kate Klukowicz, thank you so much. It does feel, Danny, like a family affair, doesn't it? Sort of.
Yeah, incredibly personal, like putting out this attack ad here, that
totally.
one there.
I mean, at my Thanksgiving dinner, we're going to have attack ads. I just, different relatives.
Would love to be invited, Lisa. That sounds marvelous.
Actually, not at all. It'll be much more tame. Coming up next hour, not that. Gene Munster of Deepwater Asset Management wrapping up this week's big tech earnings. Plus, Yahaira Anand with your morning movers. Shares of Coinbase higher on earnings and an uptick in crypto trading.
LGT's investment solutions allow you to look to the future with confidence. Over its 100-year history, LGT has repeatedly demonstrated its resilience, proving to be a stronghold of stability in a world of change.
Two hours to the opening bell, and you can see that lift continuing to build heading into the open. Futures higher across the board, up 0.7% on the S&P, even more so on the NASDAQ as we look to tech companies to rally. You do see yields just marginally higher, crude lower. Take a look at these two particular names. We're looking at Amazon and Apple after yesterday's earnings. Amazon shares up almost 13% in pre-market trading. Apple shares up 2.3%. Amazon coming into this was only up about 1.6% on the year. So really put the catch-up trade here to the other tech giants. 2 hours away from that cash open, here are your morning movers with Yahira Anand. Yahira.
Hi, Lisa. We are seeing Netflix shares and Warner Brothers Discovery shares rising in the pre-market. On a Reuters report that Netflix is eyeing Warner Brothers Discovery's studio and streaming businesses drawn by HBO Max and its popular library that includes DC Comics and, of course, the Harry Potter franchise. We know that Comcast and Paramount Skydance are also circling, so this could turn into quite the showdown. And we move on to Coinbase. Those shares are up more than 4% in the pre-market on third quarter profit surge, thanks to stronger trading, plus an acquisition and more digital assets on its platform, helping nearly double transaction volume. Investors also liking what they heard on the call, with Coinbase aiming to become an everything exchange and getting into things like prediction markets. And this is one of those companies gaining attention as an AI play. Shares of Western Digital up nearly 10%. This is a data storage giant, and it is soaring after reporting first quarter profit that more than doubled, with the company saying that AI and data center growth are driving record demand for its high capacity drives. Lisa.
Thank you so much, Yahira. Danny, I think that we should just be an AI play. I keep thinking that.
I think so. We'd probably get paid more. Maybe we can list ourselves on the stock market and do wonderfully. It's the playbook.
Yeah, AI fueled anchor. On our radar this morning, Amazon Web Services reporting third quarter revenue of $33 billion. That's a 20% jump from last year and the biggest year-over-year rise since the end of 2022. Amazon's total sales rose 13% to more than $180 billion. And really key in this is that, Danny, this is a company that always has been heavily capital intensive. It has never been an asset light company in the tech space. Right now, they're demonstrating the power in their cloud services at a time where the other parts seem to at least not be losing ground.
Right, and in that excellent board you've been showing about how much everybody is spending, Amazon is far and away spending the most. But to your point, they're showing that the spending is paying off, that AI is powering their cloud results. Unlike a Meta, where Mark Zuckerberg was a little bit more vague on exactly what the returns would be from its AI spend. So the market does seem, at least just this week, who knows what happens after that, but more discerning on what you're getting in return for the spend.
Yeah, and how much the spending is outpacing some of the increases that we're seeing in revenue. Meanwhile, when it comes to other sectors other than AI, although they could also be an AI play, U.S. oil majors Chevron and Exxon reporting this morning. Exxon posting an earnings beat, the company pressing ahead with a raft of expansion projects despite slumping oil prices. Meanwhile, Chevron beating earnings estimates as profits from the Hess acquisition were included in the results for the first time. Danny, to me, these stories are fascinating because of the job cuts coming with them and the play for just simply having the supply in order to compete on just product rather than price at a time where prices are expected to continue to be at least somnolent for a while.
Right. It's a symptom of oil prices that are on track for their worst year in 5 years. Plus an OPEC Plus decision this weekend where they're likely to increase oil supply yet again. So you have them and the oil majors increasing the supply. So what do? You just try to get more market share and you go big on expense discipline, which can result in job losses.
Yeah, we saw $18 billion of expense discipline from the likes of Exxon this morning. Vice President J.D. Vance, meanwhile, meeting with airline CEOs amid a push to end the government shutdown. Ahead of the busy holiday travel season, air traffic controller absences causing major delays and cancellations at airports along the East Coast Thursday. This is what really caused the end to the shutdown, the prior longest shutdown that we saw during the first Trump term. I just wonder whether this is also a play for political cover, how much this is trying to jockey for public sentiment as to who's to blame.
And I mean, it's notable that the airlines weren't just like end the shutdown. They said we want to clean CR, which is decidedly with the Republicans and what they want. So the airline's almost making a clear decision in that. But I mean, the statistics and numbers have been so bad. Orlando apparently is one of the worst hit when it comes to air traffic control. The average delay was nearing 3 hours for airlines. In New York City, they had a ground halt, not just because of the bad weather, but also insufficient staff. For these senators and for these representatives who go home basically every weekend, this is hitting them literally where it hurts.
I really would like to see that chart. If you have it, if you could send it to me,
Yeah,
just
I'll
where the
find
biggest delays are, just because I'm very curious where not to travel.
It will make you at Florida, basically. Don't go to Orlando.
Yeah,
Sorry, Orlando.
Honestly, I've seen that happen though so many times. The storm that always happens, the canceled flight, not getting rebooked, but you know.
Yeah, it feels like shutdown or not, you're sitting on the tarmac. Sorry.
Turning back to tech, less of that. Apple shares getting a boost following a revenue beat and an upbeat holiday forecast. Gene Munster of Deepwater Asset Management writing this: I expect Apple to be the best performing Mag 7 through the end of the year. Gene joins us now. Gene, Apple, best performing. Why?
It's pretty straightforward. There's two big levers. First is that iPhone demand for the next 3 quarters is likely going to outpace the street. The street's looking for around 7%. I expect it to be 10%. That, of course, is one of the big focus. That's why the stock was moving around aftermarket yesterday. It's all about the iPhone. So that piece, and it begs the question of why is the iPhone going to be better? It's not about AI features. It's less about product features. It's more about this massive upgrade pool they had back in 2021. As a reminder, that year iPhone grew 39%, huge growth. And then the subsequent 15 quarters, it basically was down 0.5%. And now we're starting to reap the benefits of that big cycle. So that's one piece, is just we're going to see some better iPhone numbers than expectations. And the second is that the Apple Intelligence bar is just so low coming into the new Siri next year. And I think that hope springs eternal when it comes to investors and when it comes to a feature like Apple Intelligence that I believe is going to be the biggest step forward since the iPhone itself. I mean, this is a massive potential for them to contextualize personal data with some sort of digital assistant. And, they've set this high bar out that it's going to be next year. Your own Mark Gurman is saying that it's going to be kind of March, April timeframe. And I think that anticipation of that's going to be good for the multiple. So when you put those two together, I think that sales are going to be better because of the iPhone upgrade pool. And then separately, I think the multiple expands because anticipation of what's going to happen with Apple Intelligence.
Gene, we were speaking with Dan Ives earlier of Wedbush Securities, and he said that he expects Apple to partner with the likes of Google with some sort of a Gemini partnership to provide some of the heavy lifting for the AI effort. Is that something that you're expecting? Is that kind of the underpinning of the optimism around Apple AI?
That's part of it, and I think Dan's definitely onto something that what's going on with Gemini and just Apple working beyond GPT and OpenAI. And what they have told us back at WWDC in June is that they are open to other developers, other platforms, other large language models, and they've specifically pointed out to Gemini. The central question is just how much? Is this just in terms of the menu for developers? Are they going to just allow developers to use the Gemini model when they build iOS apps? Or is this something bigger where they really lean on Gemini to power this new Siri experience? And so it is a daunting task to take this personalized data and do this contextual, build these personalized bots around it. And so I expect them to pull from more than one, more than just OpenAI to deliver that. So I think he's onto something. One of the other big questions around this is what does this mean in terms of financially? And in the case where they would be doing something with Gemini, this is a little bit of a different piece where they're actually licensing technology from Google. It's most likely where Apple would pay Google for that. Now, they've given guidance to expect some of their CapEx and some expenses around AI to go up modestly next year, a few $1 billion, which seems like chump change when you look at these hundreds of billions of dollars that are being spent. So the bottom line is that this is a cost if they do end up leveraging more around Google is a cost that Apple can easily manage and maintain the margins that investors love so much.
Gene, is there any regulatory risk to that? Is this a relationship that regulators would welcome and not challenge?
Clearly, the regulatory piece has been something that has concerned investors. That has been diminishing over time. And I think what we saw with the regulatory around Google and their search deal, of course, this is about a fifth of Apple's earnings come from this Google search placement. And so the fact that that kind of went in a good direction, I think is a sign of a little bit of a softening tone on the regulatory side. So I think that in this piece, this dynamic around Google, it largely won't have a regulatory topic. There is a question about if Apple does want to do something bigger, if they want to acquire somebody like a Perplexity, which I think would make a ton of sense for them. That is something that may be a little bit more of a challenge. These big tech companies want to get a hold of Perplexity, Anthropic, but I think that regulatory piece is something that's going to make that less likely.
So, Gene, if a strong iPhone 17 upgrade cycle allowed Apple to play for time when it comes to their AI offering, just how much time did it give them? How patient are you willing to be to allow Apple to figure out and solve the mess that currently is Siri?
I mean, it's really the central question for Apple over the next 2 years, 3 years, maybe even 5 years of how much time investors are going to give them to figure this out. So point of time today is that the bar is really high because they've set that bar high about what the next series is going to look like. But if we fast forward into April and let's say that it's a disappointment, I think that the stock will clearly trade off, but investors are going to give Apple more time. Competitively, all that's on the horizon next year is this new device that we'll see for the first time from OpenAI. It'll be available likely in 2027. But there has been essentially nothing that's happened when it comes to consumer hardware AI that has changed the competitive field. And so at the end of the day, consumers love their Apple devices. This resurgence we've seen with the iPhone in the last 2 quarters and the guidance for December is all about that commitment that Apple customers have to the platform, that upgrade pool. And so the reality is that these devices just become entrenched in our lives. They just surround us. It's not just the phone. And I think that that's going to give them much more time. Yes, the stock is going to have some variations around how people feel about any given change to their AI, but ultimately, investors will give them more time. And most importantly, the consumers will, because they've made such a big investment into Apple's products over the last decade.
Gene, just quickly here, you said that Apple is going to be the biggest gainer through the end of the year. Who do you see in the Magnificent Seven names as being the biggest loser?
I mean, I think that, surprisingly, I think Amazon's going to have its surge today, but expectations have shifted higher. I still think that they're struggling with, they're losing share within cloud. Yes, they had a good quarter with AWS, but that losing share piece. And so it's been a laggard. It's getting its day in the sun today, but I think that that's probably going to be towards the bottom of the list.
Gene Munster of Deepwater Asset Management, thank you so much for those insights. Right now, let's get you an update on stories elsewhere this morning. Here is your Bloomberg Brief with Yahaira Anand. Yahaira.
Hi, Lisa. NVIDIA pushing to expand AI infrastructure around the world. The chip maker is supplying accelerator chips to South Korea's largest companies, Samsung, Hyundai, and SK Group. This as NVIDIA plans to invest as much as $1 billion in the AI company. Poolside, the deal would quadruple the valuation of the startup. Meanwhile, American soybeans are great again. China has purchased at least 4 U.S. soybean cargoes following the summit between President Trump and Chinese leader Xi Jinping. Sources telling us here at Bloomberg the cargoes are for shipment later this year and in early 2026, and the total volume is about 250,000 tons. And Google's YouTube TV has lost major channels like ESPN and ABC after failing to strike a new licensing deal with the Walt Disney Company. YouTube called the blackout a Disney negotiating tactic to force price hikes, while Disney argues Google is trying to undercut industry standard terms. Discussions between the companies are ongoing, and YouTube will offer subscribers a $20 credit if the channels remain unavailable. That's your Bloomberg Brief. Lisa?
Thank you so much, Yahaira. Up next, priced for perfection.
Spreads are very tight. It probably makes sense for these companies to issue. But I would say that overall, we're starting from a position where credit is priced pretty close to perfection. Not much scope for error.
Winnie Caesar of Credit Sites joins next. This is Bloomberg Surveillance.
LGT's investment solutions allow you to look to the future with confidence. Over its 100-year history, LGT has repeatedly demonstrated its resilience, proving to be a stronghold of stability in a world of change.
Stocks pushing higher on the last day of this week, which will be the third straight weekly gain. You can see it led by the NASDAQ. You are seeing, as the session grows older, futures in the S&P continuing to push higher, up 0.75%, 74 basis points. We're looking also at yields marginally higher. A real question here about a Fed that might not cut in December and what this means longer term, about just how dovish they are. 10-year yields at 4.1%. We did also see yesterday a whole glut of bond sales. And Danny, one thing that we saw was Meta coming out with $30 billion of sales. This follows Oracle with their blockbuster debt sales. And we did see a huge reaction in credit markets, 2 basis point push upward in terms of investment grade credit spreads. Not much in terms of pushback. In fact, more just give us more.
And it's weird because the equity market for Meta fell 11.33%. Usually it's supposed to be the discerning credit investors who get scared and are bearish. Instead, it was the equity market. Does it speak to the amount of capital in this credit market that has to be put to work? That maybe some of the risks are getting papered over, and then you do get that divergence, bearish equity market, bullish credit market.
Is the risk transferring from equities in some ways to credit as they fund the build out of the AI promise, hopes, and dreams? Under surveillance this morning, priced for perfection.
I don't think I'd go as far as saying we are concerned. The fact is the market is currently absorbing it. Spreads are very tight. It probably makes sense for these companies to issue. But I would say that overall, we're starting from a position where credit is priced pretty close to perfection. Not much scope for error.
Here's the latest. Meta defying AI spending gloom with a record-breaking bond sale. The social media giant selling $30 billion of bonds while drawing record interest for the debt. I think that there were offers of something north of $100 billion. Winnie Caesar of Credit Sites writing this: the acceleration in debt-financed capex on AI-related initiatives is weighing on free cash flow and credit metrics. Meta could turn free cash flow negative next year as capex reaches 50% of sales. Winnie joins us now. Winnie, great to see you. Thank you so much for being here. How much are you getting concerned about the amount of debt issuance tied to some of these big tech companies?
Hey, good morning, Lisa. So we are definitely seeing a shift away from cash flow financed investment, equity financed investment, back into intentional releveraging and some debt financed investment, which is very typical of that middle stage of the credit cycle where you start to see more M&A, more financial engineering, a bump up in capex and spending. And that does come with some additional concerns around where valuations are and are they appropriately reflecting the potential return on that investment.
At this point, do you think that investors just throw caution to the wind as soon as they see the word artificial intelligence in any kind of prospectus?
Well, I think it's a little bit of a more nuanced view than that. I think that people realize that AI is going to be a defining trend probably for the next 5, 10, 20 years. There's definitely sustainability and durability there. But there are a lot of open questions as to the magnitude of return on investment, the timing of that. And I think that people are looking at things like Meta bond deals, which is still a pretty high quality issuer, and thinking this seems like a reasonable place to continue to put cash to work, especially because that new bond sale did come with a pretty significant new issue concession, which is something that a lot of investors have not been getting this year in the primary market. So there's that balance of, are these valuations compensating me for the potential risk in a higher quality company? Now, if this were a single B or triple C related bond deal, I think that we'd have a very different conversation.
Winnie, it's notable, though, that the debt being raised isn't just in the syndicate market. It's also private credit that's been participating in this, too. Meta also doing this, a JV with Blue Owl and PIMCO that leans on Meta's creditworthiness without actually impacting Meta credit because it's off-balance sheet debt. Is that concerning, especially with off-balance sheet debt and that being used as a way to fundraise? Seems problematic in some areas.
Yes, I think that off-balance sheet debt is always a very appropriate Halloween topic. It gets your spooky senses rising a little bit because there is a historic track record of off-balance sheet debt sometimes going a little bit sideways. Now, when it comes to the AI investment spend, there is just the reality that so much capital is being raised and needed to be put to work in such a wide variety of initiatives that some sort of diversification of financing does make some sense. Now, that being said, anytime we see off balance sheet, we're definitely taking a closer look, trying to ensure that we understand kind of the stream of cash flows and where the risks really lie.
Well, for things like project finance in general, things happen, Winnie. There's force majeure. There are big events that disrupt, especially physical plants. Are those types of risks fully appreciated by this market?
Yeah, that's a great point. Project finance can be a really challenging road sometimes. And I think when we look back at valuations and where they stand, the reality is corporate credit spreads are very, very tight. Now, that doesn't mean that they necessarily have to widen, but the balance of risks does seem to be skewed much more to the widening rather than incremental compression or tightening from here on out. And that does leave us a little bit more cautious just in terms of the direction of travel of spreads more broadly, as we have this mix of kind of broader macroeconomic risk with what's going on in the consumer complex, and then also just capital structure and balance sheet risk with how things are being financed, where the capital is flowing, and whether that return on investment is going to be realized in the relatively near term.
You have all of that, and spreads are barely moved, Winnie. What would it take to significantly and sustainably widen spreads at this point?
That is the question that every client is asking us. And I think that it comes down to some sort of acknowledgement that the fundamental picture is perhaps less healthy than what people are currently anticipating. Earnings expectations for 2026 are pretty lofty. The most recent earnings have come in, I would say, relatively well in aggregate, though we have seen some signs of pressure in some different sectors. Now, what usually changes that technical demand for fixed income is concerns around downgrades, around defaults, around the potential recession word. And I do think that over the next 12 months, there is that risk that some of these lofty expectations start to be a little bit disappointed. And that's where you start to introduce some of the conversations around what is the true fundamental trajectory of corporate credit. We've enjoyed a massive ratings upgrade cycle. Is that going to start to reverse and start to spook investors a little bit?
I'm looking at a cuddly cockroach costume from Halloween Cost that looks like it is definitely going to do the trick. Winnie, without government data, I'm just wondering from your perspective, is there any sign whatsoever that we do have that downturn that could potentially call people's bluff?
Yeah, so I think that when we look at the composition of economic growth recently, we do realize that so much of the momentum in the broader economy and also the market has been linked to AI spending, to tech spending, to all of those initiatives. When we think about the current health of the consumer, it's a little bit more of a mixed bag, with the banks saying, hey, we're not seeing a lot of signs of pressure here on the consumer. And then some of the consumer products companies saying this is the worst consumer sentiment, the worst consumer environment that we've seen in a very, very long time. Trying to reconcile all of those things, I think, indicates to us that the job market is going to be the linchpin here. Yeah. We've already seen a pretty significant downdraft in the pace of job ads. Of course, we are flying a little bit blind as it relates to official economic data, but there are some substitutions there that would generally point to not a super encouraging labor market overall.
Yeah.
And we're very much focused on those announcements.
Winnie Caesar of Credit Sites, unfortunately, we have to leave it there. Definitely would be great to get that labor market report next Friday. Coming up next hour, Jim Caron of Morgan Stanley, Vivek Arya of Bank of America Securities, Ryan Wang of HSBC, and Emily Rowland of Manulife John Hancock Investments. From New York on this Halloween Friday, this is Bloomberg Surveillance.
Earnings growth is driving S&P performance, and you want to be where the earnings growth is.
It's hard for us to kind of see a downside catalyst.
The downside risks here is AI is, I maintain it's a bubble.
The market's starting to get a little bit worried. The market seems pretty happy to whistle by that cemetery, as they say, and until then, markets are going to rally.
This is Bloomberg Surveillance with Jonathan Ferro, Lisa Abramowitz, and Anne-Marie Hordern.
Good morning. Welcome back to Bloomberg Surveillance. Bubble, what bubble? Heading to close a third straight weekly gain. Big tech delivering big time. Amazon and Apple shares rising ahead of the open. As spending plans and revenue continue to deliver. Next week, it's Palantir, Uber, and Qualcomm on deck. Those earnings incredibly important, given the fact that government data about the health of the economy really has not materialized, probably will not materialize. It still is, Danny, a government shutdown, leaving us in the dark about the non-AI names out there.
But it almost feels that as long as we're not getting the data, we can ignore the macro, that we can focus in on the wonderful company earnings and the AI spend that continues and just how much that is boosting companies. But underneath the surface, you talked about Torsten Slok's note. There are some signs of economic weakness in company earnings, be it Shake Shack or Chipotle. There is some pullback in spending. Is it just on the margin? Is it larger? All of those questions at the moment getting masked over because the tech players have done so well.
And frankly, the Fed's just bailing on the question because there's so much dissent and a lack of some sort of consensus among Fed governors, Fed members, that essentially they're in the dark and they are reluctant to move too quickly. And this is the reason why there's a hard question around what the reaction function is at a Federal Reserve that's facing off with a blank slate with respect to data at the same time that you're getting this K-shaped delivery from companies, some reporting blockbuster earnings, others talking about a consumer in distress.
Right. What we heard from Chair Powell, was it him just trying to digest really divergent views? Or was it a Fed where the onus is to prove that you need a cut, not that you need to prove that you should pause? And Lisa, does it also just show that this is a Fed that's become irrelevant right now?
Yeah, and especially given the fact that there's going to be a compensation shift early next year. In the meantime, one thing that the big tech players delivered on was the CapEx. When you take a look at just how much the CapEx rose over the past year, how much it is expected to rise next year, you just see an incredible exponential escalation in the spending, a question of who's going to finance that going forward. And I think that that really is going to be an increasing question heading into 2026.
It's just amazing how easily this bond market absorbs the amount of debt coming from these companies, debt to the levels, especially from tech, that we have never seen before. Does that mean it is smooth sailing, that these companies are really well rated? Or is it just because there's so much money that needs to be put to work, that some of the issues maybe are being ignored because that money has to go somewhere? There is real demand, and that supply is getting eaten up easily.
Just going to let you know that if we had been a little bit more forward thinking, I would have come as a cockroach today and you would have come as pest control. I think that we picked out the outfits that we would have otherwise picked out.
Absolutely. It's not too late, Lisa. We could do it tonight. I'll show up to the family not Thanksgiving.
Yeah,
that would be weird for Thanksgiving. Halloween event. And we can go trick-or-treating.
Yeah, I'll be in that cuddly cockroach outfit. Right now we're looking at markets that are not seeing cockroaches. They are up. They are up pretty much across the board. You're looking at S&P futures that are rising and continuing to build on gains that we've seen. Now up 0.8%. You're seeing just marginal lift in bond yields, and oil prices lower by 0.3%, $60.38 for a New York crude. Coming up this hour, Jim Caron of Morgan Stanley Investment Management. The stocks eye another month of gains. Vivek Arya of Bank of America Securities as NVIDIA is ramping up its chip rollout with fresh deals. And Ryan Wong of HSBC as the lack of economic data is adding to the Fed's December doubt. We begin this hour with stocks rebounding following a rough day on Wall Street. Jim Caron of Morgan Stanley Investment Management writing, "We expect turbulence in Q4 as we gain more clarity on what the initial conditions will be for 2026. Jim joins us now. Jim, we're always supposed to see turbulence. Why have we not seen any turbulence in the face of so much doubt? And yet, frankly, AI companies that just keep on delivering.
Good morning and happy Halloween. So, look, I mean, the markets, I don't think the markets are experiencing the turbulence for a lot of the things that you were just discussing, is that the big leaders, the narrowness of this rally that we've had, which is a large cap tech, are printing really strong numbers. Now, those might be just a handful of stocks. When we look at the rest of the stocks in the S&P 500, there are some cracks, and it is reflecting some of the weakness in the broader economy. I know we haven't gotten any of the data yet, but we understand that things aren't necessarily accelerating. What we have to recognize is that the market is not the economy, and the economy is not the market. So when you think more broadly about the S&P 500, say the S&P 493 x the Mag 7, what you're really looking at is a broader picture also of the economy. So therefore, if the economy is moderating at some point, then you're likely to see those broader equities also somewhat moderate. But the dominance of those Mag 7 is so strong, and the earnings and the numbers that they're printing are so monstrously strong, it's carrying the rest of the markets. So that's why we're not really seeing the turbulence. It really just depends where you look. If you look in other broader sectors of the markets, you might see some of that turbulence. And that's really where we think some of the opportunity is going into 2026.
Can you build on that? Where do you think we're going to see some sort of rebound, given the fact that some people are speculating you could see a growing amount of this pain, given the fact that prices are expected to continue to rise, albeit not necessarily at the levels that we saw in 2021 and 2022. And there is this feeling that this weakness in the lower income sphere is just continuing to build.
Yeah, so we have to look at the full picture here, right? So one of these things goes back to the tax package that, one big beautiful bill that got passed, and effectively starting to think about the consumer and what stimulus package they're going to get next year in the form of bigger tax deductions. That number in terms of what the consumer, what taxpayers are going to pay less is somewhere on the order of $160, $170 billion. So that's money that's going to be in the pocket of the consumer. As we know, consumption is 70% of GDP. That can keep consumption relatively robust, even though the labor market picture, which is weak right now, it's currently weak right now, might start to improve as we move into 2026. Most economists' forecasts into 2026 is that we will have better economic growth versus 2025. So if you have a growing economy, likely in 2026, and you have enough slack in the labor market at this point to keep wages at a reasonable price, then the profit margins and the earnings margins for many of these companies can stay somewhat afloat. So we have to recognize that whether it's accelerated depreciation, all of the various things that came out of the tax package, this is going to be a tailwind as we move into 2026.
And Jim, I know you, and it's the old adage of many people saying that the stock market is not the economy. Is that kind of changing, though? Because nearly half of all households own equities. It is a record exposure from everyday people to this equity market. Have we entered a scenario where this time around, the put from take your pick from the Fed, from the president, has gotten all the more important just because of household exposure to equities?
Yeah, so it's a good point, right? So the way I think about this is that conditions have become increasingly fragile. As this market has moved up, people's overall equity exposure has also moved up too, meaning that their wealth effect is tied to what's happening in the markets. And like any other time in markets, there tend to be drawdowns and corrections and things like that, and that can have a more of an outsized impact on consumer spending and consumer psychology, because as you point out, that there is an attachment to the markets. But that being said, most people, I would hope, when they're investing in the markets, have a diversified portfolio that if we do see this correction that may happen in the future, at some point in the future, I think it's likely to happen amongst the leaders currently right now. It's really probably a large cap tech correction. Maybe that comes. I'm not forecasting that, but maybe that comes at some point. But if you have a diversified portfolio, I think that people's broader portfolios, well-diversified portfolios, will hold up better than what the actual headline of an equity drawdown might actually show. So it really gets down to that. It's a hard question to answer because I don't know how everybody's positioned, but I would expect that most people are pretty well diversified.
A lot of the diversification, though, Jim, this year has come in the form of gold, and we've seen incredible volatility starting this week out with a 3% decline. Is that a concern? Is gold a good way to diversify, especially at these levels where some serious volatility is being introduced?
Yeah, look, I mean, it's one of these subjects here where the price has gone up quite a bit. So anything that you say against that is like, well, you've been wrong in the markets and whatever. We don't have a position in gold in our portfolios. Do I think it's a reasonable way to diversify? Sure. If you have a longer term view and a broader portfolio, absolutely holding some gold is always going to be a good idea. But are there other things that you could also own too? Could you own high quality U.S. Treasuries? Could you own high quality investment grade bonds, earn some income and at least get some positive carry that should be able to preserve capital and preserve income and things like that. So when I think about a portfolio for people who are broadly investing, they generally need some liquidity in that, and they also want to get some income. So that's why we think about the more of the broader equity market, including large cap tech, but then also thinking about other items, but really at the margin, gold. And I think gold has become very speculative at this point, and I think people are chasing a lot of those returns.
Yeah, we saw that certainly in the past couple of weeks with the volatility there. Jim Caron of Morgan Stanley Investment Management, always wonderful to speak with you. Thank you so much for taking the time. This upcoming week should be jobs week. We should be getting the labor market report on Friday. We should be getting JOLTS. We should be getting a host of different information. Instead, we are not. We are getting ISM manufacturing. That should be helpful with respect to what's going on in the industrial space. Earnings from Palantir, earnings from Qualcomm, earnings from, of course, we can also get Uber on Tuesday. We get the elections in New York. We get ADP employment data, how people are looking to all of these other peripheral measures to take the place of the official data. And then, of course, University of Michigan consumer sentiment data. But it really is interesting, Danny, that everyone is talking about this bifurcation in the economy, how the labor market holds the keys to that. We should be getting the October report on Friday next week. And instead, we're getting crickets.
And part of the issue right now is we're also hearing about all these layoffs from different companies, be it Amazon, be it UPS. It runs the gamut in the sectors we're hearing from. It so far hasn't shown up on the headline level, which has been a head scratcher. Would it be showing up now? That we don't have an answer to.
And Neil Richardson of ADP yesterday was saying the reason why it hasn't shown up is because smaller employers are the ones that account for the greatest amount of job creation. How much can you get a read on those? That's the reason why things like the Beige Book have taken on import as well. Right now, what we're getting from companies is a myriad picture. It's a bifurcated picture. It's that K-shape. And that is the reason why it has been so incredibly interesting. Let's get you an update on stories elsewhere this morning. Here is your Bloomberg Brief with Yahira Anand. Yahira.
Hi, Lisa. President Trump is urging Republican senators to scrap the filibuster in order to bypass Democrats and reopen the U.S. government. The filibuster is a tactic used to delay or block votes by keeping debates running. 60 votes are required to overcome a filibuster. Republicans currently have just a 53-seat majority. It's been 30 days since the start of the government shutdown. Meanwhile, Vice President J.D. Vance is warning a prolonged U.S. government shutdown will impact travel during the holiday season, telling reporters it could be a disaster if the shutdown extends into the Thanksgiving travel season. The comments come after Vance held a roundtable with the CEOs of United and American Airlines. And it's marathon weekend here in New York City. The 54th edition of the world's busiest run is expected to draw more than 50,000 participants from around the world. Temperatures are expected to be in the mid 40s to low 50s with partly cloudy skies. The race begins at 8 a.m. on Sunday morning. That's Bloomberg Brief. Lisa.
Thank you so much, Yahira. Have you ever run the marathon?
I have not, and I never will.
Oh, yes, that's that was pretty definitive.
I feel like you might have. You're a big runner.
I admire people who run in the marathon. I have the wherewithal to go 13 miles, maybe 14. You start getting into the 2021. That's just,
it's just too much time to train. Like, you have to train like hours on the weekends. I don't have the time for that.
I don't think my knees have the time for that either. Up next, the morning calls, plus Vivek Arya of Bank of America Securities as NVIDIA is ramping up its chip rollout with some fresh deals. That's coming up next. This is Bloomberg Surveillance.
This year, AI became profitable. And when something becomes profitable, you want to manufacture more of it. Just like when you're manufacturing chips and wafers and DRAM, if the manufacturing of those chips were profitable, you want to build more factories to create more chips. Now that the AI is profitable, we want to create more factories to generate more AI.
That was NVIDIA's CEO Jensen Huang speaking at the Apex CEO Summit earlier today, and he was not wearing his leather jacket. He was wearing a regular suit, which is notable. Right now, you're seeing stocks higher. You do have to wait till November 19th to get information from NVIDIA in the form of their earnings. People are not waiting, though, to pile into the tech names after the earnings that we have gotten this week from Microsoft, Alphabet, Amazon, Google, Meta. Right now, you're seeing NASDAQ futures up 1.4% above that S&P return, or the S&P gain on futures of 0.9%. Time now for the morning calls. First up, Piper Sandler raising its price target on Amazon to $300, saying Amazon seems on the cusp of an AI product cycle. Those shares, as we talked about earlier, up almost 13% in pre-market trading. Next up, JP Morgan raising its price target on Apple to $305, seeing its product cycle momentum sustaining as that Apple iPhone 17 really does seem to generate a lot of demand. And finally, New Street raising its price target on NVIDIA to $307, expecting the company to exceed its base case for AI deployments in 2026. Sticking with NVIDIA CEO Jensen Huang is still hoping to sell the company's Blackwell chips to China as it continues to forge new AI deals elsewhere. Vivek Arya of Bank of America Securities maintaining a buy rating on NVIDIA and upgrading its price target to $275. Vivek joins us now. Vivek, thank you so much for being with us. What do you think is the most important takeaway from the Asia tour that we have seen with Jensen Huang and his push to try to sell more into China?
Sure. Good morning. So a few days ago, we had a chance to attend their GTC conference in Washington, D.C. So I think there were three important points that came out. First is that AI is absolutely an ongoing industrial revolution. It's very important for the government to stimulate and nurture it. It's the next productivity tool, and it is not just the government here in the U.S. I think we see this as a global phenomenon. You mentioned he was in Korea, he was in China earlier. So every government in the world, I think, understands that this is a very important tool to nurture. Second is that NVIDIA's full stack approach is seeing applications in a lot of end markets. You know, there's not just some chips that are deployed in a data center somewhere. They're having real world applications and implications in markets such as industrial, such as healthcare, such as cybersecurity, even emerging markets such as quantum and such as robotics. And then finally, the company's visibility extends out till the end of next year, at least $500 billion of orders for its new Blackwell and upcoming Vera Rubin platform. And I think what you're seeing with the CEO's travels and engagements is to make sure that the supply chain is ready. You know, Korea is an important source of memory chips and some foundry capability. You know, it's one thing to say that you have orders for $500 billion, but the supply chain has to be there to adopt it. And then finally, when it comes to China, we have it at zero in our model. I think it's just too hard to predict where the geopolitical nature of these engagements is going to go. It's an important market. We think it's about 10% of the overall market, but I think NVIDIA can do just fine without engaging with China in the near term.
Vivek, we can get into the supply chain securitization that they're working on, as well as this discussion around how much they are connected to the geopolitics of the moment. But I am curious about why NVIDIA is not threatened by any of the other chip makers that seem to be really pushing to try to get in on the game. And we've seen AMD do well. We've seen Qualcomm do well. We've seen the shares of a number of these companies surge, and yet it hasn't dented NVIDIA's lead. Why?
Sure. You know, the very simple visual I can give you, it's the competitors are essentially creating a sitcom at a time, whereas NVIDIA is like the Netflix of the market. You know, that they have developed a full stack approach. Their CUDA software, came into place in 2007. So I think they're in the 14th generation of that. They will soon start their third generation of implementing racks. So what you get from the company is essentially a lot of integration of their hardware and software. There are over 5 million developers who can work with their platform. It's available in every public cloud, whereas a number of their competitors are still developing their first rack scale architecture, and the software is still in infancy. You know, some of the custom chip suppliers that you mentioned have no software. The customer has to develop that. And in other cases, the merchant suppliers, have a decent hardware platform, but they've never actually implemented rack scale. So I think it's important to, put them on a level playing field. And from that perspective, NVIDIA is several years ahead of that.
Vivek, it feels like the rules of the road when it comes to China. We still don't know, even in things that were supposedly agreed upon. The H-20, a glaring example of this agreement reached with the White House where the U.S. would get 15% of the revenue. They have yet to establish a legal framework for it. How do you think it ultimately shakes out?
Yeah, I think, look, China is an important market for two important reasons. One is that their software community is extremely innovative. Unlike a lot of the West, which is, in many cases going after artificial general intelligence, going after the biggest models, the most comprehensive models, there's a big part of the Chinese software ecosystem that is going after a lot more practical applications. And I think in some ways, not having resources has become part of the innovation cycle for them. So it's very important to engage with China. But having said that, if you look at the spending by their top hyperscalers, it is still less than 10% of overall spend. So it's important to engage with China. It's important to stay, competitive. But NVIDIA, we think, can grow their top line over 50% next year without having much contribution from China. I think on the geopolitical side, I think the U.S. wants to make sure that, that there is some scrutiny, there is some limitation on what technology is exported. The H-20 is a product that is, at this point, basically 3 years old. I think what China is probably interested in is the Blackwell variant of what NVIDIA can supply, but it's hard to know whether that specific new variant will be approved by the U.S. government. So that's why we are assuming no contribution from China data center in our model.
Vivek, you mentioned the hyperscalers, of which we got their earnings this week. Spending of $72 billion for the year for Meta. Alphabet, it's $93 billion. Amazon, it's $125 billion. As long as the hyperscalers are putting up those kinds of numbers, do you remain bullish on NVIDIA?
Yeah, I think that's absolutely the right point, that it is really capital spending by these top customers. And what I would also mention is that in each of those earnings reports, you heard them say that they are starved of capacity. Right? That it is not demand, it is capacity, it's supply constraints. Otherwise, they could have grown even faster. And you saw most of them exceed expectations for their cloud computing revenues. That's why we think this thing is a lot more real than sometimes people give it credit for. And as NVIDIA comes out with the new generation of their platform, it provides a lot more computing power per unit space, per unit power. And that, I think, is the real constraint. How fast can data centers be built out? How fast can power and water be available to them? And that's where I think the governments, the U.S. government can be extremely helpful in approving these data centers, providing them with power. But I think as power becomes available, you will see a lot more AI deployment. And then finally, I did want to mention that NVIDIA, the stock itself, if we are right about the visibility they shared with us at GTC, it's essentially trading at a market multiple for a company that is able to grow 5 times as fast as the market and grow earnings 7 times as fast as the market. And it's basically trading at a market multiple. So we do think that the stock still remains very compelling.
Vivek Arya of Bank of America Securities with the best analogy all day, the idea of Netflix, the Netflix of the world being NVIDIA and the others just simply being sitcoms. Thank you so much for that. I will just say, heading into the open, we did get Exxon and Chevron earnings, and we're getting some headlines from the Exxon call. This is pretty interesting. Exxon seeing California chasing flawed ideology like Europe. California causing forced speech by companies, a real pushback there.
Wow, and a real willingness to express political opinions, but clearly not against this administration on the other side.
Really interesting. Anyway, we will follow that throughout the day, I'm sure. Coming up, Ryan Wang of HSBC, as the lack of economic data is adding to the Fed's December doubt. This is Bloomberg Surveillance. Getting a lift to end the week. We are seeing futures across the board higher with about an hour to the open, led by that Magnificent Seven cohort that did deliver earnings that beat expectations and continued to indicate incredible capital expenditure spending over the next 12 months. We're seeing NASDAQ futures up 1.5%, S&P up 0.9%. Bond markets are getting a little bit softer here as people try to imagine what it looks like if the Fed doesn't cut in December. 10-year 10-year yields, although now just basically flat here around 4.1%. Turning to the Fed, Kansas City President Jeffrey Schmidt giving his reason for the reason why he dissented in favor of no rate cuts at the October Fed meeting. Bloomberg's Michael McKee joins us now with some more insight. Mike, what's his rationale?
Well, Jeff Schmidt is putting out his reasoning behind his dissent, which was kind of unusual to not cut during the month of October meeting, the Fed's blackout period ending last night. And Schmidt is saying basically he disagrees with the way the Fed is looking at the balance of risks. He says in his statement, I do not think a 25 basis point reduction in the policy rate will do much to address stresses in the labor market that more likely than not arise from structural changes in technology and demographics. However, a cut could have longer lasting effects on inflation if the Fed's commitment to its 2% inflation objective comes into question. And while Jay Powell dodged my question about market valuations, Schmidt takes a bit of a sideways swipe at it today, adding in his statement that financial market conditions appear to be easy across many metrics. Equity markets are near record highs, corporate bond spreads are very narrow, and high-yield bond issuance is high. None of this suggests that financial conditions are particularly tight or that the stance of policy is restrictive. So you could probably put Schmidt down for objecting to a December cut as well. And I point out that, as I mentioned, the blackout period is over. Lori Logan speaks at 9:30 this morning, and we have Beth Hammack and Raphael Bostic speaking at noon today. So this is the chance to get on the record if you are one of the people who disagrees with the way the Fed is going.
And Mike, we have heard from Beth Hammack before that she does seem more concerned about inflation than other members on the Federal Reserve. Do you get the sense that anyone else on the Fed agrees with Jeff Schmidt and does think that the balance of risks signals they need to be more aware of inflation than perhaps structural labor market issues?
Well, there were people on the Open Market Committee who did suggest that they thought that going much further with cutting rates would be a mistake. Alberto Musalem of St. Louis and the folks from the Minneapolis and Dallas Feds both had suggested that that might be the case. So it'll be interesting to hear from Lori Logan this morning. And we don't have Neil Kashkari on the calendar yet, but we'll see if he comes out with something. We know that Musalem's going to speak next week.
Thank you so much, Michael McKee. Great insights, especially given the fact that we've been talking about how, in general, the Fed doesn't care about markets unless they're going down. It does seem like Jeff Schmidt cares about markets that are flying pretty high, and we are seeing plenty of deals getting done.
Yeah, one of the few to talk about financial conditions is Jeff Schmidt. There is a scenario which we were talking about with Jim Caron where households own a record amount of equities. So there does seem to be an ever more interlinked connection between what the Fed is doing, what stocks are doing, and how good households feel.
Particularly the upper end of households that have a greater proportion of assets in markets. Turning to the economy, the lack of data make earnings reports from consumer brands all the more important. Chipotle shares sliding as much as 22% on Thursday, the largest intraday drop since 2012 after the restaurant chain lowered its full-year outlook. Bloomberg's Michael Halen joins us now. Mike, thanks so much for being with us. I'm just curious whether Chipotle is an anomaly. It's a question of how much chicken and beef they put in their burritos, or whether this really is what you're seeing across the sphere when it comes to consumer discretion and dining out.
You know, look, the low-income consumer continues to be pressured. You know, October, seems to have slowed a bit, especially around the D.C. area due to the government slowdown, right? But the companies that we cover that have reported so far, Chipotle's been the weakest, right? So yesterday, Shake Shack put up a 5% comp. Domino's put up a strong comp. Burger King put up a 3% comp in the U.S., right? So a lot of this is self-inflicted on Chipotle's fault. In the restaurant business, what we're seeing is the gap between winners and losers widen. People are more discerning, so when they do go out, they want to make sure they have a great experience. And Chipotle's numbers would indicate customers are not having a good experience.
So, Michael, more broadly, is it fair to say that you're not seeing this weakness, you're not seeing the same kind of pushback that we heard in the commentary that spooked a lot of people, at least in markets?
The restaurant data we get, the sales are better than they were last year, which they're not, they're up 1% ish this year, a little more. So they're not crushing it. Traffic's down. They're taking a little bit of price, and that's boosting sales. So they're not knocking the cover off the ball. Low-income consumers, like I said, continue to struggle. But this is not the end of the world in the restaurant space by any means.
Michael Halen of Bloomberg Intelligence, thank you as always. Maybe they just need to make the scoop a little bit bigger. Ryan Wang of HSBC joins us now, and he's going as an economist with no data for Halloween, which we all find very scary. I'm just curious how much you're digging into some of these earnings reports to edify your analysis in a data vacuum.
Well, that's definitely part of the picture. We have to listen to what the companies are saying. Of course, the Federal Reserve also does still have its beige book reports. So those are the anecdotal comments that can come from businesses of all sizes, big and small. That's even more important in the current environment because, yeah, we're getting a few private sector economic releases, but obviously we are not getting the traditional releases, and this week is no exception. We should have gotten the third quarter GDP number yesterday. We should have gotten the PCE inflation this morning, but it's a data vacuum.
One of the things that is notable, which our Bloomberg Intelligence was just talking about, was for Chipotle and Shake Shack. It's the exposure to the younger customer base, which saw a 4.4% unemployment level in August for those aged 25 to 29. Is that a problem that expands more broadly into the economy? Is that age group a canary in the coal mine when it comes to joblessness expanding?
Well, I think what we've really seen is a small increase in overall employment over the past year. And, you know, the national unemployment rate, or at least the latest one that we have, of 4.3%, is still relatively low. And then when you break it down into those age cohorts, I think it does fit with this idea that, okay, hiring rates are somewhat slow. And so the lack of hiring disproportionately impacts that age cohort. So I think in a way, the signals do make sense. But also it's important to note, again, the unemployment rate overall is fairly low. That's partly because of the impact of reduced labor supply, a huge theme that we heard from the Fed Chair Powell this week and consistently. And that is raising the question of what is the break-even level of job creation, which is, you know, by all accounts, is much lower than it was in the past.
Well, Powell this week also said that there was a strong case to pause if the alternative data, in light of not getting official releases, remains solid. Is the alternative data enough to get a clear enough picture to base a Federal Reserve rate decision around?
I think it just makes things a little bit more confusing. There are some pieces of data. So Chair Powell this week did mention the state unemployment insurance claims data, and Bloomberg, amongst others, is doing a great job of adding those numbers together. So in a sense, we still can say that there hasn't been a sharp acceleration in firing over recent weeks, right? So it just takes a little bit more interpretation. Next week, we will get a private sector release on employment growth from ADP. And going into this government shutdown, it appeared that employment growth had slowed to around 50,000 per month. So we'll be looking at those numbers next week to see, is there an acceleration from that rate? Are we still staying around that 50,000? But again, it's against this context of much slower population growth this year, much slower immigration. And so we have to take that into account when we evaluate these numbers.
Has the Fed rendered itself irrelevant right now? And I say this because ultimately it seems like the market, and I say collectively, and perhaps the consolidation at the top and the lack of diversification with names is a feature, not a bug when it comes to the returns, seem to be climbing regardless of a Fed rate cut in December. So does a Fed rate decision matter at all right now to markets that are flying on some other indicators?
Well, it also goes back to this question of what is a neutral policy rate, right? So what is holding back? What is a rate that doesn't hold back the economy, doesn't hold back markets? And I think it's all rolled into together, right? We have to look at equity markets, but also the rates markets. And at the end of the day, the Fed only has one instrument. So it's hard to find a single number that's going to balance all of these different elements. This came up also in the press conference where, you know, Chair Powell basically said, look, all of the investments, all the AI investments that are happening right now, they're not particularly interest rate sensitive investments, right? So, of course, the policy rate doesn't really have a big impact on that structural trend.
At this point, though, can't you just say that the economy is doing fine with interest rates where they are, and this overlay of CapEx spending has just turbocharged certain points of it? But wouldn't that suggest that we're closer to neutral, sort of to Jeff Schmidt's point?
Well, yeah, I mean, there certainly is a case for that. And our own view is actually that, at least in the near term, the current policy rate, which is now below 4%, may actually be relatively close to neutral. And we know there's a spectrum of views. We know that Chair Powell considers the policy rate only modestly restrictive. So that means less restrictive than other peers on the FOMC who think it's moderately restrictive. That makes a big difference because it's what's going to determine how many rate cuts going ahead, the speed, and our own forecast actually is that we will get a December rate cut, but nothing in 2026 or 2027.
Which flies in the face of the potential composition shift and what they can do based on the economic activity. Who is going to lead the Fed? Ryan Wang of HSBC, thank you so much for being with us. Have a wonderful weekend. Danny, that to me is really the key question, right? Is this going to be a Fed with a very different reaction function next year that might not look at the data in the same kind of way that the current Fed Chair Jay Powell Fed does?
And is it a Fed that allows inflation to stay around 3%? Do they look the other way? Do they unofficially adopt more of a band approach than specifically targeting 2%? And what does that mean for economic acceleration? You and John have talked a lot about this. Are they going to be cutting into an acceleration, especially with the capex coming from the tech giants?
And this has been a pretty dovish Fed. I mean, we've had inflation above 3% for 5 years now. Right now, let's get you an update on stories elsewhere this morning. Here's your Bloomberg Brief with Yahaira Anand. Yahaira.
Hi, Lisa. U.S. oil majors Chevron and Exxon out this morning with earnings. Exxon posted an earnings beat. The company is pressing ahead with a raft of expansion projects despite slumping oil prices. Meanwhile, Chevron beat earnings estimates by a wider degree as profits from the Hess acquisition were included in the results for the first time and provided a boost. Chevron's global production rose 21% to the equivalent of 4.1 million barrels a day. Meanwhile, according to the Wall Street Journal, JP Morgan is running a group investing about $90 million in the Texas Stock Exchange. The TXSE Group is expected to launch the Texas Stock Exchange next year. The Journal reporting the JP Morgan investment brings total fundraising above $250 million. And in sports, Lamar Jackson returned from injury to lead the Baltimore Ravens to a decisive 28-6 victory over the Miami Dolphins on Thursday Night Football. The two-time MVP threw 4 touchdown passes as the Ravens defense forced 3 turnovers and held Miami to just 6 points on 2 field goals. Baltimore rises to 3-5 and Miami falls to 2-7 on the season. That's your Bloomberg Brief. Lisa.
Thank you so much, Yahaira, and have a wonderful weekend. Up next, Emily Rowland of Manulife John Hancock Investments. As AI demand continues to fuel the market rally, plus Yahaira back with your morning movers. Getty Images surging on a new licensing deal. This is Bloomberg Surveillance.
When it comes to big tech, I mean, $1 trillion in the balance sheet, generate $300 to $400 billion a year. So that's why the reality is they are fueling this AI revolution. Investors continue to underestimate the scale and scope, and that's the fuel in the engine. That's what's fueling all of this in terms of the CapEx cycle. You need to own the winners. You can't just own an AI play because they have great PowerPoints.
That was Dan Ives of Wedbush. Still bullish, definitely, though, trying to pick the wheat from the chaff, trying to figure out which AI plays are the right ones, which aren't. Right now, you're seeing everything being the right play in markets. Equity futures up higher across the board, 0.7% gain on the S&P, more than a 1.5% gain. When you take a look at the NASDAQ, you are seeing a bit of a bid into bonds as the session grows older and a bit into oil as well. Meanwhile, under an hour away from the cash open, here are your morning movers with Yahaira Anand. Yahaira.
Hi, Lisa. We have to repeat Amazon because it is our big mover of this morning. If this rise of 13% holds, it is set to add $300 billion to its market cap at the open. The company's profit engine, AWS, was the star. It saw revenue jump 20% year over year, its fastest growth since 2022. And moving on to our next stock, which is Getty Images. That is a small stock, but it is soaring 76% after the company struck a multi-year licensing deal with AI darling Perplexity, basically allowing Perplexity to use Getty's photos across its AI tools. It's a big shift for Getty, which at one point saw AI as a threat, but it you can't beat them, join them, right? And we end on Roku. That stock is falling nearly 4% in the pre-market, despite the video streaming company posting strong results due to ad growth. Analysts say the results were good, but not gangbusters, which is a problem for a stock that has run up 35% year to date. Lisa.
Thank you so much, Yahaira. Great work, as always. Counting down to the opening bell, here's a trading diary heading into next week. Today, as Mike was saying, we do get Fed speak from Logan and Hammock. Watch for further descents to the potential for a December rate cut Monday. Manufacturing PMI and ISM data, plus earnings from Palantir. Tuesday, elections in New York City, New Jersey, and Virginia, plus AMD coming out with earnings. Wednesday, ADP employment data, new import, given the fact we're not getting official payrolls data at the end of the week. Earnings from Qualcomm. Thursday, a Bank of England rate decision. Friday, we get the University of Michigan consumer sentiment, which may also be more important to some people based on the fact of just simply an absence of anything else. Turning back to markets, S&P 500 is set for another month of gains, fueled by tech optimism. Emily Rowland of Manulife John Hancock Investments writing, almost everything right now across global markets is a derivative of AI. We are following the earnings growth in our overweight high-quality tech, comm services, utilities, industrial sectors. Emily joins us now. And Emily, I think that's perfectly put, the idea that even Caterpillar is an AI trade at this point. How much does that give you confidence versus make you concerned?
Well, it's both, Lisa. We have this love-hate relationship with U.S. mega cap tech stocks right now. We love them because the earnings are there. The earnings engine in the United States is on. The challenge, of course, is that they're overloved, they're overconcentrated, and the valuations are getting pretty egregious here in our view. So, we like a combination of sectors here that are benefiting from AI. Obviously, tech is experiencing the demand. Comm services are big users of AI. We've got industrials really developing the infrastructure here around data centers. And of course, utilities really providing the power. So there's a lot of different ways to play this, but we do want to be mindful of the concentration risk that's inherent in markets today.
So if you're not overweight some of these AI names at the moment, Emily, is it too late to join the rally? Are the valuations such that you don't want to be selling, but you can't be buying more?
Well, no. I mean, valuations can stay extended for some time. And in our view, they're not necessarily a catalyst for a market correction. It's just a really tough starting point. So what we want to do is find the higher quality parts of the market. We look at things like PEG ratio, so how much you're paying for future earnings growth. We want to focus on sectors that have great return on equity, great balance sheets, lots of cash, good free cash flow. What we're not chasing right now are the sort of momentum and technical darlings, the retail favorites, the unprofitable tech companies, the meme stocks that are now back in the headlines. It's really about finding that intersection between high quality and not overpaying for that earnings growth. And then diversifying with some mid caps that are going to give you some differentiated exposure to things like industrials and mid cap banks that are benefiting from M&A activity.
Bank of America, though, pointed out underneath the surface, despite a calm on top, that individual stocks have lost or gained more than $100 billion in market value 119 times, or 119 instances with that level of swing happening. And that is the highest annual total on record. They noted that it was a fragility event, a sign of fragility. Emily, is there some real fragility underneath the surface?
Yeah, Danny. I mean, the concentration risk is a huge issue right now. You wake up every morning, the top 10 stocks in the S&P 500 are a greater portion of the index. Right now, we're at 41%. It's a big challenge, and there is some weakness under the surface. You look at small caps, for example. 40% of the Russell 2000 index is comprised of companies that don't make money. So we want to be mindful of the risks in some of those areas. We want to be mindful of the concentration risk. Looking overseas, in particular, we're looking at international growth stocks, which have some earnings catch-up potential. China, for example, on the tech side is another area that we're emphasizing in portfolios. So a diversified approach. There's some broadening in international markets that we like to see that's healthy. So you've got to be mindful, certainly, of some of that risk in the United States.
When you talk about diversification, Emily, how much is it diversification away from the AI trade versus diversification from stocks to bonds to commodities?
Well, I can always count on you, Lisa, to bring us to the fixed income discussion, which I'm happy to do. And we still think that there is a lot of value in the income that's available in bonds right now. We've seen a notable backup in bond yields, back, of course, above 4% on the 10-year Treasury yield. And while stocks are priced for perfection and frankly a far from perfect world, we still think bonds are mispriced here. They offer a lot of value on this at these levels. Bond investors just aren't sniffing out the disinflation that we see coming, particularly from the housing market, as well as the cracks that we're seeing in the labor market. So, of course, this week, Powell was a bit hawkish, not committing to that December cut. We saw rates go up. We think this is an attractive entry point to lock in that elevated income and build a return stream here that could last for years.
You're talking about treasuries in particular when you talk about the sort of gold standard, the benchmark fixed income instrument. I wonder what you think about gaining exposure to AI-related names that do have investment-grade credit ratings, but at the same time are selling the likes of $30 billion of debt or even more. And you're seeing just the glut of that coming into the market. Are you a buyer? Would you rather have exposure to the fixed income side of the tech story than the equity one?
Yeah, we like anything that has the word income in it, Lisa, right now. And we think that can be a more important driver than capital appreciation into 2026. And investment grade corporate bonds, single A, yielding around 4.5% right now. We think that that's a really fantastic time to lean into that income. It is higher quality. Investment grade to us is like the new high yield. You don't even need to go down in the credit spectrum anymore to generate elevated yield. Investment grade corporate bonds right now are still trading at about 95 cents on the dollar. They're typically trading above par. So we're always looking for bargains in the market. Bonds are still digging out of the worst bear market in modern history right now, and they offer value. So we would be slightly overweight fixed income here and letting bonds do more heavy lifting in portfolios into next year.
Emily Rowland of Manulife John Hancock Investments. Thank you so much. Have a wonderful weekend. Danny, you are going to sprint over to the other set and carry us forward because you want to spend more time on air. And I am just curious, what do you have in store for us?
I think a lot of it is going to be about this big tech rally that continues to be underway. The market opened, the enthusiasm over Amazon, just how much that fuels this market higher, despite the fact of all the event risk littered throughout the week, be it the Fed, be it China. The concentration for this market is the AI spend.
What's fascinating to me is that the event risk has been to the upside. And that is what we continue to see, that people have all of these concerns. They're worried about cockroaches. They dress like them for Halloween, but they aren't necessarily seeing it borne out in the numbers. Is CapEx spending now viewed as a positive and a sign of just how much demand keeps stripping supply?
And I'm really excited. We're going to have the CEO of Blue Owl on, who just did a deal with Meta and gave them more debt, allowed them to do off-balance sheet financing for one of their data centers. So for him, he's all bulled up.
I cannot wait to watch that. It is going to be a really interesting trade, something that a lot of private investment firms have been trying to get in on. Coming up on Monday, we have Steve Chivarone of Federated Hermes, Amanda Lynham of BlackRock, Mike Wilson of Morgan Stanley, and Bob Michael of JP Morgan as we do face off with the data desert that should have been the jobs a week. This was Bloomberg Surveillance.
कोई गाइस ये नेचुरल गैस में हाफ प्रॉफिट बुक कर लेना यहाँ पर, ठीक है। पूरा टारगेट तो शायद मुझे नहीं लग रहा जाएगा ये अभी, बड़ा टारगेट हो जाएगा 26 पॉइंट। द हाफ प्रॉफिट, ट्रेल द एसएल, अगर वापस ऊपर जाता है वापस सेल कर सकते हैं, नीचे आएगा तो यहाँ वापस बाई करेंगे। अभी के लिए हाफ प्रॉफिट बुक करके ट्रेल कर लो इन नेचुरल गैस। देखते हैं 7 PM पे यूएस मार्केट ओपन होगा, शायद थोड़ा बहुत मोमेंटम करे। देन 8:30 पे एक डेटा है मैन्युफैक्चरिंग पीएमआई का, इसका इम्पैक्ट देखना, ये थोड़ा सा गोल्ड और सिल्वर के प्राइस को इम्पैक्ट कर सकता है। ठीक है, बट इसमें हाफ प्रॉफिट बुक कर लेना नेचुरल गैस में एटलीस्ट, एंड देन ट्रेल। बीच में और कोई लेवल नहीं है, यहाँ पर कोई सपोर्ट नहीं है, मैंने बस ये इसका 50% लेवल लगा रखा है, ऐसे कोई यहाँ पर सपोर्ट है नहीं, एटलीस्ट 15 मिनट और 30 मिनट में तो नहीं है, बट थोड़ा बहुत रुकेगा ज़रूर 368 370 के अराउंड। कोई नया सपोर्ट क्रिएट करेगा तो फिर वहीं से बाइंग का प्लान करेंगे, बट अभी के लिए नहीं है। दैट इज़ द ओनली लेवल वी हैव। कल एक्सपेक्ट भी किया था, याद होगा कल मैंने जब एनालिसिस किया था वीकली टाइम फ्रेम का, तब मैंने बताया था नेचुरल गैस काफ़ी स्ट्रॉन्ग रेजिस्टेंस जोन पर है, अगर गैप अप होता है तो सेल करेंगे, फ्लैट ओपन होके ऊपर जाएगा तो सेल करेंगे, गैप डाउन ओपन हुआ या फ्लैट होके सेलिंग आती है तो डायरेक्टली नहीं कर सकते। मॉर्निंग पे फ्लैट ही ओपन हुआ, सडन मोमेंटम आया नेक्स्ट रेजिस्टेंस तक, कोशिश ज़रूर करी थी ऊपर निकलने की, बट रेजिस्टेंस से वापस सेल ऑफ में आया है। प्रॉफिट बुकिंग कंटिन्यू है, यहाँ पर वीकली का भी रेजिस्टेंस है एक्चुअली में। A wave of US layoffs plus early morning sign for job market. टाइमिंग चेंज हो गया, ध्यान रखना कमोडिटी मार्केट का टाइमिंग चेंज। कमोडिटी मार्केट का जो टाइमिंग था पहले 11:30 पर क्लोज जाता था, ठीक है, वो इंक्रीज होके 11:55 टिल जनवरी तक, जनवरी नहीं मार्च तक रहेगा ये सेट सेम टाइमिंग, फिर चेंज होगा। तो ध्यान रखना जो लोग कमोडिटी में ट्रेड करते हैं, आज 3 नवंबर से 6 मार्च 2026 तक जो ट्रेडिंग आवर्स हैं वो कमोडिटी मार्केट के रिवाइज्ड हो चुके हैं। यूएस में जो डे लाइट सेविंग टाइमिंग है ऑन हो चुका है। नाउ एमसीएक्स जो है वो सुबह 9 बजे से रात के 11:55 11:55 PM आईएसटी इंडियन टाइम के अकॉर्डिंग चलेगा। क्लोजिंग होगी उसी के अकॉर्डिंग रहेगी। भाई क्रूड को देखोगे थोड़ा वॉलेटाइल हो रहा है, रीजन बिहाइंड दैट ओपेक की जो न्यूज़ आ रही है बार बार, नीचे सपोर्ट है, ये परसों फ्राइडे वाला ही सपोर्ट है, याद होगा यहाँ पर एक बाइंग का ट्रेड भी हमने प्लान किया था, क्लोजिंग होते होते एक बार बाइंग आई थी, दूसरी बार फिर से बाइंग आ गई थी क्लोजिंग होते होते। आज हल्का सा गैप अभी ओपन हुआ था, एक छोटा सा रेजिस्टेंस था, ये मल्टीपल टाइम टेस्ट हो गया था, इसलिए मैंने थोड़ा सा रिस्की ट्रेड लिखा था यहाँ पर। वहीं से थोड़ा बहुत सेल ऑफ आया और अब उसी सपोर्ट एरिया से फिर से बाइंग कर रहा है। थोड़ा ऊपर निकल के अगर ये ऊपर वाले रेजिस्टेंस पे पहुंचता है तो मेरे अकॉर्डिंग बेस्ट रहेगा वहां से वापस सेल करना। नीचे सपोर्ट भी अब याद रखना है, पहली बार टेस्ट नहीं हो रहा है, 2-3 बार हो गया अभी, एक पहली बार, दूसरी बार, ये तीसरी बार टेस्ट हो रहा है यहाँ पे। हेड एंड शोल्डर ना बनाए बस। Morgan Stanley raised Brent forecast for Supreme Court won't stop Trump tariff. Deal with it, officials say. Indian Financial Crimes Agency IFCA freeze Anil Ambani's group properties worth of $351 million. थोड़ा बहुत रुक रहा है ये, नेचुरल गैस 15 मिनट में तो यहाँ पर कुछ भी नहीं है रेजिस्टेंस, मे भी होगा बट वहाँ पर 15 मिनट का चार्ट उतना पीछे जा नहीं रहा है 370 तक, तो वहाँ पर 30 मिनट का ही चार्ट यूज़ करना पड़ेगा। 30 मिनट में कोई रेजिस्टेंस नहीं है, ना कोई सपोर्ट है।
Exchanges on navigating macro uncertainty. Exchanges on the forces shaping global markets. For the sharpest analysis on finance, business, and the economy, Countdown Exchanges, the Goldman Sachs podcast. Listen now.
News when you want it with Bloomberg News Now. I'm Karen Moscow. We begin with deal news. Kimberly-Clark agreed to buy Kenvue in a cash-and-stock deal that values the consumer health company that owns brands like Tylenol at about $40 billion. Begin more with Bloomberg's Kriti Gupta.
I just want to go through some of the deal details if I can. Kenvue holders are looking to get $3.50 per share and a portion of Kimberly-Clark shares per Kenvue stock. So that is a pretty interesting deal merger. And already you are seeing this stuff really just, the stock is just flying this morning. KVUE, like I said, higher.
And that's Bloomberg's Kriti Gupta. Kenvue shares, they're up more than 20%, while Kimberly-Clark is down more than 14%. Turning to the markets, stocks begin the new trading month on a winning streak. The S&P 500 has gained for 6 straight months. The NASDAQ 100 has done even better. It's up 7 consecutive months. Emily Rowland, co-chief investment strategist with Manulife John Hancock Investments, says optimism continues to drive the markets.
It seems like nothing can stop this market, and you just don't want to get in the way of it. It's also a market that's been driven by technicals, momentum, sentiment. We used to talk about buy the rumor and sell the news, and now it's like buy the rumor, buy the news, buy anything.
Emily Rowland, co-chief investment strategist with Manulife John Hancock Investments, says she remains optimistic on equities, but a slower earnings season is one threat to the market's momentum. Today we do get earnings from Palantir Technologies after the closing bell. Now we turn to President Trump's wide-ranging interview with CBS's 60 Minutes heard on Bloomberg Radio. The president said he did not discuss Taiwan last week with Chinese President Xi Jinping. Asked if the U.S. would defend the island from a Chinese attack, the president said he did not need to answer that.
They understand what's going to happen, and he has openly said, and his people have openly said at meetings, we would never do anything while President Trump is president, because they know the consequences.
President Trump also defended violent immigration raids in major U.S. cities. He says they haven't gone far enough because he's been held back by Democratic-appointed judges.
You have to get the people out. You have to look at the people. Many of them are murderers. Many of them are people that were thrown out of their countries because they were, criminals.
President Trump says he could invoke the Insurrection Act to deploy active duty military rather than the National Guard. He says no judge could challenge that. The president also discussed the government shutdown, now on its way to being the longest in history. He repeated his call for Senate Republicans to get rid of the filibuster and reopen the government without Democratic votes.
They've never had this. This has happened like 18 times before. The Democrats always voted for an extension, always saying, give us an extension, we'll work it out. They've lost their way. They become crazed lunatics.
But Democratic Senator Tim Kaine says the president needs to negotiate on their demand to extend expiring Obamacare subsidies.
We're looking for the president to agree that a deal is a deal. Thus far, he's refused to engage, and we avoid shutdowns or get out of shutdowns all the time when the president engages.
And that's Virginia's Senator Tim Kaine, who appeared on ABC's This Week, heard Sundays on Bloomberg Radio. Well, President Trump said he would skip attending the Supreme Court hearings on Wednesday over the legality of his worldwide tariff regime. The president spoke to reporters on Air Force One yesterday.
It's total national security. And economic health is also part of national security, by the way. But without tariffs, our country would be in great jeopardy.
The president called the eventual Supreme Court ruling, quote, one of the most important decisions in the history of the country. Well, there are new developments this morning on the trade truce reached last week. Sources say China is seeking to buy U.S. wheat for the first time in a year. The U.S. is expected to suspend port fees for a year on China-linked vessels starting next week, and China will effectively suspend the implementation of new export controls on rare earth metals and end investigations into American companies in the semiconductor supply chain. President Trump features prominently in state and local elections taking place tomorrow. These are the first general contests of the president's second term. The results could either support or challenge his agenda. Key races include the governor's seats in Virginia and New Jersey, and New York City mayoral race, as well as a California proposition on redistricting. More than half of the states have contests. In other deal news this morning, SM Energy Company and Civitas Resources say they entered into a definitive merger agreement to combine in a $12.8 billion stock deal. Microsoft has signed an approximately $9.7 billion deal to purchase AI cloud capacity from Iron, becoming the Australian company's largest customer. Eaton has agreed to buy the Boyd Thermal business from Goldman Sachs for $9.5 billion. Alphabet returning to Europe's debt market for the second time this year. The tech giant is marketing 6 euro-denominated benchmark tranches. The total sale expected to be at least $3.5 billion. Alphabet is raising funds to support record capital spending on artificial intelligence and cloud infrastructure. And Microsoft is saying it'll spend more than $7.9 billion on data centers, cloud computing, and employees in the United Arab Emirates over the next 4 years, boosting the Gulf states' goal of becoming a global technology hub. And futures are higher, with S&P futures up 0.3%. Dow futures are little changed. NASDAQ futures up 0.6%. 10-year Treasury yield 4.08%. That's news when you want it with Bloomberg News Now. I'm Karen Moscow, and this is Bloomberg.
Exchanges, the Goldman Sachs podcast featuring exchanges on navigating macro uncertainty, exchanges on the forces shaping global markets. For the sharpest analysis on finance, business, and the economy, count on exchanges between leading minds at Goldman Sachs. New episodes every week. Listen now.
Carol Masser.
And I'm Tim Stenivek, inviting you to join us for the Bloomberg Business Week Daily Podcast.
Now, every day we are bringing you reporting from the magazine that helps global leaders stay ahead.
We've got insight on the people, the companies, and trends that are shaping today's complex economy.
That's right, Tim. We're all over global business, finance, tech news, all as it is happening in real time. And we've got complete coverage of the U.S. market close. Gotta say, basically, if it impacts financial markets, if it impacts companies, if it's impacting trends and narratives that are out there, we are on it.
We also have a lot of fun doing it. Bloomberg Business Week also brings you the analysis behind the headlines through conversations with our expert guests.
And we are doing this all live each weekday. And then we bring you the best analysis in our daily podcast.
Search for Bloomberg Business Week on YouTube, Apple, Spotify, or anywhere else you listen.
Check it out on your way home from work to catch up on the conversations that you missed during the business day.
And on the weekend, check it out for a complete wrap-up of your business week.
That's the Bloomberg Business Week Daily Podcast. I'm Carol Masser.
And I'm Tim Stenivek. Subscribe today wherever you get your podcasts.
We're here in Prudhoe Bay, Alaska, site of the largest oil field in North America. For the next week, I'll be traveling with a team of scientists studying changes underneath the Arctic tundra that are contributing to global warming.
Beneath the active layer of tundra, the part that thaws every spring and summer, is a deeper layer that doesn't. It's called permafrost, and over thousands of years, it's locked up more than 1.4 trillion tons of carbon, about twice as much as what's in the atmosphere. But as humans continue to burn fossil fuels, warming the planet, permafrost is starting to thaw, potentially turning into a source of emissions rather than a sink. So what else is causing that deeply frozen layer to thaw, and how much of those harmful greenhouse gases are escaping? That's what researchers are here to understand.
This is my first day in the field with the teams. The weather looks great, and today we're going to be collecting samples along the coast of the Beaufort Sea.
Climate change is raising sea levels and causing more severe storms, which means more salt water washing over tundra. The scientists I'm following here have one big question. Does tundra emit more CO2 if it's inundated with seawater?
If it is, that could have significant impacts on the rate of warming, because when you add salt to a substance, it lowers the freezing point.
The interactions between saltwater, permafrost, vegetation, and the release of greenhouse gases into the atmosphere are complex and not well understood. But in coastal areas, the team believes they could be significant.
Julia Guimond and Alina Spears are hydrologists, and they are behind me taking measurements science to paint a picture of the way that salt water makes its way around the tundra and also down towards the permafrost.
The groundwater samples collected show where that water is penetrating and how the salt, as well as other chemical changes, could affect how much carbon is finding its way to the surface. That's where Jacqueline Hung comes in. She studies the exchange of greenhouse gases between the land surface and the atmosphere. When plants photosynthesize, they take carbon dioxide out of the air. But when plants and soils respire, they release it, along with methane, another potent greenhouse gas.
Gorgeous day. We parked on the oil pad, had a calm boat ride along the shore, and Jackie is behind me setting up her equipment on the tundra.
Salt and other chemicals in the soil affect which microbes play the biggest role decomposing all that organic material that's unlocked when permafrost thaws. Jacqueline's field studies will measure the mix of greenhouse gases that the tundra breathes out to try to get a picture of the net carbon balance in this landscape. After a long week of painstaking work in the field, the samples are packed up and sent for months of analysis back home. So much research is needed, and every second counts.
that people love. And lastly, as you point out, previously, I think this was all about the proficiency that people had with our applications. And now adding this different modality of having a conversational interface and having the application have the ability to provide the semantic understanding of what you're trying to do, that's truly groundbreaking.
In the context of models, the debate is to work on this in-house with the advantages that you feel you have, or look to third parties and get best in class. You have Firefly Model 5. That would signal to me in-house is the route that you looked at most closely.
Well, I think when you think about Adobe and what we had to do with models, the first thing is, we're an intellectual property company. So understanding the power of these models, what they're capable of, and how you can control them to accomplish the output that you want, that was incredibly important to Adobe. And so Firefly had two real things that we innovated around. The first was, how do you create these best-in-class models that were designed to be commercially safe? We represent the creative community. It's incredibly important for us to be able to train the models on content that we had license for, and to understand the power of these models. So we started off with Firefly. We've integrated that within our products. Actually, the usage of features that come from Firefly, like generative fill in Photoshop, are perhaps the most oft-used features in our products right now. But if you think about it, you are going to have multiple models. And for us, each of these models will have a different personality, a different style, a different match. And so support for third-party models enables us to bring the power of all these models to our creators in one easy-to-use interface. And so when you think about ideation, and if you have this creative exploration that you want to do, by supporting different models, we're actually bringing the power of all these models at the fingertips of our customers. But Firefly continues to be a really important strategic initiative for us for many reasons. One, as I said, we're designing them to be commercially safe. Two, we're actually enabling any enterprise who has their own data, where they want a proprietary custom model for them to be able to create. So if you're Coca-Cola, or if you're Nike, or if you're Disney, you have all this incredible content and you want to create a custom model. Well, Firefly is a great on-ramp for that. And last but not least, we have this technology that we call Firefly Foundry. And what Firefly Foundry allows a company to do is leverage the billions that we've invested, all the incredible IP that we have, to be able to create a controllable model for them. So Firefly Image is just one part of this entire ecosystem that we built.
I want to get to whether inside Adobe, inside the company, this is a philosophical debate, or if it's simply driven as a practical one: cost, data, speed. You talked about commercially safe. How much weight would you put on that argument in a world where, at least from what we see, the copyright concerns are fading a little bit?
Well, from our perspective, as the company that's the preeminent provider of creative technology in the world, we take the responsibility that we have to represent the entire community and the industry very seriously. If you are a high-end filmmaker today, you are still protecting your intellectual property zealously. If you're an artist who is concerned about your likeness being used without your permission, which impacts their ability to monetize it, that is, an incredibly important strategic issue for them as well. And so, the first part for Adobe is, in addition to delivering innovation, are we really focused on being the responsible company that we are and representing the entire community? I think, to your point, we also see that in the ideation part, perhaps not in the production part, people are a little bit more comfortable saying, we want to just see what these models enable us to do, because that might trigger some ideas. And so I think you're seeing a lot of the third-party models more in ideation than you're seeing in production, because that's when people are like, do we have the rights to use this in the intellectual property that we will then claim as our own? And so, I think Adobe is the only company that has the entire offering and, provides the appropriate interface to our customers. So the customers can decide what they're comfortable with, but we have to represent the creative community in terms of having the choice
to use something that's designed to be commercially
So I will go to the existential question, which is how Adobe succeeds and differentiates itself in a world where, particularly, I suppose, on both ideation and production, you have midway and you have runway, mid-journey, and you have runway that are offered as free tools, as an example. And what's so interesting about that is that you recognize content from those platforms I named quite widely across social media, the internet.
Well, firstly, the success of Firefly represents clearly the fact that we are doing an incredible job on behalf of our customers. I think in order to answer that question, you really have to think about it in terms of the different customers that we serve. If you're a marketer who's creating this content in order to be used in a creative campaign or to place an ad, it's incredibly important that you use the power and precision in the tools that Adobe provides. And the models is just an on-ramp to this entire process. It may be used at the beginning part of the process, but 95% of that content creation is still happening in tools where Adobe is the best in terms of the creative professional. If you think about it in terms of a business professional, you again want to make sure that ease of use and the ability to do all of this ideation to delivery in a quick step also happens in a tool. So, my absolute belief is that these models are a great on-ramp, but at the end of the day, even these model companies will realize, unless they have an interface that people are using, their ability to monetize it is going to be significantly hampered. If you take a step back, I think everybody is so focused right now on training and the creation of these models, and that's where the investment is. Until that moves to inference, and you're starting to see, the usage of that, all of this investment is not going to be monetized and you're not going to get a return. So, I'm very confident that Adobe is already at the path where it's the inference, it's the usage, it's the workflows, it's the actual value that we provide to customers that's going to be the long-lasting value. And I think you're seeing that across different industries because the people making money on inference are the people who are providing the software, the tools, the workflows.
You took me exactly to where I wanted to go. How big is your training operation in-house, and what kind of pressures are you under securing compute capacity to achieve what Adobe wants to?
Well, we're really fortunate in that, we have incredible partnerships with all of, the major hyperscalers. So if you think about the work that we do, whether it's with NVIDIA on chips, whether with Microsoft on Azure, whether it's Google with GCP, as well as Amazon with AWS, they're all providers of technology to us. And, we spend a lot of money on it, but we're fortunate. Now, if you're an engineer, you're always wanting for more GPU chips. I mean, that's sort of the new way in which...
I have a workload, give me some capacity.
Correct. But, we're fortunate in that we were very early to acquire a lot of these GPU and workloads. And, while engineers are... I haven't met an engineer yet in my life who doesn't want to do things faster and quicker. But we have great capacity and great partnerships in this particular space. And you'll continue to see today at Max and tomorrow how we're going to be announcing more partnerships with all of these hyperscalers because they're just as interested in Adobe being successful because then it's transferring to inference.
So you're taking us now to end markets. We actually started the conversation by talking about how at Max you have creatives, the marketing industry, the advertising industry. What signals are you getting as all these people gather about the health of those end markets? And now that you have all of these new technology offerings, their willingness to pay for them?
Well, if you continue to look at Adobe's results, I mean, we report record results every single, quarter, which just shows the underlying health of the business. I mean, we are the largest provider of creative tools, and we continue to believe that the opportunity ahead of us is greater than the opportunity that we've had. I think what we've done particularly well, Ed, is we've segmented our products. So at the high end, where people want, the creative professional wants power, they want precision, But they also want to be able to take on more jobs. So with AI, if we can accelerate the creative process so they can take on more jobs. And, I haven't met a creative professional who wants to take a few hours to do something that they can do in a few minutes. So we're providing great value to them, and they're more than happy to say, if you can make me more productive and help me make a better living, then we, are willing to give you money. At the marketing side, people want to create these campaigns with agility. What we have with the product called Gen Studio, which allows an entire organization to say, everything from workflow to this content creation to activation and understanding the analytics of what content is actually working. At the end of the day, every CMO that I know, as long as you can demonstrate the ROI of marketing spend, that's the ammunition that they need to go talk to their CEO and CFO and demonstrate why whatever they're doing for customer acquisition or customer retention is working. On the business professional side, everybody just wants to be more productive and more creative. And so having this variety of products that are priced differently and having the appropriate metrics where maybe at the consumer level, what we are doing with Acrobat and Express is really all about, proliferation and monthly average users. For the next generation of creatives, the people we call creators, having Firefly, which is an all-in-one AI ideation all the way through delivery platform, that's best in class is the right one, and with Creative Cloud for creative pros. So, we're really pleased with how we've segmented the products. We provide the right value, very little friction for people to try to use our products, and that's what we have to continue to do.
You present a picture, a human-generated picture of a business in rude health. Do the markets give you enough credit for that?
Well, I think it's fair to say that, the stock price right now, I don't think represents, because there's a question about software at large that I think is misunderstood. When you look at how profitable we are, the growth prospects that we have, models are going to be an on-ramp. And what we have to do at Adobe is just to continue to focus on driving the innovation, on demonstrating the metrics that are powering this underlying business, the early metrics and adoption of all of this technology. And that gives me great confidence that the innovation that we're doing, innovation is alive and well at Adobe, as well as it's being recognized by our customers. So, we recognize that inference is where the action is. We're skating to where the puck is. And, I think the stock will take care of itself, but it's certainly undervalued right now, which is why we're buying back a lot of our stock.
Let me address this head on. Wall Street does not see Adobe as a place where AI innovation is happening. And you just said, when inference comes, you will be there. What's the counter argument to the statement that I just made?
I actually think Wall Street has recognized that AI and Adobe and the way we've innovated has actually been stellar. I think they're wondering where the monetization of training and inference, I think this incredible focus on chips and the infrastructure for training is where the action is right now. And, my belief is that it will switch to inference. So I would actually dispute the fact that they are not recognizing the innovation that we're providing. But I think they're waiting to, see how that accelerates on the inference side.
There has been some news I'm duty-bound to ask you about. There was a report at another publication that you looked at some M&A with the British name Synthesia. I invite you to comment on that, but also then take the opportunity to talk about your M&A strategy more broadly. If the report on Synthesia is accurate, you can tell me, then that speaks to our debate earlier on in-house versus third-party capabilities.
Well, first, Ed, you have to take a step back. And, at Adobe, we have so much organic innovation that's happening that we continue to be incredibly excited about it. At the same time, every company on the planet has to look at inorganic opportunities all the time because, that's the way in which we can deliver more value to our customers. And when you take the platform approach that Adobe has done, even if you look at the history of Adobe, we have grown through organic innovation and inorganic acquisition. I'm not going to comment on any specific rumors, but we're always looking at technology. We're always looking at people, where their intellectual property and the culture fits in with Adobe. And we will always be, very prudent and fiscally responsible as we think about M&A.
Let's end by reflecting a little bit on the company's history. My parents' generation relationship goes back to the invention of the PDF in the early 90s. Mine, Premiere, editing videos when I was at university. When people gather for Macs, what is the Adobe of today that they're confronted with, that you want them to see and that you want them to take away from their time with you?
Well, Ed, even for me personally, I had actually started a company that was doing photo sharing on the web in the early 90s. And so what brought me to Adobe at that point was, the realization that Adobe had this incredible brand, passion, and vision, to change the world through creativity and digital experiences. What we want the entire creative community today to reflect upon is that we believe that our opportunities ahead of us are greater than ever before, that we continue to be focused on innovation, that the breadth of creativity from individual consumers all the way to the largest enterprises in the world has never been larger, and we want them to consider Adobe their trusted party and partner to help them, bring their creative ideas to life. And so, we're not going to rest until we have billions of people, like the generations prior to us, continuing to acknowledge that Adobe is the premier partner in the creative space.
Connecting the dot between what's at stake and what is possible.
We can start, I think, with US-China. We'll get to the tech side, the fintech side in a moment, but we did as well have the talks between President Xi and Trump last week, so I'm curious for your views on the outcomes from Busan and whether you were encouraged at all by what we heard.
Well, I think the summit was successful, that both leaders have been able to put the bilateral relationship back on track with some stability and preventing otherwise a very disastrous outcome for both countries and for the world economy at large. So I think the trade truce reached by the two leaders, by two countries, I think is really a great reassurance for global markets and for global economy.
How do you see it developing? Because obviously there's big points of contention between both sides. It's difficult to really see how they'll be able to see eye to eye on areas, for instance, like rare earths, which remains a big bargaining chip for China. What do you think is the next step and the evolution of the relationship from here?
Well, I think, just the experience of last couple of months, has told us, like it or not, the two economies are still highly dependent on each other. And in fact, the world economy is still highly wide, to be interdependent. So if you want to penalize a trading partner, whether it's by high tariff or export control, yes, you will exact the cost on your partner, but you also you inflict a lot of harm to your own economy. Like this whole entanglement with whether it's chip restriction or rare earth curve, told us very, very clearly. So I hopefully now with the truth in place, that give the time, give the more cool down emotion and the space for both governments to really engage and step back, say, where we want to resolve some of the differences. Okay, some are maybe long-standing, but where we should continue cooperation, like trade or investment or technology, right? Because it's essential for each country's own economic possibility, and also, given the sheer size and the scale of both U.S. and China, so the actions they take against each other will have a global ramifications. So they need to be also mindful of their global responsibility, to be sensible, to be reasonable, right? So that's kind of my hope.
What about from the side of Beijing? Because, of course, as I just said, that big bargaining chip, but their main point of leverage is the rare earth controls, and those effectively remain in place. It's something that has caused a lot of issues with other potential or other trading partners, like in Europe, for instance. Do you think that that's the right move to keep those restrictions, or does China also risk being labelled essentially what it's saying of the US, that they're an unreliable trading partner?
No, I don't think it's China's intention to have worldwide control over rare earth, given that China's central role, but also the central role of rare earth in the global economy. Right? I think it's more like a messaging, okay? Because over the years, particularly led by Washington, but also European willingly participate in this whole technology blockade against China, particularly with the high-end semiconductors. Not only the semiconductor per se, but also the equipment making semiconductors, which is obviously ASML, right? So Europeans have been cooperating with Washington in this blockade. So China, basically say, enough is enough. We have, guess what? We have some leverage too, right? Rare earth is one of them. So it's more like just in the wake of the summit, and China want to send a message, okay, to all parties involved. So now with the truce reached between Washington and Beijing, I don't think any issue standing in the way between Brussels and Beijing. I believe is not intended, to harm European multinationals, businesses, and also obviously Australia and New Zealand. That's not the issue. I think it's more. I would say this whole thing is more about the US and China. So, and hopefully now they realize each other are still, at the end of the day, divorce is a very messy, costly outcome. Let's find a way to live together, to do trade with each other.
How do you think China's economy is holding up in this environment as well? What's your perspective on what we're seeing in terms of the economic data?
Well, in light of this, escalation of trade war and also technology financial war, the mounting uncertainty facing Chinese businesses, investors, and even average consumer, actually, Chinese economy has been holding up surprisingly well. Actually still quite resilient, right, against all odds. So this, again, just due to the fact the Chinese economy is not a small economy, it's very big, very diverse. And also over the years, the whole economy become a bit more resilient, right? So that's reassuring. But, the key for China to be able to sustainable in its economic growth is get the domestic act together, particularly, domestic demand, private consumption. China needs to get it right? And then obviously continue innovation. So with the very strong, robust consumer demand and with the continued strength in innovation, Chinese economy will do very well, not only in the short term, but also in the mid and long term.
You're really on the messages of the fourth plenum, because they were the two big takeaways, lifting consumerism and then also pushing that self-reliancy or self-resiliency in the tech sector. On those opportunities, so that we see in tech in particular, which sectors are you most interested in China today?
Well, so China is not just a one pony trick. It's like the U.S. China generally, it has become a major global innovator across the spectrum. AI, right? That's what all we are focused on. So China is becoming strong leader with tremendous potential. Climate tech, energy transition. So China again is a global leader in renewables, EV, batteries, and next gen energy infrastructure. Then third is automation and robotics. Again, so there are a lot of exciting. Really, I was just in Shenzhen, Guangzhou over the weekend, and I've met a couple of founders, and they are doing really cool by in robotics. So I think these are three areas, but by by no means opportunities are confined to this space, but these are obvious, areas China actually needs, but also there's a lot of momentum and there's a lot of really high-quality companies.
Thinking more broadly, but about momentum, and the momentum has been very strong into AI across the board, but you're at the point where we've been, of course, talking about the risk of an AI bubble now for weeks, if not longer, months. But do you see that risk of an AI bubble, and what would it be to cause that bubble to burst, or do you see sort of a slow deflation instead?
I think, it's understandable why we're all also so excited about the AI, the promise, the breakthroughs, and the potential application across the wide swath of the economy and the society. But we also, have to learn from history. Just because this is, foundational new technology breakthrough doesn't mean every tree will go into the sky, right? So, it's clearly right now there's just so much capital, blindly chasing AI opportunity, and the valuation in some cases are really decent high. So we have to be somewhat cool-headed, right? So we have to remind ourselves the last .com bubble. Yes, internet, is a real revolution, but many .com companies actually went bust.
Connecting the dot between what's at stake and what is possible.
This is Balance of Power, live from Washington, D.C.
From Bloomberg's Washington, D.C. studios to our TV and radio audiences worldwide, welcome to Balance of Power. I'm Joe Matthew. Tonight, is the U.S. ramping up for a military strike on Venezuela?
There are reports that you are considering strikes within Venezuela. Is that true?
No.
That you made a decision on that?
No, it's not true.
President Trump responding to reports now that he has given the approval to strike military installations inside Venezuela in order to stop drug trafficking. This as the U.S. ramps up pressure with the USS Jerry Ford carrier strike group already heading to the region. We'll dive into the escalating tensions and how Venezuela is responding. Also, snap decision, what an 11th hour ruling by two federal judges means for millions of Americans who depend on SNAP benefits for food aid, just hours before they're set to expire due to the government shutdown. Now in day 31, the Trump administration ordered to keep the program funded. And breaking news, the shutdown also having a major impact at one of the country's biggest airports tonight due to staffing shortages. Will the shutdown influence key state elections just days from now? We'll talk about it with Cook Political Report's Aaron Covey on that and more as the shutdown hangs over Election Day 5 days from now. But we begin tonight with the latest from the Trump administration. The president speaking to ongoing trade tensions with Canada, nuclear weapons testing, reports of that potential military strike against Venezuela, and his meeting with Xi Jinping. Covered a lot of ground. Trump suggesting another tariff cut for China.
So China's working very hard on that. I really believe that. And they have an incentive. I'd love to get rid of the extra 10%. I put a 20% penalty on. I had a great conversation about it with President Xi yesterday. And I'd love to get rid of the other. As soon as we see that, we'll get rid of the other 10%. Other than that, we haven't cut the tariffs at all with China. But we're going to have a great relationship with them, I think, for a long period of time. If we have a smart president, we'll have a great relationship. We don't have a smart president, which is also a very strong possibility, then we won't have a great relationship. But China is, the meeting with China was incredible.
Joining us now with more, Bloomberg's Washington Deputy Bureau Chief Laura Davison. Laura, we have a lot to talk about here, and I want to ask you about what's happening in Venezuela. But first, two federal judges telling the president today he must start funding SNAP benefits as they're set to expire tomorrow. How important is this development?
This is incredibly important. There are 42 million people who were expecting to get these benefits loaded onto their SNAP cards today that didn't come. Now the administration has until November 3rd to come up with a plan on how they're going to do this. They say they only have about $5 billion of the $8 to $9 billion they need. So people who are waiting these probably will have to wait a couple days, if not a week longer, and pending any other further legal action. So this money may be coming, but not immediately.
Got it. And this is a partial funding mechanism then, right? That means not everyone will get the benefits they were expecting.
Not everyone, or they will only get a portion of what they were originally expecting.
Understood. States have been taking action as well. We've seen some states try to bridge the gap. Will that be necessary now?
It still may be. Remember, people may not get this for a week or more. You see states like Virginia, notable that there's an election in Virginia next week, but that they're pulling money that they can. But this money will only last so long. States can't go into debt for things like these. You're seeing a lot of private philanthropy come in and fill some of the gap.
Coming off of President Trump's meeting with Xi Jinping, we have more news when it comes to tariffs. What's the trade for fentanyl here?
So Trump suggested he would take away that additional 10%. He already earlier this week said they would take, halve that 20% tariff down to 10, saying he might do that again. So Trump is really eager to give Xi what he wants here. He's saying he may go visit China later this year. Xi would come here. It is very clear that Trump is eager to keep this relationship up. And China got a really good deal here. Trump is willing to give them even more.
Fascinating, as always. Bloomberg's Laura Davison. We thank you, Laura. And we're just 5 days out from Election Day with eyes on key races across the country. One in particular, the New York City mayoral race, has already seen a surge in early voting. After just 6 days, nearly 400,000 ballots have been cast, according to the New York City Board of Elections. That's more than double the total of early voters in the 2021 general election and already higher than the early votes during June's primary. Joining us now with a look ahead of next week's elections, Aaron Covey, U.S. House editor at the Cook Political Report. Aaron, it's great to have you back. We've missed you since campaign season, and I'd like to tick through a couple of these. We'll get to Virginia and New Jersey. When it comes to New York, however, is this case closed? Is the race over? We're seeing multiple polling data showing double-digit gains for Mr. Mamdani. What's your take on this?
Yeah, I think for a while it's been clear that Zohran Mamdani is on track to win the mayoral race in New York City. And I don't think anything we've seen over the past couple of weeks in terms of the early vote has changed that view at all. I think it's clear that Andrew Cuomo has a bit of a ceiling, and I haven't seen any indication, any movement in polling that has changed that over the past couple of weeks. So I do think we're on track for a Mamdani win.
Do we read into the massive surge in early voting to benefit Zohran Mamdani, suggesting that it might be younger people who are getting in line, or is that not clear tonight?
Yeah, I think that's a good question. I do think that from what we've seen in the age breakouts, there have been more younger people in the recent surge of early voting than maybe the initial numbers had shown. And I do think that should likely favor Mamdani. Obviously, a spike in younger voter turnout was what helped him win the Democratic primary several months ago, so that should benefit him. But I don't think ultimately this changes fundamentally our view of the race, which is that Mamdani is the favorite to win.
Understood. Aaron, I'd like to ask you about the gubernatorial races, and we can start with Virginia here. We've got Virginia and New Jersey, of course, in the balance. And speaking of early voting, we saw an enormous surge in Fairfax County in northern Virginia, as you know all too well from what we understand, beyond some of the numbers we saw in the presidential race. How might that impact results for what many see as a win for Democrat Abigail Spanberger?
Yeah, so Fairfax is a pretty deep blue county at this point, and so high turnout there should favor Spanberger. But from the beginning, I think it's been clear that Spanberger was the favorite to win this race, and now it's really just a question of by how much of a margin. On average, she is leading Winsome Sears by about 10 points, and that wouldn't surprise me if she ended up winning by around that margin. But I do think that certainly there's more intrigue in the attorneys general race further down the ballot. And if the Republican incumbent there, Jason Miyares, is able to pull out an upset, I think Spanberger will have to win by less than 10 points.
Fascinating. All right. To the extent that the government shutdown impacts this race, Aaron, what do you think about this idea? Because there are so many federal workers in a state like Virginia that, of course, borders Washington, D.C. Is this going to motivate Democrats or Republicans one way or the other?
Yeah, it's a good question. I do think this was certainly a significant factor in Terry McAuliffe's win back in 2013. There was, of course, a government shutdown at that point as well. And that allowed McAuliffe to kind of break the streak of Virginia voting for the opposing party that sat in the White House during their gubernatorial election. However, I do think that views of the shutdown are pretty baked in along party lines. And among independents, we see that more independents blame Republicans over Democrats for the shutdown. So if anything, that should help Democrats on the ballot next week. But I think ultimately, in Virginia, it was clear from the beginning that Democrats would be favored here. Obviously, Virginia has a huge population of federal workers who have been affected from the beginning of the year by cuts from DOGE and reductions in forces as well. And that is certainly something that I think has energized Democratic turnout.
New Jersey's a different story, isn't it? We're looking at, based on the most recent polling from Emerson College, a 1-point race. Aaron, how are you looking at New Jersey, and what would this mean for these two candidates who have been in a knockdown, drag-out fight?
Yeah, I think that Emerson poll that we saw was a bit of an outlier of recent polling that we have seen in that race. On average, the Democrat Mikey Sherrill has been leading by around mid-single digits. And I think this race is going to be closer than the Virginia race, which may be a surprise to a lot of people. But we have to remember Kamala Harris won both Virginia and New Jersey by 6 points. So they are pretty similar states in terms of partisanship at this point. And of course, New Jersey has a recent history of electing Republican governors, and they haven't had a governor from the same party serve more than 2 terms in a row since, I believe, the 50s. And so it would not be a huge surprise if Chitterelli pulled out a win. Now, I do think that Sherrill is the clear favorite ultimately, but this is a closer race than the Virginia one.
Donald Trump has weighed in this case on behalf of Jack Chitterelli, and he has really seized on energy prices as the issue in this campaign. I don't know if you agree with him on that, Aaron, but what's the Trump factor in New Jersey?
Yeah, I think the Trump factor is interesting. We saw that he made significant inroads in 2024 in New Jersey, particularly in some of the inner suburbs around New York City with minority voters. And so Chitterelli is really banking on being able to replicate those gains that Trump made in North Jersey while drawing on his strength in South Jersey. But, at the end of the day, this is still a state that Trump lost ultimately. And so Sherrill has been really focused on tying Chitterelli to Trump and saying that he won't break with the president in any way, which he has done really not a lot to dissuade anyone from that view. In a debate with Sherrill earlier this month, he said that he graded Trump with an A rating on his presidency so far. And so I do think that ultimately New Jersey is still a light blue state. And it would be difficult to win without creating a little bit of daylight between yourself and the incumbent president, who is still unpopular. Even, I will say, the Democratic governor, Phil Murphy, is also unpopular and is roughly around the same level as Trump. But I still do think Sherrill is favored at the end of the day.
I have to ask you about California and Prop 50. The money is incredible here, $120 million raised on behalf of the proposition to redistrict the state, to redraw the congressional map. This is something, of course, that's been promoted by Gavin Newsom. We'll find out Tuesday night, but that, I believe, 3-to-1 spending does give us a sense of where this is going. Aaron, is it going to be a blowout?
I think it is on track to win by a pretty healthy margin. I mean, the latest polling we have seen has showed that supporters for Prop 50 is around the same number of folks who voted for Kamala Harris in the state, who, of course, won it by double digits. And so it does seem like this is likely to pass, in which case this would give Democrats an opportunity at flipping 3 to 5 seats in California and also shores up several of their own vulnerable incumbents. So as we're talking about all of this mid-decade redistricting, California is the most important state that could redraw their map just because of the sheer number of pickups that Democrats could make.
We were just showing a map of the country and the number of states that are either in the process of or considering redistricting. Aaron, what happens at the Cook Political Report if all of these states redraw their congressional maps? You guys are going to need a Ouija board or something to get through this midterm.
Yeah, well, it really does put things on hold a little bit when we don't know which of these states are going to have new maps by the time we get to 2026. Of course, we've seen new maps have already passed in Texas and Missouri and North Carolina, and now, as of this morning, Ohio. Those are all maps that will benefit Republicans to varying degrees, which is why Democrats are so set on making sure Prop 50 passes in California.
Fascinating stuff. We're looking forward to Tuesday night here at Bloomberg. Aaron Covey, great to have you back. House editor, the Cook Political Report. We thank you. And be sure indeed to stay with Bloomberg for election night coverage of these races. Tuesday evening, we'll have special live coverage right here on Balance of Power starting at 5 p.m. Eastern. Coming up, government shutdown pain halting air travel at one of the country's busiest airports tonight. We'll bring you the details straight ahead. But first, is the U.S. military ramping up to strike land targets in Venezuela? The White House responding to a report that a decision has already been made. We'll discuss next on Balance of Power on Bloomberg TV and radio.
Connecting the dot between what's at stake and what is possible.
This is Balance of Power on Bloomberg TV and radio. I'm Joe Matthew. Thanks for joining us. Another good day on Wall Street. The S&P 500 just notched its longest winning streak since August of 2021. How about it? The rally led in large part by tech earnings, and we've had our share of them this week as we turn to Power Moves now with Bloomberg's Nora Melinda, who joins us live from world headquarters in New York. I guess the sky's the limit here, Nora. What's behind these gains, if nothing more than earnings?
The sky is clearly the limit here, or maybe not. I mean, we are seeing really a bull case rally here across the board for a lot of these broader indexes. I mean, the S&P 500, the NASDAQ hitting their highest levels on record. We're really seeing all of this really being buoyed by the Mag 7 tech stocks. I mean, we did see some mixed earnings, but of course, if you really look at some of the spectacular results that we saw out of Amazon, a lot of people looking toward its cloud unit. It saw revenue increase by 20% higher than what we saw last year, particularly as we're thinking about AWS. But then also Amazon, Apple actually also in focus. We did see some sort of scrutiny about like China sales there when we think about the iPhone, but we really are seeing a lot of positive results out of Apple. So you really are seeing a broad-based rally here as we look at the Mag 7 tech stocks, and it really is just buoying a lot of these bigger major indexes higher. But another thing that we've really been keeping our mind on, of course, would have been this week, which was the Federal Reserve meeting, where we did see that there was a 25% basis point cut here from the Federal Reserve, and that really just underscores the fact that the U.S. has really been focused here on what the outlook is moving forward in regards to the economy, given the fact that we have seen a lack of data here, given the fact that we've been in a government shutdown. So between the fact that we had the Fed Reserve meeting this week and a lot of these earnings coming through, you are seeing Wall Street having a very optimistic tone here to end the week and, of course, the month. But I did want to touch a bit on what's going on in oil. Of course, we are seeing oil steadying a bit. Traders really weighing the moves on Venezuela. Of course, we do know the U.S. President Donald Trump has denied that he was planning a military strike on Venezuela after reports that the U.S. had planned to perform military strikes on targets in Venezuela. So we really are seeing this really clearly in focus. If you look at ExxonMobil, I mean, of course, we are seeing down about 3% here. And, of course, really just keeping crude oil in focus as well here. Lots to digest this week, certainly, Joe.
You said it, Nora. Great to have you with us. Bloomberg's Nora Melinda in New York. We thank you. Staying on Venezuela here, lawmakers on both sides of the aisle appearing on Balance of Power in recent days have sounded the alarm bell on the administration's previous action in the Caribbean. Take a listen.
We don't know what is happening here. It's hard to comment. And when you go in and destroy a boat and kill folks, and we don't know who those people are or how they were identified, it raises a lot of serious questions. Congress has the power under the United States Constitution to declare war. But in order to declare war, we have to understand exactly what that war is going to involve, what the purposes are, and how it's being carried out.
We have not received them as of a couple hours ago. And so do I think that they have asked the questions? Yes, I do. Have we been able to see the information that they're operating under? No. We have an oversight responsibility. I want to see that information.
That's a great question to which we in the Senate don't have a clear answer. It is an indicator of a steady march towards regime change, but intentionally through military action on the ground overthrowing a head of state of another country has serious consequences. And the president owes the American people and Congress, given our critical Article 1 power, an explanation of what's the policy and what's the plan.
So what is happening in the Caribbean? Joining us now with her perspective, Claire Finkelstein, professor of national security law at the University of Pennsylvania. Professor, it's great to see you. Welcome to Bloomberg TV and radio. You're aware of what's happening in the waters off Venezuela. It's not just the boats, the alleged drug boats that we've been blowing up. There is a massive flotilla that is still in the process of being assembled, an armada that will soon include the USS Jerry Ford Carrier Strike Group. What is the purpose of this massing of military equipment, if not regime change?
Well, in addition to that, Joe, there were reports today from the Wall Street Journal and the Miami Herald that the Trump administration was considering strikes in the interior of the country, something that President Trump then denied. But everyone is left guessing as to what the intentions are. President Trump has made no secret of his desire for regime change in Venezuela, and he designated ships, individuals involved in the drug trade, narco terrorists, and claims that the U.S. is at war with narco terrorists, something that there is no legal basis for. But President Trump obviously sees the United States as conducting already an implicit war with Venezuela and believes that he has the legal right to strike both at sea and at land at that country. So it may be that strikes are imminent now.
Well, even though the president said no, of course, this might just be a question of when, if not this weekend. Is the United States government currently in violation of international law with the actions that have already been taken?
That is my belief. There is no basis for striking ships either in the Pacific or in the Caribbean. They are not a direct threat to the United States. These strikes have not been authorized by Congress. Now, the president can always act on his own if there is an urgent need to do so. Under Article 51 of the UN Charter, the president can decide that the U.S. is under threat and act in defense of the United States. And then it is not a violation of international law. And under the War Powers Act, the president does have 30 days to take military action. So long as he informs Congress, he can then request an additional 30 days from Congress to extend that time. But here, the president doesn't have any basis under international law because the U.S. is not being attacked directly, and there is no authorization from either Congress or the Security Council of the United Nations. So there really isn't any legal peg to hang one's hat on here at all.
We've seen, of course, a number of people killed in these attacks on the boats, but in some cases, Professor, there have been survivors. We have not taken them prisoner. We haven't detained them or interviewed them based on what we understand. What should be done with folks who survive these bombings?
And the fact, Joe, that we have not taken them prisoner suggests that we actually don't fully regard ourselves as at war with Venezuela, because if we did, then we probably would take them prisoner. They would have valuable information. We would be in a negotiating situation potentially with Venezuela, as one is in any kind of traditional war. But we repatriated them immediately upon seizing them. They are civilians, at least the individuals on these boats are. They may or may not be involved in the drug trade. That even hasn't been established. And it is not lawful to strike intentionally at civilians for any reason in peacetime or in wartime. So if we are indeed targeting civilians, even if they are involved in illegal activities, then we are violating international law. Now, there are ways for us to deal with that. It is an international law enforcement matter, something the Coast Guard has been involved in for many, many years. We know how to handle that from a law enforcement perspective, and that would be our legal option for dealing with trying to stop and definitely to slow down the influx of illegal drugs into the United States.
Professor, I've only got a minute or two left here, but I have to ask you about the president's plan or his announcement that we're going to reopen the U.S. to nuclear weapons testing. In our remaining moment here, is this a can of worms that we want to open?
It's a huge mistake to do this. First of all, it violates our test ban treaties, international treaties that have been incredibly stable. For the past 33 years, there have been no violations of this treaty except for North Korea. And that was many years ago. And North Korea was really vilified for its testing. Once we open this can of worms, as you rightly say, then any country that is currently a party to the test ban treaty will start to test nuclear weapons and feel fully authorized to do so by the United States' unilateral violation of the treaty. So I think this would be a grave mistake and will very much destabilize the détente that has existed for so many years with regard to the ban on nuclear testing.
Appreciate the conversation, Professor. Claire Finkelstein, Professor of National Security Law at the University of Pennsylvania. We thank you for being with us on Balance of Power. Coming up, millions of Americans are set to see their SNAP benefits expire hours from now as a result of the ongoing government shutdown. But will two new rulings from federal judges tonight change that? We'll discuss that straight ahead with the SNAP director at the Food Research and Action Center on Balance of Power, only here on Bloomberg TV and radio.
As I reach a milestone in my life, I'm humbled by my good fortune, yet well aware that I still have much to learn. And if I stay true to myself and follow my instincts, my legacy will be looked on kindly by my friends, my family, and hopefully generations to come.
This is Balance of Power on Bloomberg TV and radio. I'm Joe Matthew. Thanks for joining us. We'll have more on the potential SNAP cuts and Election Day just 5 days out when we assemble our political panel later this hour. But first, the stories we're watching in today's Power Brief. U.S. air travel is beginning to show real signs of strain as the government shutdown drags on, with traffic controller shortages snarling thousands of flights running into the weekend. Just 4 weeks until, of course, one of the biggest travel days of the season. Flights to New York's JFK are now being held at their departure airports thanks to a ground stop that's going to be in effect till 7:30 tonight due to staffing shortages. Flights slowing across the country today, impacting Newark Liberty, Boston Logan, Austin, and Nashville, all due to staffing constraints. We're 5 days, as we mentioned, from the mayoral election in New York, but there's a very different kind of race happening in the city this Sunday as 50,000 runners lace up the sneakers for the New York City Marathon. The running boom bringing in nearly $11 billion to the city this year, with the marathon alone netting almost $700 million in spending on accommodations, dining, local transportation. This matches the economic impact of the entire 2024 holiday shopping season. Good luck if you're running. Ticket sales for the Kennedy Center have fallen to their lowest level in years after President Trump's takeover of the Performing Arts Institution in February. Ticket sales reportedly dropping 50% just a week after the takeover was announced. Now around 43% of tickets for typical productions go unsold, compared to only 7% at this time last year. Performers are also dropping out of productions, with several shows being called off, including a stop by the official Hamilton tour. And as the government shutdown is now set to enter its second month, about 42 million Americans could see their food assistance cut off within days, threatening to deepen economic pain across the country. But a federal judge ruling could change all of that. Still, food banks are bracing for surging demand, and states are invoking emergency measures as lawmakers trade blame and debate whether to approve a narrow funding bill to reopen the entire government. Joining us now with details on all of this from our Washington bureau, Bloomberg's Caitlin Riley, who covers Congress for us. Caitlin, it's great to have you on the program. We could ask a couple of different questions here because all of these stories converge. There were a couple of judges who ruled today, one in Rhode Island, one in Boston, to at least make up for some of the SNAP shortages. If this, in fact, is the case, the president has until Monday, I guess, to respond to this. If fewer people lose benefits, does that also make it easier to keep the government closed?
Yes. During a government shutdown, you have to watch for the pain points. During this shutdown, we've seen a lot of pain points get taken off the table. We've seen the military get paid. The Trump administration has found out ways to do that. We've seen them backfill funding for WIC, which goes to feeding mothers and children. And now we're going to see the SNAP shortfall at least partially covered, though we will see likely some delay in benefits, and the $5.5 billion in contingency funds is not enough to cover the full cost of the program for a month. But yes, as pain points get removed, it gives each party more will to dig in and keep the government closed.
We've also got the open enrollment for Obamacare starting tomorrow. Head Start could be impacted as well. So when you put all of these together and you start wondering, when will this government reopen? There are no off-ramps at the moment. Do developments like these, because you're not going to get all the SNAP benefits fulfilled, you still have Head Start and Obamacare subsidies to manage. Does this bring people to the table?
Yes, quite possibly. And we have the gubernatorial elections on Tuesday, which could relieve some of the political pressure each side has been feeling, but particularly the Democrats as they try to win in these state and local level races. Yeah, it's possible that as we see these pain points pile up, you could see the two parties come together, or you could see some moderates in the Democratic Party lose their nerve, though there's been Democrats have remained very unified throughout the 31 days of the shutdown.
Sure. That's the case on both sides. It'll be fascinating to see how these elections potentially impact outcomes here. Caitlin, thank you so much. Bloomberg's Caitlin Riley with us on Balance of Power and joining us now for a closer look at the impact of this funding lapse, specifically when it comes to these benefits. Gina Platadino, SNAP director at the Food Research and Action Center. She's also the former senior policy advisor for nutrition and agriculture in the Biden administration. It's great to have you with us. Speak to us first about the ruling from these two judges today and the extent to which SNAP benefits will be or not be made whole on this government shutdown.
I think we have to start off that we didn't need to get here, right? You shouldn't need to have to sue the administration to do its job. National organizations and advocates have been calling for USDA to issue these contingency and reserve fundings, and we are thrilled at what both judges, both in Massachusetts and Rhode Island, but the two separate lawsuits, acknowledged that the plaintiffs had standing, that USDA should be utilizing these contingency funds. What we're going to see on Monday is whether or not the administration is going to appeal to say that people shouldn't get this funding, and whether it will acknowledge to move forward and utilize other reserve funding so that the full $8 billion plus that is needed for the month will be covered.
You know, it was interesting to read that Chuck Schumer sat down with Senator Katie Britt, the conservative Republican from the state of Alabama, reminding us that in many cases, red states have some of the largest concentration of SNAP recipients. Were you encouraged to hear about that conversation, and could that be the way out?
Well, we've known this for a while. Actually, rural areas, which are usually in these red places, do have the highest rates of poverty, the highest rates of food insecurity, and the highest SNAP utilization. So these are the areas that are impacted the most by these cuts, by these reductions, and by this ongoing failure from the administration to issue this funding.
You mentioned the attorneys general who brought this case to restore or fulfill SNAP benefits. It was about 24 states. What happens to the states that did not sue?
USDA is a national program. SNAP is a national program. And during oral arguments, the judge did say that it would have to apply as a whole. So while it was Democratic states primarily who brought this over, it will benefit the whole country as a whole.
A number of states have, of course, made their own attempts to bridge the gap here. We were speaking with the Congresswoman from Vermont a bit earlier today, where they've got SNAP covered for 15 days, for instance. How well equipped are states to handle this on their own?
It's a federal program, right? States can only fill in the gap momentarily, right? SNAP as a whole brings over $100 billion a year to local economies, and states are not responsible for that. They're responsible for the administrative costs. So that's why you see a different approach in different states, depending on their very limited reserves that they have. But I will flag that, hopefully this will be taken care of. But the reconciliation bill in July, that will be ongoing, which will cut millions of people off SNAP. And there will be an opportunity in the future that will require some states to also pay ongoing benefit amounts. So this comes at a really terrible time as states are trying to figure out how to implement those horrible changes, having to also figure out how to explain and also fund and do the job of the federal government complicates things and makes things more harmful for beneficiaries and the state agencies that are trying to run this program.
Gina, President Trump has been speaking about this quite a bit, and he refers to SNAP as a Democrat program, which we've heard him suggest before. Take a listen to his recent remarks about this. We'll have you respond.
All they have to do is say the government is open, and that's the end of it. And, largely, when you talk about SNAP, you're talking about largely Democrats. But I'm president. I want to help everybody. I want to help Democrats and Republicans. But when you're talking about SNAP, if you look, it's largely Democrats. They're hurting their own people.
Is that true, Gina?
So many things that are wrong with that statement. I'll start with number one, that prior to even the government shutdown, advocates had told, including FRAC, told the U.S. Department of Agriculture about their contingency, about the reserves, how other administrations had acted in the past. This administration has broken with precedent. Like I said, we never had to get to this point. USDA could have acted in the same way. They back-ended a WIC and so on. And in terms of who utilizes SNAP, majority of people who utilize SNAP, we don't track political affiliation. We do track demographics such as race, gender, and age. And I can tell you the majority of people on SNAP happen to be our white community. And then half of that is our Black community. And then less than that is our Latino community. Majority of people on SNAP are children, followed by older adults, followed by people with disabilities. And most of them are working. They're just working in the gig economy and not making enough. On average, the folks who are on this program are making less than $1,100 a month. They are surviving paycheck to paycheck. They are not worried about being political chess pieces in this game. They are worried about putting food on the table. So when their kids come home or is on the weekend that they're not getting access to breakfast and lunch at school, they have something to be able to provide for their children.
Gina Plata-Nino, SNAP Director at the Food Research and Action Center. We thank you for joining us and bringing your expertise to this conversation. Coming up as trade tensions reignite between the U.S. and Canada, it's Game 6 tonight of the World Series between the L.A. Dodgers and the Toronto Blue Jays. We'll discuss with our political panel next on Balance of Power on Bloomberg TV and radio. This is Balance of Power on Bloomberg TV and radio. I'm Joe Matthew. Thanks for joining us. There's a ground stop right now at JFK Airport. It's going to be in place until 7:30. And yeah, it's due to staffing, not mechanical issues. Joining us now with their reaction to this story and more, this evening's political panel, Bloomberg Politics contributor and Republican strategist Rick Davis, partner at Stone Court Capital, alongside Democratic strategist Janae Wartell, partner at ARC Initiatives. Great to have you both with us. I believe you got caught up in a little bit of this, trying to get back into the country last evening. Rick, we've discussed this idea that air traffic control might be the only thing that dislodges lawmakers and gets the government reopened. What are we in for?
Yeah, almost 12 hours ago, I was landing at JFK on an international flight that got really hung up in immigration because there were not enough immigration agents.
How about
it? I went out of my way to thank them all for working for free this week, which is something people need to understand. These are folks who aren't getting a paycheck and haven't got one for 30 days, and yet they have a really tough job. So kudos to them, but this has to end. And there's way too much politics being played around, these people's lives and the government's functioning. We just talked a lot about the SNAP program.
Yeah.
I mean, these things are there because they help people. And the idea that we're letting politics stand in the way of helping people, is really just breaking the public trust.
Well, it could get a lot worse. We talked to the chair of the House Transportation Committee last evening. He was joining us by phone because he also was stuck in an airline mess. Pretty interesting when the chair of the Transportation Committee can't get to where he's going on time here. He agreed with J.D. Vance that if the government doesn't reopen, we will have a disaster for travel come Thanksgiving. Is that how we get out of this?
Absolutely. This air travel is about safety. It's about folks being able to take off land, join their families, participate in celebrations. And this is going to be a real breaking point because you're going to have millions of discontent Americans who are concerned about the safety of air travel and also just the tremendous inconvenience that they're going to suffer. This is going to be a real big pain point, not just for Democrats, but for Republicans as well.
The polling is striking today with the ABC News Washington Post. Americans blame President Trump and congressional Republicans 45% to 33% in this case. Independents blame Republicans by a 2-to-1 margin. Rick, does that give us any sense about how this ends?
Yeah, look, 2 weeks ago, these numbers were about even, right? So there's been a decline in people's views of Republicans and their handling of the shutdown. And so I think it's a wake-up call for the White House. It's a wake-up call for leadership in Congress. And I think that on Tuesday, you're going to have an election. And depending upon the outcome of a couple of key races there, you could really have a lot of turmoil within the Republican Party saying, people are blaming us, we're losing elections, and we're not getting anything for it. And that's my whole point about politics playing too big a role. Their day job is to make government work, right? It's not to get an upper hand either way, right? Democrats are playing politics with Republicans and vice versa. In this case, the public is currently blaming Republicans.
If this poll is correct, Janae, do Democrats win all three on Tuesday night?
Well, one thing that's noteworthy about these numbers is one of the reasons why they were so much more even previously is because Republicans spent the first couple weeks of this shutdown openly blaming Democrats for the shutdown instead of being at the negotiating table. We saw members of Congress, U.S. senators saying, we would just like to have a conversation. We want to discuss how we reopen the government. And Speaker Johnson and Republicans were going around saying, this is Democrats' fault. This is Democrats' fault. And so what we're seeing is now the truth is coming out with these, the negotiations now potentially, reaching a place where they're going to be moving forward, and SNAP benefits continuing to be in danger, air travel being impacted. And now you see that the tide is turning just a bit. So folks are really holding their Republican leadership accountable in a lot of these cases where they had been openly blaming Democrats because that had been the message. I think these three big contests on Tuesday are going to be a real call to action for Republicans ahead of the 2026 election cycle to repair their image, to repair the damage that's been done by this shutdown.
Well, I'll tell you, this is really incredible stuff. And next week, we'll see if the impact of these elections plays any role in the way this is resolved. It's Halloween, by the way. You look fantastic. I just have to give you credit for that here on TV. But it's also Game 6 of the World Series, the matchup between the Dodgers and, yes, the Toronto Blue Jays, with the Jays currently up 3-2. Joining us now live, we'll connect the dots to politics here in a moment. From outside Rogers Center, downtown Toronto, is John Venavali Rao of CTV National News. What are we in for this evening, John? And is this a proxy for our trade wars?
Well, certainly there's a lot of Canadians, after everything that's happened this year, they would certainly love it if this was the year that a Canadian team won the World Series on Canadian soil. That is the hope of fans here in Toronto. Remember, this is a city that last saw a World Series victory back in 1993, so it's been 32 years. Fans here are very hungry for a win tonight. And also remember, the Blue Jays coming into this series, they were seen as the underdogs. It was almost assumed that the Dodgers would mow them down like they did with the Brewers. And here these Blue Jays have been fighting back and winning games. We had that monster 18-inning game, and then the Blue Jays came back and won 2 in L.A. I understand that there's even lots of Americans who are now rooting for the Blue Jays, hoping that they will defeat the Dodgers. And on that front, perhaps that has united both Canada and a lot of Americans on this baseball field.
All right. This is dangerous talk. John, thank you so much. Good luck up there, CTV National News. Let's bring the panel back in for their take on this. Rick, you're a baseball fan. Who's pulling for the Jays here in the United States? Is this real, and is it a proxy for our trade war?
You know, I don't think it's a proxy, but it's certainly part of the story. Look at the Stanley Cup. Stanley Cup.
Yeah.
I mean, the Oilers, I mean, right? You cannot make this narrative up. I mean, all of a sudden we're in this like trade war and a culture war with Canada, sparked by the president's desire to shake things up.
Yeah.
And here we have these two teams, incredibly well situated to dominate one and another. But I've totally fallen in love with this pitcher, Savage, on Toronto's team. I mean, when you have a guy like that, 24 years old, lights out, you gotta root for those guys.
Well, it certainly makes it a lot more fun. How many senators are pulling for the Jays after they voted to check the president on Canadian tariffs?
I suppose a number of them are. I mean,
Not
sure.
really.
This is potentially a proxy war for what we're seeing playing out on the international stage when it comes to trade. But I think probably less so, just given that some of these tensions have cooled. But we see they might heat back up, and you might see us a little bit more divided in the coming days.
Fascinating. Well, speaking of the Senate, the president has an idea to go nuclear. We've heard this before. Rick, you spent enough years in the Senate. You've heard it a lot of times. It's kind of a perennial argument that we have to end the filibuster. That did not land well in John Thune's office. Is that going to happen?
Yeah, no. Look, Congress does not want to talk about this.
Yeah.
And it's ironic, too. When you think about it, most people don't look. They have no idea what it is, how it works, what cloture means. And good for them, right? I mean, like, it's bad enough we know what it means.
Mm-hmm.
And the reality is that Congress knows the key fact that sometimes Republicans are in charge and sometimes Democrats are in charge. And the one thing that knits the Hill together is the reality that with this filibuster rule, Democrats and Republicans have to agree on things that are going to go through Congress, by and large.
Let's hear from Mike Johnson, the Speaker of the House. Of course, it's not his chamber, but he's got feelings about this, too. Here's what Mike Johnson said about killing the filibuster.
The filibuster has traditionally been viewed as a very important safeguard. If the shoe was on the other foot, I don't think our team would like it. The Democrats, look, they've said what they would do. They would pack the Supreme Court. They would make Puerto Rico and D.C. states. They would ban firearms. They would do all sorts of things that would be very harmful for the country. And the safeguard in the Senate has always been the filibuster.
All right, so John Thune and Mike Johnson are speaking the same language here, Janae. Is this going anywhere? If President Trump wants it, what do you think?
Well, we know that what President Trump wants, he often gets.
Right.
I think it's this idea that it's a safeguard is probably something that we could debate. But listen, like, it has been sometimes used and weaponized in certain ways by both sides, right? But I think this is, to his point, something that each side has often used to their benefit as well. So I don't know that these conversations about this getting rid of it are going to go anywhere. But look, President Trump has been a real force. When he wants something done, it tends to happen. So we'll see how much pressure they can put on him and hold this back.
Well, we started by talking about the air traffic control system potentially leading to an end of this shutdown. If it's not the filibuster, if it's not air traffic control, is it SNAP benefits? We saw Katie Britt sit down with Chuck Schumer, of all people, yesterday. Rick, where's this going?
Yeah, you showed a chart earlier on the show that indicated that a lot of Republican areas around the country are going to be impacted significantly by these kinds of cuts. And by the way, they're not the only things getting cut. I mean, we're going to see the impact of all these furloughs in Northern Virginia on this Senate race, or the governor's race in Virginia.
Yeah.
So I think it's a cumulative weight of all this. I mean, for whatever reason, this shutdown hasn't gelled in the public mind. There's not one thing that everybody's been like screaming about. And I don't know if that's the administration's success of sort of fouling off, military families getting paid and things like that.
Yes.
I don't know why they're challenging using supplemental funds to make sure SNAP benefits get paid. They're there for that reason, but they're saying we don't want to use them. So I think it's just the overall weight and the changing political nature of how the public views Republicans now being responsible. That means if you're an office holder, you want to be then the person that solves it.
Fascinating. We have learned of a new renovation tonight at the White House. I don't know if you've seen what happened in not the Lincoln bedroom, but the Lincoln bathroom. President Trump on Truth Social, if we can see the images, wanted to show off the new marble that he used in renovating the Lincoln bedroom bathroom. But if you take a closer look, if you're with us on Bloomberg TV or on YouTube, they captured a shot out the window, Rick and Janae. And of course, you're looking right down into the area where the East Wing was demolished. And it's a pretty interesting look at the construction. This again, Janae, has preservationists up in arms. Are we pearl clutching over the Lincoln bathroom?
I think what we're pearl clutching over is kind of this contrast of what's happening against the backdrop of this shutdown, and we're seeing constant images of this renovation. I mean, the American people are sick of this shutdown. Democrats, Republicans are sick of this shutdown, and yet there's demolition and construction happening on the White House. I mean, it's a little bit unsettling how tone deaf the White House is to what's happening to everyday Americans who are running out of benefits and don't have that safety net, and yet we're talking about this construction. Is this a necessary thing to be doing? I think we should be asking ourselves. You're talking about $200 million in renovations, right, when we can't open the government and when protections are about to expire. Quite strange.
I'll tell you what, we'll see what happens to the bathroom or what comes next at the White House. Rick Davis and Sinead Wortel, we thank you. This must be a Friday show, right? Check out the Washington Edition newsletter on the terminal and online for the latest on our renovations. We thank you for joining us, as always, on Balance of Power. Happy trick-or-treating. I'm Joe Matthew in Washington. This is Bloomberg.
Connecting the dot between what's at stake and what is possible.
Good morning. This is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda. Oil gains for a fourth day after OPEC Plus agrees to hold off on hiking output from January. This as the producer group faces the prospect of ballooning oversupply. The White House says China will suspend some rare earth curbs and halt probes into US chip firms as trade tensions continue to ease. Plus, earnings crossing the terminal from Europe's largest budget airline. We will be joined by the CEO of Ryanair, Michael O'Leary, later this hour. The earnings dropping right now for Ryanair. Second quarter profit after tax coming in at a solid beat, 1.72 billion euros. The estimates have been for 1.67 billion euros. Revenues in the second quarter coming in slightly higher than the estimates, 5.48 billion euros. The estimates had been for 5.45 billion. Again, profit after tax, it's a beat for Ryanair, 1.72 billion euros. The load factor in the first half coming in line with estimates, 95% is the load factor in the first half. And Ryanair sees full-year customers, the numbers at 207 million. They had seen 206 million, so that's above their previous guidance on customer numbers for the full year. The stock is up just shy of 40% year to date. In terms of an interim dividend, that is also coming through, 0.2 euros per share in the second quarter. But these are first half numbers, and we'll get more details and a response from the CEO of Ryanair, Michael O'Leary, joining me in the studio. That interview at 6:40 UK time. We'll be talking about those Boeing deliveries, of course, and how they are thinking about routes around Europe as they cut some routes to countries like Germany and Spain. Let's get to the broader markets right now. Earnings is certainly part of the optimism that you're seeing percolating through the equity markets. Yes, you had losses of around 0.5% by the close on Friday in Europe, but futures are pointing higher, as you can see, up 0.2% on the earnings story, on a further improvement in terms of US-China relations, with the news out over the weekend, at least from the White House, saying that China will be easing further curbs and probes, of course, of US chip firms. FTSE 100 futures pointing to gains of 21 points. It's the BOE decision day, of course, on Thursday. S&P E-mini stateside looking to gain 0.2%. Nasdaq 100 futures pointing higher by 0.3%. Global equities at a 7-month rally, of course, and the catalysts seem to be aligned for further gains. Let's flip the board and have a look cross-asset then. In terms of the Treasury markets, closed, of course, today, at least in the morning, because of a Japanese holiday. They'll reopen later today, so we'll get a gauge on what's happening in terms of US Treasuries. Euro-dollar at 1.15. The pound at 1.31 as we look ahead to the BOE, of course, and counting down to the budget at the end of this month. Brent in focus, commodities in focus this morning. Oil at $65 a barrel, up 0.6% on that decision by OPEC Plus over the weekend, as they think into the first quarter of 2026 to pause in terms of adding additional supply onto the market. Gold just above 4,000 as China cuts some of those tax incentives. We'll get more details on that shortly. Up 0.3% on the yellow metal. Let's cross over now to Winnie Su, who's standing by in Hong Kong for a check on the Asian markets. Winnie, what is standing out to you?
Morning, Tom. It seems like we are starting off in Asia quite on a positive tone this week. So we are seeing MSCI Asia ex-Japan, because Japan is on a holiday, up slightly less than 1%. And we are having a bit more gains and a bit more momentum in the afternoon session. Technology shares are leading gains here. Specifically, you see the South Korea's Kospi Index up more than 2%. And the top gainer today is SK Hynix, up over 10%. Now, it is that renewed AI optimism after NVIDIA signed these new partnerships with the Korean companies. Now, flip the board. We look at another sector that's really catching eyes today, and that is the gold-related names in China, whether it's jewelries or miners, down across the board. Like you mentioned just now, we had over the weekend Chinese government saying that they have stopped the tax incentives for gold, and hence that is likely going to hurt the demand for the mass products, and especially when we're expecting the industry to raise prices for these related products. Now, overall, when we look at the Chinese market, we take a look at the next board. The broader market is also gaining a bit of a momentum here. Earlier in the morning session was a bit of a mixed, but into the afternoon session, slightly in the green here, with major indexes, both offshore and offshore, gaining a bit more momentum after a big sell-off on Friday. So overall, that tone from the Trump-Xi meeting last week was quite positive. You've got a trade truce here, and also China saying that they're going to suspend some of the rare earth export controls. So that's lifting sentiment. However, on the other side, we have a bit of a weak macro picture here, with the latest private survey numbers showing that China's PMI numbers are still weaker than expected, and hence a bit of a mixed picture here as investors trying to gauge the weakness in the economy, and also some of the external tailwinds that we are seeing. Back to you, Tom.
Winnie Su in Hong Kong, thank you very much indeed with the check on the Asian markets. Now to the oil story then. Oil advancing a fourth day after OPEC Plus said it planned to pause output increases in the first quarter of 2026, following another modest hike for next month. The organisation said it would raise production by about 137,000 barrels a day in December, matching increases then scheduled for October and November. For more on this and the context, let's bring in Bloomberg's Jumana Pasecci, joining us from Abu Dhabi. Jumana, you were watching this decision closely. What stood out to you? What was the rationale for the pause that they're penciling in next year?
Yeah, that's right. So we got a bit of I would say, a hawkish surprise out of OPEC Plus this weekend. In line with market estimates, they did opt to increase supply by another 137,000 barrels a day as of December. But the surprise came with their decision to pause with extra supply in the first quarter of next year. So just taking a step back, taking some time to pause, reevaluate the market, and see whether the market can actually handle extra supply coming in the first 3 months of 2026. And this is interesting, right? Because OPEC Plus so far had been committed to bringing back these extra production barrels to the market. Over the course of the summer, they announced a putback of 2.2 million barrels per day. Since then, they've announced this extra clip, 137,000 barrels a day, twice, 2 of them in a row. But now they're taking a step back, and it perhaps is a reflection of some caution coming through. And we've spoken about this in the run-up to the decision. Analysts out there are expecting quite a significant supply glut to hit as of next year. IEA have it as much as 2 million barrels a day. And so in light of that, they're probably a bit wary about wanting to put too much production back to the market. And also bear in mind that one of the members of OPEC Plus is actually Russia. And Russia had been pushing for smaller putbacks. And so it looks as though, this is an agreement that came through at a group level to perhaps be a little bit more cautious about what they will be doing next year. And if you look at the reaction today, the market has taken it well. We are seeing a bit of an uplift for the price of oil. And even some analysts out there, likes of Morgan Stanley, have actually upgraded their forecast for where they think oil is going to end up. Not necessarily because of today's decision in terms of actual production increase, but in terms of the signaling it introduces to the market, and that OPEC Plus are willing to step back if the market conditions don't allow for this oil to be steadily absorbed by the market. And so on the back of that, you are seeing some stabilization. But of course, still plenty of talk there about how on one hand you have this upcoming supply glut, and then the other hand, there's still those geopolitical considerations to think about with the new Trump administration sanctions on those 2 Russian companies and what that could mean for Russian production.
Well, yeah, indeed. And in light of all those different factors, a question for you. On the ground in Abu Dhabi for us today, Jumana, at ADIPEC, what is on the agenda? Are those the key kind of subjects? What is percolating through the halls there? What is top of mind for people?
Yeah, you've got to distinguish between the short term and the long term when it comes to energy. And this is an energy conference, not specifically oil, of course. And you look at some of the U.S. Big oil companies last week, energy companies, the likes of Exxon, Chevron, they're continuing with their production plans despite the lower oil price backdrop. And a lot of the conversations here are about some of the more medium and long-term drivers of energy demand. And you won't be surprised to hear this, Tom, given you spent a lot of time looking at this sector yourself, but artificial intelligence and the sheer amount of power that these hyperscalers, the data centers, are going to command in coming years. Where is that energy going to come from? Well, you're looking at renewable sources of energy, you're looking at low carbon solutions there, but then equally, we're just speaking to EQT, one of the biggest nat gas producers in the U.S. About an hour ago, we were talking to them. They said that natural gas is increasingly going to play a dominant role in powering up some of that incremental energy demand that's going to come through. So many of the discussions here are going to be about that intersection between artificial intelligence and energy, not just in terms of energy demand, but also in terms of how artificial intelligence is improving operational efficiency for many of these energy companies. We just spoke to Gecko Robotics. They're doing a lot of work with ADNOC in terms of introducing robots to help analyze data on the ground. These robots get access to parts of oil infrastructure that humans don't typically get access to, feed back that information into a big data set that, again, allows ADNOC to improve their own efficiency. So there are loads of those types of discussions taking place here. Really fascinating to draw the distinction, perhaps, between the short-term outlook for oil and the long-term outlook for energy markets.
Okay, there you go. Robotics and energy. Bloomberg's Jumana Pasechi at the ADIPEC conference with that take as well, and the details in terms of that OPEC Plus decision. Jumana, thank you very much indeed. Let's get back to the equity story. Asian stocks are in the green this morning alongside US futures, suggesting the seven-month rally in global equities may still have room to run amid strong tech earnings, talking of tech, and easing US-China trade tensions, at least for now. For more, let's bring in Mark Cranfield, our Bloomberg MLive strategist. Mark, just talk us through then some of the catalysts for the upside that we continue to see in equities and whether or not that's likely to be sustained.
Mostly one catalyst. Jensen Huang came through Asia last week, signed loads of deals, as Winnie was talking about earlier, and his stardust is just lifting everything across Asia, particularly, Korea, the Korean markets, the Kospi index in particular, has almost become a leveraged play on the whole AI theme, and that's just running ahead of itself. even a company, an old school company like Hyundai, has signed a deal with NVIDIA to build an AI factory which will work with the Korean government to do mobility studies as well. So wherever you look across the Korean landscape, somehow AI is playing a role. NVIDIA is closely involved. Today it's Amazon. They're also lining up a deal with SK Hynix as well, which is a stock which was already performing fantastically as well. So Korea is really at the epicenter. Japan is closed today, but there's also AI-related things going on there. We'll probably see that have a pretty strong start to the month when they reopen tomorrow. And also in the background, as we mentioned earlier, people are relieved that the situation between the US and China is on a much more even keel. They seem to have kicked the boat forward a long way. They're giving themselves up to a year to get more deals done and to talk about tariffs being pushed into the background. So great relief from that point of view. That will help, particularly as you've got Tencent and Alibaba coming up in the next couple of weeks. Their earnings will be a very big factor for the markets out here in Asia as well. So all in all, it's just a question that people can get back to thinking about the valuations in terms of AI. Is it producing what it's supposed to in terms of results? And just generally enjoying this fantastic story that Jensen Huang has really festered here across the Asian markets.
OK, the NVIDIA Stardust is there. What are the potential risks ahead, Mark? We have the BOE later this week here in the UK. Markets have looked past that challenge from the Fed's Jay Powell, suggesting that December is not a lock-in. Is it central bank action? Is it data? What could derail the upside?
Certainly, you have a lot of Fed speakers coming out this week now that they've got the meeting behind them. There will be several. They don't all agree with Jerome Powell. We're likely to hear some other sides of the coin. Jerome Powell pushed back a bit on the idea that there could be a rate cut in December. That might not be the case from the rest of the speakers. We would expect 2 or 3 of them to be a little bit more excited about that. If anything, that'll be good for the equity market, the fact that the rate cut will still be on the table for December. Bank of England, very close decision. The reports are that probably the governor will have the final choice. But considering the fact that the UK budget is later this month, it will be surprising if the Bank of England want to do anything until they've seen the details of what Rachel Reeves has to offer later in the month, because that is a very big deal for the UK economy and for the direction of monetary policy. So they'll probably reserve judgment. They may well put that in their outlook, say that we're not doing anything for now, but depending on how much taxes go up and how much there is missing in terms of the UK budget, we may want to make a stronger decision at the next one. So a lot depends on that. And then, of course, as you were talking about earlier, oil as well is back in the frame. Hasn't been a big factor for markets recently, but if oil prices continue to tick up this week, that has inflationary impact, particularly for the US Treasury market. We may see that play out later in the week as well.
OK, the linkages between oil and the Treasury market. Bloomberg MLive strategist Mark Cranford. Mark, thank you very much indeed. Here's what else to think about through the rest of this week then. On Wednesday, the Supreme Court in the US will have a hearing on Trump's tariffs. Of course, the legal challenge is there. We'll get more details then on Wednesday. Also on Wednesday, earnings from Novo Nordisk as it faces that competitive challenge from Eli Lilly around the obesity drug market and whether or not he continue, of course, to build out market share. The stock, of course, has been challenged year to date. And on Thursday, as Mark was mentioning, it is the BOE decision and the monetary policy report. Bets on a cut have increased, though they are in the minority. It would be a surprise, but nonetheless, given the inflation dynamics in the UK seem to be aligning slightly more closely with the BOE, there is at least a chance they could go on Thursday. Coming up, China suspends some rare earth export controls and terminates investigations targeting US chip companies. We're going to bring you the latest next. Plus, Ryanair reports a beat in second quarter profit after tax. We're going to be joined in the studio by Michael O'Leary, the Ryanair CEO, at 6:40 UK time. Stay with us for that conversation, always lively. That's coming up. This is Bloomberg.
Connecting the dot between what's at stake and what is possible.
Welcome back. The White House says China is to suspend implementation of additional export controls on rare earth metals and terminate investigations targeting U.S. companies in the semiconductor supply chain. But U.S. Treasury Secretary Scott Bessent says that despite the deals, the U.S. and its allies need to be wary of Beijing.
The Chinese have cornered the market, and unfortunately, at times, they prove to be unreliable partners. I think, and I hope, after the agreement and the goodwill between President Xi and President Trump in Korea, that we can depend on them to be more reliable partners, and the rest of the world can depend on them. But we can't take that chance. We don't want to decouple with China, but we're going to have to de-risk.
Let's bring in Bloomberg's China correspondent Min Min Lo now, joining us out of Hong Kong for the latest. Min Min, just get us up to speed on what we've been hearing then from the US and China over the last 48 hours or so, both in terms of trade and rare earths, but also Taiwan.
Yes, and you heard Scott Bessent earlier that strategic suspicion of China still remains despite some of the agreements that both sides had reached in South Korea. But the White House has put out a fact sheet of what exactly has been agreed upon. Bear in mind, this is entirely from the White House. The Chinese side has not released their version of the list of agreements, and I think markets are still waiting for a joint statement or hoping for the joint statement from both sides. But what the U.S. is saying is that China is agreeing to buy a certain amount of soybeans, 12 million metric tons to be exact for this year, and 25 million metric tons for the next 3 years. China is agreeing to take actions on fentanyl in exchange for the lowering of those tariffs. And the big win for the U.S. is those export curbs on rare earths that will be delayed for at least a year. And it's not just the actions that China has taken since October of this year. It's also the measures they have taken since April of this year and since October of 2022. It means that general licenses will now be granted for rare earths, for the likes of graphite, antimony, gallium, germanium as well. So a big win for U.S. national security. In addition, China will also end its investigation into U.S. chip companies like NVIDIA and Qualcomm. It will facilitate the resumption of shipments from the Chinese unit of Nexperia. That's the Dutch chips firm that had been seized by the Dutch government after the U.S. expanded the rules around its entity list. Now, in exchange, the U.S. is going to extend the trade truce by another year, and it's going to roll back the expansion of the rules of the entity list so that the subsidiaries of those companies are not included. What's not been agreed upon or not been talked about is Taiwan and Ukraine. But we spoke to David Lee Rao-Kui, a former PBOC advisor this morning. He was quite optimistic that there will be at some point over the next 12 months a broader discussion of these longer standing issues, especially given that the tone from this meeting, it seems like the U.S. has been treating China as an equal partner, President Trump describing it as a G2 event, and I think the Chinese leadership has been taking that as a very positive sign.
OK, Bloomberg's China correspondent Min Min Lo, thank you with that update, of course. Coming up, we're going to be discussing how Italy, meanwhile, is leading the way in Europe's efforts to build energy resilience through battery storage. That is next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Happy Monday, everyone. Global energy storage is expected to surge over the next few years as economies balance intermittent power from renewables like solar and wind with rising demand. And as part of Italy's push to integrate more renewable energy into its grid, it's awarded all battery storage in Europe's largest storage auction to date. There's some significance to this beyond Italy as well. Let's bring in Sofia Pirelli-Rocco of Bloomberg NEF's European research team to join us with the details in terms of the auction and the wider implications. Talk to us about the importance then, Sofia, good morning, of these battery projects and Italy's role as well.
So renewables don't always produce power when it's most needed, but batteries can help by charging when there is excess solar and wind supply and discharging back into the grid when power demand and power prices are also highest. And to roll out these batteries, the Italian government has put this 17 billion euro Maxi scheme, which hands out 15-year long-term contracts, which guarantee stable revenues to these project developers. And these contracts are awarded to the cheapest battery projects bidding in an auction. The first auction happened on September 30th, and it was a massive success with 4 times oversubscription, meaning that there is massive industry interest.
OK, so there's huge interest. Who came out as the winners? And talk to us about the pricing as well, and whether or not how these companies can make money if prices are low enough to, of course, to meet the aspirations of the Italian government.
So winning bids came at around 13,000 euro per megawatt hour per year, and that's extremely low. It's 67% below the maximum ceiling price for the auction, and that really shocked industry. In terms of the biggest winner, that was Enel, who took over half of the awarded capacity. And part of its success was because it had already existing grid connections, which allowed it to bid even lower. But overall, the story is that battery prices are really declining really fast. And one of the reasons for that is because there is Chinese battery oversupply, but as well as Trump's tariff, which have meant that these battery technology producers have been starting to look at Europe, where competition is increasing and battery projects costs are declining very fast.
And very briefly, really interesting, what do these results mean more broadly in terms of Europe's energy transition?
So Italy's auction was a massive success because by de-risking revenues for projects, it allowed to get many cheap batteries on the ground. And potentially, as other governments look to implement more batteries, other governments might start doing a similar approach and taking on these long-term storage auctions.
Sophia, fantastic. Thank you very much indeed. Really important story with the details and Italy's role in that when it comes to battery storage, but more broadly for Europe's energy transition. Sophia Pirelli-Rocco, analyst from BNF's European research team. Thank you very much indeed. Coming up, supercomputers in focus with the CEO of IQM. That's coming up. Stay with us. This is Bloomberg. Good Monday morning. This is Bloomberg Daybreak Europe. I'm Tom Mackenzie in London. These are the stories that set your agenda. Oil gains for a 4th day after OPEC Plus agrees to hold off on hiking output from January. This as the producer group faces the prospect of ballooning oversupply. The White House says China will suspend some rare earth curbs and halt probes into US chip firms as trade tensions continue to ease. Plus, Ryanair reporting a beat in second quarter profit after tax. We're going to be joined in the studio by Michael O'Leary, the Ryanair CEO, shortly. Let's get to the markets then. Earnings have certainly been a catalyst. You have seen a 7-month rally for global equities, and the futures picture suggests that will continue in the session today. European stocks then, after dropping on Friday by around 0.5%, looking to add about 1/10 today. So pairing some of those losses. FTSE 100 futures looking to add 14 points. S&P E-minis just up by shy of 0.1%. And Nasdaq 100 futures up 37 points with that AI momentum trade still firmly intact on the back of those earnings. Let's flip the board and have a look cross assets. Japan closed, so we have no US Treasuries trading, at least currently. They will, of course, start trading in the US. Session later today. Euro-dollar at 1.15, largely unchanged on the single currency. The pound at 1.31. We are hearing, of course, that Rachel Reeves is planning potential additional levies on high-valued homes, potentially changes there as well, and potential tax hit to those wealthy looking to depart the UK. Brent at $65.20, up 0.7% on the back of that OPEC Plus decision to pause additional output in the early part of next year. Gold just above $4,000 per troy ounce, up 0.3%. China scrapping some tax incentives when it comes to the retail space there. So a check on the markets, but broadly the picture on European equities is modestly positive. Now, as the race to build and supply AI to the world heats up rapidly, and certainly AI is part of that upside coming through for global stocks, one European supercomputer firm is making a growing impression on the tech market. IQM has announced a collaboration to integrate NVIDIA systems into its computers, as it also raised over $300 million in a Series B fundraiser, one of the largest when it comes to quantum computing globally. We can now bring in Jan Goetz, the co-CEO and co-founder of IQM Quantum Computers. Jan, thank you very much for your time. So the momentum is there for you and the team. Let's start with NVIDIA partnership, and then we can talk about the funding and the priorities. How significant is that partnership with the company, Jensen Huang and team, and what that means for you and the business going forward?
Yeah, thank you. This is a very significant partnership for us, as quantum computing holds the potential to solve problems that you cannot solve with any big supercomputer. But for this to work, actually, we need to integrate our quantum computers with GPUs and CPUs. And this is exactly what we are doing in this NVIDIA partnership. We are bringing our hardware closer together so that they can work hand in hand, quantum computers and graphical processing units working together to solve the world's hardest problems.
And you've raised about $600 million in total. You have the partnership with NVIDIA. You've raised the capital. How central is the US market to allocating that funding, Jan, in terms of the potential scale of that market?
Yeah, the US market is super important for us. From a business perspective, we either sell computers to data centers or we sell computing time through the cloud. And in both those segments, actually, the US market has a leading position. So for us, coming from Europe, we see this actually as a major growth opportunity. Having started here, we are now developing strongly our business in the US market. And for this, the partnership with NVIDIA and other partnerships we're having are actually very important.
In terms of go-to-market in the US, Jan, how do you differentiate IQM from the giants of IBM, Google, and others there? What makes you stand out? How do you make that pitch, given the developments that both of those key companies have come through when it comes to quantum computing?
When it comes to quantum computing, we are the global leader for on-premise sales of quantum computers. So we have sold and delivered most quantum computers globally as on-premise devices into big data centers. And this is really what makes us special. We have put a lot of effort on our product, having best-in-class quantum computers that perform from a quality perspective and reliability perspective much better than any other machine. And this is really what brings the customer into a position where they can solve problems that they could not with any other computers. And from this perspective, we have a very good standing even in the US market.
And I know you sell and deploy both the hardware and software into research labs, into universities, and at the enterprise level. Where is the enterprise demand coming from at this point, Jan?
Quantum computing has the potential to disrupt any industry. You start in the chemical, pharmaceutical industries, but also finance, logistics, supply chains, these kind of things. And this means all of those companies, they need to get ready for quantum computing. They have seen now in the AI part how fast it can go and how fast the train can arrive. And they don't want to be late for the quantum train. And this is why they're all getting started now to build up the know-how, build up team, and integrate quantum computing processes into their workflows. So we are actually seeing an increasing demand of corporate customers using our quantum computers. And this actually goes also particularly well through our cloud offering.
When do we get to the point? Is this the year? Is it next year? Is it beyond then when we go from quantum as a research project, they're being tested, there are pilot projects at enterprise level, to real scalable commercial use?
Yeah, it's not going to be that black and white that we have a certain year where suddenly everything works, but it's a steady process. Similar to semiconductor industries, where we've had Moore's Law active for decades, we expect that in quantum computing we see a steady progress. And I think if you observe the industry, we are reaching our milestones. And this means that actually every year we are bringing out more powerful quantum computers. And we do expect the first commercial use cases in the next couple of years. But this is just the beginning. We will start probably seeing use cases in quantum chemistry, so simulating better materials or maybe pharmaceuticals. But then actually, as the computers get more and more powerful, we will unlock use case by use case over time.
What are the biggest technical hurdles to some of those goals at this point then?
We still need to scale the hardware. So we know algorithms, we know what needs to be done, but the processors are today not yet powerful enough. So this means we need to have bigger quantum processors and we need to have higher quality in those. And this is exactly where we are investing in heavily with IQM. So you mentioned our Series B fundraise, and a lot of this actually will go into expanding our chip fabrication facility. We will invest more into error correction technology, which is super important for quantum computers to work, but also the software stack and developing a software development kit so that more and more users can actually use quantum computing without maybe having a quantum background or a quantum PhD. So make it much more easier to adopt the technology.
Where does Europe stand in the quantum race, before we let you go, versus the US and China, Jan?
Yeah, I think it's a race and it's a long shot, so it's a marathon. And I think Europe has a very good starting position, given that the whole technology comes out of the research labs. And we do have quite a lot of very strong research labs in Europe. What we need to do now is to scale the technology. And this has been a challenge for Europe in the past in other technologies. But I do believe that we have an actual chance to do it right this time in quantum. We do see a lot of support from the governments. We actually see no new growth funds coming up, particularly for deep tech and quantum. So from this perspective, I don't think there is a clear leader at this moment, and it's going to be a long journey there. And we do have a very good chance, I think, also out of Europe to be a global leader in this technology.
OK, Jan, we appreciate your time. And congratulations on the partnership and the raise, of course, most recently. Jan Goetz, co-CEO and co-founder of IQM Quantum Computers, joining us out of Finland. Thank you. Now, to some of the stories making the news this Monday. Bloomberg learning that Pony AI is set to raise $863 million in its Hong Kong listing. That's US dollars. Sources say the robo-taxi firm's listing has attracted ride-hailing giant Uber, which is in talks to invest about $100 million in the share sale. Proceeds from the listing will fund large-scale rollout of its level 4 self-driving tech, in addition to further research and development. And Berkshire Hathaway's cash pile surged to a record $382 billion in the latest quarter, as earnings jumped at Warren Buffett's conglomerate. The firm's cash hoard grew as Buffett avoided deals during the quarter. Insurance underwriting profit more than tripled. Berkshire also declined to buy back shares for a 5th straight quarter. Coming up, Ryanair says it expects to exceed its passenger growth target for the full year. CEO Michael O'Leary joins me to discuss the airline's latest earnings. That is next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Ryanair says it expects to exceed its passenger growth target for the full year, with travel remaining strong. This, of course, is Europe's biggest budget carrier, reported a beat on second quarter profit after tax. Joining me on set, Ryanair CEO Michael O'Leary. Michael, always great to get your time at the back of the earnings. Strong sector numbers for Ryanair. What underpinned the strength? The summer season clearly key when it comes to this most recent quarter. Do the trends continue into the next quarter?
Yeah, I think the overriding trend, Tom, in Europe, I think this year and for the next 5 years is going to be capacity constraint. The manufacturers are way behind on their deliveries. In fact, Boeing left us 29 aircraft short this summer. And, we're the airline that adds more capacity in Europe than any other airline. So if we're short capacity, we were only able to grow traffic 2% in the September quarter. But we were able to recover all of our last year fares went down by 7%. This year they've gone back up by 7%. So we've recovered last year's fare decline. Kept costs under control. Unit costs are only up 1%. And profits as a result are up 20% to $1.72 billion in the second quarter.
What do fares look like guiding into the current quarter?
They look strong. I mean, we're moving into the winter period now, so we cut capacity, but forward bookings are about a percentage ahead of where they were this time last year. And, you know, it looks we're growing increasingly confident that we will hold on to or recover fully that last year's 7% fare decline, that will continue through the year. Although the second half comps are a bit tougher because last year we saw a fair recovery into the second half. But we're pretty confident now that we will recover fully last year's 7% decline.
OK, and on passenger numbers, so you're forecasting there's an increase from 206 million to 207 million. Is that you and the team being conservative, Mike?
No, it's actually, it reflects the fact that, you know, Boeing are doing a remarkable job over recent months of delivering us aircraft. Now, they asked us to take aircraft in August, September, October, which is, you know, is the wrong time of the year for deliveries because we can't use them. But we said we'll take them just so we secure them for summer 2026. So we have taken 23 of the 29 aircraft they left us short in the last 3 months. There's 2 more coming in November, and then the last 4 arrive in January, February next year. So we are confident now we have all 29 of those aircraft delivered well in advance of summer 26. So next year we'll grow from 207 million this year to 215, 216 million passengers next summer.
215, 216, and that is you're fully confident you get the full 29 by February of next year from Boeing.
Yeah. And the aircraft they're delivering now, much better quality. We're finding no defects in any of the aircraft. I think Kelly Ortenberg, Stephanie Pope doing a really good job. I think Boeing are really getting their act together.
And you've guided on a reasonable, you haven't given a specific number when it comes to guidance, but you've guided on reasonable profit growth.
Yeah, I think so.
What does reasonable profit growth look like?
I mean, look, you know, if traffic is up 7%, you know, in the first half of the year, our traffic is up, profits are up 40%, but that's distorted because we had a weak prior year comp in Easter, only half of Easter was in. So it's difficult to put a number on because it's so heavily dependent on the close-in bookings through Christmas and the New Year period. And then into the spring. So we're not willing to put a number on it now other than to say, look, traffic, we're growing faster than we thought we would. It'll be 207 million. That's about 3% traffic growth. Profit, we think there'll be a reasonable profit recovery, but I'm not going to put a number on it.
And the winter number, you've said 1% increase over that, or the current quarter, 1% increase on the same quarter last year. Is that right? 1% increase?
No,
in the current quarter?
No.
What are you looking at then for the winter season in terms of booking numbers?
Also, in terms of we expect that traffic will continue to. There's a reasonable prospect now we're going to be grow 3, maybe we might get to 4%. It's from 200 to 207 million now, so we've got 3.5% growth for the full year. The
MAX 10 certification, we've got a time frame now, mid 2026. How confident are you, particularly given the government shutdown in the US?
I mean, the government shutdown will be over well before that. I mean, Boeing say they're making very good progress. We've heard that back from the European agencies as well. EASA are saying that, you know, it looks in good shape. The critical thing, as long as it gets certified, the MAX 7, MAX 10 in the middle of 2026, our first deliveries aren't until the spring of 27. And Boeing have written to us confirming that they'll meet those delivery dates. So we're pretty confident now that we'll get our first 15 MAX 10s in the spring of 2027.
And if that time frame slips, what does that mean for growth plans?
It just means our growth will slip a little bit. But I think I'd be more optimistic now. I think we'll be bringing it forward a little bit. I think we'll do 216 million passengers in summer 26, which is FY March 27. And then we start into an order book of 300 MAX 10s out to 2034 that will see us grow traffic from 207 million this year to over 300 million passengers. So we're at the dawn of a very exciting growth period for Ryanair. The good news as well this morning is we've hedged fuel out into next year. So we were able to jump on some of the recent fuel weakness. This year we're hedged to March 26 at $76 a barrel. This morning we've announced we're now 80% hedged to March 27, but at just under $67 a barrel. So about a 10% saving on our fuel costs next year. We bank that. It means we can offer our passengers lower fares and really accelerate growth with the 29 new aircraft we now have from Boeing.
OK, and at a time when OPEC Plus has said that it's going to be putting less oil on the market in early next year, with prices slightly picking up in the session today. You've been cutting routes in Germany and Spain, adding new routes to Sweden and Hungary. Is there ability for Sweden, Hungary and other nations outside of the core markets like Germany and Spain to absorb more of those routes? Does that continue?
I mean, the trend across Europe, Tom, is you have a consolidation going on between the legacies. So Lufthansa has bought what was Alitalia. Lufthansa, Air France, IAG are all queuing up to buy TAP. They're all cutting capacity. And there's a real, if you like, schizophrenia in Europe. You have most of the growth economies, Sweden, Croatia, Hungary, Italy, have worked out are abolishing their environmental taxes on air travel because they're, if you like, a break on growth, and they're being rewarded with dramatic growth. We're switching capacity to those countries. The three countries who don't get it are the dumb Germans, the stupid French, and Rachel Reeves, who, you know, got elected a year ago here in the UK on a campaign to deliver growth. We wrote to her, said, congratulations, abolish APD, if not across the UK, at least outside of London, abolish the APD in regional UK, and we will give you 50% traffic growth in 5 years. What does she do? She puts it up by £2. I mean, she hasn't a rashers how to deliver growth. She puts up employment taxes, puts up APD. APD is going up in the UK by £2. Mm-hmm. We wrote to the Treasury and said, this is the dumbest idea even you lot have come up with. I got back a stupid letter from a Treasury Minister saying, a £2 increase in APD is only a 1% increase on average fares. Clearly, the Treasury are paying average fares of £200 for their air travel. They must all be travelling with BA. Our average fare is £45. APD in April will go to £14, a 33% rate of tax.
We're talking about air passenger duty.
Air passenger duty. And they are killing the region. So all of the airlines here in the UK have said, if you put up APD, we will switch capacity out of regional UK, Glasgow, Edinburgh, Manchester, Birmingham, airports that are not full, and they'll move to those countries like Sweden, like Italy, like Hungary, like Albania, where they're abolishing environmental taxes.
So I guess the Chancellor would say, look, we need to raise taxes from somewhere. The airline sector, Ryanair, is doing very well. We've seen that in the results today. If she raises again the budget November the 26th, if she targets airlines again with increases in duty, what does that mean?
More capacity, more flights, more aircraft, and more jobs will move from
What specifically would you do?
Oh, specifically, we'll take about 10% of our capacity, and we're the largest airline in the UK. We'll switch about 10% of our capacity, about 5 million seats, out of the UK into those countries, Sweden, Italy, reward those countries who are abolishing environmental taxes. And eventually, even a dumb Labour government will work out that for an island on the periphery of Europe, the way to grow and the way to increase tax revenue is to get tourists onto the island first and then tax them with VAT, hotel taxes, whatever it is. But the way to grow is not by increasing the entry taxes, which is what APD is. This is the dumbest government. I mean, you've had some dumb governments here in the UK. Brexit being the most spectacular economic own goal of the last 10 or 15 years. So it's not like the Tories were anything to write home about. But Labour should have come in here with a growth policy, abolish APD. Maybe not in London, because the London airports are full. But there is enormous growth available in those red wall seats in regional UK. Abolish APD.
I'm sure the Chancellor would make the point she's giving in terms of regulatory approval for airport and runway growth. That's coming through. And the fact that they had to... I'm sure the Chancellor would also say that they have to repair the fiscal damage that they would claim the Conservative government inflicted on this economy over 12 years. And that the options for this current government are limited within the fiscal constraints, of course, that they face. I'm sure that would be part of the pushback from the UK Chancellor.
They were her fiscal constraints. Two, she got elected on a programme to deliver growth, that the way out of this was to grow.
I'm sure she would also point out that the UK is growing faster than most other OECD.
It's actually growing slower than most OECD countries at the moment, and it will probably grow even slower when she raises taxes on employment and on air travel yet again. You cannot be an island on the periphery of Europe and decide that the way forward here is tax people coming to the UK, because they'll just go to Europe instead. There is a way forward here. Abolish APD, certainly on the airports outside of London, and you will be rewarded with dramatic growth, which will be self-financing, because the spend of those tourists in VAT, hotel nights, etc., will pay for itself.
Let's see if the Chancellor is listening. Michael O'Leary, CEO of Ryanair. Thank you very much.
Pleasure as always.
Always appreciate it. And as we were just discussing, UK assets are in focus as Chancellor Rachel Reeves weighs new taxes then on the wealthy as well to plug a budget gap of as much as £35 billion. Bloomberg understands options include an exit charge for rich Britons and higher levies on luxury homes, moves that could reshape property and capital flows. Treasury officials are said to have drawn up dozens of tax options for the Chancellor to consider. Plenty more coming up. This is Bloomberg.
credit quality is excellent in our book, and that doesn't mean no defaults. Everyone's going to have defaults now and then. We said multi-trillion-dollar industry. That's okay. You just can't have many, and you have to get good recoveries, and that's exactly what we do at Blue Owl. And by the way, so do our peers, and so do the banks. So the system is in a strong place.
OK, that was the Blue Owl Capital co-CEO speaking to Bloomberg on the credit space. Continued focus and scrutiny there, of course. Let's zoom out, though, and have a look at what's happening in terms of the sovereign debt of the UK, because October was a particularly and surprisingly strong month in terms of gilts and performance. Gains of 3%. Part of the factors seem to be inflation becoming a little bit better behaved, expectations that maybe Rachel Reeves, you heard Michael O'Leary lambasting the Chancellor there, Rachel Reeves possibly expectations she'll take a strong line in terms of fiscal control around the budget November the 26th. So you have the likes of Jefferies and Aberdeen and JP Morgan Asset Management saying there are more gains to be coming in terms of the gilt market. It's worth noting in terms of yields for UK sovereign debt, still amongst the highest within the G7, but that gap has been narrowing. Let's flip the board and have a look at the corporate giant, of course, of the moment of the year, of the last 24 months, Nvidia, $5 trillion. But here's where it sits in terms of its market weight across various different indexes across the world, accounting for 6% of the MSCI World Index. Across the S&P 500, 8.5%. It's hard to find another example in history of a company with that kind of weighting on the S&P 500. Across the Nasdaq 100, 10.2%. Again, all of this in the context of a rally that just added 9% just last week alone. Of course, $2 trillion in market cap added last year, $1.7 trillion added so far this year, with a market cap of upwards of $5 trillion right now. So just the significance of Nvidia across these major indexes globally. Now, to access, search and save all of the Bloomberg Terminal charts used on this show and across Bloomberg TV, Terminal subscribers can now use the brand new function, Chart TV Go. The opening trade, though, is up next. This is Bloomberg.
Connecting the dot between what's at stake and what is possible.
The White House says China will effectively suspend implementation of additional export controls on rare earth metals and terminate investigations targeting U.S. companies in the semiconductor supply chain. But Treasury Secretary Scott Bessent cautions that allies still need to be wary.
The Chinese have cornered the market, and unfortunately, at times, they prove to be unreliable partners. I think, and I hope, after the agreement and the goodwill between President Xi and President Trump in Korea, that we can depend on them to be more reliable partners, and the rest of the world can depend on them. But we can't take that chance. We don't want to decouple with China, but we're going to have to de-risk.
Let's bring in our China correspondent, Mimi Lo in Hong Kong. And of course, Mimi, we saw the positive sentiment after the Trump-Xi meeting on the sidelines of APEC. But at the same time, we have seen this play out, right, where there's optimism and then no follow through. So could we expect some more details to come through?
Yes, we are getting some details from the U.S. side. The White House had released a fact sheet on exactly what was agreed upon. Bear in mind, the Chinese side has not really elaborated on this. So this is all according to the White House. China has agreed to suspend export controls, undoing the measures that were imposed not just in October this year, but also in April this year and in October 2022. This means that general licenses would be issued for rare earths, for antimony, for graphite, for the likes of gallium and germanium as well. And this is obviously a very big win for the United States. The White House saying that this is a massive victory for U.S. national security. And you can see on the screen as well that the Chinese actions also include actions to stem the flow of fentanyl, to buy a certain amount of soybeans, 12 million metric tons to be exact this year, and 25 million metric tons for the next 3 years. China also agreed to suspend the countermeasures countermeasures, including tariffs and non-tariff measures since March 4, and that includes all those agricultural tariffs on U.S. goods, and also suspending investigations, antitrust, anti-dumping investigations into U.S. chips companies, the likes of NVIDIA, Qualcomm, and also facilitating the resumption of shipments from the Chinese unit of Nexperia. That's the Dutch chip firm that was seized by the Dutch government. But here is where we're seeing a little bit of divergence. The Chinese Commerce Ministry releasing a statement saying that it was the Dutch government's inappropriate intervention in that company that caused the chaos in the supply chain, and that China will assess the situation and pause those export controls accordingly.
Is this case closed? Is the race over? We're seeing multiple polling data showing double-digit gains for Mr. Mamdani. What's your take on this?
Yeah, I think for a while it's been clear that Zoran Mamdani is on track to win the mayoral race in New York City. And I don't think anything we've seen over the past couple of weeks in terms of the early vote has changed that view at all. I think it's clear that Andrew Cuomo has a bit of a ceiling, and I haven't seen any indication, any movement in polling that has changed that over the past couple of weeks. So I do think we're on track for a Mamdani win.
Do we read into the massive surge in early voting to benefit Zoran Mamdani, suggesting that it might be younger people who are getting in line, or is that not clear tonight?
Yeah, I think that's a good question. I do think that from what we've seen in the age breakouts, there have been more younger people in the recent surge of early voting than maybe the initial numbers had shown. And I do think that that should likely favor Mamdani. Obviously, a spike in younger voter turnout was what helped him win the Democratic primary several months ago, so that should benefit him. But I don't think ultimately this changes fundamentally our view of the race, which is that Mamdani is the favorite to win.
Understood. Aaron, I'd like to ask you about the gubernatorial races, and we can start with Virginia here. We've got Virginia and New Jersey, of course, in the balance. And speaking of early voting, we saw an enormous surge in Fairfax County in northern Virginia, as you know all too well from what we understand, beyond some of the numbers we saw in the presidential race. How might that impact results for what many see as a win for Democrat Abigail Spanberger?
Yeah, so Fairfax is a pretty deep blue county at this point, and so high turnout there should favor Spanberger. But from the beginning, I think it's been clear that Spanberger was the favorite to win this race, and now it's really just a question of by how much of a margin. On average, she is leading Winsome Sears by about 10 points, and that wouldn't surprise me if she ended up winning by around that margin. But I do think that certainly there's more intrigue in the Attorney General race further down the ballot, and if the Republican incumbent there, Jason Miyares, is able to pull out an upset, I think Spanberger will have to win by less than 10 points.
Fascinating. All right. To the extent that the government shutdown impacts this race, Aaron, what do you think about this idea? Because there are so many federal workers in a state like Virginia that, of course, borders Washington, D.C. Is this going to motivate Democrats or Republicans one way or the other?
Yeah, it's a good question. You know, I do think this was certainly a significant factor in Terry McAuliffe's win back in 2013. There was, of course, a government shutdown at that point as well. And that allowed McAuliffe to kind of break the streak of Virginia voting for the opposing party that sat in the White House during their gubernatorial election. However, I do think that views of the shutdown are pretty baked in along party lines. And among independents, we see that more independents blame Republicans over Democrats for the shutdown. So if anything, that should help Democrats on the ballot next week. But I think ultimately, you know, in Virginia, it was clear from the beginning that Democrats would be favored here. Obviously, Virginia has a huge population of federal workers who have been affected from the beginning of the year by cuts from DOGE and reductions in forces as well. And that is certainly something that I think has energized Democratic turnout.
New Jersey's a different story, isn't it? We're looking at, based on the most recent polling from Emerson College, a 1-point race Aaron, how are you looking at New Jersey, and what would this mean for these two candidates who have been in a knockdown, drag-out fight?
Yeah, I think that Emerson poll that we saw was a bit of an outlier of recent polling that we have seen in that race. On average, the Democrat, Mikey Sherrill, has been leading by around mid-single digits. And I think this race is going to be closer than the Virginia race, which may be a surprise to a lot of people. But we have to remember Kamala Harris won both Virginia and New Jersey by 6 points. So they are pretty similar states in terms of partisanship at this point. And of course, New Jersey has a recent history of electing Republican governors, and they haven't had a governor from the same party serve more than 2 terms in a row since, I believe, the 50s. And so it would not be a huge surprise if Chitterelli pulled out a win. Now, I do think that Sherrill is the clear favorite ultimately, but this is a closer race than the Virginia one.
Donald Trump has weighed in this case on behalf of Jack Chitterelli, and he has really seized on energy prices as the issue in this campaign. I don't know if you agree with him on that, Aaron, but what's the Trump factor in New Jersey?
Yeah, I think the Trump factor is interesting. You know, we saw that he made significant inroads in 2024 in New Jersey, particularly in some of the inner suburbs around New York City with minority voters. And so Chitterelli is really banking on being able to replicate those gains that Trump made in North Jersey while drawing on his strength in South Jersey. But, you know, at the end of the day, this is still a state that Trump lost ultimately. And so Sherrill has been really focused on tying Chitterelli to Trump and saying that he won't break with the president in any way, which he has done really not a lot to dissuade anyone from that view. In a debate with Sherrill earlier this month, he said that he graded Trump as with an A rating on his presidency so far. And so I do think that ultimately New Jersey is still a light blue state, and it would be difficult to win without creating a little bit of daylight between yourself and the incumbent president, who is still unpopular. Even, I will say, the Democratic governor, Phil Murphy, is also unpopular and is roughly around the same level as Trump. But I still do think Sherrill is favored at the end of the day.
I have to ask you about California and Prop 50. The money is incredible here. $120 million raised on behalf of the proposition to redistrict the state, to redraw the congressional map. This is something, of course, that's been promoted by Gavin Newsom. We'll find out Tuesday night, but that, I believe, 3-to-1 spending does give us a sense of where this is going. Aaron, is it going to be a blowout?
I think it is on track to win by a pretty healthy margin. I mean, the latest polling we have seen has showed that supporters for Prop 50 is around the same number of folks who voted for Kamala Harris in the state, who, of course, won it by double digits. And so it does seem like this is likely to pass, in which case this would give Democrats an opportunity at flipping 3 to 5 seats in California, and also shores up several of their own vulnerable incumbents. So as we're talking about all of this mid-decade redistricting, California is the most important state that could redraw their map just because of the sheer number of pickups that Democrats could make.
We were just showing a map of the country and the number of states that are either in the process of or considering redistricting. Aaron, what happens at the Cook Political Report if all of these states redraw their congressional maps? You guys are going to need a Ouija board or something to get through this midterm.
Yeah, well, it really does put things on hold a little bit when we don't know which of these states are going to have new maps by the time we get to 2026. You know, of course, we've seen new maps have already passed in Texas and Missouri and North Carolina, and now, as of this morning, Ohio. Those are all maps that will benefit Republicans to varying degrees, which is why Democrats are so set on making sure Prop 50 passes in California.
Live from Washington, D.C., this is Balance of Power with Joe Matthew.
The president says, no, we are not about to attack Venezuela. Welcome to the Friday edition as the president responds to a report that strikes on Venezuela are imminent. We're going to get the latest ahead from Bloomberg's Laura Davison, and we'll discuss this along with more when we sit down with retired General Wesley Clark just moments from now. It's day 31 of the government shutdown, as we'll discuss with Democratic Congresswoman Rebecca Balint of Vermont and with our political panel It's all after a look at Wall Street. Let's get up to date on the Friday trade with Charlie Pellet at World Headquarters in New York. Hey, Charlie.
Well, hello there, Joe Matthew. Lows of the day right now on the Dow Jones Industrial Average, S&P 500 index holding on to a gain barely. We got NASDAQ pushing higher, up by 96 points right now, up by about 0.4%. Wall Street's blistering bull market getting fresh fuel at the end of a month that has lived up to its volatile reputation. Just under 3 hours to go until we wrap up the trading month of October. So here's where we stand. The Dow now down by 100 points, underscoring low of the day, down 0.2%. Little changed on the S&P, up 2 points right now. NASDAQ up 92. For NASDAQ, a gain of 0.4%. Russell 2000 index of small cap shares dipping into the red, down 0.2%. But our Mag 7 index holding on to gains of 1%. This after earnings from both Apple and Amazon. 10-year 4.09% with a 2-year currently yielding 3.60%. Gold is off 1%, $39.83 the ounce. West Texas Intermediate crude, $60.80 a barrel right now. It is up by about 0.4%. Bitcoin higher by 1% now, $108,590 on a Bitcoin. Amazon surging after earnings. Amazon up now by 10.3%. It did post robust cloud growth. And Apple shares higher, little changed, up under 0.1%. Apple is projecting a jump in sales over the holiday season. Recapping, S&P little changed, up 5 right now, up under 0.1%. And for on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. Back, we go to Washington. Once again, your host, here he is, Joe Matthew.
All right, Charlie, great to see you. Charlie will have more in about 20 minutes as we keep tabs on Wall Street. Has not turned out to be the best session here, but there have been a lot of factors at play this week in the throes of earnings reporting season, so we try not to read too far into what's happening. Coming up, we're going to spend some time with retired U.S. Army General Wesley Clark as the president makes news on Venezuela. Also making news on the shutdown on this day 31. Happy Halloween, everybody. I have no news on when we're going to reopen, although the president seems to think that he has the thought of going nuclear, the nuclear option in the Senate, and the filibuster. That was his post on Truth Social that we'll talk about in a moment here. But, of course, lawmakers are gone, most of them. The Senate is now out for the weekend. Everybody's getting ready to go pass out candy. And tomorrow's a big day, November 1st. SNAP benefits begin to expire. Open enrollment begins for those seeking health care with subsidies not yet addressed. And Head Start also starts to go broke tomorrow. We also have elections ahead next Tuesday, so there are some thoughts that as talks begin behind the scenes in Washington, maybe something's about to shake loose. But the talking points haven't changed. Listen to House Speaker Mike Johnson from earlier today.
The same Democrats who've been perfectly fine with defunding SNAP and WIC for over a month now are suddenly claiming to be outraged that Republicans and President Trump can't just wave some magic wand and fix the mess that they themselves have created. If they're suddenly waking up to the pain their reckless decision is causing, then there's one simple way to fix it. They can come back in here and vote to reopen the government.
Of course, they're not back in here. As I mentioned, everybody's away for the weekend. And, well, the House has been out of session for more than 45 days. Laura Davison covering all of this here in our Bloomberg Washington Bureau, our deputy Washington Bureau chief with us now at the desk. The president says go nuclear, end the filibuster. This thing would be done in just moments. What's the majority leader think of that?
He does not like this idea one bit. He, for months has been saying he doesn't like it. He came out, his spokesman came out, and after Trump made this post yesterday, saying he wanted Republicans to do that, said, nope, this is not on the table. This is not happening. And Thune rightly recognizes that, the Republicans are not going to be in control of Washington forever, and they don't want Democrats to have the ability to just enact sweeping changes when they're in power, whether that be 2, 4, 6, 8 years from now.
Well, short of that, we have no off-ramp at the moment. There has been chatter, as you've been reporting, Laura, that there are some rank-and-file talks underway, although we've heard that before. I am compelled, though, by this headline that Chuck Schumer met yesterday with Senator Katie Britt. Does that give us a sense that the gears are starting to turn?
It could. Katie Britt's state of Alabama is a state that relies heavily on SNAP benefits. We were doing an analysis of all of the districts, and there are lots of Trump districts that are very reliant on this food aid. So that could start to see Republicans seeing pressure from folks at home. You have Head Starts closing. You also have military federal workers who are going without pay. The thing I think we really need to watch that's going to be the pressure point, though, are airports. And we've seen some sporadic closures, ground stoppages, including at DCA yesterday, where Thune was stranded at the Capitol, couldn't get back to South Dakota. But they've sort of been temporary. We haven't seen system-wide outages that will really be the thing that could tip this into negotiating mode.
Do we hear any chatter about a walkout? I mean, obviously, the air traffic controllers are not being paid, and they're all working overtime just by the nature of their jobs. When does the union say it's sick out day?
That's, what our team here is very closely trying to figure out. They have not indicated that. Even, last shutdown back in 2018, 2019, we had a day where you had Miami, Philadelphia, LaGuardia, and Newark that were basically all had ground stoppages and just totally messed up all air travel across the eastern seaboard. And that, later that night is when the shutdown ended. And that wasn't even a coordinated thing. That was just enough people saying on day 35 of the shutdown, it doesn't make sense for me to go into work. I've got other priorities. I need to be driving for DoorDash or Uber or whatever to pay the bills.
What a thought. Day 35, by the way, is Tuesday, so we'd set a new record next Wednesday for the all-time. There's new polling out, Laura, pretty incredible, and it's what I guess Chuck Schumer was probably hoping for. ABC News Washington Post poll finds Americans blame Republicans over congressional Democrats. There you see it on your screen. 45 to 33%. Independents blame Republicans by a 2-to-1 margin. Do numbers like these start to pull a meeting together at the White House?
It could. And this is also why you see Democrats saying that they're not going to fold. They want to stay in this fight. They've had sort of the edge in polling the entire time. This polling is better than some that were even, a couple weeks ago. So it seems that they've been able to keep public opinion on their side during this. Republicans, they also think that they have the edge. This poll doesn't necessarily indicate that. But they're both kind of waiting to see where the chips fall. Problems with the shutdown compound the longer it goes. So Republicans are betting that people are going to get fed up and blame the Democrats. Democrats are betting that people are going to see their premiums increase and say, what the heck, we need to get this solved.
Wow, boy, it's going to feel different when we start the new week here on Monday, and these benefits have actually begun to expire and real people are telling stories. We'll just have to see how that goes, and of course what the reaction will be on Election Day. Laura, I want to ask you about the president, though. His comments on Venezuela was on Air Force One. He's on his way to Florida right now. They actually stopped the jet on the tarmac so he could go back and talk to reporters. When asked about imminent strikes against Venezuela, as the Miami Herald reported, he said no.
He said no, he's not thinking. He said no, he's made no decision, and no, that no attacks are imminent. This, there have been two reports, but one from the Wall Street Journal that said this was under discussion, and another one from the Miami Herald that was much more definitive, saying that this, could be coming within days or hours. Poured a lot of cold water on that. I think that is, kind of lessen the flames and the sort of. Discord around that topic. But this has been, Trump himself a week ago said that land strikes would be next. So I think the question is still here, not necessarily, if, but when. But clearly he's not ready to come out and say he's made that decision yet.
That's fascinating stuff. This is what we're going to be getting into coming up next with retired General Wesley Clark. Laura, thank you as always. Happy Halloween, I'm supposed to say as well. It is October 31st. Big Halloween bash, I hope, for you. Laura Davison, our Deputy Bureau Chief, we thank you. I'm Joe Matthew in Washington, and thank you for being with us here on the Halloween edition of Balance of Power. The president has said a lot about Venezuela. These reports shouldn't be a surprise to anyone, knowing as well that a carrier strike group is on its way right now, the USS Jerry Ford, soon to arrive in the Caribbean. Here's the latest from President Trump on this.
Our sea drugs, as they call them, they use the term sea drugs, the drugs coming in by sea, are like 5% of what they were a year ago, less than 5%. So now they're coming in by land, and even the land is concerned because I told them that's going to be next. The land is going to be next, and we may go to the Senate, we may go to the, Congress and tell them about it, but I can't imagine they'd have any problem with it. I think, in fact, while we're here, I think it's a good idea.
It's a good idea, all right? The land is next, he said. That was October 23rd, his most complete remarks on this to date, until, again, he said no to the reporters asking him this morning. So this may not be done. It may just really be a question about timing, to Laura's point, and that's what we want to talk about with the general. Wesley Clark is with us, retired 4-star general, U.S. Army, served as commander of U.S. Southern Command, so he knows this region rather well. Founder of Wesley K. Clark and Associates. General, it's great to see you. I wonder how you're interpreting the remarks by the president, knowing the flotilla, the armada that we have assembled that's about to get even bigger in the Caribbean. How do you read his remarks, and what do you think's about to happen in Venezuela?
I think it's like jiggling the skeleton key in the lock. It doesn't always engage the first time. You move it back and forth and play with it a little bit. So you've got military force. The rumors are that there are some special operators inside Venezuela. You're not quite sure what the target is. That's Maduro's problem. Is it him? Could he just suddenly disavow Russia, Iran, and China and say, no, I don't want them. I'm on your side, America? Could he suddenly say, I'm going to crack down on all? Could he say, I'm just going to accept the results of the next election, and I mean it this time? He doesn't know what the objective is, so he's under a lot of pressure. And I think this is part of the strategy. We don't know what the objective really is of the administration, but if it really is about drugs, then yes, most of it is coming through Mexico by land. And if you're going to do something with drugs, you have to look at the demand side as well. So we're just in the early stages of this yet. This is a pressure building up on Maduro.
It is something. You mentioned the demand side. We never talk about that as if these drugs are, being pushed on Americans. They're coming here because Americans are demanding them, which is its own problem. The USS Gerald Ford is on its way right now, General. It's apparently not in theater yet. Would the administration take action without that platform being there?
Well, it depends on what the objective is of the administration. If the objective was to go in and snatch Maduro and put him on trial somewhere, then maybe you don't need the Ford there. If the objective is to sort of intimidate, be prepared, then you want overwhelming force. And that's what we're assembling there. They do have aircraft. They do have aircraft, anti-aircraft. They have radars. They have ships. But that could all be taken out in a few hours, I think. What you couldn't do, even with the 2 amphibious groups that are there from the Marines and so forth, what you can't do is really go in and occupy Venezuela. It's just too big, too many people, too many weapons distributed. You can't quite do the same kind of takedown that we did in Panama against Manuel Noriega in 1989. That was an entirely different case, legally, militarily, geopolitically. So this is different. We still don't really know what the objective is of the administration. And it could be that really it is drugs. It also could be that's just what you say when there's a private set of objectives that are coordinated through Congress. And he has briefed at least the Republican members of Congress in the big committees. I hope he'll bring the Democrats in, too, because national security shouldn't be partisan. It should be beyond the country's borders. We should all be one nation.
Well, this is a great point that you make, and maybe that will actually tell us a bit if we start seeing briefings across the aisle on Capitol Hill. I know that the Pentagon has not been terribly fond of talking to Congress at all lately. But, General, we've seen B-1 bombers and B-52 bombers buzzing Venezuela's airspace. We also saw Venezuelan F-16s buzz a couple of U.S. ships weeks ago when we first started striking these alleged drug boats coming out of Venezuela. You mentioned the fact that they do have some aircraft. They've got anti-aircraft missiles and the like. What kind of a job would it be for us to knock all of that out? Or would there, in fact, be an air war over Venezuela?
You never want to discount an adversary. So, yes, they've got pilots. They fly F-16s. They have some air-to-air weapons, but they don't have the modern air-to-air weapons. And they don't have the system that we have. So there might be an air war over Venezuela. They might get some aircraft actually off the ground. But in terms of our ability to reach out and strike, our ability to use stealth, our ability to name the time and manner of attack and so forth, I don't think there's any question about the outcome. And the Israelis have really pioneered this. In their operations, they typically strike. They're effective. They're using our technology. Of course, we know all those systems. I wouldn't think there'd be much of a problem. But for the pilot in the aircraft, hey, he's put his life on the line for the country. He's got to succeed, and we would do everything possible to make sure we can do this effectively without losses.
Yep. As we're speaking, General, we're showing images, video of some of the alleged drug boats that we've blown up recently. Too many to count at this point. There was a sub. We've got the boats as well. This is quite a gallery that we have of these things blowing up and catching on fire. A lot of people have died. As someone who actually ran Southern Command, what is your thought on the legality of this operation so far?
Well, it should have been briefed as legal. Presumably, there's some legal authorization to it. We haven't been told that. The evidence that has been presented to Congress, at least as it's been explained publicly, doesn't fully justify that we know for sure that these are drug boats. And if they are, then it would be a violation really of maritime norms to attack them. We would normally seize and secure them, use them to collect information, and then run it back to the source. This is a different approach. It's more about sort of naked power than it is the international rules-based system. And this is one of the concerns that so many have today when you look at the shape of the international environment, what's going on in Ukraine, what's happening or might happen in Taiwan and so forth. How do we use all the tools of statecraft, not just the military and not just tariffs, but international law, diplomacy, and how do we put it all together in a package that best serves the interests of the American people? And so when you look at what's happening with these boats, you have to ask, what if Russia decides to do this? What if China decides that it makes up anything in the South China Sea that's moving must be a threat to China and starts knocking off boats? Certainly wouldn't like it. So I think we have to be very careful about the example we set. I hope that the administration will come forward soon with more of a legal justification and make sure that this is not a partisan but a bipartisan thing. It's got the support of the entire Congress. That's the way that American foreign policy is strongest.
Yeah. General, I only have a minute left, and I hate to bring up a whole new topic. I don't want to have to cut you off. But this headline just ran from CNN. The Department of Defense has okayed Tomahawk missiles for Ukraine, and it will leave the decision finally to President Trump. In our remaining 30 seconds, should those missiles go to Ukraine?
Absolutely right. Yep, puts more pressure on Putin, brings us closer to an end of the war. Yes, absolutely. Great decision.
Fascinating. We'd love to talk to you more about that when we learn more, General. It's good to see you. Retired General Wesley Clark with us live again on Bloomberg TV and radio. We thank you, as always, for the insights. Tomahawks for Ukraine cleared by the Pentagon. We'll see what the president has to say about this. Maybe he'll be asked about it if he talks to reporters when he lands in Florida. He's on his way there right now for a weekend at Mar-a-Lago. The Halloween edition of Balance of Power continues next with our panel, Rick Davis and Arshi Siddiqui, together as we look ahead to Election Day next week. The impact of the government shutdown should not be discounted, and we'll get their take next on Bloomberg. The numbers in California are
connecting the dot between what's at stake and what is possible.
popping as we follow the money here on Prop 50. You know, next Tuesday is an election day, and we've talked a lot on this program about the gubernatorial races, certainly in Virginia and New Jersey. We've talked a lot about the New York City mayoral race, and we're going to get into all three of these. But also, what's taking place in California is extremely important. Prop 50, this is redistricting, right? We talked about it a lot when this first emerged, and it has started a cascade now of other states rewriting their congressional maps following what is expected to take place in California. Gavin Newsom put this up for a vote. That was the way they decided to handle it. And Prop 50 looks like it's going to pass. quite easily. Over the past 11 weeks, Bloomberg News reporting Newsom and his allies brought in more than $120 million for Prop 50, about 3 times the total raised by the proposal's opponents. Yes, George Soros' name is on there, along with others, including Reed Hastings. And this is where we start now with our political panel. Bloomberg Politics contributor Rick Davis is with us, our Republican strategist and partner at Stone Court Capital. Arshie Siddiqui with me here in Washington as well, former aide to House Speaker Nancy Pelosi, founder CEO of Bellwether Government Affairs. It's great to have you both with us. Arshie, I'd love to start with you on Prop 50. Are you expecting a blowout, and what would this mean for the redistricting efforts around the country and just the aura for Democrats that might follow nationally?
Well, I think there are 2 important pieces about California. One is it's a defensive measure, and I think the governor really went out of his way to structure it in a way that really was not a unilateral decision by him, but actually going back to the voters. So, and then it was a really quick ramp-up time. So it's a defensive measure for Democrats in a very aggressive push by Republicans to go state by state and try to rewrite these districts.
What do you make of the money involved here, Rick? You've run enough campaigns and elections to have a sense of this. You expect a blowout?
Well, it certainly is what's indicated in the polling. I mean, recent polling, as you pointed out, Joe, 6 in 10 Californians are supporting Prop 50. Hundreds out of 160 million being spent, 125 of that is pro Prop 50. So it's overwhelming force politically. And so we'll see. Early voting is very favorable to the Prop 50 demographics, but early indications are that there'll be a significant Republican advantage on Election Day, which is pretty traditional in an early voting state.
Indeed, Rick makes reference to the poll out in the last 24 hours from the Institute of Governmental Studies at the University of California, Berkeley. 60%, Archie, of likely voters backed the proposal, compared with 48% of registered voters who were surveyed in August. So there's been some real momentum here. Really interesting. Will Democrats regret this move? Knowing that, of course, this started in Texas by Republicans, but it's tipped off a cascade of states that really could end up favoring Republicans in the end.
No, I actually, not at all. I think if anything, it is a defensive move that really Democrats were backed into a corner.
You saw no choice on this.
Yeah, there's no choice. And honestly, that's just unilateral disarmament where, it's not a fair fight going into the midterms. So I think even now with this California move, that still doesn't get Democrats where they need to be. Sure. Because you saw this in Indiana. In Indiana, the Republicans are very skittish, and it's just been this barrage of pressure by Washington, Republicans in Washington and the administration on getting that piece done.
Really interesting. As we gather here on day 31 of the government shutdown, there are implications, according to some at least, that will play out here in these elections. Again, we've got governor's races in Virginia, New Jersey. We've got New York might kind of be its own thing with the Mamdani factor. But let's keep these 2 gubernatorial races in mind. Rick Davis, people start losing SNAP benefits tomorrow. Open enrollment's going to be in everybody's face when it comes to Obamacare. We've got Head Start on ice all of a sudden because of the shutdown. People are going to be talking about ground stops, most likely at airports. How does that play in favor potentially of Democrats or Republicans in these 2 races?
Look, I mean, the polls that we've been talking about around the government shutdown penalize Republicans, especially with independent voters who tend to be the deciding vote in a lot of races. And certainly will be in this very close New Jersey governor's race that is within the margin of error, and turnout will be a major contributing factor to the outcome of this race. In other words, who shows up in the early voting and on Election Day? Is it going to be Democrats who are motivated because of the anger they have toward the government shutdown? Is it Republicans who are supportive of the Donald Trump agenda? And so I think that's the one to watch of all of these. The outcomes are pretty much assured, except for New Jersey. And if Democrats win, Republicans are going to say, "Wow, if without a government shutdown, could we have taken that race?" And I think that's not an academic issue. That could be pretend serious considerations for how to handle then the midterm elections.
Yeah. If the polls, like today's from ABC News, Washington Post, show Americans blame Republicans, does that favor Democrats on Tuesday?
I think the government shutdown nexus in New Jersey is interesting because if you look at it is a margin of error race, as Rick pointed out, but also importantly, there's been a lot of campaigning in communities of color, and some of these benefits are really disproportionately cuts are impacting communities of color. So I think from that perspective, there's a nexus. But I do think turnout is going to be critical in New Jersey, and it is a very tight race. And as you know, for the past 60 years, voters in New Jersey, they alternate between a Democrat or a Republican in the governor's office.
Right. So how worried are you about New Jersey as a Democrat?
I think what's very exciting is Mikey Sherrill is just the whole package. She's smart, she's driven, she has a national security background, she's a moderate pragmatist, a problem solver. So I think that's a lot of room for hope there.
Well, it's being looked at as a bellwether. Rick Davis, how important will the results in New Jersey specifically be for these two parties?
Yeah, look, I think that if Republicans can win this, and we, as Archie pointed out, we haven't been that successful in most recent statewide election history. They're gonna rally around the president's agenda in a way that right now you don't see happening in the other races, and so it will give an impetus to Republicans to double down on this strategy. It'll make it more difficult to cut a deal to open government, assuming we're not open by, the 4th of November. And so it could really change the mental attitude that Republicans have about, whether they're leaning back or leaning into this agenda going into the midterms.
Really interesting. We haven't talked enough about Virginia, probably because a lot of folks see this as a foregone conclusion. By the way, we should note that Virginia's General Assembly advanced a proposed constitutional amendment today that could bring redistricting to the Old Dominion. Archie, is this a blowout, as many are casting in the media? I live in Virginia, although I'm in Northern Virginia, so I'm not seeing a lot of winsome signs around. How do you expect this to pan out?
I think no one should take Virginia for granted.
Yeah.
And we've seen that. And you look at Youngkin's win last time, and we've seen some indications that Trump is really focused on Virginia because of redistricting.
Right.
So he's engaging. And so in that, as we know, he can be a very powerful advocate on the campaign trail. So in this final stage, I think Democrats aren't taking anything for granted, and they cannot afford to. Now, the great thing is Abigail Spanberger is a fighter. The Congresswoman knows how to really run a really aggressive and strong campaign, and she's really focused on issues of affordability and delivering for Virginia families.
Well, as my fellow Virginian Rick Davis would tell you, we can't get through a single commercial break without seeing ads in this campaign. It's just been dominating the airwaves and dominating the conversation. Rick, to what extent could the shutdown impact results in Virginia as well, knowing how many federal workers live here?
Yeah, we've been looking at turnout in Fairfax County, a competitive county that has been trending more blue than red in the last few cycles. And the turnout as of today is on the same par level as a presidential election. And remember, this isn't even a midterm. This is an off-year election, which means turnout usually is off. And so the fact that you've got that level of activity at the ballot box before Election Day it usually indicates that, you've got a change election coming, which would, of course, advantage the Democrats in this case. But I got to believe that you have that kind of a strong move in Fairfax County. It is a direct corresponding factor to the shutdown. And, of course, we see all that news, and we have hundreds of thousands of people who've been affected. And so you got to believe that's translating into some.
Okay, guys, नेचुरल गैस में हाफ प्रॉफिट बुक करके ट्रेल करना ठीक है फाइनल टारगेट का देख रहे हो तो मुझे लगता नहीं फाइनल टारगेट आएगा इसमें अब वेरी लेस चांसेस बट स्टिल हो सकता है कल गैप डाउन ही हो जाए एज एक्सपेक्टेड था थोड़ा बड़ा टारगेट रखा था हाफ टारगेट तो पहले ही हो गया था बट स्टिल सेकंड टारगेट भी आना चाहिए था रह गया थोड़े से कह सकते हो नीचे आता तो यहाँ से बाई करते बट एग्जैक्ट आया नहीं लेवल पे सपोर्ट पे जहाँ पर था प्राइस तो आप प्रॉफिट बुक करके ट्रेल करना अगर सेकंड टारगेट भी देख रहे हो वापस ऊपर आएगा वापस सेल तब करियो बीच में एंट्री नहीं है बाकी क्रूड ऑयल में भी वो काफ़ी देर से उसी लेवल पे रुका हुआ है मोमेंटम ही नहीं आ रहा है ये पहला टारगेट यही है इस एरिया पे अब दोबारा मत सेल करना इस एरिया पे मेरे अकॉर्डिंग अब आप इस सेकंड टारगेट के लिए जा सकते हो प्राइस इस पॉइंट ऑफ इंटरेस्ट को ब्रेक करता है तो काफ़ी टाइम है अभी। मार्केट वैसे भी 12 बजे क्लोज होगा, 3 घंटे हैं अभी भी, ऑलमोस्ट 2.5 से 3 घंटे। तो देखते हैं कितना मूव और करता है अभी ये। इसका भी टारगेट बड़ा है, याद रखना, लगभग 100 पॉइंट का। बाकी डेटा आना था वो आ गया, कुछ खास इम्पैक्ट तो किया नहीं गोल्ड और सिल्वर के प्राइस को। ओवरऑल देखोगे गोल्ड बिल्कुल ही पॉज करके बैठा हुआ है। आज मॉर्निंग पे फॉरेक्स ओपन हुआ था, सेल ऑफ आया, रिकवर किया, फिर साइडवे चला गया। एमसीएक्स भी मॉर्निंग पे ओपन हुआ, अपसाइड गया, नीचे, फिर अपसाइड, फिर नीचे, वही रेंज के अंदर ही चल रहा है। बिटकॉइन का भी वही हाल है। सिल्वर को देखोगे सेम सिनेरियो, थोड़ा बहुत सेल ऑफ, थोड़ा ज़्यादा लग रहा है प्रेशर, बट स्टिल इतना कुछ खास नहीं है। डॉलर इंडेक्स कंटिन्यूसली बुलिश बना हुआ है, कंटिन्यूसली डॉलर का प्राइस ऊपर ही जाया जा रहा है। बाकी बिटकॉइन को देखते हैं क्या ये कंटिन्यू सेल ऑफ में रहता है या फिर नहीं, क्योंकि ये भी काफ़ी दिनों से एक रेंज के अंदर फंसा हुआ है। आज थोड़ा सा गिरा जरूर है, 5% के अराउंड नेगेटिव ही चला गया ऑलमोस्ट। बाकी S&P 500 देखोगे, नैस्डैक देखोगे, डाउ देखोगे, दोज आर ऑल्सो ठीक है। डाउ जोन्स वगैरह को देखोगे तो ऑलरेडी ओपनिंग के बाद से सेल ऑफ में आया था, रिकवर कर रहा है, प्रॉफिट बुकिंग ऑल टाइम हाई पर ही गया था परसों, तो थोड़ा सा प्रॉफिट बुकिंग आई है डाउ जोन्स में। सभी जगह प्रॉफिट बुकिंग आप कह सकते हो, नेचुरल गैस, डाउ जोन्स, बिटकॉइन, गोल्ड, सिल्वर, सब जगह प्रॉफिट बुकिंग ही दिख रही है ऑलमोस्ट। इवन दो निफ्टी और बैंक निफ्टी फ्यूचर को भी देखोगे, आज इंट्राडे में थोड़ा सा साइडवेज था मामला, स्पेशली निफ्टी बैंक निफ्टी 50 मॉर्निंग पे हल्का सा गैप डाउन जरूर हुआ, रिकवर किया, फिर साइडवे चला गया था। सेम बैंक निफ्टी थोड़ा सा पॉजिटिव क्लोज हुआ था, तो निफ्टी थोड़ा सा फ्लैट ही क्लोज हुआ है ऑलमोस्ट। कल देखते हैं ओपनिंग कहाँ होती है, इंपॉर्टेंट है कल। हाँ, बाकी और कोई न्यूज़ तो है नहीं, कुछ इम्पैक्ट पड़ेगा कोई न्यूज़ अगर आती है, विल सी दैट एज वेल। Fearing fraud, Canada rejects most Indian study permit applicants. ठीक, क्रूड में भी कुछ खास नहीं हो रहा है, इन्होंने सच मोमेंटम कुछ आज हुआ नहीं है। भाई गोल्ड में वैसे देखोगे ना, ऊपर ये मल्टीपल टाइम एक ही लेवल को बार बार हिट किए जा रहा है और लोअर हाई बना रहा है। अगर एक एम पैटर्न बना तो बड़ी सेल ऑफ आ जाएगा। नीचे एक ट्रेंड लाइन भी आ रही है, ऊपर एक आइडेंटिकल रेजिस्टेंस बना है, परफेक्ट पैटर्न है अगर ब्रेकआउट होता है, अभी हुआ नहीं है। ऊपर का रेजिस्टेंस ब्रेक ही नहीं हो रहा है 1 आवर टाइम फ्रेम पे। फॉरेक्स की मैं बात कर रहा हूँ बाय द वे। के ऊपर एक स्ट्रॉन्ग रेजिस्टेंस है, देखते हैं ब्रेकआउट करेगा या नहीं। 4078 के ऊपर ही ब्रेकआउट माना जाएगा। ऊपर 4060 टू 80 1 आवर टाइम फ्रेम पे स्ट्रॉन्ग है अब रेजिस्टेंस। काफ़ी देर से रुका हुआ इस रेजिस्टेंस पे, देखोगे ना। फर्स्ट टाइम तो सेलिंग वही 27 को आई थी, फिर 29 को, फिर 31 अक्टूबर को, फिर अगेन 31 अक्टूबर को। आज भी उसी लेवल के अराउंड हिट किया है ऑलमोस्ट। लेट्स होप या तो ऊपर ब्रेकआउट करने जाए फिर, या फिर एक थोड़ा सा पुल बैक आए, ट्रैप करे सेलर्स को और फिर निकले अपसाइड की ओर। नीचे भी इसमें सपोर्ट है स्ट्रॉन्ग, ऐसा नहीं कि गिरते ही चला जाएगा, बट नीचे 3940 से 3910, दैट इज़ अ स्ट्रॉन्ग सपोर्ट एरिया इन 1 आवर टाइम फ्रेम। तो नीचे ब्रेक करना है तो 3910 के नीचे ब्रेक डाउन करना पड़ेगा। तो हो सकता है थोड़ा सा सेल ऑफ में आए और फिर नीचे रिकवर करके जाए। तो रेंज है ब्रॉडर, काफ़ी दिनों से पड़ी हुई है इसी रेंज के अंदर प्राइस गोल्ड का 1 आवर टाइम फ्रेम पे। उसको वहाँ बुक कर लेना ऐसे तो। चलेगा, कोई ऐसा नहीं है। बहुत यहाँ पर रुक सकता है पॉइंट ऑफ इंटरेस्ट पे, बट अब ये रिस्की ट्रेड है, थोड़ा सा ध्यान रखना। बेटर है कि ऊपर वाले रेजिस्टेंस पे आ जाए, वहाँ से सेलिंग करोगे तो सेफ रहेगा मेरे अकॉर्डिंग। क्रूड ऑयल विल गो डाउन और अब आफ्टर दिस न्यूज़, कौन सी न्यूज़ की बात कर रहे हो? डेटा था वो, नॉर्मल न्यूज़ तो कोई है नहीं, और डेटा आ चुका है ऑलरेडी मैन्युफैक्चरिंग पीएमआई का।
Other thing that I want people to understand is that the so-called continuing resolution that they put out is only good for another 15 days.
Well,
so,
yes, right.
I mean, there's so much that has gone wrong here because Republicans were not willing to meet with us before the 11th hour. And then by that point, it was an unwillingness to have any kind of negotiation. So it makes me very angry.
Been asking about that date a lot. I mean, even if we voted today, government reopens, we'd be heading for potentially another shutdown before Thanksgiving. So obviously some of this may need to be rewritten. There's a federal judge who's considering this lawsuit coming from state attorneys general, as we discussed, and indicated, yes. This is Judge Indira Talwani, indicated that she likely will order the Trump administration to use these reserves to at least partially fund SNAP. The quote, Congress has put money in an emergency fund, and it is hard for me to understand how this is not an emergency, unquote. Congresswoman, yes. Is that how this ends?
I hope so. In terms of this particular issue, I certainly hope that that will be the ruling from the federal judge. What's complicated, and I don't know if you're aware of this, but I want to just highlight it because it's a complicating factor here, that the people who would be positively impacted would be the people in the states who were a party to that lawsuit. So I can't remember if it's 25 or 27 states AGs that sued, but the states who were not party to the lawsuit would not automatically be receiving those funds.
Wow, interesting.
Yes.
We got a lot to figure out here.
Yes.
If you're
Yes.
called back and the president wants to start talking, say, after election night, are you ready to have that conversation?
Look, we've been there. I have been going back and forth between Vermont and D.C. ever since Mike Johnson decided to put the House into recess. We can't come to any kind of agreement back in our district. So I've been traveling there regularly. Everyone in the Democratic caucus has been there ready to do the work. And meanwhile, trying to meet the needs back in the district. I just, I want people to understand that, of course, there is always, when you're in D.C., there's partisan one-upmanship happening. But I want people to understand that we have never had a situation in which a party